normal week? I think the year's just starting. Is the year just starting?
You know, we're finishing up on the end of the month. We got a full week left for January,
Which is nice.
Yeah, but this is we've kind of had classic FX. We've run to the highs in the dollar. We've sold off. They got bid. Dollar got bid again Friday and to start last night, and now it's getting hit a little bit. And I mean, we had classic kind of start, stop, amplified by a new president coming in.
Sure. Heard about that.
Yeah, and it's interesting. This will be his. Is it his second full week?
I have no clue. This is kind of my point, is that these weeks have all been chopped up.
Yeah, they've
with like holiday schedules and weird schedules and everything else. It feels like we're here. The president has been inaugurated. We're through all of that junk, although I don't understand how that was a news story. People were like staring at the screen last week around the inauguration, and they were like, why isn't Bitcoin rallying? Why isn't all this stuff rallying? And it's like, how is the inauguration a news item necessarily?
Right.
Was very we all knew it was going to happen, right? I guess.
Yeah, and I think it was the velocity at which change is going to take place. And
exactly.
Doesn't
happen in a day, it turns out.
No, and the tariff drama over the weekend with Colombia and everything had everybody on edge.
What is I can honestly say I have no clue what you're talking about. Can you tell me what Colombia
the U.S.
tariffs?
is deporting migrants back to their country on military planes, and I guess for some reason you have to get approval from the country you're sending people back to.
Gotcha.
From what I understand, the U.S. didn't do that, and they refused the planes. They said they wouldn't let the planes land.
This is in Colombia.
In Colombia.
Okay.
And the administration quickly said, you know what, you have no choice in this matter, and we're going to put on 25% tariffs and raise them to 50% in a week. And the U.S. for Colombia is its largest trading partner for coffee, oil, other goods.
Probably a similar to, we always talk about Australia and China.
Yeah.
I'm sure most of Central and South America has got kind of a similar deal.
A lot of dependency,
Yeah.
right? Whether it be Brazil with and Argentina with everything from grains to cattle. But I guess that has all been resolved now, and the Colombians agreed to take the planes, and they've said it's all good, and they've worked through that. You can look at it as a victory for the new president, or you can look at it as how quickly they'll move to interdict tariffs. But what really, so we opened, it was interesting, U.S. equities opened down at 5 o'clock when the markets came in. The dollar was higher. With, I think, the tariff stuff. And then as the rest of the night unwound, we got an announcement out of China that they've got this new AI.
Faster, cheaper AI.
Faster, cheaper, better, open, free. Just log on.
Open,
free,
no
just
disrespect,
log on.
no disrespect to China, Chinese culture, people, anything else. But I don't, with the way that their economy has gone the last several years relative to their government, open, free aren't the two words I would choose at the top. But cheaper, faster AI, that sounds like a problem for the U.S.
And I think we had built in a story with NVIDIA and all, so many of these stocks of so many great things coming from AI and this demand being out there. And the question is, okay, and the one thing that we always see is, when there's things for demand, there's competition around price. Well, how real this is and everything, well, the market's taking it very serious, but we're very serious for very frothy levels. I mean, and also the disconnect between U.S. markets and global equity markets has been pretty
unbelievable,
pretty extreme. Whether you're looking at German equity markets or the UK, or Chinese equity markets for that matter. And they had a series of PMI numbers in China last night that came out and were all in contraction territory. Mm-hmm. So this is less of a bump for them, and it'll be interesting to see if some of the large cap Chinese names react to this in a positive way. It's more of all right, this AI is just not going to be a cash printing machine for a select few.
Well, it's an interesting balance that U.S. equities and the markets, of course, whether it's interest rates or equities, those are always in my mind as like kind of two heads of the entire, all global assets. And then they make waves and they can push markets like gold, Forex, all these different markets around. And the equity story has been this constant balance, Pete, of exactly what you talk about, where the U.S. numbers are not receding. Whether it's employment or, our PMIs, everything else, it continues to be in growth territory where globally, in China, it hasn't been there for months, if not years, really going back to the recovery off of the pandemic, didn't recover like the U.S. or even the Euro area or the UK did, or more recently in the Euro area and the UK, where they did see a robust recovery, they're starting to come back a little bit from high interest rates, whatever you want to say. But the balance has been, okay, the U.S. is outperforming by all these metrics, and you've got your NVIDIAs and Microsoft and everybody else, and you have literally the CEOs of some of these AI companies or AI tangential companies saying, yeah, there's probably a little bit of a bubble built into these prices. Because, like you say, when something like this happens, you can create maybe price-insensitive buyers for a number of the stocks in the NASDAQ just because they're like, I can't hold these European stocks or these Chinese stocks. I need my wealth to go somewhere, and so I'm going to pour it into this part of the economy, the global economy that continues to outperform. And maybe if I'm paying for this much outperformance relative to, the Euro area, UK, or China, I'll pay this much for this outperformance. And inevitably, you have this back and forth here. This isn't the first time we've seen this. It feels like one in every 4 to 6 weeks where the NASDAQ gets hammered. Crypto and a lot of these, like I say, there's waves in equities, and then it gets shaken out throughout all the rest of the assets. It has bounced back every time until now. That doesn't mean that it has to bounce back this time, but this is a real vicious move, and it's a novel one in that it's coming from. I feel like this is the first one that's like global competition based because FXI is set to open up about 1 or 2%. Chinese equities are up on the session, whereas U.S. equities, NASDAQ's going to open down 3 to 4%.
Right, we were down 4.5% at the lows again. Overnight limits are 7% or 5% either way. Excuse me.
So close.
So it got close.
Yeah.
But they're getting a little bit of a reprieve now. But they took a lot of gas one way, and it kind of sat at those. Just NASDAQ was down like 200, 150, pretty much through the Asia session, and then they just went to town on it once the European session came in. But we're seeing the yen outperform.
Yeah.
Yen's railing, dollar yen's falling, dollar Swiss getting hit really hard. Flight to quality plays definitely coming into a little bit more of a consistent pattern here. So, Euro is up a little bit from where it was sold right at the opening Sunday night. Aussie's up, Canada's up. But the biggest mover by far has been Swiss and dollar yen.
Yeah, and here you have it. To Pete's point, dollar yen. Again, if you can think of yen as almost like it's historically positively correlated to indexes like the VIX, or negatively correlated to equities. This is outside of Japanese noise, like anything having to do with obviously the Bank of Japan or Japanese GDP or anything else. The Japanese yen has historically acted like a flight to quality.
But I think it brings up, why hasn't it done before? Because we've had these shallow pullbacks, you said, in NASDAQ, that last a day or two and look like, it's really going to get bad. And then buyers emerge out of nowhere.
Sure.
Maybe this time it is a little bit different, or the market's anticipating that because we're finally seeing, where we are in NASDAQ is still, we've got a lot of gains still in there from post-election. So
it's still 20. Yeah, it's still 21K.
Right. Bitcoin's 100,000. Now it's not 110, but it's still 100,000. So, that opened up 105 and just kind of got ground on all the way down to, I think the low was 97,000, right when equities put in their low, and they're getting a little bit of bounce. Not, so it's like, yes, we had another pullback. This is bigger. It'll be interesting to see because now the traditional flight to quality pieces are working.
Sure.
Gold's got absolutely no interest in this either way. Very, very quiet.
That's been a mixed, but over the last couple of years, gold has been positively correlated with equities and negatively correlated with equities. So I could see that push and pull, but it is interesting that this one is pretty definitive. This move here in yen, which is, risk off. And here you have the open where dollar opens a little bit lower against yen. So you've got a little bit of this risk off sentiment. And like you say, I mean, throughout Asia here, the dollar yen piece got back to unchanged around 156. And then throughout Europe, they absolutely annihilated it with NASDAQ, with Bitcoin, with the rest of these risk on markets here, seeing a little bit of bounce in this dollar yen. But I mean, they took close to 200 points out of this market on
big move,
some perceived real risk off sentiment. Even with the bounce back in NASDAQ, they're set to open this U.S. equity market down at least 2 or 3%. So I think it's got to be the velocity, Pete, that's maybe woken up these risk off, traditional risk off currencies, because you're seeing a little bit of it in, now this is interesting, the timeline for this, but here we have the dollar versus the Swiss franc. Swiss franc, all those things I just said about yen, parallel here in this market, but you didn't really see this sell-off in dollar Swiss franc. Oh, here, I have the 4-hour chart. That's why it looks so different. I was about to be like, what the heck is going on here? But the Swiss franc is finally starting to act like this as well, and we haven't seen this piece in a while. I don't think we've talked about Swiss franc in so long because it's just edged lower and lower. But I mean, 80 points lower here in dollar, 80 points higher in Swiss franc to start the week is a pretty significant move here back below 90 cents, Pete.
Yeah, I mean, definitely the velocity of the equities move has unlocked some of these. And you can see the kind of the back and forth in euro. Euro back up to above 105. Not the same. Again, we opened a little bit lower Sunday night, but we're just back up to where we were highs going out mid-Friday at noon, our time, before they took a little bit of zeal off of it. This will be an interesting inflection point. So we're going into the start of the U.S. session at the highs. Market tried lower with the usual, the dollar's going to be bid with a little bit of the geopolitical. Yeah,
U.S. strength geopolitically.
And not so much the case right now. So this should be an interesting week to see if we actually put shorts to the test.
Well, and I want to, so this is the second level for me where, the yen piece and the Swiss franc piece, like I said, are closer in an environment like this. If this risk off sentiment continues this week, not only today, but into this week, and we'll get through the schedule because it's going to be a pretty volatile week economic data wise as well. So there should be a lot of movement. But if the risk off sentiment continues, Pete, like we just went through with yen and Swiss franc, as long as there's nothing necessarily going on with the Swiss National Bank or the Bank of Japan, then these should continue to move kind of inversely with the NASDAQ or with risk on markets.
These starting to become U.S. equity proxies, for better or worse. We know it's not perfect, and it doesn't always, but and we haven't, because we've got a lot of mega cap reporting this week. We've got Meta, Apple, Microsoft.
We have an FOMC meeting on Wednesday.
And an FOMC meeting on Wednesday, which will be interesting considering the rhetoric wrapped around it. So we'll see if U.S. equities. I mean, we saw last week Netflix outperform $100. Huge move to the upside. So tech continues to, and again, that's a smaller piece of it. Tech continues to outperform basis numbers, even these very rosy expectations of growth. If they do, does that give, again, are we back to the old, NASDAQ was down for 2 days, and now we're back.
What we've seen the last couple of months,
it'll be interesting to see. Or does that, because any outperformance there, become an opportunity to take something off the table. And that might be the case.
Well, and what I really want to also get to is a point that you alluded to that I thought was super poignant for me, which is, okay, you've got, in my mind, kind of the first tier, most correlated pieces, which is your yen and Swiss franc, and you kind of know how they're going to act if this risk-off sentiment continues. But you brought up this piece like the euro, and I want to get into Aussie in a second as well, because it's a little bit different.
We need to talk about Aussie and Canada too. Yeah, absolutely.
Because the story here is mixed for sure. It's more nuanced. For me, it's a tier lower, and it's a tier less correlated necessarily than like, oh,
absolutely.
U.S. equities getting hit, and so the dollar should get hit relative to euro. You brought this up earlier. It's more of a relative game.
Yeah.
The euro has been underperforming to a huge extent over the course of the last several months. As you can see here, the move from over 110 all the way down to lows of 102 and bouncing back the last couple of weeks here. This has been a relative game. This has been, euro data not looking so good, U.S. data continuing to be strong. And you can see here, going into the first U.S. session of this week, the euro is continuing some of this strength we've seen the last couple of weeks. And the story for Pete, it continuing from 105 now to 106 would be throughout this week, maybe some of these U.S. earnings are lighter than expected. Maybe the FOMC meeting, they're not expected to cut, but they come out a little bit dovish. They're maybe worried about some of the geopolitical stuff around tariffs, or they're worried about the economy, whatever. It's different than that yen piece, right? Which is kind of reciprocal, one for one. Here, if you see the U.S. data come in, flat or a little bit under expectations, and euro data outperform a little bit, you might get that mean reversion. You were talking about it in terms of equities, like U.S. equities have so outperformed European equities over the course of the last several months that is this the start of a little bit of comeback? And you would probably see it in this euro-dollar market as well.
Yeah, and I think the start here is, well, we're at the highs from last week, but we're not through them. Mm-hmm. So there is this, I'm going to manage a little bit of, if I've been a long-term short euro and caught some of this down move, I don't think they're cheap, I got to buy them is quite in the market. And you can see that within this kind of march up to the highs from last week. I mean, we're there and we're at the highs, but it hasn't been a race. So it'll be interesting to see. This will be an interesting week because you're right. We are chock full of both U.S. tech earnings as well as FOMC. And I think we have core CPI also coming out. So there will be, and it'll be interesting to see, is the inflation story overwhelmed by all this? And I mean, I think the fear about the tariff thing coming back into play will continue to add a little bit of upside to euro. But if we get through these highs early in the week, I got to imagine that everybody's going to be put to, okay, we've got a new range. We're going to get a little bit elastic here. So let's take a quick look at Aussie and Canada before we run out of time, because still...
Here's a 15-minute chart of Aussie you have, and you can see...
Now, this is good to bring up because we're not back to 63.30.
No.
We're not at Friday's highs. We just brought back some of the trough of what we put in last night.
Well, I was going to say this, out of everything we've gone through, has some of the story that's emerging the last several hours. This was the weakest piece that the U.S. dollar was starting to beat up on here, and now it's just back to unchanged. It'll be really interesting, especially because this is kind of developing as a China story, Pete.
Wouldn't you have expected that?
I would have expected this to be higher.
Right, this would be 63.5, and everybody would be... So it's interesting. What does that tell you? The fact that it doesn't bounce, given U.S. equities rolling over, giving the China story... for me, I look at kind of the tape action to tell me who has got the weaker hand. And again, the dip here doesn't give me an enthusiastic response. Let's take a look at Kiwi really quickly before we go to Canada, because we know the high correlation between Kiwi
Pretty similar.
Same
yeah.
exact chart. So they are moving in lockstep with one another.
Well, and if I just look at the daily really quick, you can see here the bounce of the last couple of weeks in Kiwi, for example, from 55.5 to close to 57 here. It is not nearly as strong as this bounce the last couple of weeks in this Euro market from 102 to, I mean, it's 105 bids strong here, and looking at 105.50 and 106 here. So it'll be interesting because, I would have expected this Aussie piece, and I'll pull up the daily chart just to for balance here. I would have expected us to be kind of moving through 63 cents to a healthy degree if Chinese equities are set to go into the U.S. session bid by 1 to 2%, and Aussie is fighting for unchanged to start the week here.
Right, which is a little disappointing. So it begs the question: will those Chinese equities hold? This is telling me those Chinese equities won't hold that bounce.
It could be that, or this is a matter of if this story is so overwhelmingly negative, the risk-off sentiment kind of takes over any kind of, even if there is a Chinese bounce, if it's so negative for the global economy,
commodity currencies,
then this is getting pulled higher by China and getting really dragged lower by global equities outside of China. So it'll be really interesting to see this piece. I do want to take a look at the calendar, or did you want to look at?
You want to look at Canada real quick? Let's go through the calendar so we don't want to take a quick look at Canada.
Yeah, let's take a peek. Just to see here.
Peso down a little bit too.
Similar story here. A lot of junk. If anything, as you can tell, this Canada piece has not even seen any real bounce.
No.
In accordance with the bounce that we're seeing in other currencies. So probably, in my mind, one of the weakest pieces on the board. But has really. This is a classic one of I wouldn't expect Canada to be rallying here because they're so closely tied to the U.S. that if Canadian data is already pretty poor and U.S. data continues to, not continues, but starts to trend lower, then I don't know what it means for this Canadian dollar. But let's take a look at the economic calendar to see what hot ticket items we have in the next handful of days. We have not so much here in the next 24 to 48 hours. You do have Australian inflation. But you get into Wednesday here, Pete, and you have Bank of Canada on
another cut on the table,
and that's on Wednesday morning, I believe. Why don't I have my U.S. data here? There we go. That's why. There we go. Okay, Bank of Canada on Wednesday morning, Fed on Wednesday afternoon, and then you have, I believe, the ECB coming in on Thursday, if I'm not incorrect. Thursday morning. U.S. time, Thursday afternoon in Europe. So in the course of 24 hours there, Bank of Canada, Fed, ECB, but that will be Wednesday into Thursday.
Right.
Today
and then we go
tomorrow,
into month end on Friday, which is always can be a volatile time. This is going to be an action-packed week, so it'll be interesting to see. We know the pieces that are kind of tracking equities. We know the pieces that are kind of underperforming, Canada, and Aussie, and Kiwi. And Euro, you would have to say at this point, hasn't quite made up its mind.
Yeah, and you have a host of earnings as well. It looks like you have Tesla tomorrow, Apple on Wednesday. So, man, there's going to be a lot of stuff.
There's Meta on Microsoft. There's a lot coming out. So it'll be interesting to see. What this gives us, though, is, again, be mindful of where the correlations are sinking a little bit now. And you'll get some good back and forth. I don't think this is going to be a situation where you're going to have a rip one way without a little bit of back and forth to it. So it's going to give people wanting to play both sides the ability to manage a little bit, which is what we want as active traders. So this is setting up to be really interesting week as we roll into it. So this will be fun to wrap up. But January's gone fast, hasn't it, my friend?
Yeah, but it is nice that this is a full last week of January because, a lot of action already organically. Obviously, we just ran through the schedule, but then it's not even like, non-farm is this week. This is all January. Non-farm will be next week. So a lot of stuff, a nice full week. here, I'm definitely going to be glued to my trading platforms to watch it all play out.
All right, fantastic. Guys, coming up next, Tom Sazov, Tony Batista, Vanessa Logan. We'll be back with you tomorrow at 6:30 for another edition of Forex Focus. Thanks for tuning in.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. Mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams in Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing the story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, "How do you know that?" Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken wing butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Trader's Block, we've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning.
Reds. Happy Monday to you both. Is that?
No sound, girl.
I don't think I can hear Vanetta, but I got a good meme to go with it.
Hold on, guys.
There she is. You're back. Start over again. What were you doing there?
Oh, you couldn't hear me? Oh, I was playing Red Kingdom for you.
Oh, okay. Very nice. Very nice. Good job out of you. Good job out of you. I don't know if it was fortuitous that we couldn't hear you.
Oh, sorry. I'm gonna blow out my mic. I am super excited that in just her second year, Taylor Swift has made it to the Super Bowl again.
Yeah, she's awesome.
Yeah.
She is kind of a classy act. I'll give you that.
So classy.
She is.
So nice. She makes Pop-Tarts from scratch for the team after they win, and it's just chef's kiss. It was a really good game. The Bills played really good. It was just...
No, they didn't. The Bills played really, really bad. They choked again. I mean, their third down statistics looked like the Bears' third down statistic all year long. They lost that game. The Chiefs did not win that game. Chiefs played great. They played their game. They got their calls, whether they were good, bad, or indifferent. They got their calls. Everything was good.
Oh, stop your crying.
The Bills lost that game. They cost me $400 because I had Sosnoff inside my hands. I was going to wring his neck this morning. I won the first game. I had nothing but upside, and the choke artist Bills did it again. They snatched victory from the jaws of the
you're lucky you won the first game. The refs stole that game from the Commanders early on. Some really horrible
It was
calls.
early. They won by
35.
You gotta stop. Seriously, you gotta stop.
Yeah, but early on the game was changed with some really bad pass interference.
I'm gonna have a
calls.
hard time supporting your they could pull the rug out from underneath them Sunday call if you're gonna act like this about the Commanders game. Okay, I'm telling you right now.
My Sunday night call was pretty damn good last
You're
night.
gonna lose me if we don't have a good discussion right now about the Eagles. Eagles looked magnificent. Fly, Eagles, fly, as Vanetta would say.
Like, fly, Eagles, fly. That's right. It's hard for me.
Oh, my God. It's so painful watching the Eagles win. It really is.
Why? Why do you hate the city of Philadelphia?
I don't
and
hate the
its
city of
wonderful
Philadelphia.
people?
Eagle fans are the worst. I mean, Chiefs fans are not that great either, but Eagle fans, oh, my God.
They hate us because they ain't us.
Come on, Saquon Barkley, very first play, 60 yards. Come on,
I watched it.
That's a dagger.
I watched it.
Or as you would say, what do you call it in fencing that you used to do? What do you call that? Not a pirouette, but
a par.
There you go, Saz.
A parry.
Yeah.
A parry.
A parry. There you go.
Yeah, I don't know.
Parry, like perimenopause that you're in. Right, exactly.
Also, Cooper DeJean, that kid's a stud. Good job for that kid.
Yep.
Oh, somebody likes a little Cooper DeJean.
Fly, dude, Eagles, fly. Let's call them the champs.
White corners back. I'm here for it.
Said nobody ever in the NFL.
No way, dude. I am here for it. And of course, Jalen Hurts, that man is fine as hell. Someone tweeted that they were in a bar in Philly and that these two guys were like, Jalen Hurts isn't even that hot. And the whole bar just got quiet. And every woman in that bar looked at them and was like, no. It's too funny. But of course, the most epic story is the most unhinged fandoms coming together. I'm talking, of course, about Swifties and Chiefs fans. It is a match made in heaven because a Swiftie over the weekend figured out. So there were some Buffalo fans celebrating at a bar.
I can't take this, Sadaf. I can't take this.
Buffalo fans celebrating at a bar called Taps, right? And a Swiftie figured out that their TouchTunes, their music platform, had an online portal. So then they just put in Red Kingdom, they put in Fight for Your Right to Party, then they put a bunch of Taylor Swift songs. And it was all the Bills fans were there. And
you know what? Nobody ever talks about her going from one guy to the next. If she was a man, they'd be talking about her like John Mayer. You know what? I'm tired of her.
Okay, well,
Sorry.
that's okay. You're a dad, a Brad, and a Chad, and we don't care about you. Tom has always been on the right side of history, so for that, we
Yeah,
stand,
Tom's always been on the right side of history.
We stand, Tom. Tom, that's for you.
Yeah. No, I was all in on the Chiefs yesterday.
See, he's on the right side.
You
of
were.
But
Yeah, you were.
I'm all in on the Chiefs because until somebody beats Mahomes,
Like Elon Musk, you can't fade a superstar.
no, there's a big difference. One guy's crazy, one guy's just good.
Sure.
Mahomes, until
world
somebody
according
beats
to
him, can't fade him.
And what a great story are the wide receiver Worthy, who literally the Bills dropped him. Such a nice redemption story for him. He's like, Bills didn't want me. He's like, he wanted to prove that he had something
The Bills were a drop pass away from winning that game. Are you kidding me? That kid's supposed to catch that pass. He knows it.
Okay, well, closeness matters.
Yeah, why don't you
and
report
grenades.
get a room?
No, he dropped the pass. It happens. That's sports. Sometimes you don't make the play.
He
but
didn't
they
even
were
actually
there
have the. It was close, but he didn't even really have the pass.
It was a can of corn. Tom Sosnoff could have got underneath that thing. Are you kidding me? Even with his legs.
Wah.
Wah, wah, wah.
The Bills are just choke artists. They deserve what they
In
get.
Spags we trust, man.
Wah. That was a great blitz. That's all I can say.
Yeah. You should go cry about it.
Yeah. Go cry about it. Get a room with Portnoy, like I said.
But how eerie is it that the logo for the Super Bowl is the Chiefs and Eagles colors? Do you believe in the theory that they know ahead of time?
100%.
Of course.
It's weird.
I'm surprised.
So what's
that
the
Chiefs
line?
are-
Super Bowl is in New Orleans. I would also like to point out Taylor did 3 shows in New Orleans when her Eras tour came back, and she blessed it with some Tay voodoo, doing a touchdown celebration and a first down celebration and a football. So I'm just letting y'all know a little bit of family business.
I think that the Chiefs are a 1-point favorite, but we don't know.
That's what I've been seeing. I would have thought. I don't know.
I would have thought Philly was going to be favored.
It's of course. I mean, it's hard to.
It's going to be a pick'em game. Pretty close.
Yeah.
It's good.
It's gonna be great.
Hopefully, it's a great Super Bowl. They usually are not. Hopefully, it is.
Only Eagles quarterback, I think, to go to 2 Super Bowls.
Only Eagles quarterback. Wouldn't all the Eagles quarterbacks go to the Super Bowl?
No.
There's only
To
been-
2 Super Bowl, like 2 different Super Bowls.
Wow, he could be the first one to lose twice to Mahomes.
Oh my God, you're brutal, man. You are brutal.
I can't believe you lost $400. That makes me happy.
Well, I didn't lose $400. I beat Sosnoff the first game, so I had 200. I already had Frankie's 20, but Frankie's like, I mean, you take money from him every week that he bets. That's an easy thing. So I already had Sosnoff's 200 in my pocket. He didn't pay me.
Right.
Like he didn't pay me. Like
right.
most bookies pay after that, and then they got to come get you for the rest. But yeah, I don't say nothing. But then the second game, I lost, and wah. So here I am working for the man again.
Yeah, well,
Boy, your yen trade was amazing, Saz. Boy, your bond trade was amazing. That's back to that again. Oh boy, And don't forget, we still got that MVP money, Saz. If I'm going to take from you.
What MVP?
What MVP?
Money?
Oh, for the NFL MVP.
Oh,
Yeah,
you already won that.
When Lamar Jackson.
He won.
What's that?
He won.
Oh, did I? Well, I didn't get paid yet. I don't. I didn't see it hit my. I didn't see it hit my Venmo. My friend James.
Funny. I didn't know that he won. I didn't know that he won. Congratulations.
I don't know. I thought, did he win? Somebody said he won. I thought he. I don't know.
I don't know that it was out. I haven't seen anything, but that doesn't.
Oh no! You listen to him. You hear the first thing out of his mouth. Don't believe what he said. He just said, "Well, you won that one already," but then he forgot that he didn't pay me. You didn't pay me, and you didn't pay James. You deadbeat. Pay us.
The guy. I actually didn't know he won until last night. There was somebody was doing the broadcast. I don't know if it was Romo. I'm not sure if it was Romo or Brady, but somebody said They were talking about MVPs. I thought that's what somebody said it.
Well, someone let's verify. No, Romo and I think Joe Buck were calling the Chiefs game.
No. On the Chiefs game was not Joe Buck.
Oh, well, then it was Romo and some other guy then.
Yeah. And
now the NFL MVP will be announced this weekend. It's going to be announced this weekend. He's won every other MVP.
Oh, okay, because I didn't think it was out yet, but I was like,
no. But I was just trying to get early payment from Sosnoff. If he would have gone to the hip, and pulled out that iPhone 6 that he has and paid me, I would have been very happy. I would have taken it. I'm not going to lie.
That's funny.
Possession's 9/10 of the law. Kansas City -1.5. That's what I got.
All right.
Sodnoff, let's talk markets for a quick second here. Is the low in, even the S&Ps were about 50 handles lower than this. They're down 130 right now, 128.
I saw them down 155, so 30 handles lower, I guess.
They got down to 59.48.
Are you serious? Wow.
They're down a little over 2% right now. The low, I got 59.48. They're trading 6,004 right now.
You know, it's really interesting because last night we were doing the show, and when we opened down 30. And it was funny because I said, I think they're going to open down around 30 tonight. And just took a wild guess. I mean, they looked like they were down 10 in the pre-market, but I couldn't tell. So I said, I think they're going to open around 30. They would open down 30. And they're just sitting there. And the NASDAQ, though, looked really weak because the S&Ps were down 30, but the NASDAQ was down 200.
Yeah,
I will tell you why during news.
No, I know. You're going to give me the whole DeepSeek thing, blah, blah, blah. But
I downloaded it.
DeepSeek? Yeah. So it's interesting because it's I mean.
We'll talk about it.
Yeah, well, we use it. Just so you know, so we use it at work and stuff like that. But it's forget about that for 1 second. Just when they opened the S&Ps down 30, I'm thinking, okay, not too much. And the bonds were only up like 15 or 16, and then crazy thing, the NASDAQ just looks so weak. And the next thing you know, the NASDAQ's down 300, and I was like, all right, this thing is not, this thing's not turning around. I didn't know what it was, but I just, this thing's not turning around. It just got.
You're like, I'm gonna have to put some pants on.
Well, the NASDAQ's down almost 3.5%, 776. NASDAQ's about 400 off of their lows, but yeah, NASDAQ is definitely down more.
But if you look at some stocks, like the Chinese stocks are higher, there's a couple of weird little things
It's
going on.
It's your day, Sadnov. Bonds are higher. You along those. The yen is higher. Currencies are higher. You like those. Chinese stocks are higher. You like those. The market's lower. This is your day.
You can't blame this on Biden. You like that.
The Russell.
Thanks, Joe Biden.
It's not his fault. It's not his fault.
Well, he takes the credit. He takes the fault. Thanks, Joe Biden.
It's not his fault. What you gonna do?
So anyway, there you go.
Good job.
All right, well, let's get into it because we're going to shuffle some things around because things are moving. Like the market took a bunch of Metamucil. Something's going on. But we got a great show for you today. A lot of, crazy content headed your way. At the top of the 8 o'clock hour, we are not going to do a options jive. We're going to take your calls. Close all watertight doors. So at 8 o'clock, we would love to hear from you. Then at 8:40, we do have the Skinny on Options abstract application. We will have Dr. Jim in the house. What to do after you get assigned. What happens when you get assigned? Also, who do you think Dr. Jim's rooting for in the Super Bowl? What team will he lay claim to?
Yeah, what team? What team do you think he'll like, Saz? He's got to be a Swiftie, right? Oh, please make him a Swiftie. Please make him a Swiftie. Do not make him an Eagles.
I mean, honestly, I don't think any team wants him. He's going to probably come up with some, I don't know. These are not his teams.
But he's gonna think of something. I don't know. I was just curious to figure out which which way he was gonna go. But then 9 o'clock, we have a market measures. How do presidential administrations affect earnings with strangles? That is a very specific question, and I am interested in the answer.
Yeah, we'll see.
Find out.
All the segments today are tentatively going to be played out depending on what the market does.
Sure. Depending on how much it craps the bed when we open.
Yes, because we might just keep talking about the markets and forget about the segments today.
That's
depending
fine.
on, yeah. So we'll see. We'll play it by ear.
I'm trying to keep it tight, trying to keep it moving. And then live from the trade desk, maybe. Look out, Scott. You might get bumped. No, I'm just kidding. We always have time for Scott. But Big Boy Scotty asks, live from the trade desk, counting down all the top trending tickers at Tasty Trade. That's our run of show. Let's get this Boeing going. You want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's January the 27th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Sure.
Ready for the news.
Lot to get to this week. It is a packed week of fourth quarter earnings report and interest rate decisions from the Fed Reserve and European Central Bank. The FOMC will announce a policy decision on Wednesday. Markets are overwhelmingly pricing in no change in interest rates. Again, I wrote this before the lot of the shenanigans. I wrote this when the E-minis were only down 30. And the ECB is expected to cut its benchmark interest rate on Thursday, but you got some heavy hitters with their earnings this week. You got Apple, you got Tesla, you got Microsoft, you got more, but Apple, Tesla, Microsoft, those are the big ones, and coupling that with FOMC and ECB. Woo! And to this morning, what are you going to do, girl?
Yeah, what are you going to do, girl?
What do you mean, what am I going to do? What am I going to do with what? I'm not buying the opening. That's what you're asking.
I'm not. I don't even know what I'm asking. Like, what are you going to do in like a Tesla or in like an Apple or like a Microsoft? We're getting
Actually,
they're not down that much.
Apple's up.
Yay for
Is
Apple!
It up? I thought it was down $1 earlier. Let me see.
No, I think it's up like 50 cents.
Good job, Tim Apple.
You are right. That's right. Good job, Tim Apple.
Tesla's down 10. I mean, I don't think I'm going to do anything big right away. I have to deal with some chip stocks that I have some bad positions in. But other than that, my positions are pretty good across the board today, except for 2 chip stocks. That's it.
Let's talk bonds, FOMC, and ECB on the table.
I closed my bond position this morning. Bonds were up close to 14.24, 25. I bought back my short puts about an hour and a half ago, and I will look to reload if the bonds sell off at all today.
Wow.
Okay.
I took profits for a change.
Wow.
I know, shocking.
Yeah, that never happens.
I know, shocking. We made a good bond trade starting the year, and we've been short the 114 puts. We've been trading around them, and then I just took them off this morning for 106.
Here's something interesting, and I don't know if it's a stat that matters or not, but let's get into it. For the first time on record, the majority of all trading in U.S. stocks is now consistently occurring outside of the country's exchanges. The off-exchange activity, known as dark pools, is on course to account for 51.8% of traded volume in January. It would be the 5th monthly record in a row. First of all, what are dark pools, and how is their supremacy going to affect retail traders?
It doesn't affect retail traders at all. I mean, the amount.
But it sounds so sinister, though.
It sounds sinister, but it really doesn't. It doesn't impact none of our flow. There could be post flow that goes into a dark pool later when the liquidity provider's trying to flatten out their position. But our stuff, all gets met way before anything goes. In other words, all of our flow gets sucked up the minute it hits minute it hits tape. There's a counterparty to every single customer order there is. Dark pools are for institutional business. It doesn't really impact retail business at all. Zero.
Gotcha. Okay. All right. I thought that was interesting. Hey, moving on to some commodities. U.S. oil and gas rig count falls to its lowest level since December 21. That's from our friends at Baker Hughes. The oil and gas rig count is an early indicator of future output, and it fell again this week. Let's talk oil and natural gas.
Oil. Go ahead.
Oil's down 50 cents, trading 74 and change. Its IV rank is very low at 6. Oil's been down for quite some time. Net gas, I don't think a lot of people traded. It is down 5%. Those moves are a lot larger and more frequent than say oil is. Net gas down almost 5%, down almost 16 cents.
I think it's going to be in the 40s today. Everyone's going to lose their mind.
Yeah.
Yeah. Natural gas got whacked this morning. We rolled down calls about an hour ago.
Mm-hmm.
Okay. Hey, the SEC has rescinded an accounting rule that forced banks to treat Bitcoin and other tokens as a liability on their balance sheets. The guidance was a major deterrent to Wall Street banks owning Bitcoin. The rule was introduced in 2022, and it subjected digital assets to strict capital requirements, significantly raising the financial and regulatory risks of offering crypto custody services. SEC has now done away with it after years of lobbying by the industry.
Yeah. It was SAB 121 is the rule.
It was SAB 121, yes.
Yeah. So SAB 121 is the rule. It costs us millions and millions and millions of dollars. When people say, why didn't you guys offer this crypto, that crypto? It was all because of SAB 121. Essentially, what the idiots at the SEC did, and this is how dumb this rule was. For every dollar, let's say Tony wanted to buy $1,000 of Bitcoin, right?
Okay.
They would require us as a brokerage firm to put up $1,000.
What?
So if we had
think about that for a minute, like
how is that not sustainable? You can't do that.
Of course,
you have the money, like the customer has.
You can't borrow it. You can't do anything.
Right.
So what they would force firms like us to do. This is just for broker dealers like us. Like, not everybody had to deal with this, but broker dealers did. So, like, if we had $100 million in crypto assets, we had to put up $100 million in cash, which so it sucked up all the cash that every single brokerage firm. Like, imagine these firms, that had billions of dollars of crypto, like Robinhood and things like that. You have to put up billions of dollars to hold these positions. It was the dumbest rule. It made no sense because Tony, if he bought $1,000 of Bitcoin, paid for it in full.
Right. Yeah.
So he's already paid for it. There's no risk. Nobody has any risk. They were just making us put up the money on top of that just to discourage. It was the SEC's way of getting brokerage firms to discourage them from offering crypto.
Well, it worked.
Yeah. It absolutely worked, but it was a nightmare for firms like us. So to fight that and do everything we had to do to work around it, we probably spent, I'm guessing, $5 million just to offer. That's why we lose money when people trade crypto.
Whoa. And
because
so is the SEC going to write us a check now? Or?
They're not. They're not. But now that it's gone, thank God, we don't have to deal with it anymore. But it was incredibly expensive. All the lawsuits going back and forth, all the fines around it, it was insane. It was that's Gensler's legacy, SAB 121.
Thanks for nothing, Gary. What's crypto doing to start the week?
It was down about 6.
It was under 100,000 just a moment ago, down to 98.5 or so. It's trading 101 and a half right now. I'm talking about the Bitcoin futures.
Hey, Hey, here's something interesting. MicroStrategy may face federal income tax obligations on its significant unrealized gains, which currently exceed $19.3 billion. The company, led by Michael Saylor, holds over 450,000 Bitcoin, valued at more than $48 billion, following recent acquisitions that included a purchase of $243 million worth of Bitcoin at prices below 96,000. The tax implications stem from the Inflation Reduction Act, which introduced a corporate alternative minimum tax. Let's talk MicroStrategy.
Well, that's an interesting risk for them because I don't think that risk will come into play at all. Because
we're just going to abolish all taxes and just replace them with tariffs?
Well, because if that comes into play, somebody like Trump, who also has a crypto, an unrealized crypto profit,
yes,
would have to come up with billions of dollars. So I think from the top down, there's a lot of people that are sitting on crypto profits that are unrealized.
Okay, but it's the law. It's not an executive order. It's a law.
I'm just saying, I don't know how they can tax unrealized profits.
I don't know either, but here we are. What are you doing in MicroStrategy?
I mean, I just don't know how I don't know how that holds up in court to tax unrealized profits.
We'll see how that plays out, Cotton.
That's a tough one.
MSTR 341 or 342 on the bid, down about $10 or $11.
Which, by the way, is nothing in that stock.
Yeah, I was going to say it's an average type move here. I'm looking at the implied volatility. 4-day move is about $30. So, I mean, a little bit outside the expected move on a daily basis.
Coinbase CEO Brian Armstrong says a surge in new tokens is making evaluations harder. He took to social media. He says the company is getting 1 million new tokens a week, and the company needs to rethink how it lists and evaluates the slew of new tokens. But they're like, there are 1 million tokens a week being created now and growing, he said on X. High quality problem to have, but evaluating each one by one is no longer feasible. He's right, but I don't know how you fix this.
It's an impossible situation. One of the things, this was always one of the risks, and I don't, unless you have a name, like unless you're launching something like Trump did or something like that. But if you're just a regular, like if you do a Vanetta Logan coin,
sure,
you're going to be one of 1 million.
Nobody wants that.
Well, I understand that, but it's so easy to launch a new coin that
sure,
you've got literally 1 million coins a week being launched. So who's going to possibly ever list these coins? Like forget Coinbase. There's no exchange out there.
Yeah, but you're a free market guy. So what's the solution, free market guy?
Well, it's not really a free market because the only way you can get your coin listed, like if you want to go to Coinbase or some exchange like Coinbase and get your coin listed, you're going to have to pay a fee. And the fee is generally, just so you know, which none of these people have, but the fee is generally between $5 and $10 million.
Then how are there 1 million coins a week? I'm so confused then.
No. There's 1 million coins a week being created, but there's nowhere to list those coins. If you want your coin listed, you're going to have to pay an exchange. So what these exchanges do, they'll say, yeah, I'll list your coin for you, but it's $5 million.
Well, if I had $5 million, I wouldn't need to scam people.
Well, that's the other side to it. But like the question is, do you want, like the person that pays $5 million to have their coin listed is somebody that thinks they can get 30 million from listing the coin.
Sure, I guess. Okay.
So it's really just, again, this is the dark side to the initial coin offerings, just creating a coin. This is the dark side.
What's Coinbase doing?
Oh, you know what? You get me on this every day.
It's literally in big bold letters on the screen right now.
$10. It's down $10.
$287 and change, down $12. I just like to tease you.
All right. Hey, keeping it moving. Trump's order on the global tax deal is a relief to tech companies. In one of the many executive orders he signed, Trump signaled that the U.S. would not enact an agreement among 140 countries that aimed to stem a so-called race to the bottom on corporate income taxes. Basically, companies were like, hey, if you make over 750 million euros, you're going to have to face a global minimum tax rate of 15%. I think that that's great. Hold these companies accountable. Don't let them play, geography bingo by going to just some small island off Ireland or whatever. But now Trump says he's not going to honor that deal. Again, that 140 other countries have agreed to. Of course, it's a nice big package wrapped in a bow for his tech supporters. But what are your thoughts on this?
I don't know anything about it.
I haven't read anything about this
I'm telling
yet.
you, there was a deal, a global deal, 140 countries, and they're like, hey, 15% tax rate on companies no matter where they're based if they make 750 million euros.
Yeah, I like that.
I don't know anything about it.
Why wouldn't we honor it?
I don't know why we wouldn't, but I like that deal.
I mean, it's just like you're telling me these $3 trillion companies don't have the money?
No, I understand.
No, I think they pay less. I think.
Yeah,
I just told you.
Maybe
I
he
like
wants
the
them to pay
deal.
more.
I just don't know the details.
He does not want them to pay more, sweetie. No, be so for real right now. You know good and God, blah, 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 blank well, that he does not want them to pay more. You know that in your heart of hearts. Don't play.
My heart's like Sogloff. It's 2 sizes too small.
Yeah, don't play naive. It doesn't work for you. Hey, in other fun news, I don't even know where this stands, but Trump said in a social media post that he would immediately impose a blanket 25% tariff on all goods coming into the U.S. from Colombia amid other sanctions. And then Colombia said that they were going to double reverse us and then import tariffs on us. This was because President Trump tried to send 2 plane loads of migrants to Colombia, but then Colombia was concerned about how the migrants were being treated. To be fair, in the past 4 years, the United States has sent 475 planes full of migrants back to Colombia, and they've accepted all of those, but he didn't adhere to the ways that it was traditionally done. Anyway, long story short, bad coffee might be more expensive. Crude oil and cut flowers. Good thing there's not a major holiday centered on cut flowers that's coming up.
No, it's over already. Colombia.
A lot of the flowers I get are from Colombia.
This I know a little bit about because I read it. But they suspended the tariffs because they took they promised to send 2 planes to pick the people up.
No, they are going to pick the people up, but again, I'm not exactly.
The best part of the story was the idiot couldn't spell Colombia. That's the best part of the story.
Yes, that's right. Yes, so you need.
It's a tough one. I would get that wrong from time to time if I didn't have spell check.
Really?
Well, they could spell it when they had DEI. Hey, moving on. This is a fun thought exercise. I actually kind of agree with this. Doge may target the penny. Why do we have the penny anyway?
I like the penny. I don't want to get rid of the penny.
Well, it cost us $179 million. It cost us 3 pennies to make 1 penny, and that's not efficient.
Yeah, it's been like this for decades.
Forever. Right. It costs 3 pennies to make 1 penny. What's the point?
Agreed. It should be. What's the point?
So let's make it a 3 penny.
No, but isn't that just going to incrementally raise the prices of everything then? Because you got to go, then that's a nickel wide market. Like
by a penny, it's going to raise it. Yeah.
No, not by a penny, because there's not going to be you don't have penny increment. So you got to go 5 ticks, to a nickel.
Well,
right?
There's some that are going to be 96 that are going to be 95. Think about it that way.
I guess. Oh, that's true. Maybe.
It will never happen that way.
Everything's just going to go to $1. Everything's just going to go to
If it costs 3 cents to make a penny, why don't people hoard pennies?
Well, because that's not worth anything. It's in
not
the
a market.
Well, eventually you will when there's no more pennies.
Oh my God! Sometimes you need to keep your mouth quiet and not confuse everybody.
Hey, getting to the news that has literally rocked the markets. The release of DeepSeek R1 shattered long-held assumptions about AI. According to researchers, the project of DeepSeek, which is a new AI model that is competing bar for bar with projects like Gemini, like ChatGPT, it only costs $6 million to train, and it is, like I said, performing on par with leading AI. This is bringing a lot of issues into light because former FTC chair Lena Khan, she was kind of right. She says companies like American tech companies focus on monopolization means that they're drifting away from innovation, and a company like DeepSeek, they came in and they disrupted us. We got disrupted hard to the tune of the NASDAQ being down 3% this morning. What's your takeaway from this?
Well, it is interesting that I don't know if it really cost them $6 million or if it cost them $60 million. But
still, either way,
it didn't cost them $60 billion. That's the point. And according to
under the heavy restriction of the super duper powerful chips as well.
Well, I mean, OpenAI for the pro version is $200 a month, and DeepSeek is free.
Yeah.
And so it will be interesting to see. And I'm not exactly sure what you get for the 200 or what you get for free and blah, blah, blah. And there's all these, but from the AI people that I talk to, they say that they are very comparable. Each one has small advantages over the other one. And so, in that sense, it's disruptive for sure.
Let's take a look at all the chip stocks and tech companies that got kind of caught up in this breaking news.
All of them are down by $10 or $15 a piece. I mean, there's not one that I can find that's higher. Which one would you like to talk about? I'll go to whatever one you want first.
Let's go to NVIDIA first.
Sure, trading 126, closed at 142, so it's down about 15.
Okay.
They're all getting crushed.
Yeah.
How are you adjusting? Like, what are you like?
I haven't done anything.
You got to stay mechanical. You roll down the untested side. Yeah. You widen your strikes to the next month if you have time or you can. I mean, you buy the guts, sell the wings. Volatility on the other hand.
Let's be fair. There's nothing you can do right now. You're not going to sell NASDAQ futures down 780, to adjust that position. So right now, you kind of just wait till they open and then roll calls down after they open. And the premium will still be juiced, but there's going to be a lot of in-the-money short puts that we're going to have to deal with and recenter.
Volatility's up 12%.
What's your over-under? Does DeepSeek get banned in the U.S.?
No.
Well, to protect, I'm saying you have an administration that is super tech friendly, super beholden to the tech industry right now. This is an existential threat. It's number one in all the app stores. Like, honestly,
it doesn't matter because if they can build it, anybody can build it. That's the whole point. It has nothing to do with DeepSeek.
Right.
It has to do with the fact that if they could do this for
pennies on the dollar compared to what our corporations
then anybody can do it. So it has nothing to do with DeepSeek.
Well, this
I downloaded it. It's as good as Google Assistant or any of the other ones. Maybe it's even better. I haven't really played with it a lot, but it's good. It's good. It's great.
I downloaded this story on Friday because that's when this news came out, and this was before the DeepSeek news. But Zuckerberg has set Meta's AI targets for the year, and he's doing a line item like a CapEx expansion, of $60 billion. So he says the company plans to invest 60.
He should have just bought DeepSeek.
I know, but I'm telling you chronologically, I had this story already set aside because it came out after I got off the show on Friday.
Well, if they spent $6 million,
foolish. It looks so foolish.
Yeah, he looks like an idiot. But if they spent $6 million, if they really did, or $60 million, and they could have sold it for $600 million, they would have said sold faster than you would have been like, So
there's a thing in business called clawback. And that's what he's going to be doing with that money. He's going to be clawing back that money. No, but that's
why I was like, he has the incentive to get on the horn with the Oval Office and be like, hey, yo, homie, you need to shut this ish down.
It doesn't matter is my point. If they can do it, anybody can do it.
All right. Well, what's going on in Meta today?
I haven't. no position.
Meta's down like every other stock, down around. Well, it's trading 631. It's down about 16 or so. But remember, Meta just made a new high yesterday. Well, Friday.
Sure. And speaking of new highs, again, this is from going to our Wayback Machine of Friday. Alphabet shares closed above $200 for the first time on a split-adjusted basis. Google does face regulatory hurdles and increased competition, but shares closed above $200 for the first time on Friday. What's the Goog doing?
The Goog, as you like to call it, or the Google. With the options that I trade, 193 and change, down around $7. But again, just off of all-time highs on Friday.
Sure. What are you doing in Google, Tom?
Nothing.
Nothing.
Google has an IV rank of 61. I'm going to imagine that's even going to expand higher than that, but it does have earnings early February. Not too far in front of Vanetta's birthday.
Perplexity AI on Sunday revised a merger proposal it had submitted to TikTok parent ByteDance. The proposal would create a new entity combining Perplexity AI and TikTok US, and that it would now also allow for the US government to own up to 50% of the new company in a future IPO. I don't know why anyone would agree to this deal, but they are on a clock now. Yes, TikTok is back, but for how long and under what terms and conditions? This is the latest proposal.
I mean, I don't know why everybody doesn't bid for it.
I know, but they're not. Why would TikTok, as a wholly owned entity, just give America 50% of its value? What does TikTok get out of that?
They get to stay. It's better than nothing, I guess.
50% of your company is better than
I don't know,
man.
What are you asking me for? Don't yell at me. I don't know.
I know, but there's only 370. There's only 170 million users in America. Like, you're going to give up 50% of your company for 170 million users, and like disclosing what your algorithm is. Like, that's the part. No one's talking about that. I don't think whatever. But
can I say something about their algorithm? It's freaking genius.
Okay, it's got you.
Is it a bigger threat to the U.S. than DeepSeek?
I don't think DeepSeek's a threat, and I don't think TikTok's a threat. But whoever wrote that algorithm,
TikTok never took the market down.
Whoever wrote that algorithm, that person is the GOAT.
They're in jail right now in China, but yes, they'll appreciate.
Whoever wrote that algorithm was amazing.
Hey, in other news, the European Commission has asked social media giants, including Facebook, TikTok, and X, to take part in a test to see whether they are doing enough to counter disinformation in the run-up to next month's German election. Microsoft, TikTok, LinkedIn, Google, Snap, Facebook, Meta, and X have been asked to take part in the January 31st stress test to make sure they have safeguards in place to mitigate risks on their platforms. Good luck with that.
Good luck with that.
LinkedIn
right.
owned by Microsoft?
No. Yes. Salesforce?
No,
Maybe.
Microsoft. Does Microsoft own LinkedIn?
Yeah.
I thought they did.
I don't.
Microsoft 425, by the way, maybe 426. It closed at 444, Sadnov. So it's down almost $20, 18.
Do they own LinkedIn?
I can't keep everything straight.
Let's see.
I thought they did. I don't know why I thought that.
Who owns?
No, you're right, Microsoft. Yes.
Microsoft. Microsoft owns LinkedIn. You are correct again, Sadnov. For the circle gets the square and the win. Ding, 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 ding. Good job, Tom.
Hey, Apple admits its next-gen CarPlay is late, but still in development. Though Apple rarely misses self-imposed deadlines, it's done so with the next generation of CarPlay. The company originally teased the update back in 2022. We are in 2025. The new version CarPlay will integrate seamlessly with the instrument cluster. What's Apple doing? Like you said, it's up this morning, right?
Apple right now is unchanged.
Apple's a bucker. Tom was right. And now it's down 50 cents against 70 cents, but it's been oscillating around unchanged.
Good job, Apple. Hey, Amazon Prime Video wants to take a page from Netflix's record-setting notebook, and they have shifted their strategic focus towards live sports and away from original TV shows and movies. Amazon's move marks a pivotal moment for the tech giant as it looks to expand beyond its traditional focus. Let's talk Netflix and Amazon.
So I thought we got positions in either one. Netflix is trading around 960. I don't know. Let's round down 963 or so, down around $14 or so.
I have no Netflix position on.
Okay.
And what about Amazon? Now remember, volatility is going to be big in these because Netflix IV rank is only 19. We'll see how that changes this morning. I'm sure it's going to be a lot higher. Amazon's IV rank is 58. As earnings February 6th. Amazon is trading at let's say 227 or so. So only down about $7.
No Amazon position, no Netflix.
Again, also off of all-time highs, Amazon and Netflix.
Kalshi has announced, talking about pivoting into sports, Kalshi has announced its entry to sports betting. The site will now allow users to place bets in all 50 states on the Super Bowl, which is just 2 weeks away. The prediction market became famous for letting people make bets on the U.S. presidential election. They are now expanding into sports. What are your thoughts? I don't know how they can get all 50 states when it's not legal in all 50 states. It's legal in most states, but okay.
I curious how the CFTC is going to allow this. I don't think they will.
Look, dude, Don Jr. is on it. He's handling it.
That's right.
I don't know how they will allow this.
Okay. But you're not against this.
No.
No. Yeah, okay. Well, we'll see what Kalshi has on their site for their lines. And, yeah. All right.
We'll see.
Rather than collecting the money generated from lost bets, Kalshi takes a cut of placed bets, and the company allows users to trade directly with others on the platform, and that permits its use in all 50 states.
Beautiful. It's a good model.
That's what it said. And on Wednesday, Kalshi filed with the CFTC, notifying them of betting contracts. So the CFTC.
Yeah, you see, they're self-regulated. Whether or not they'll. I don't know what happens if the CFTC shuts them down, and then I don't know what happens to the bets.
Yeah. Hey, in a heartwarming story, in a fun sort of, exercise in the collectible market, a one-of-one Paul Skeens rookie card is worth $1 million, and it was found by an 11-year-old in California. People were looking everywhere for this card. They were buying packs and packs and boxes and boxes. And God bless this kid. The Pirates offered this kid 30 years of season tickets, and he said no. He says, I'm taking my talents to auction. Good for you, little man. And he's auctioning off the card. So
good for him.
And it's a one-of-one card. I don't know who Paul Skeens is, but
that's your girl, Livy Dunn's boyfriend.
Oh, I like Livy Dunn. Oh, okay.
That's her boyfriend.
My God, Sadnoff, you are up to date in People Magazine. Huh? You say you don't get any deliveries, but you must get that weekly. Is it electronic?
He's a pitcher. He was a rookie pitcher last year in the Pirates, and the kid's got an absolute gun. He fires like 103 miles an hour. He's really good.
That's cool. Yeah. So wait, hold on.
And you know his sex life too? I mean,
he's been dating Livy Dunn for like 10 years. So since they were like 12.
Oh
the offer to the kid was a meet and greet with Paul Skeens, 2 season tickets behind home plate for 30 years, a softball game for 30 people at PNC Park, and 2 Paul Skeens autographed jerseys and more. Kid said no deal.
Yeah, I think the kid can buy his own tickets with the money he's going to make from this, and he gets his own meet and greet.
That's a pretty good offer, though.
Really, you would have taken it?
30 years of Pirates games? I'd rather be in jail.
I don't think I'll be around for 30 years of Pirates games, so no, I wouldn't take it.
Okay, but you would have told your 11-year-old son, to take that deal?
I don't know what I would have told my 11-year-old son.
I'm asking you right now.
If it was an 11-year-old Tom, 30 years.
What would you tell your grandson?
Okay.
Yeah, what would you tell your grandson?
30 years behind home plate. So figure that's a lot of money.
Who's going to go to all those games? He's got to go to school.
It's the Pirates also. I cannot stress this enough.
It's 2,400 games approximately. I'll do the math for you.
2,400 games at behind home plate is usually like about $250 a ticket, so it's $500.
It doesn't include concessions. If they would have thrown in concessions and parking.
That's $1 million right there just in tickets.
Yeah.
And then,
is it though?
Yeah, it is. But then you get the 2 jerseys and what else?
A meet and greet. I don't know. I deleted it already. No, wait. A softball game for 30 people at PNC Park.
Oh, that's pretty cool.
And then 2 jerseys.
Butterfinger bars.
Yeah, I don't know.
That's
hey,
not bad.
I gotta keep it moving. Finally today for my viral video of the day. This is funny. Our dogs always want to protect us and they want the best from us. But sometimes your dog just quite ain't right. I don't know. But this little dog, he's so tough. But watch what happens when you actually unleash the fury. It's mildly amusing. Watch this. So there's deer out there, right? Let me at him. Shoot. And the deer's like,
What is he grabbing onto?
It's a
like a toy or a shoe or something, whatever it was. He's showing off. That's Sosnoff. That was Sosnoff, and he would get into a fight in high school.
Gets all puffy chested.
Yeah. Made those deer move away.
But you think you're gonna open the door and you think, because like Kalita, my Chihuahua, she would just take off and she would try to fight everything, but the dog just his real nemesis.
The dog, that's the Sosnoff of dogs, a little non-confrontational. Non-confrontational. That's right. I can't believe
that's my time.
No. You have another second or two. I cannot believe you didn't mention the most important news of the day. Vinny Batista, that's right. My son is 15 years old today.
Is he having a quinceañera? Why do I care?
Happy birthday, Vinny.
Happy birthday, Vinny.
How was Bob Chen's?
Like it always is, expensive. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next, Sosnoff? Confirm and send. That's right. And then we're going to go to your phone calls if you'd like to call in. The phone number will be below immediately following these questions. We'll be back in 90 seconds with Tasty Live. Thanks, Vanessa.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market because we got some movement today, Sadanoff. Even the S&P is down 128. That's about 2%, but they were about 50, maybe in a little bit more than 50 handles lower than that earlier last night. NASDAQ down 760. It too is off its lows, but still down 3.5%. Big move. NASDAQ, the biggest mover of the bunch. Russell's actually hanging in there, only down 17, and the Dow down 324. Russell and the Dow are the strongest of the group. NASDAQ, the strongest, followed by the E-mini S&Ps. Volatility up almost $2 to 18.35. It got over 20 again, Sadnoff. 2016 bonds are up full point 103. They were about 17 ticks higher than this to 114.25. Got down to 113 and change. They're about mid-ranged, up a full handle plus a skosh. Bitcoin down 4,700, Sadnoff to 101. It was about 3,000 lower than that. Obviously, it was higher than that by about 3,000 or 4,000. Also, oil down 37 cents, gold down 17 cents. These will take a back seat to the market and other commodities like, well, the euro is only up small now. Euro backed off a little bit. The yen is one of the bigger movers, /6J up over 1%. Sadnoff, that's all I got. A lot of stocks lower, mostly in the tech.
Let's take a quick look and confirm and send, and we'll go through these quick, and then we can take some phone calls. Emails that came in to us over the weekend. Let me just pull it up on this screen.
Sadnoff, many people have grown up with Vinny, since he was just 1 year old on this show.
Yeah. That's interesting. How many times a day would you estimate that you adjust your positions and your overall portfolio deltas? Do you think this? Do you do this throughout the day, or is it just on the open and the close? How many times do you adjust?
I anticipate never doing it, and that happens sometimes, maybe even more than you would think. But when I'm making an adjustment, it's typically 1.5, I would say. Usually I make one adjustment during the day. It's enough. And then you get those days, maybe like even today, where you roll down, you try to play a little bit of like a little bit of market awareness here. You think maybe the market's going to rally back a little bit, and if it doesn't, you roll down again and again. So I would say about 1 to 2 times a day when you do roll down.
This is a tough one because obviously it depends on how busy the markets are. I would say at a very minimum, once a day we go through all our positions and we make adjustments if we need to. I would say that's at a very minimum. I would say if the markets are active, we could do that 3 or 4 times a day. So on average, I'm going to say 2, but it doesn't necessarily have to be on the open. It doesn't necessarily have to be on the close. A lot of times I'll do it midday. And on a day like today, I might adjust my positions 2 or 3 times. On a normal day, less, obviously. But today, 2 or 3 times would be probably on the low end.
Okay.
It doesn't have to be opening or close. It could be any time during the day. Let's go next slide. I don't actually like the opening or the close. I like it middle day better. It seems like the NDX has attractive premium. And it does. That's just look at today. The Nasdaq's down 3 percentage points. That's why it has attractive premium.
Yeah.
It seems like the NDX has attractive premium in the 0 DTs. Is there any reason not to trade NDX instead of SPX? Well, today's an example, but go ahead.
No, I mean, I don't think there's any. You could trade either one. I think the Nasdaq is less liquid and wider. I mean, I know the Nasdaq is less liquid because it has wider markets and less volume than SPX. But sure, go right ahead. NDX, go for it.
Yeah,
Cash
sure.
settle, no problem.
Exactly. Cash
Be
settle.
Be careful with your entry. Like go above or below, depending on if you're buying or selling, and work the order down because mid price could be a little funky with the width of the strikes, with the width of the options.
The only thing I will say about NDX is that if you've never traded it before, price discovery is more challenging in there because in the SPX, the price you get, the mid price, is going to be pretty damn accurate. In the NDX, it may or may not be off a little bit, and you're going to have to learn how to do price discovery, and it's a big index. So you're going to have to do all 4 legs. Just be careful in there. It's fine to trade. Just be careful.
Yeah.
It's a big-ass product. I'm trading an account that's just under 10 Gs. I want to maximize my buying power, but also avoid pattern day trading. I've been looking at futures and maybe selling some spreads in the ES or MES for that matter. My questions are, do you think ES is too big for my account? And if so, how might I use futures in a more effective way?
Again, I'm just trying to read through the lines here. I mean, if you're trying to avoid patent day trading, then you have under $25,000 in your account. If you're under $25,000 in your account, /ES is way too big for your account, especially if you have other positions in there. I would want you to have $25,000 in just available cash to trade in ES. Go with the micros or the minis. I think micros is probably more suitable to your account size. That's just my guess.
Yeah, the MES options are plenty liquid. Trade those. Those are 1/10 the size. And so, I mean, it's going to be a little frustrating because they're small, but 1/10 the size is a much, so remember, the index is a $6,000 index times $50. So it's a $300,000 index. If you do the, micros, it's only 30,000.
Sure.
All right. Per each one lot notional. So you're just in. It's just do 2 or 3 micros. You're fine.
Yeah. Exactly.
Yeah. On a $10,000 account, if you're doing 2 micros, that's 60,000 in notional. That's 6x. That's fine.
But you would say ES is way too big for this account.
ES is too big.
Yeah.
Do MES options.
Yep.
Okay. No pattern day trading rules. Let's go next slide. When you roll the untested side of an iron condor, how do you decide where to roll? I know with a strangle, we're trying to cut the tested deltas by at least half, but how do you do it with an iron condor?
Yeah, again, your deltas aren't going to grow as much either. Again, if you're staying mechanical, because you're doing this with more than 21 days till expiration, because if it's 21 days to expiration, you're looking to close this or roll to the next month. If you're just taking that spread, you're really only going to reduce your delta by 1, 2, or 3 deltas on a relatively tight spread, maybe $5 to $10 wide on an iron condor. So you're not really reducing the delta that much because the delta hasn't grown that much. What you're doing is you're collecting a little bit more premium, reducing your win window, but you're already all the way on one side of that metrics anyway. So you're just trying to mitigate your loss in this and get lucky that the stock goes back inside, backs off one way or the other, whatever direction it has been going. It's not really a delta move. It's more of a premium collecting move.
When you adjust your position when you have an iron condor on and you're rolling the untested side, you want to make sure you pick up some, you don't want to do it for 10, 20, or 30 cents. That's the key. So it's not so much deciding where you're going to roll as the amount of credit. So when I roll down the untested side, I want to collect something. So whether it's 65, 85, $1.25, depending how wide the spread is, $2.
It's usually wrapped around $1. Again, just okay. Trying to
wrapped around $1, whatever it is. I want to collect something. And so it really, for me, I roll to where I can collect something. I know that sounds a little imperfect, but it is. Mm-hmm. I'm not going to roll just for 20 cents. I have to collect something, make it worthwhile.
Yep.
Let's go next slide. Can you explain why you can't use options to look for equities that have call skew and use that to confirm a bullish assumption you've had for a particular stock and then just buy the stock outright? If there's call skew, isn't that the market's way of saying there's a better than 50-50 chance the stock will go up?
No, that's not what skew is. Skew is talking about the velocity of the move. I mean, every NASDAQ stock, I shouldn't say every, the majority of NASDAQ stocks have call skew to them. The majority of any stock that you look at is going to have call skew to it, except for ETFs, which will have put skew to them. So basically, which would have been right for the last year or two, markets only go higher, except for today, that every stock is expected to go higher. But no, you can't look at skew and say that the market is projecting it to go higher. They're talking about the velocity of the move is higher.
Yeah. Skew, by definition, has nothing to do with market direction. Pricing skew or option prices based on skew have only the market's perception of which way it'll move faster, not which way it'll move. There's a big difference between the two. Speed versus so that you can adjust, so the option prices don't have to adjust as much, is all that is. It only has to do with velocity of movement rather than actual directional anticipation or directional prediction. So the answer to your question is no, you can't just scan for skew to determine which way a stock's going to go. You might want to scan for skew to determine whether or not you want to, for example, do a certain strategy, like a Jade Lizard scan for put skew, or selling a put spread, scanning for call skew, that kind of thing. But no, it has nothing to do with direction. Let's go next slide. And the last one. I've had a lot of discussions with friends about how bad credit spreads are. Most have a negative expected value. How do you rationalize the negative expected value with credit spreads to make profit over time?
I don't know what they mean by negative expected value.
Because what all they're saying is that if you if you risk one to make two, if you risk two to make one over time, that's a credit spread, right?
You're risking two to make one. Yeah, you got about a 60 some odd percent probably.
Right. 67% chance of success.
Sure.
That if you look at the expected value profile on that, it's either a zero sum game or it's negative over time.
Sure.
And
but we're not looking to hold this into perpetuity. We're also not looking to take this as a full win or a full loss. We're looking to take this as a 25 to 50% of profit on this trade. We're looking for time to go by and theta decay. So for me, if I have a higher than 50-50 shot, preferably over 65%, that's my entry. That's what I like to do. Willing to take the other side if somebody wants to do it. I have no problem with that.
So Tony's right here. If you just look at it purely as buy something at X and then let it expire, a lot of times it'll come out as a zero-sum game, potentially with a negative expected value, depends. But what we do is different. Sell only when credit spreads, only when implied volatility rank is high. Manage the trades early, and rarely does anything go to a full loss. Mm-hmm. That's how we get positive expected value out of those trades, period.
Very good, sir. Good job out of you. You know what we're going to do next, right?
Yeah, but let's just put a if you're going to call in, you can't ask us about your specific position. You can ask us about a strategy.
Very good. Very good. 855-238-2789 or 855-BE-TASTY. The number will be below in just a moment. Give us a call. I got 4 or 5 lines open. Want to talk markets? We want to hear from you. You're a little nervous or concerned? Or, hey, you look at this from an advantageous point of view. Give us a buzz, 855-238-2789 or 855-BE-TASTY. Let's talk. We'll talk for the next 20 minutes or so. Be back in 90 seconds.
If you missed the live show, here's our cherry on top weekly recap.
I have one question. Chicken wing, flat or drum?
Drum.
Sadly, we had it right. We knew it.
You go for the flat part?
Everybody does. Everybody in the know goes for the flat. Nobody goes for the drum.
Well, first of all, I don't eat chicken wings, but if I do, I go there. Second of all, I go boneless.
Oh my God, you bougie SOB. Unbelievable. Yeah.
Well, you didn't ask me boneless or bone.
That explains a lot on how you view the world too, by the way.
I told you 100% he's a drumstick guy.
Yep, 100%. Yep, I agree.
But I go
said
for
the same
boneless.
thing.
I would never order chicken wings.
Boneless. Oh my God, you're like a child.
I have never.
If they were in front of you and Tom, you would scarf the whole plate down. What are you kidding me?
I have never ordered a boneless wing in my life.
I guarantee you've had boneless chicken wings.
Yeah, I've had them, but I don't order them.
I would never order them. I like
when
bones.
You go to like a brown. Oh, you like bones? Oh my God. Well, because they give you something to hold on to, like an animal. Go to boneless. This is a great conversation. Anything else you guys got?
Oh, Sosnoff, I ran into 2 guys from the floor that I haven't seen in forever. Magoo.
Okay.
There's a trader named Magoo.
Mike, MGU, Magoo, the nice guy from the floor. I mean, sweetheart of a guy. Hadn't seen him forever. I walk in to pick up some Italian food. There's a guy sitting at the bar with his wife and another guy and his wife. And he had a country club shirt on. I wanted to see what it said, and I couldn't read it, so I must have looked a little bit longer. He goes, hi. And I go, hi, but we didn't know each other. And then our eyes lock, Sosnoff. It was like it was like love at first sight. And I go, and he goes, Batman, I watch you every day. I can't believe I see you. He goes, you're a celebrity. I go, Magoo. And we sat there and talked for about 45 minutes. We had a great time.
Well, your family was back at your house waiting for their food?
Yes. I found some tapes from 40 years ago, Sosnoff. I have something that I would like to show you. And there's Mr. Tom Sosnoff. This is the last Papa shot he ever made. 31 years ago, you made your last Papa shot. You still got that Sissy Mary little thing that you do before you shoot.
What in the deep purple are you wearing?
A t-shirt and a swoosh.
Hey, Scott, what if I said I could take you back to Sosnoff's prime 32 years ago? Would you like that experience?
From what angle? Like
a good angle. A good angle.
What prime? Like his trading prime, his basketball prime.
His basketball prime.
Love to see that.
All right, Beth, roll tape. Here is Sadov in his basketball prime. Can you see this?
You know what? This actually makes a lot of sense. Everybody's playing with their kid, and Tom's shooting hoops into a 3-year-old basket. Way to be engaged, Tom.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with your phone calls. 855-238-2789 or 855-BE-TASTY. Hopefully that number will be below. You can give us a call. We're going to go to your phone calls for the next 15 minutes or so before the market opens. Got concerns? More importantly, take advantage of things? Should we be looking at leaps? Should we be looking at front month? What do you want to do? Give us a buzz. 855-238-2789 or 855-BE-TASTY. Let's go to our first phone call. We've got, who did I say? Mark from Denver. Mark from Denver. What's up? Mark from Denver?
Hey, Mark. Hey, Mark.
Hey, good morning. I've never seen you guys take calls before the market, but I like this.
I know it's rare for us, but we figure with the NASDAQ down,
real, which it probably is, they probably have a much cheaper model. When are you comfortable starting to sell puts, or is this just an excuse to move down some of these highly overinflated stocks?
I'm not there yet this morning. That's for sure. I'm not there. I don't know about Tony, but I'm not there.
So I would look at it this way. Forget about what I want to do. Forget about what Tom wants to do for a moment. You're asking. Yeah. So are you there? You got me? So you're asking the question, when is it time? I'm going to give you the answer. I think if you're looking to play this from a bullish standpoint of view, volatility is going to be elevated more in the front months than the back months. So this might be a time where you see a big vol differential between an option that's 3 or 4 months out versus a front month. You know, with the front month right now being 53 days, that's a relatively long time in our world.
Yeah, I'm here. Can you hear me?
I can hear you. Can you hear us? John?
Should be able to hear us.
Are you there? Mark?
He's still on.
Mark, can you hear us? Mark, can you hear us? Well, hopefully Mark will get this answer or somebody else can answer it. With the front month having 53 days, I would look for doing some sort of diagonal spread, May, March. Like that's 100 days versus 50 some odd days, like a May, March, a June, or an August. If you want to go even further than that, I think you're going to see volatility elevated because it's a short-term issue.
Oh, no, I couldn't hear you. I'm sorry.
Okay. I would look, instead of selling puts, which I can hear you. We got your question.
I got you.
Instead of selling puts in the front month, which might be a larger delta move, I would be looking for doing some sort of diagonal trade with 53 days to go in March options. That's a lot of time. But I think those calls are going to be elevated with skew. I think you can do something in June versus March on the call side. Buying an at the money, just out of the money, just in the money call, and selling something with some good volatility in March. Defined risk trade, just like your naked put, but your naked put's going to have a lot more risk. That's the way I would play this move if I was looking to play it from a catching, the NVIDIA on the down low or catching these stocks a little bit lower.
It's too early for me, Mark. I'm waiting. It's too early for me.
That makes sense? All right, let's go to Kevin in Florida and see if we can get this resolved. Kevin in Florida. Yeah, Kevin in Florida. This looks like a me problem, Saz.
Yeah, this looks like it's on us.
Mm-hmm. Kevin in Florida?
Morning, guys. How are you?
Yeah,
hey,
we're here. Thank you, sir.
Hello. Can you guys hear me?
We can hear you.
Yeah. Yeah. Can you guys hear me?
Yeah, we can hear you. I'm sorry. I'm
Turn
sure
down your
Can you hear me at all?
We can hear you. Take us off and just talk on the phone, please. Take us off the computer.
Okay, so I think there's a little bit of feedback, so I'm going to go and just try to shotgun my question out, and I'll take it, take whatever your answer is on the air. My question is about probability of profit. If I understand that. Oh, you guys are on the phone. You're not on the computer.
Right, we're on the phone.
So anyway, as far as probability of profit is concerned, if my understanding of probability of profit is that it's based on things at random, or whatever the market is at random. If you are not picking random points to go in on the market, does that affect your overall probability of profit? Will that change if you are not picking random times? You guys did a market measure a while back ago, where you guys had like 55 probability of profit for put credit spreads. The win rate came out to like 79%. So my point is, again, if you're picking non-random points to enter in, does that affect your win rate?
So he's saying if you pick non-random, meaning you just go from month to month or week to week, would it make a difference in your trading on your probability of success? I'm going to answer and I'll let you go from there. I mean, the probability of success on that trade is already figured out when you're making that trade, meaning whatever the pop is in the weekly is the same as it would be in the monthly. Not the same strikes, but the same strategy. So for me, it wouldn't matter what month you were going to. But again, you're going to have a lot more P&L swing, a lot more velocity of P&L swing the shorter dated you go than the longer dated you go. That's the way I would look at that. And if you call in, please turn the volume down on your computer and just listen on the phone when you call in. I should have said that from the beginning. Thomas, what do you think? Did I answer the question if he was asking?
Yeah. So to answer your question, Kevin, probability of profit is based on that particular. So everything we do is in real time. So probability of profit does not matter. Whatever random point you enter that order, it's all going to be a real time number. So it doesn't matter to us when you enter that order. It doesn't matter to the statistics, because if it's an undefined risk trade, the probability of profit is just based on what all the other market prices at that time. And if it's a defined risk trade, it's all based on the amount of risk that you're taking at that particular time. So I don't think that anything else comes into play.
Very good, sir. Thank you for your call. Appreciate it. 855-238-279 or 855 Be Tasty. Who's my next phone call? I'm going to go to Vince. Vince in Michigan. What's up, Vince?
Statistics. Because if it's an undefined risk trade, the probability of profit is just based on what all the other market prices at that time.
Right.
And if it's a defined
Please shut up your computers and just listen on the phone. You'll be able to hear the show through the phone if you're calling in, so you're not on a delay there. Vince in Michigan. Vince in Michigan.
Thank you for your call. Appreciate it. 855-238-279 or 855 Be Tasty. Who's my next phone call? I'm going to go to Vince. Vince.
Hello.
Hey, Vince.
Hey, Vince.
Hello.
Yep, you're here. We got you.
Hello.
Yeah, John, we got a problem with the phones, John. One way or the other, they can't hear us when they're live.
Yeah.
Yeah.
Hold on,
All right.
guys.
You know what? Let's just take a quick break here, Sal. We only got 8 minutes before the market opens. I apologize for the debacle that we're having here on the phone calls. We'll take a quick 90-second break. We'll come back. We got the opening bell. Even the S&P is down 135, NASDAQ down 785, Dow down 368, and the Russell's down 21. We'll get this phone situation fixed, and we'll see what we can do after the market opens. We'll be back in 90 seconds. Let's take the live.
If
If you missed the live show, here's our cherry on top weekly recap.
I have one question. Chicken wing, flat or drum?
Drum.
Sadly, we had it right. We knew it. We knew it.
You go for the flat part?
Everybody does. Everybody in the know goes for the flat. Nobody goes for the drum.
Well, first of all, I don't eat chicken wings, but if I do, I go there. Second of all, I go boneless.
Oh my God, you bougie SOB. Unbelievable. Unbelievable. Yeah.
Well, you didn't ask me boneless or bone.
That explains a lot on how you view the world too, by the way.
I told you, on.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tomas, we are back, my friend, and that means the opening bell is imminent in about 4.5 minutes or so. Even the S&P is actually pretty steady all morning, Sadov. I know they've had a huge range here from 5950, I'm just rounding, up to about 6100. They're sitting just under 6,000 right now, down 136. But they've been in a relatively tight, 7-8 handle range, meaning 7-8 point range in the even the S&Ps. NASDAQ down just about 800, 790 right now. Russell down 20 and the Dow down 367. They are about as low as they've been since we've been on the show. Obviously lower than that. Volatility's been higher than that too. 1855 hanging at 2016 and bonds up 105. Sadnov, I know there's a bunch of stocks, especially on the chip side, that are lower this morning. So far this morning, you really only made about, a dozen trades or so. It's business as usual. What do you think about here for the overall market to open? I know you just answered the question saying it's too early to start selling puts. When is enough?
Nowhere close to here.
We're up 4% for the year on the E-mini S&Ps. We're down 2%.
I don't care what we are for the year. I don't think we're anywhere close. I think S&Ps maybe 5,800 or something. You can start to look another 200 points lower. Maybe NASDAQ, I don't know, on the 20,000 area, another 1,000 points lower. I have no interest here. Mm-hmm. I think you can. I'm waiting to see if they bounce a little bit after the opening, because then I'm going to start to roll down. All everything you have. If you're a contrarian like I am, all the pigs are fine today.
Yes, all the pigs are fine. The Chinese stocks, the Intels of the world. Yeah.
Mm-hmm. Those are fine. What you're going to get hurt on, for me, are the few chip stocks I have, like AVGO and SMH and things like that I'm going to have to make some very bold adjustments on. Everything else is going to be kind of, mid-tier somewhere.
Before you finish your thoughts, Sadna, before we get to the opening, can we finally put to bed? And my friend John just mentioned this. He got it so correct. Nobody knows anything. Like nobody was talking about DeepSeek taking the market lower in the future. Like everybody's looking at something that's present, that's there, and saying, "Oh, this is going to be bad," whether it be ABC or DEF or some political move or something else like that. Can we all put it to bed and say, it's all bullshit? What's going to take the market higher or lower is something that nobody can see.
Which we've said a million times. And plus, let's just remember, DeepSeek didn't start yesterday.
It didn't pop up today. Right.
We've been using DeepSeek for like months already.
Yeah.
Like it's not like, this is not something new. What, they just figure it out over the weekend? Somebody came out with an article and said, "Hey, how come this only costs this?" Whatever.
Right.
I don't know. Yeah, I'm not buying it. Just so you know.
But it's a great point that we didn't bring up, and then he brought to my attention. I think it warranted a soundbite.
Yeah, it's fine.
Yeah.
So, I personally think it's a little too early to be buying. I am going to be a buyer of bonds if they sell off a little bit today. I'm going to be.
Oh, I think you're gonna get some movement in these stocks. I think you're gonna get some good two-sided action in the stock. I think volatility is already telling you it's off of its highs. I know the even the S&Ps are off of their lows too. You get a little bit. You're probably gonna get one more downturn in some of these stocks. Even the S&Ps, maybe down 150, 155. Volatility upticks. You watch volatility. If it starts to contract, then maybe you get some two-sided action. I think you will. I
don't think this is going to be August 5th all over again. I'll just leave that there. I don't think that's going to be the case.
Big movers to the downside. AVGO down 34. You mentioned a moment ago. Taiwanese Semiconductor, TSM, down 23. SMH, which you mentioned, down 19. Marvell down 19. That's a big move for a $100 stock. SMH is 2.5 times or 2 times as expensive. Microsoft down 20, Nvidia down 18, Coin down 17. Well, just about everything is down. Meta down 13. This is an all-out. Netflix down 8, Reddit down 7. Let's look at the buckers because those are the ones really that are you don't expect. UNH for the Dow, helping the Dow. Dow is only down 200 right now, Sadnov. Only down 200. UNH up 11. And then it's pretty much volatility products with Apple up $2.76. You are right, Sadnov. Coming for the pigs. Walmart, your consumer staples are higher. Baba up $1.40. If that's all Baba has in it, you could put a fork in that. Target up $1.
Yeah, my biggest loser is exactly what I thought it was going to be. My biggest loser is going to be AVGO. I hate that stock. I hate that stock with everything in every bone in my body.
With everything you have.
With everything I have, with every bone in my body, I hate that stock.
It makes sense. It makes sense.
Yeah. And MU. Those are my 2 biggest losers. MU and MU. Hate that stock too. MU and AVGO.
Darn you, MU.
I know. I can't believe I stayed in AVGO. You bastard. You
spoiled me again.
You really did. You really did. You so foiled me. And I, by the way, I've rolled down calls in MU and AVGO, and I'm not doing much else. But all I did was put everything in mid price. I got filled at everything.
Mm-hmm.
Because
even the
eventually
S&P is down 107 right now. They've rallied about 25 handles
off their lows. Yeah,
off of, well, not their lows, but off of where they were all morning before we came on the show.
Yeah,
let's see that way.
I mean, if you remember, if you kind of remember the whole, if you kind of remember everything that happened on August 5th, remember when we had this huge sell-off, and then they came back, and let me see where we are here. They had this huge sell-off, and they came back on August 6th.
Mm-hmm.
I don't know if we're going to see that again. I really don't.
Yeah, I mean, well, obviously, what we just talked about, nobody knows anything what we're going to see, but you do see volatility under 18 now. I mean, you do have a little bit of a rally here. You do see elevated front month versus back month. I mean, those are absolutes, right? I mean, that you do see. So I don't know. Place your bets. I don't know if you've been looking to accumulate some of these stocks. Do it. I was doing it with a diagonal, which is a lot less volatility than a naked put, a lot less directional risk. I think it's I don't know. I think it's prudent if you think the market's going to rally. I mean, you got to think the market's going to rally to make that bullish play.
It is funny that Apple's up $4. Wonder what. Let me take a look at what Intel's doing. Oh, I thought it would be up. It's not.
No, it's not. It's down small.
Yeah. Intel's down small. I mean, so far I can't tell if the markets are good, bad, crappy, whatever.
So far, so I don't know. Standard practices. You got Tesla down 11. That volatility is expanded in there. Remember, we were talking about Tesla. Ivy rank was in the 50s. It's 66 right now. So volatility expanding in there too.
Well, it's a good day for the Russell verse.
It's a good day for the Russell verse. Agreed.
Yeah. Unfortunately, I don't know about you, but unfortunately, I had two little bad positions.
Tesla's earnings January 29th. That's this week, ladies and gentlemen.
What do you think about Tesla earnings here?
Man, oh man.
I mean, are you going to play it? I
have an existing position in Tesla that I've been doing quite good in. Today, I'm taking a little bit of a.
You're not going to make any money there.
It's down $7. It's not that big of a deal. It's been my best performer so far this year. It hurt me at the end of last year. So I've got a bone to pick in Tesla. I'm going to stay in there. I will be playing it for earnings. I'll have an existing position, probably be a wide strangle. Maybe I'll skew it one way or the other, depending on where Tesla is. That's all I got there.
On the one hand, I feel like I don't know what the expected move in Tesla is, but I feel like I could see that stock trading $290.
Well, the expected move is $35. It's a $397 stock, so
that would
be nothing. A huge move.
That seems like nothing. I know it's 10%.
It does seem relatively low.
Yes. It seems relatively low.
Yep.
It seems relatively low.
Mm-hmm.
Taking a look around, let's take a look and see if there's anything that's popping against this market. And no, like you said, Apple, Boeing, some Chinese stocks.
Yep.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending your morning with us. Sorry we had some phone issues. I don't know if we've got them corrected yet.
We do have them resolved, Sosnoff. If you want to go to phone calls, we can go to phone calls. If you don't want to go to phone calls, we don't have to go to phone calls. I'll let you make the call because you know what? You're the big kahuna. You're the boss.
Funny thing about the S&Ps is they've rallied from when I was kind of online this morning. They've rallied at least $50, which is a pretty big move. It's about a third. And the NASDAQ's rallied also about a third. It was down 990. It's down 670 right now.
Yep.
So that's some interesting stuff. Bonds have sold off it's sold off about 25 ticks. And the notes have sold off a bunch too. Volatility sold off about a third. And let me see if there's anything else that's kind of moving around in the commodity world. Not really. Not really, Mr. Batista. Hold on. Give me one more sec. Let me just go through my watch list really fast to see. Oh, boy. No, I'm not going to say. I think we're okay.
What do you want to do here, Saj? You want to take phone calls? 855-238-2789 or 855-BTASTY? Would you prefer to go to Dr. Jim? Because nothing says Monday like Dr. Jim.
Let's bring Dr. Jim on and we'll decide if we want to take calls with him.
Dr. Jim, you're up next. Nothing says Monday like this, man. You thought even the S&P's down 107. You thought NASDAQ down 3 or 4%, only down 3 right now. Says Monday? No. Dr. Jim says Monday. He'll be back in 90 seconds. Let's take you live.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at tastylive.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. Typically, I say at this time, nothing says Monday like this man, Dr. Jim, but nothing says Monday like this. We think we got our phone calls resolved, our issues. So please give us a buzz, 855-238-2789 or 855-BE-TASTY. For the next 15 or 20 minutes or so, we will answer your questions. This is a special treat because usually you don't get a diligent answer that Dr. Jim would be able to provide because he usually doesn't take phone calls.
You don't get a doctor. But Jim,
you know,
we're very
normally
excited.
I charge premium prices for this, man. I mean, this is the Primo package, and we're just gonna give it out for free.
Is this your OnlyFans? Is this your OnlyFans package?
I don't know, but I'll tell you what. Before we get into all that, guys, can you guys believe it? Like, what are the odds? Am I the original Luckbox? Like, am I Luckbox number 1? Because here we are at the end of the season, and we got my Chiefs playing my Eagles in the Super Bowl. What are the odds, man? What are the odds that my AFC squad and my NFC squad are meeting in the Super Bowl? It's unbelievable.
Phone line is open now. Give us a buzz, 855-238-2789 or 855 Be Tasty. Go ahead. Saz, answer his question.
All I was going to say is he wanted to bet on the Bills yesterday, so I don't know how it's Chiefs.
That's true. That's true. I felt so good about him. I'm like, this is the year. But I forgot, dude. It's all so rigged. Oh, it's so rigged.
Jim,
I love it. I love it.
Jim, my casino is open for you. My sports book is wide open. Whatever you want to do.
So what do you guys think? I mean, this DeepSeek stuff, I mean, I know you've been talking about it all morning, but I want to hear it straight from the horse's mouth, man. I mean, where are we at on this?
Well, I don't think that it doesn't make much. It was an excuse. It was a catalyst. I mean, we've been using DeepSeek for months. It's not something new. You know, I don't, if you talk to, you know, our AI team and you mentioned the Dr. Data, these guys have been using DeepSeek from the beginning. So.
Yeah, because it was an open source and it was free, right?
Yeah, exactly.
Right. So, I mean, it's nothing new, but it seems to be brought to light. And what it's showcasing here, at least from a layman's point of view, is that it doesn't take, you know, $60 billion. It takes $6 million to do something. So you don't need B's, it's M's, and that opens it up to a lot more people. I mean, a lot more companies. So I think that's the problem. I mean, I think that's the issue with the market here. But again, a perfect storm. Volatility extremely low, markets at all-time highs. Any type of news here is going to bring this market down. I would actually go out to say, if we were near the lows, this might mark a low in the market, because they would be spinning it as, look how cheap it's going to be for how far we can get. That's the point of view that you've got to look at from here now, meaning what are we going to do about it now? We take some of these stocks $10, $15. Is that enough? Like, is that enough for a stock that's up 30, 40%? Is that enough to say it's time for a bounce? I don't know yet, but if you're looking at volatility here and the way this market is behaving, you can almost see an unchanged market today. I don't mean unchanged on the E-mini S&Ps for the day. I'm saying, like, you may have seen the lows today, you may have seen the highs today, and we might just be in a nice 30-point range on the E-mini S&Ps. That's what it looks like it's setting up to me right now, Tom.
I don't want to. I mentioned before, I don't think this is an August 5th, 6th. Last time we did August 5th, we basically crashed, and then August 6th.
Hold on. No, hold on. I was told by reliable sources that we were not allowed to count August 5th. It didn't count. It was imaginary.
What do you mean?
The VIX print didn't count on August 5th. That don't count. So don't worry about it.
I don't care about the VIX print. I'm just talking about
it. Didn't count.
It didn't count, but we're talking about just the market move. The market
/VX counted.
They opened S&Ps down 250, and by the next day, they basically came back and took back every single thing.
Yes.
I don't see that as the case here. But
well, you know what? Let's find out what these people think. Let's go to Florida and Joe. Joe in Florida.
Florida, my man.
Good morning. How are you guys doing?
Good morning, sir. How can we help?
Joe.
What's going on, Joe?
Okay. All right. So it's a very basic strategy question, because I'm kind of new to this. And you all are always talking about doing, say, short strangles and what's the other one? Short spreads, short bull spreads, put spreads.
Yep.
And I ran some back tests, and I thought, well, what's the great thing about the short bull put spreads? And so I ran back tests on the debit call spreads, bull call spreads. And the difference appears to be massive unless I'm doing something wrong in the back testing. So on the back test I ran a couple of days ago for the full 5 years, for the buy one call at 30 delta, sell one call at 15 delta, 45 days DTE, and doing it Monday, Wednesday, and Friday on SPX, or XSP, sorry. It's a 655% return with pretty minimal buying power required and drawdown. Biggest drawdown was about 8,000 on 323.20. But when I run a similar one with the, by selling the 30 delta put and buying the 15 delta put, I get a 50% return and massive buying power required, massive drawdown on 10-14-22 or buy 10-14-22. So I'm just wondering, why are we always talking about doing the credit spreads instead of the debit spreads?
That's a fair question. Jim, you want to take it? This is your first time.
Well, that's a difficult question. I mean, if I'm understanding the way that Joe's framing it, it sounds to me like, Joe, you said you did this over how long? What was the time horizon?
5 years. As far as it goes on the pre-programmed selections of time.
Yeah. Okay. Yeah. So the last 5 years, I mean, 2022 being the exception, of course. The last 5 years have been extremely strong in the market, extremely strong, especially if you're coming in like right around that COVID bottom. I'm not sure if the COVID, even if, since you're doing spreads, even if COVID was in there, it was so short-lived that, again, if you're buying debit spreads where you potentially have a greater profit than what you have, at risk, whereas you're selling credit spreads where you have greater risk than what you have the profit, if you get the directional move correct, you're gonna print money on the debit spread relative to the credit spread, which is exactly what you've seen. And so I feel like that's mostly going to be a product of getting the directional move right. I mean, we say this all the time. The easiest trade on the board, the best trade on the board in a bull market is to be directionally correct, right? And so the strategy is not really as effective, and doing different things doesn't have quite the allure that it might have in more of a sideways market, more of a back and forth market. So that would be my original thinking.
You're looking at return on capital, I think. I think you're looking at return, if I may. I'm sorry. You're looking at return on capital here. And of course, return on capital is going to show such a greater return because you're just, you're buying a 30 delta, selling a 15 delta. The amount of money that you put up is minimal versus the risk reward is so great. That's where you're getting return on capital. If you look at the net profit and losses, you still are going to probably find the call debit spread outperforming the short put spread because of what Dr. Jim was just mentioning a moment ago, the market movement to the upside over the last 5 years. Now, you say the drawdown was minimal at $8,000. We can argue one way or the other on that. But in a bull market, your return on capital is going to look great. Look at the net profit on each one, and then also consider how long would you have stayed in that spread? Meaning when that call spread got down to basically pennies on the dollar, would you have stayed in that spread? Would you have taken down the drawdown? I think no matter where you go, one way or the other, the market has to cooperate, and the market over the last 5 years has cooperated, greatly for you for that strategy.
Well,
Thomas?
Yeah, on both strategies, on both back tests, I set the take profit at 50%.
Yep.
The only thing I want to say.
Go ahead.
No, go ahead. Finish up.
Well, and I thought they were both bullish strategies.
They are.
They are, but yet there's a vast difference in that 2022 time frame.
What do you mean? What's the difference in the 2022 timeframe between the naked put spread, the put spread?
Well, that's when the put spread went down from about 250K to minus 50K in that from about October or November of 2021 till October of 2022, whereas the call spread, the debit call spread, was flat that whole time. It didn't really go down.
I mean, that time in the market we were down, so that debit call spread should have been lower because the market was down over that period. And so I'm not really sure what you looked at, but the put spread should have lost money The reason I don't want to argue about the statistics because we're not looking at them, so we can't actually confirm or anything. But what I do want to say is the reason that we choose the short put spread over the long call spread has to do with two features, has to do with two things. One is that we like to sell premium when implied volatility is high. So my assumption is this was a period of high implied volatility. And number two is you have a higher probability of profit by selling the out-of-the-money put spread than you do by buying the at-the-money call spread. Okay? And I don't know exactly what strikes you bought or in that kind of stuff.
Losses.
Yeah. I got it. We'll have to look at those actual numbers sometime, but or you can drop us an email. But we got to jump on the next call. Thanks.
Okay, I appreciate it. Thank you.
Yep, you got it, man. Good luck to you out there. Go with the debit spread. I have no problem with that. Yep.
Yeah.
Neanderthal.
Okay. Thank you.
Neanderthal. Netherlands. Rob in the Netherlands. What's up?
Neanderthal.
What's up,
Rob? The Neanderthal from the
Rob,
Netherlands.
you Neanderthal. What's up?
Hi, gents. Good morning. Good to hear from you, and thanks for taking the call. Just two questions, please. One of them, I have an account that's kind of my fun money account, 0 one-day DTE trades, and I usually do verticals on the indexes like NDX and SPX. And I've noticed that when there's a big gap move, my buying power will occasionally go negative. However, I haven't chased anything. I might have one vertical spread on. Like today, I have one vertical call spread on the NDX, and suddenly the buying power has gone negative. I've asked the trade desk about this, and to be honest, I get a different answer each time I call. I was wondering if, you guys might have any insight into why this is.
Are you talking about pre-market?
I'll wait for that.
Are you talking about pre-market? Are you talking about pre-market, or you're not talking about when the market's actually open? Are you?
Yeah, no, market right now. I only have a vertical spread on the NDX, and yet buying power is negative. Is the vertical spread that you have, is it a weird mark? Like, is it showing like a crazy P&L number?
Wide market where it's picking
because there could be a super wide market.
It shows max
It shows
profit.
what?
It shows max profit.
What strikes do you have in the NDX? I'm just
NDX can be pretty wide, can it?
I know, that's why I'm checking. What strikes do you have?
I have 22,350 and 22,450.
In what month, though?
Today, expiring today.
Okay. 22,350 and 22,450.
It's probably pretty wild.
Yeah, you're deep. You're deep in the money, right?
No, these are calls.
Okay, so the calls are no bid at 40 cents basically on each line. So what it's picking up is a bad mid price. I mean, if you wanted to buy that back, which I'm not telling you that that's what you should do, but you put in a nickel bid for your short option, and all your buying power will go away, and your negative buying power will no longer be there.
Yeah, the whole reason for that, Tony's right. The whole reason for that is just because what happens on our system is that every time there is no bid for something and just an offer, what it does is it messes up your theoretical number because it doesn't know how to compute no bid. No platform does. So
some of those out of the money options jump to 490 offer when they should be at a nickel. So you're getting a little bit of a.
That's all it is. That's all it is. I'm looking at them right now, and some of them are weird, and some are no bid, and some are, like they could be all over the place. So it's just a function of the fact that it's no bid at 40 cents, and the platform has no way of figuring out what the actual number is.
Okay. Thanks. I guess I'll try and buy them back, see what happens.
Can I try to buy them back?
I don't want to take up too much time from you guys.
No, go ahead.
On days like today, would you ever, or in general, would you ever buy a shorter dated option and sell a longer dated one on something like, an SPX, a big product? Because I'm guessing you can go almost naked on something like the SPX if you buy an option expiring, let's say this week, and go fire out the money, and then something that's a bit longer dated, like 45 days or so, and then capture the collapse in, well, hopefully the collapse in volatility on.
No, you got to do it the opposite way.
You don't get any relief for that. You unfortunately, the way the rules are written for retail investors, that long option that you're buying with the 0 day gives you no relief against your short long-term option.
So you have to do it the opposite way. Let's say you were slightly bullish. You could buy the 45-day option with a higher call delta and sell the front month with a lower call delta or equal call delta or even higher call delta if you want to. You'll get relief there because you have that back month option, which you're buying at a lower implied volatility and selling a front month option with a higher implied volatility. So that's the way you can do it to capture that, whether it be on the call side, the put side, bullish or bearish.
It's kind of like doing a calendar spread for earnings. It'd be the same type of idea. Yeah.
Yep.
Gotcha. All right. Hey, Jim, thanks so much for taking the call. Appreciate it.
Yeah, appreciate you. Good call. Thank you. San Diego, Gary in San Diego, what's up?
Hey, guys. How's it going? It's been a while.
Good, man.
What's going on? San Diego, that's my people, Tom. We went to San Diego together. That's my squad.
Uh-huh. What do you got, Gary?
And guess what? It's actually raining here. Can you believe that? First time it's rained in like 5 months.
That's
and we had a big
unbelievable.
fire here, and it's going to be out, and everything is going to get back to normal. Thank God.
Let's hope. Yes.
Yeah. Anyway, it's crazy. Anyway, listen, I have a question for you, Tom, because last year, and correct me if I'm wrong here, the two best trades on the board were short Tesla and long bonds, right? For the whole year, right?
Correct.
Okay. You want to pull a chart up of that, Tony? Of those best bets on the board? Anyway, my question is to you, and I did really well being long bonds because I was scalping them, and they did okay. But what are the two best bets on the board to start the year?
You're doing this just because you want to. You just want to torture me today. You want to kick a man when he's down. I get it.
You know what, Tom? I haven't called in like 4 or 5 months, and I've been wanting to wait for the perfect opportunity, and you're a little under the weather. So I want you to rise to the occasion for me.
You evil SOB, I love you. Never change.
It's incredibly
It's like making
evil.
fun of Bills fans today. It's like making fun of Bills fans today. You can't. Today is not the day.
Saz, give us one of your best bets on the board, Saz.
Imagine if I was a Jets fan, that kind of thing.
I'll tell you. Okay, Tony, I agree. Instead of 2 today, all I want is 1. Just
give us one, Saz. Give us a new one. What's your best bet on the board? Come on.
Best bet on the board. A lot of stuff you're gonna bitch me out because a lot of stuff is kind of going our way. But Gary, I'm gonna give you. You got to stay long bonds here because they've only just begun their ascent, and you have to.
I'm long,
and you have to be long Russell versus anything, and that's a play I've had on for a long time. I know it's a huge winner today, but that's a play I've had on for a long time. As far as individual stocks go, I mean, if you're looking for me to tell you that there's something out there that's kind of cheap, I don't see it. If I had to pick any tech stock, I'd probably buy AMD, but that would not be my play. But that'd be my tech stock of the day. If I had to pick one, I'd buy AMD. There are some weird tape action taking place right now.
This is kind of really vanilla from you. I'm a little bit disappointed, but anyway.
I know.
Listen,
I know.
What are we what are we going to do with Tesla? I was hoping you were going to go there at least.
Tesla down $2 and change.
I'm a huge seller of Tesla on balance here.
Yeah.
I'm not short Tesla today, but I think you have to play Tesla from the short side. I'm not short it.
And I'm
it's business as usual, Gary. It's business as usual. We're going to be all right. Tesla's going to go to the moon.
Listen, isn't Tesla short the best bet on the board?
He wants you to say it.
If you want me to say it, Gary, if I had to mortgage the house.
Tom, hold on a second. I've been with you for 10 years, okay? I've been with you guys for 10 years. And in 10 years, you have never said anything that anybody wanted to say. You have always stuck to, I'm Tom Sosnoff, this is how I think. That's what I'm looking for, baby.
Yeah, don't be a vajayjay right now. What do you got
First
for us,
of all,
Tom?
I'm not.
Yeah, exactly.
I'm not. I'm sticking with my guns. I mean, I'm leaning. I don't want to get people to. I'm not buying this market on this dip right here this morning at all. But I'm not buying it. But I think. But I'm sticking with my guns. Like I'm sticking with the long Russell. I'm sticking with the short S&Ps. Like I'm not covering anything. I'm just making some very minor adjustments and trying to hang in there today.
Right.
I mean,
Yeah, but
I don't know.
I'm not asking about today. I'm asking about Tom Sosnoff, who makes a prediction like this is the best bet on the board. I'm sticking to it. Like we're going to be long Russell and short like NASDAQ and all that stuff. We're doing that.
I am. That's my position.
That's good. But it's really unfortunate that you gave up the remote. That's all I'm going to say.
I agree with you, Gary.
Oh my God.
Thank you for your call, Gary. I appreciate it.
You're calling me, Gary, a day when the NASDAQ's down 600. If you called it last night, my first comment last night was, hey, you know what? The market's too rich here. We're going to be down big. I don't know what else to say.
Have a great one, guys.
Problem child left. Okay.
Bye, Gary.
All right, Sadnaf, I had Problem Child back on there, but he's back now. Hold on one second. I think we're going to go to Problem Child. You'd be our last call. Problem Child, what's up, my man? Thank you for calling back.
Hey, fellas, how are you?
Good, sir. Thank you for calling back.
Can you hear me?
We can.
All right. Hey, so you guys missed the inauguration. All the guys were here in town. Did you see Mike Tyson on the dude's shoulders?
We missed that.
Great.
We did. Yeah, I saw
All right, so Jake Paul was carried Mike Tyson on his shoulders around all the parties, black tie. It was great.
I actually hated that. I actually hated that from a fan point of view.
It was the worst. Netflix nailed me for like 2 months. I turned it off, but I had to watch the fight. It was awful. Muhammad Ali, my father got sick and we went to Charlottesville. He had Parkinson's and, I was always a Muhammad Ali fan and, I introduced my father to him in Charlottesville. It was a huge, big deal. Anyway,
that's awesome.
It's so good to hear your voices. I'm here in Georgetown. Hey, and one last thing, Tony.
Yes, sir.
The hockey, love it. My friend I played hockey with in Connecticut, he became the coach of the Rangers for a little while, David Quinn. He got in trouble, but, it's such a great hockey player. He had an injury. He couldn't play pro and all stuff, but love the hockey so much.
Yeah, I might have to break one of my son's kneecaps because I don't think he has what it takes to be a professional hockey player either. But he's got the mental capacity to be a coach. Maybe that's what will get him going early there. So I might have to go that route too.
Well,
he's a Batista. You should have sent him to beauty school.
I did a big party for Ovechkin and his wife last year. He's going for it, and we go to the games a lot. It's a huge, big deal here. Problem child, calling in about that.
Thank you, Problem Child. Appreciate
Ciao, man. Ciao.
Appreciate your call.
Right. So, I'm calling in though. One last thing. So here's the thing. I got RGTI, QBTS, and QUBT, the quantums. Where are you guys on this stuff?
I personally don't have a position in any of them. Sosnoff?
I don't either.
I do not have a position.
All right,
I have
all right.
stayed away.
So the Getty's a big one. We all right. So I turned on everybody last year to Google when you guys were like buy it at 100. I turned everybody on. It's doubled up. It was a great tasty trade classic. So the one last thing I want to ask you about is where are you guys on with the TikTok thing, Tom?
I mean, what do you want to know? I'm a buyer.
All right. Well, I mean, are you going to buy the Bears? The guy.
No, Tony's going to buy the Bears.
Here in town who bought the Redskins. Okay, that was a terrible loss yesterday. But I tell my friends, I'm like, you watch. Tom is going to buy the fucking Bears, dude. You watch. Right?
I would bet you $20 that Tom does not buy the Bears, and I wouldn't take your money.
Dude, I know
we got to
the
go,
guy
Child.
here in
Thanks.
town in Georgetown. He bought the Redskins, and it's obviously changed.
Well,
thanks, man.
They have done well, that's for sure. But Tom is a Bear. He doesn't have to buy the Bears. All right, my man, we're going to let you go. We're going to take a quick 90-second break. Dr. Jim has to get back. Appreciate it. Dr. Jim has to get back to his workout. You were beautiful on this segment, Dr. Jim. So many nuggets of insightful market awareness.
I had at least 2 or 3 there. Yeah.
It was great. We're going to take a quick 90-second break and come back. We got a market measures next. Sadnov, even the S&P is down 103. Nothing to see here. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, yeah.
Who do you think is funnier? Who is the better debater?
I'm going to give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with this market measure. Even the S&P is down 104.
They're kind of just sitting here. I mean, I'm not. I'm happy about the performance of the Russell, and I'm not sure there's anything else that jumps out except the stocks that I've been watching. You know, the AI, the high tech stocks and stuff like that. Mm-hmm. They don't look that good.
No, like Nvidia is still down 18. Most of the tech stocks in that space are down, but you got Apple up. I mean, it's really kind of a mixed bag of tricks. A little weird, as you said, weird tape action.
Yeah, I mean the stocks that I kind of got hurt on, they haven't really bounced at all.
No, Marvell down big, bunch of them are down. Yeah.
Yeah. I mean, stocks like, I'm just saying, like, AVGO, things like that, they haven't moved.
No, AVGO is still down $31. Yep, you are correct. SMH.
Yeah. SMH is ugly. Yeah.
Down almost 20, 19 a change.
Oracle, we talked about Oracle the other day.
Mm-hmm.
Oof, boy, that's a big move in there.
Oracle down $15, giving back just about everything after its nice little earnings it had. Yep.
Yeah, I mean these are, these are big.
Yes, sir.
All right, let's do it. We have a market measure today, and we are talking about how do presidential administrations affect earnings. Our research team decided to kind of maybe, I don't know, dig into
try to find something, see if there's a nugget.
Yeah, they went deep on this one, and I think you're going to appreciate it. I mean, we don't do a lot of things like this, but we thought it was interesting. I mean, we have a lot of geeks that like Tasty, so sometimes we create research that lets them geek out a little bit and maybe look for things that probably aren't there, like. Do you think you could really tell based on a presidential administration how that will impact earnings? I don't think you could.
Yeah, no, I don't think I could either. 100%.
No, I mean,
I thought they're basically going to find out that it's random. It doesn't mean a darn thing. Again, one of those things.
But
no, it's going to be like one of those things that you know about. Like, there's a new administration. This administration. Nothing can happen when you know it. It always comes out of left field, like DeepSeek or anything else that comes out. It's always the thing you don't know.
I think on a very short-term basis, administrations can have an impact on the stock market or different sectors. There's no question about it. They can make things more favorable, blah, 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 all this kind of stuff. But over a long term, market trends and market cyclicality is going to dominate over the long term. If you think, historically, markets have done much better under Democratic administrations, but to try to narrow it down on a very short-term basis to pick up that, hey, this stock's going to do better under Trump than it did under Biden, that's got to be next to impossible.
Right.
But rather than me just speculate and say it's next to impossible, our research team decided to take a look, and that's what we do. So let's see what we got. Now, I'm just going to warn you, this is very heavy. So anybody that wants, I'm not going to go through it all, every single line. If you want to go back and look at it later, like everything else we do, it is all available to you. Check it out. If you signed up for Ryan's digital collectible over the weekend on Saturday, it was amazing. It was really, really good. And if you didn't get a chance to watch it, we played it twice. You should go back and take a look at it if you signed up for it. If you didn't sign up for it, really tough. But don't miss out on Dr. Jim's. tastylive.com/events. Dr. Jim's is going to be coming out at the end of February, and it will be recorded next week. So he'll be in Chicago. We're doing a live event with him. If you want to sign up for that, you can. I believe it's all filled up already, but you can still sign up and put your name on a waiting list. We're trying to get a little bit bigger space. I don't know if we can. But you can still sign up for the digital collectible piece. It's Dr. Jim's piece on getting started. Anyway, and if you missed Ryan's last week too, that's tough. It's a bad one to miss because it was really good. Let's go. But thousands and thousands and thousands of people tuned in, so we really appreciate it. And Ryan killed it. I thought he did a great job. Let's go back to the slides. So, how do presidential administrations affect earnings reports? So we find ourselves in the midst of an earnings season. And obviously, Trump was just inaugurated last week. So it's crucial to highlight key takeaways that empower a trader to make informed decisions, or can we make informed decisions, offering a complete perspective from historical trends to current developments. Now, it wouldn't be fair, if somebody takes office on January 20th and you have earnings coming out on January 29th, it's ridiculous to assume that administration could have anything to do with it.
Sure.
Outside of crypto, maybe a little bit on the crypto side, but I don't think anything else. But I think still it's cool to look at this study.
Yep.
With the new administration underway, we anticipate potential impacts during the earnings season, especially given the changes on the horizon. So therefore, we've decided to conduct a comparative analysis of earnings seasons from both the first Trump administration to the last Biden administration. The study aims to explore and demonstrate whether the administration can significantly influence earnings being reported. Now, we know administrations can have small impacts on different sectors, like the health sector, like the tech sector, like the chip sector. All that stuff's in play, maybe like security sector, lots of different military, whatever. But let's take a look and see is there a macro side to this at all? Let's go next slide. So we did a study. We looked at, from 2018, we looked at 6 years. We looked at 16 Delta Strangles, but we used Apple and Amazon. Now, again, we could have used a million different stocks, but there's too much research in here. So we just stuck with Apple and Amazon. We calculated the earnings change and the return on capital, the return on investment. We calculated the premium collected and the buying power required, and we compared the results of both presidential administrations. We could obviously do more stocks, but we just didn't want to overwhelm anybody with the amount of information. Let's go to the next slide. John, please. Okay, so from this study, we selected two stocks of the two most actively traded stocks in the S&P, and to gain a comprehensive understanding of the results from our hypothesis or our analysis. Okay, so the two stocks in the study were Apple, like we said, Apple and Amazon. Let's go to the next slide. All right, now I'm not going to take you through this entire table because it's just way too much stuff. But if you want to come back to it and take a look yourself, you're more than welcome to. So the table below represents the results from the quarterly earning during the first Trump administration. So we did Q1, Q2, Q3 in both Apple and Amazon. Now, again, I didn't study this to say, hey, you know what? There's these takeaways versus there's a specific takeaway. The interesting thing here that we looked at was the premium collected and the buying power required. Okay, because that's really all we're kind of just saying. How much does the premium go up or to go down, and versus the buying power required. Now remember, this is Amazon pre-split, which is why the Amazon buying power required is so high, because this is Amazon before it split 10 for 1. All right, Tony, that's why the number's like 32,000 as opposed to the 3,000 for the Apple. Okay. Mm-hmm. Or I'm sorry, that's the amount of let's see. That's the premium collected. That's why the premium collected is so high.
Okay. Well, this is just one. This is just one administration, not both, right?
No, this is just Trump the first time around. Right. Now, if you go to the next one, go to the next slide. So throughout the Trump administration, Apple and Amazon's quarterly earnings changes and return on investment showed inconsistent patterns, suggesting that their market performance was influenced more by the company-specific and sector-related factors than the presidential administration trends or the broader market trends. That would make a lot of sense to us.
Sure. I would have guessed that way. I think you would have too. Anybody would have with any presidential administration.
Sure. And this also highlights the importance of analyzing individual company dynamics alongside of general market conditions. Let's go to the next slide. So this table represents the Biden administration. Mm-hmm. As you can see here, the numbers are, this is post-split, so it's a little different on the Amazon side. On the Apple side, the numbers are significantly higher because volatility was significantly higher at this time, and Apple was a more expensive stock. Mm-hmm. Because post its split and everything else, the stock was more expensive. I mean, there's nothing, you can't, this is just showing you that we covered all our bases. Sure. So if you go to the next slide, the comparison indicates that while both administrations saw mixed results, the Biden administration generally offered higher return on investment, particularly for Amazon. That's only because volatility over those 4 years, because of this had nothing to do with Biden. This had to do with the fact that we went through a pandemic and to a bear market. And so you had across the board higher volatility. So this suggests that market conditions or company strategies during this period may have been more conducive to profitability. Who knows? There were things to note, which is increased buying power also points to potentially higher risk, and the magnitude of premium collected throughout each administration per stock per quarter are nearly similar. Mm-hmm. It also suggests that, when Trump first took office, the stock market was a lot lower. And when Biden took office, the stock market was higher. So you're going to have higher premiums when the prices of these stocks are higher. Okay, so under Biden, you had higher volatility, higher stock prices. So that's why you had higher premiums. So go to the last slide.
A factor of the market, not a factor of
yes.
Of anything else. Sure.
Basically saying it had nothing to really do with Trump. It had nothing to really do with Biden. Mm-hmm. So the whole idea that we spend so much time talking about, who the president is, it doesn't really impact as much. That's the whole point here. So traders should note that presidential administrations, and this is the key, can only have a significant short-term impact on market trends via policies like on tax, regulation, and fiscal changes, creating sector-specific opportunities and risk, while long-term market movements are shaped by broader economic forces. So policy shifts often lead to short-term volatility, and by focusing on affected sectors like energy, healthcare, and technology, we can help identify profitable trades, but if not well managed, can create significant risk to your portfolio. That goes without saying. However, relying on political developments is risky. That's the real takeaway from this. Mm-hmm. Relying on political developments is risky. Does this administration versus Biden administration versus last Trump administration versus Obama really matter to some of these stocks? And the answer is that's probably not where you want to focus.
Right.
That's not where you want to have your focus. The stuff that we look at, like implied volatility rank, liquidity, volume, like what's happening in the market, all those things, that's what's important. What's not important is who's president. So traders should blend their fundamental technical skills to navigate market fluctuations effectively and not so much focus on the administration and the impact that's having.
Very good, sir. Well done by you. Well done by the team. Even the S&P is down 98. Sad enough, the Russell just turned green.
Again.
We'll be back in 90 seconds. We got more Tasty Live with somebody who's neither green nor red. That's right, my friend, Mr. Scott Sheridan from the Scott Sheridan Studios. We'll be back in 90 seconds.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. Tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Tomas, we are back, my friend. But you know what that means? Enough out of you. I'm trying to go with as long as I can make so Tom doesn't talk that much. Tasty Trade World Headquarters, your friend of mine, the very popular, that's right, Mr. Scott Sheridan from his own Scott Sheridan Studios. How are you, Mr. Sheridan?
Excellent. Oh, yeah.
I'm doing great. Tom has not coughed one time, although
Let's get it out of the way. Tom, how are you feeling? Okay, good. Glad to hear you're doing better because you're perfect. Okay, next. Go ahead.
Oh, look at you. You almost won last night. So you came this close.
So here's the thing. There's nothing like playing with house money because here, what I was thinking about, first of all you believers in Washington, shouts out to Washington. And Jaden Daniels, I don't know where he is in the MVP category, but that team without Jaden Daniels is maybe 500. Maybe. So that kid, stud. But
they should have lost to the Bears.
100% should have lost to the Bears. And that's what put the nail in the coffin for the Bears, which may prove to be good because now we would have had the same coach. Now we have a new coach, the whole thing. Anyway, not the point. What I was laughing about was your bet on Indiana, the Hoosiers in football, because you were riding the wave. So you were riding the Washington wave. And I'm like, oh my God. So when they went up against a real team and you saw what happened. Now, having said that, house money is great because watching a game with house money, Tony, wasn't that nice?
Yes, it really was.
He was crying.
I did count the money. I did count the money, though. I was very confident.
Money. He counted the money.
You can't do that. No, you can't count money.
I know, but I was. I did it. I admit it. I wanted to see that $400 come through on Venmo from Sosnoff. He's such a little weasel. $20 bet, $20 bet, $20 bet.
The 400.
Now 400. I wanted him to pay. I wanted to talk about trade small, trade often. I wanted to hurt him. How much do you losers
want to bet on the Super Bowl?
See, here we go. Because I know you take Kansas City because they're a lock. It's only 1.5, which is crazy because I would have thought it was like 3.5, 4.5, something like that.
I thought Philly was going to be favored.
No way.
That's what I thought.
You're going to fade Patrick Mahomes? Okay. So here's the thing. You watch more sports than I do, but I watch a lot of sports. In the last 3-4 years, the Buffalo-Kansas City games, hands down, the greatest sporting events, period.
Right. Agreed.
It was a great game. You agreed.
Unbelievable. Every game, you watch a football game, you're like, I don't know, is this going to be good or not good? Every time those two team plays, it's going to be a war, and it's going to be 2 points. And it's crazy how they miss one, they go for 2, and then they go for 2. Great game.
He went for a fourth down from his own 40. I mean, that was a bold play.
He had no choice.
Yeah.
He had no choice at the beginning of the game.
Oh, you're talking about Andy Reid.
Yeah.
It was a ballsy play.
Yeah, ballsy play. They asked him, why'd you do that? He goes, I confidence. I mean, that's the answer. What else are you going to say?
It is the right answer. Now, I will say, if that game is in Buffalo, maybe a couple calls go a little differently, but that's the way it is. Kansas City had home field.
That's why you play for home field.
That's why you play for home field.
Buffalo Mafia, the whole Buffalo thing, they just choked. That's what their lineage is.
No, the Bears, that's our lineage. We don't even have the opportunity to choke because Bears fans don't even have the opportunity to choke because we never get in a position where you can choke because they just suffocate.
Who do you want in the Super Bowl?
We had the 85 Bears.
Who do you want in the Super Bowl?
Well, you want Mahomes.
Who do you want?
Who do I want to win the game?
Who do you want in the Super Bowl?
Okay, I'm not saying it because I want you to pick, because you're going to pick Kansas City. I really want Philly because I can't stand. Now I'm getting to the point where I can't stand like a dynasty. But here's the question. Impressive.
I'm with you, Scott.
Absolutely impressive. Yeah, absolutely impressive. But here's my question. I hadn't thought about this in a while. Did Kansas City not get the memo about changing the name and the appropriation, like taking on the tomahawk chop and all that? Like, if you ask these fans, they probably have no idea how disrespectful it is, to whatever name.
The Chiefs are okay.
The Chiefs? Opposed to... Oh, because you're saying they're the Chiefs. Okay, but when you see people doing the hand gesture...
They're not the squaws.
They're the Chiefs.
Hand gesture... Okay, so then the fans are allowed to do the tomahawk chop?
Oh my God! Okay. You're gonna get. What about the Blackhawks?
Well, they should change their name too.
Why?
Oh, come
Washington.
on. Give it a break, you two. Both sides. Just let it be.
What do you mean? I'm agreeing. I want to keep the name the Chiefs.
I know, but this is a silly conversation.
So should Washington not have, or Cleveland not have, or I don't know, anybody else not have?
They probably shouldn't have. Yeah, they probably shouldn't have. You're right. Yeah.
Oof.
The big difference between Redskins and Chiefs.
That is true. If there's a degree of pregnant,
yes,
you're much more pregnant at Redskin than you are at Chiefs.
Listen,
I will
who do
give
you want
that.
the game? Okay, let's get this over with.
Yeah, I agree.
Are we making the bet on today's line, or are we waiting until Friday or next Friday?
Today's line. What do you care?
And how about this? Andy Reid was an Eagle, and now he's a Chief, and he's the winningest coach. I mean, that's a good one. My Taiwanese source had just mentioned.
He's the winningest coach of both franchises.
Winningest coach of all time history on both. That is correct. Yeah, right. From both teams.
All right. It's 1.5. I want Philly. I got to root for Philly. Sorry, got to take the underdog.
How much are you going to go for, Sadnov? If you say $20, I'm not betting because you'll win. But I would like you to say a bigger number than $20.
How much do you want?
No.
I knew it. He loves Mahomes.
How could you not love Mahomes? The guy is a competitor.
He is a competitor. He is. But I just got to go.
I can't stand him. He can't spike. Did you see him do the spike?
Yeah, he lost the ball. His hand's not even big enough. He lost it. It's like
he's the best competitor I've seen since Brady and Jordan.
Okay. Go ahead. What do you want to bet? Put the number on. I got my piece of paper over here, so I got to get rid of these. Okay, go ahead.
They were one catch away from losing. That was
shut up. You're a Jets fan, okay? Give me a break. Okay,
go
that's
ahead.
like
What's
being a Browns fan. I'm gonna go 200.
Yeah.
You cover that. Tony, 200 each.
Wait, is that each or total? Because we gotta know. Because we have an out trade, and then you go, no, I said 200. That was 100. Is it 200? 200. So for 400.
200.
Okay. More importantly, I got to tell you, because I don't want to name names, but you went to dinner when you were in Phoenix. You went to the Global Ambassador and you went to the good place. You went to the steakhouse.
Yeah.
So we went, the 6th and I was our anniversary. Thanks for shout out. So
happy anniversary. It was Vinny's birthday. That trumped it. It's Vinny's birthday today. So
same. Oh, today. That doesn't count. My anniversary is on Saturday. Okay. Thank you. So anyway, we went to, and I don't know if it's Thea or Taya, but the Mediterranean.
Yeah.
And Bert's answer, spot on. It was fine. I mean, it was.
So he said fine. He said average. Average.
Yeah. But did you go upstairs?
No.
Okay. It's on the roof. It's huge. The scene is ridiculous.
I could have told you the scene was ridiculous. Yeah.
Ridiculous. Tony, back in the day. Oof.
You creepy old men. Honest to God. What is wrong with you two?
No.
I mean, he's a grandfather for crying out loud. I mean, you know what I mean? Show a little respect. You're talking about Redskins and Chiefs here, but you'll do this? Oof. What is wrong with you two?
What is wrong with you, Scott?
What is wrong with you? What I didn't like, though, was it was a little too much. When you get out, did you have to go behind the rope?
Was it a little too much skin for you?
And then,
you didn't like
it? And then give them the name, like you had a reservation so you could actually walk into the hotel?
No, because we.
Oh, you went at like 4:30.
No, but we didn't have to do that. We got waved right in.
Did.
We got waved in. We were VIP people.
We were VIP. Yeah.
We had Bert.
Did you sit close? So did you sit close to the kitchen or further away? Hopefully close, because I walked in the restaurant. It was pretty.
We were close to the kitchen. One table. We were the first table around the kitchen.
Yeah.
Nice.
Yeah, we were right there.
Hey, listen. When we travel,
we don't travel like
we travel like big guys. Swinging mockers. Okay. All right.
I forgot. Johnny was with us. I forgot Johnny was there.
He went out for his. See, that's better than me. What was it? Once in 3 years, he went on the road.
Yeah, once in 3 years. So that little Johnny was there. Like, big swinging Batista was out there. You know.
And the Waymos. I got to tell you, I've seen some, but they're downtown. They're not up by me. They're cool. I just got to go down there and just take a Waymo. I got to see what that experience is.
We took the Waymo there.
I know.
Mm-hmm.
Yeah.
I know. Got to do it.
Yeah.
Throwing it out there. Okay. Not
now you
causing
got to try
problems.
the barbecue. Now you got to try the barbecue place. You'll
I
like
know
that
the
better.
Little Miss Q. I do. I need to go there. I think maybe this week.
Mm-hmm.
Is it lunch and dinner or just lunch?
I think it's just lunch.
Oof. All right. Maybe
I'm not
Saturday.
100% sure. Tony, was it just lunch?
You know what? I don't want him to be too jealous. It doesn't matter.
Oh.
I don't want him to be too jealous.
Do they do chopped? Wait, do they do chopped brisket on a sandwich?
Yes, they do.
Okay, good. All right, good.
Vinny just texted me. He still hasn't gotten anything from from either one of you. I know 15 in your culture is a very big time. So he's expecting. Does he have to sign for it? He wants to know if he has to sign for it. He won't get home until 3:30 from school if he has to sign for it. If it comes before then, can they leave it?
Yes, he does.
Okay.
No, they can't. Oh,
because it's very expensive. He has to sign for it.
Yeah, maybe Tom and I had the wrong address. Let me go back and check.
Hey, what is the little Batista doing for his birthday?
He's actually for his birthday. He's actually getting bored of getting everything. So he's not so sure what he wants to do on a Monday for himself. He already went to Alinea for his birthday.
Alinea was his birthday, right?
Well, he went to Alinea for his birthday, and then last night we had to go to Bob Chin's for his birthday.
That's still open. No, seriously, Bob Chin's is still open?
Yeah.
So funny, Scott. I haven't been there in 30 years.
50 years. Yeah, sure. Yeah. I thought that place closed literally like 20, 30 years ago. It closed downtown. It was in the courthouse for like a week. The old courthouse on LaSalle on the river. Go ahead. So Bob Chin's, what's his go-to? Crab?
He actually went with the scallops last night. He went with the scallops.
Nice.
They were excellent. Very, very nice. Very nice. I went with the king crab because that's how I roll. It was good. Very good. I mean, food's decent. It is what it is.
No, it's not. It's gross.
How can you can't screw up steamed king crab legs.
Wait a minute. Do they still do the Bob Chin Mai Tai?
I don't know. I didn't have one. I had a little Blanton's, which is a whiskey for you two.
Bourbon, yeah, I got it. I'm good. I got it.
I like their Mai Tais. Very girly.
Very girly. When you order the fillet, when you order the surf and turf, the lobster tail and fillet.
They have like a 3-ounce fillet on the kids menu. I believe that's what Sosnoff got.
I'm actually a little upset because I was supposed to go out to dinner on Saturday night with the boys, and I was sick.
Oh, and I got to tell you, I was texting with Slappy. He said it was outstanding, not even good, like even better than normal. More importantly, talking about
and Sosnoff, I didn't get the nod because Slappy organized it, and Slappy has my son's hockey schedule, and we had a game at 6:30 on Saturday.
Listen,
I couldn't make it.
I didn't want to tell you this, but nobody there likes you. Okay, so
why? Jules wasn't there. Everybody else likes me.
Yes, he was.
Oh, Jules was there?
Donnie,
yeah, I got it.
Jules, Donnie, Ira, and Steve. It was the foursome. Tom, more importantly.
Now I know why I really get invited.
I was sick.
Slappy was just being nice.
Right?
Yeah.
He said, when's there a game? And he scheduled it. And he's like, look, sorry, I didn't know there was a game. But he actually knew exactly what the schedule was.
Yeah.
The pop drop was the time of the reservation. More importantly,
bummed that I missed it. I was bummed.
Oh my God. Josh is threatening to hang himself now because he didn't get the nod. This is bad. This is bad. You're going to lose your helper monkey.
Tom, more importantly.
Helper monkey. Should we call him helper primate?
Oof. That's a good question.
Is he a little pregnant or a lot of pregnant?
I think we got to go little. More importantly, and the breaded shiitake mushrooms from Trader Joe's, very good.
Best thing they have at all Trader Joe's. They're great.
Very good. Now, I didn't put sauce. I just wanted to taste them straight up. No, it's too big of a bag. What do you make a quarter, a third?
Yeah.
When you make that whole bag, you make a quarter.
No,
you just take a few of them out.
Yeah, take a few of them out. But Scott, it is the best thing at Trader Joe's now. It's better than the
guy. I said, because I couldn't find them. And I said to the guy, where are they? He's like, oh, yeah, come here, let me show you. And then he showed me, he's like, there's only 3 bags. I'd recommend taking them all because they're not going to be here pretty soon. And I'm like, okay, I got it. So I took the 3 bags.
Wait a minute. You guys are fighting over mushrooms at Trader Joe's, and my life is boring?
Hey, this is a contact sport, okay?
And you're taking all 3, not leaving any for anybody else, even though you don't know if you're going to like them or not? And my life is boring? You yentas?
Tom gave him the 2 thumbs up. I had to go with them.
Best item at Trader Joe's.
They are really good.
They're
I
addictive.
will say, you don't drink lemonade, but Trader Joe's, the real lemonade is excellent.
I don't drink lemonade.
Lemonade's pretty good too. I'm cutting back on sugar, so I don't have as much either. But it's really good. Really good. And I will tell you.
And my life is boring. Now we're talking lemonade. What's next? Prunes?
No. Jenny's peach ice cream. Oh my, it's outstanding. It's like peach with like cookies or something in her biscuits, or it's unbelievable.
I have no words. I just want the Eagles to win so I could be done with both of you.
Me too. Wait, Tony, more importantly, somebody recommended to me, and it's a BBC show, but you can get it on Prime. It's called SAS Rogues.
SAS Rogues.
Rogues. It's based, they said the information is almost all factual. It's about World War II.
Oh, cool. All right, I like that.
We just watched the first episode. It was excellent.
I like it. Somebody just wrote in the chat room, which Tom hates the chat room, but I support them and love them and appreciate them as viewers and customers. Yeah. Hopefully they move, transfer, bring their account to Tasty Trade, help us keep the lights on here and all this stuff free. But they just wrote, and they're right, Vinny has exhausted his bucket list at 15. He's basically correct. He has exhausted his bucket list.
How sad is that?
SAS is really great also. It's on MGM, somebody wrote. I don't know what MGM is.
It is, but it's whatever. You go to Prime. I think you'll get it on Prime because it's on BBC, which I don't know where you get that, and then MGM, but it just came up as MGM on Prime.
Beautiful. Sadnov, you will not watch this because you will be shopping for mushrooms at Trader Joe's.
And you don't have Prime.
Because my life is boring.
You're a little sensitive on the boring side today.
Oh my God, he's so sensitive.
We got the second shut up of the year, and it's already in January. Last year, we didn't get the second shut up till like November.
What did you say?
I didn't say
Was it shut up worthy? No. Was it shut up worthy?
I don't even remember what I said. I don't think it was shut up worthy, to believe you. I mean, I think he's just getting old. He's sick and cantankerous. Wait, that's every day.
Tom. Yeah. I need to know. Are you making burnt end chili? I got to go to Costco. I'm assuming my Costco has the burnt ends, but I got to do that.
Damn it. I've been giving out the recipe all the time to email people emailing.
You've been giving out the recipe? You stick the burnt end, fully cooked burnt end chilies on a plate. You chop them minimally, and then you throw it in your chili. That's what you've been sharing with your Taiwanese sources?
Oh,
boy, that's riveting.
Because you don't have your own recipe for anything. You got nothing. Okay.
No, because I got a squaw.
You got nothing. Okay.
Wait a minute. That's full pregnant. That's full pregnant. It's okay.
You got nothing. I at least got recipes.
Yeah, TikTok. Oof. Did you get it from TikTok? Yeah.
No. But I didn't make any.
You got that? Wait a minute. You got that idea from TikTok, didn't you?
This has been passed down for generations.
I've had this for years.
Yes.
Had this for years. God. I'm making it for the Super Bowl.
You're making it for your son-in-law?
For the Super Bowl.
Are you having a party?
Yeah, I'm having a party.
Oh my God, Scott, you weren't invited?
No, I might be open.
Oh,
are you going to be home?
No, but you can still invite me, and then I could turn down the invitation. But it'd be nice. I can say thank you for the invitation.
Both of you guys are invited. Neither of you guys are going to come, but it's okay.
You probably have a better chance of me getting on a plane and coming home for the party than Tony driving down.
Oh, Tony, forget. I don't want him. He's just gonna bitch. Hey, you call this chili? Oh, you call this pizza? Oh, you call these wings? What is this crap? This isn't eggplant parmesan.
I think he's kind of right. So, okay, let's get to some business.
Really a complaint? Be honest.
Sometimes. Wait. More importantly, Tom, what happened to you with real estate?
Period. Just what happened to you?
What happened with real estate? Something happened. What happened? There's a good cherry bomb today.
I can't ever sell a piece of real estate.
Oh, you're trying to sell? Oh, got it. So something came up. You're not getting a bid on something, and it got to you. Because that's not like you.
I can never sell anything. Ever. Anywhere. Anything.
You know how you sell real estate.
How?
You just lower the price.
Oh yeah,
Okay?
yeah.
At some point, somebody's going to buy it. Unfortunately,
I don't
I'm on real
understand.
estate too. I know. I got to get into liquidation mode.
I don't
bad.
understand how people think real estate's a good investment. Like, you can't make a dime.
Well, no, it depends on what kind of real estate.
It's when you buy it, not when you sell it. It's when you buy it. You bought
genius,
it for.
when you buy it. How much money did you make on your last house?
Oh, poor Tom can't sell his multi-million-dollar lot. Wah!
No, the problem with Chicago real estate, it's houses don't. But I mean, you can make real estate in, if you were building or doing condominiums, you can make money.
If you bought a house on the mountain in Telluride, you probably made money, or Aspen. But other than that, nobody makes money.
Oh my God, this is bad. How bad is this bid? This so-called bid?
You
What
are
did somebody say? They'll take it off your
wrong,
hands?
Sadnov. People bought houses in my area 5-6 years ago.
Yeah,
they're making 30-40%.
Did you?
Sold.
You had a house.
30-40% I bought
5
mine
years
20 years ago. I'm making 50%.
No chance.
But I'm not selling.
You're so.
I bought my house 18 years ago, and I'm hoping to scratch it. Okay. In 18 years. So I'm calling massive BS on 50% in 15 years.
You bought a 3-lot McMansion. Okay.
No.
McMansions don't move. You buy normal properties in an upscale area. It was a big win.
Okay. All right. Can we get to business? Sorry. I'll have to take real estate lessons from you later. Top 15 symbols going through the system. First 40 minutes, broad-based indices or futures. Tom, for you, number 15, TQQQ at a 42. For everybody else, NVIDIA at a 52, Tesla at a 62, Apple at a 59, AMD at a 73, AVGO at a 67, SoFi at a 43, MSTR at a 31, PLTR at a 93, IBIT at a 69, Amazon at a 65, Microsoft at a 57, Meta at a 52, Google with an L at a 59, SMH at a 46, and number 15 for Tom TQQQ at a 42. Rounding out the next 10, MU at a 34, TLT at a 36, SOXL at a 53, Coin at a 38, TSM at a 46, OKLO at a 46, VST at a 96, and Oracle at a 52.
Milord, how will you people ever survive and not being able to sell your multi-million-dollar properties for fair value that you paid for it? Well, maybe we can get the answer after this with Liz and Jenny next. Sound good to you guys? We'll be back in 90 seconds. We got Liz and Jenny next. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Wolf!
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette in green is Miss Jenny Andrews. How you doing, Jenny?
I'm great, Liz. How are you? How was the weekend? You lived to tell about it. How was the 50th birthday celebration? Not yours. One of our friends. How did it go?
It was awesome. It was so fun. I love seeing all of our friends. There's a big group of us. It was a lot of fun, a lot of laughs, no photos.
And I wanted everyone had to dress up like our friend. Everyone had wigs and the outfit. I wanted pictures.
What happens at a 50th birthday party stays at a 50th. I can't say that. 50th birthday party.
Oh man. Well,
Jenny, I want to show you my sweater. Check this out. It's got cherries all over it.
Oh,
Isn't it
super cute.
Yeah.
Yes.
Thank you.
Like it.
Yeah. We got a cherry theme going on in here now.
And I'm just curious because I might look for that myself. I know Target came out with a big cherry line this year. Is that part of the Target cherry line, or is that from somewhere else?
Why, yes, it is. Thank you for asking.
No, I just I know they had quite a few cherry sweaters this year. I haven't seen that one. I like it.
Yeah, thanks. Yeah.
Looking good. I'm going to be in green all week. We second place at sectionals this weekend, which means I'm not going to be here this Friday. I'm going to be at Dance State. Woo, woo.
Oh, yeah, I'm sorry. And I'm sorry if I'm going to springboard on that, but to our viewers, I've got a special guest who has never been on. I'm actually telling our producer this at the same time, so hopefully he's listening. So his name is Riz, and he is the host of the podcast Words of Wisdom that both myself, JJ, and Tom are on in upcoming episodes. And he's been interviewing traders for a couple of years now, and he's going to come on and give us his highlights, his lowlights on the live show. So he will be sitting in Jenny's in the hot seat on Friday for those who want to tune in. He's a pretty cool guy. So it's going to be called the Riz and Liz Show, or the Liz and Riz Show.
I think it's going to be awesome. I'm so glad you're having him on. And I know, I didn't want to spring this on John, but honestly, I didn't know until Saturday if I'd be off on Friday, because you don't know if you're making it to state until you get through sectional. So kind of a last minute thing, but you did secure Riz. And it's going to be a great show.
I think it would have been Liz, Riz, and Jenny. So it would have been
So I'm glad he can do it. It's going to be a great show. I will watch it in the archives, or maybe I'll watch it from the stadium.
It's so funny. Grumpy Mike goes, there's no photos of my 50th either. I love it, Grumpy Mike. You're right. No photos. No photos.
I wish, after my son's 21st, I said, I wish we had more photos. We didn't get that many. And, we got in trouble in the casino for taking photos.
I know. That's why after I tipped the woman, I asked her to take the picture so she couldn't yell at us.
I know. Okay, so, market's down today. I went to bed last night, SPUs were down 50, woke up, they were down 160.
Yeah. I mean, to say, I know you went to bed and saw them down 50. I did not. I went to bed blissfully super happy, being like, oh, we'll see what tomorrow brings. I rubbed when I opened up my platform this morning, I rubbed my eyes and I was like, what is happening? And then I had to go back with the news. So the news came out. You saw it last night, the news?
Yes, last night. And when I went to bed, SPUs were down 50. But, I was surprised when I woke up and they were down 160. And
let's pop in. Do you want to pop in the platform? Take a look. Now we're down 106 right now. So we are for sure off of our lows, right? SPUs are down, just under 2%. The NASDAQ this morning, when I woke up, the NASDAQ was down over 4%.
Over 4%.
And now it's just under 3%, but over 4% on the NASDAQ this morning. It was crazy.
And where's NVIDIA? Will you see that? I'm curious of the move, like the open to where it is now.
Hold on, I'm going to go.
Down 20, so down 15%.
Yeah, but take a look. So it's high. It was up as high as 128. Where's the low? Low, 122. We're right there. Yeah.
Here. So first thing I did this morning was go into my son's account and sell his NVIDIA.
You did?
Mm-hmm.
Oh.
Yeah, I did. I thought, you know what? I'm out of this. I'm out of the NVIDIA game.
Okay. Well, we got some big earnings this week. Now, it's interesting because we were down so much. I mean, it's staying down, right? So you're watching this. We're down 104. We're not getting that much. I'm going to take a look at the VIX. And then we're going to look at our positions. So on a day like this, what we'll do is get in there and kind of see what's happening. Now, Jenny, look at how the VIX has come down so much. When I woke up this morning, 2250. And now it's back down to 1849.
So what a move this morning, percentage-wise, getting up to 22. That's crazy. 1840 is it's settling down. We have a lot of earnings this week. So I think the earnings will kind of be the tell of the direction the market's going to go. Are we going to keep going down, or are we going to kind of pop back up?
And SoFi, I didn't know this. I mean, this kind of snuck by us, and I don't know. Maybe we talked about it on Friday, but maybe I wasn't paying attention to it. They had earnings Friday.
I realized it in the afternoon, and I think maybe Tom and Tony were talking about it in last call, because during our show, we put something on in SoFi, or a viewer wrote in on SoFi, or maybe we didn't put it in, but during last call, Tom and Tony talked about how SoFi had earnings over the weekend.
So there we go. SoFi, we have a zebra in that we put on Friday.
Yes. And we said, we'll just be long stock and sell strangle around it over earnings. Well, the earnings are over. They happened this morning, I guess.
I think we must have not been paying too close.
We just saw the line and we didn't think it was Monday. It's so rare to have it on a Monday. Weird. And I don't know. Usually you would say maybe that's not a good sign, putting them on a Monday morning.
I would have said that they're trying to hide something.
Right. Yeah. Like we missed it. Right. No one was paying attention because you don't expect them on Monday mornings.
Now, with that being said, we have SoFi, and I believe it was a what's your assumption or somebody who had written in about it. We've got a zebra. Now we have to make some decisions. We've got 25 days left, and we're going to open up, Jenny, we're going to kind of open up our positions and look through a little bit to see what else needs to be managed. But I don't want to leave this because we put it on Friday. Our longs are now at the monies. So look how much extrinsic value. You've got $1 in these in extrinsic value. So we could reestablish. Let's take a look.
So with the 37 rank, and we're only down $184 on this, I would just take it off and sell puts. That's what I would do.
I kind of agree. I just wanted to walk through the steps, right? So here is a reestablishment.
Because in my mind, it's like earnings weren't good. Why do we think it's going to turn around?
But now, I don't know if the earnings weren't good or
well, the market.
I have no idea. I don't know if this has moved on the market because everything's down. Do you know what I'm saying? Because if you look, IWM is not down that much, and SoFi kind of goes with that.
Yeah, like not everything's down. It's a handful of products that are down. It's not everything. So
it's not, and the Nasdaq's up. So that's what I'm saying. I don't know. I'm not saying I know anything about the news, but let's kind of go through the options. So you can put another $90 in there, and then it would be 1 for 1. You can also sell some premium around it if we did want to do some strangles with that 37 rank.
That's true. That's true. You could reestablish the zebra and sell strangle around it.
Because it's not that expensive to put this in. We're putting an additional $90 in. I kind of say we do it.
Okay, let's do that and just sell a strangle around it. So then it's like we synthetically have the stock in SoFi. We're going to sell a strangle around it. I just want to do something with premium rather than just sit and hold along.
Yes, I agree. I'm not going to keep paying up for that. I will pay $99. $99. There we go. 99. So then what we're talking about doing is actually selling some premium around this. And I'm going to go to the expected move, get 50 cents here, and maybe get 50 cents here. What do you think?
Then we're getting $1. I think that's good. I think that's good. Get $1 against our synthetic long stock. So it's like we're chipping our cost basis away by $1. So I think that was a good move.
All symbols. I just want to see if anything got hit today. Do you know what I mean? No, it was just SoFi. Okay. Because I didn't look at that this morning. Jenny, the other thing that I wanted to present to you, ta-da, is look at this. We put this on this diagonal, short-term diagonal. Somebody else wanted to do it in a much bigger product. I think they were doing it
in hopefully they did.
In SPX. If you did, you get to multiply this by 10, right?
Right. So instead of up 244, up 2,400. No, in ES. So in ES, it would be multiplied by 5.
By 5. So whatever it was, it's a big multiplier of this. So let's I'm going to take this off.
So I don't know what's right or wrong. I did this as well, but I kind of thought I might leave mine. I don't know. The profit potential on that when we put it on, if someone's putting them on as a hedge over against many bullish positions, I might leave mine or reestablish it if you think the market's going to keep going down. Now, I have no problem taking the $240. Let's just walk through how you can take some risk off the table and adjust it.
So if you wanted to keep it in the same cycle, you can for sure take risk off the table and adjust it. You enter into closing position and you go through the identical the steps, meaning buying at the money in the 10-day, and then you're going to sell the expected move cycle in the cycle that you're in all the way to the downside. So you can take $119 in risk, $120 in risk off the table and have more profit potential to the downside.
What did we pay for it?
We didn't pay much. I will look. We paid $350 for it.
So it's kind of like, I would say, if you want to keep a bearish position going or depending on your positions, but honestly, on this big down day, we're not really getting hurt. We don't have too many positions that are really taking a big hit. So I don't mind taking it off and taking our $238 because we don't have a lot of naked puts. We're not getting really hurt in too many things. OKLO is down 10. That hurts a little bit, but I don't know that.
I think you and I have done a much better job managing this account with the two of us instead of trying to take a chance, being like, this is day one. If it's day one, we can put something on again tomorrow. Let's take our $250 because or $230. Once we close this, no one can take it away from us.
Right. And our account is doing really well this year. And we're only, January 20 something. Although this is the last week of Jan. So the month's almost over. It went by fast, but I will not miss January when it's over because it's such a busy month for me.
Okay. So I'm closing this. Jajun, question mark, Jajun. Are you pushing everything out?
Yeah, I am pushing everything out. Sure.
Okay.
It's down 106 if you want to do Jejun. I know we've talked about maybe we don't do it on big down days, but we've seen this market bouncing around. So I think we just stick with the plan. If it doesn't win today, like if we don't hit on the $50, we close it at the end of the show, no matter what.
270 on the 59.90, 59.95.
Okay, I am pushing that out right now.
What did we pay for it?
270.
I'm gonna take 40. I'm gonna go 310. Right.
I think like whatever you want. I don't mind looking for 50.
I just figured if we can get out. What were we down when we put it in? 108.
I thought 106 or something. 107.
Okay. Okay. Jejun is in. A couple other things. I know you mentioned it briefly. OKLO.
That's taking a hit. So is CCJ, right? They're both taking a hit.
I mean, like crazy.
I know.
So this is CCJ is just a Feb 22. I'm sorry, Feb 55 put. We could probably roll that out in time. Honestly though, Jenny, I mean, on it when I open this up. So we've got February 21st with 25 days left. We've got an in the money put at the 55 level. That's a synthetic covered call at the 55 level. I'm fine with it.
And it's still within the expected move, and there's still a $1.40 left in it. So it's just like we're long CCJ, and I'm okay with that. If you roll it, see how much you really get for the roll, or if we can move it far down.
We're already through earnings, and we'd get an 80 cents if we kept it there. Or you can move it to. Let me look at this one.
I mean, you can move it to March for 80 cents. I would keep it at 55, though.
I'm going to leave that. We have 11 days left in our OKLO, but we are still out of the money. Look at that.
And what do we have? Oh, a put spread. Yeah, and it's still out of the money because and so this trade, why would we have taken in 45 cents?
We must take a look at this. We've rolled this up. That's what it looks like.
Oh, yeah. I was like, there's no way. Okay, because we've rolled it up. So we leave that. That's still out of the money.
I mean, look at our year-to-date P&L and OKLO. This is still with just that trade.
Yeah, maybe we had the other put spread and we rolled it up.
Yeah, we rolled just the put.
Let's leave that.
So we're still not in good shape there.
I want to take off our ZB. I took my ZB off this morning. We have a put spread. And it's worth about, look, it's only worth
cents. 7 ticks.
Yeah, 7 ticks. So take that off. And I don't know if I'm going to get back in yet or wait for another down day to get back in.
I mean, I do think bonds are still pretty low, but they're still low relative. It's just right back to where
we're next week. You can go to next week and see what we can get for the 113, 112, or do we have to go with 113 and a half?
Honestly, though, Jenny, I don't mind waiting a day or two or a little bit because this has been all over the place. If you take a look at what it's been today, we've been back in the 13 handle. I really accept what's when it goes back in the 13 handle.
And we have a Fed announcement this week.
Yeah, so I might wait.
Some decent vol, but let's keep an eye on this.
Yeah, I might wait on that one.
So DraftKings is another one that I got out of my draft. When I heard Vanetta's news about Kashi, I closed all my DraftKings positions. I know you're keeping yours. I had long DraftKings positions. I got out.
This one is still out of the money. We still have the 40 put in we're up $300 year to date in this. It's a put we keep alive. This one can just stay right here. I mean, only because if we covered up DraftKings, we would stay the course here. Like if you didn't know what this was, you would just be holding this.
Well, technically we'd be rolling it to March.
Oh yeah, because there's 18 days. Okay, so let's see what we can get. It's under 21 days. The earnings are February 13th. We're already through the earnings cycle anyway.
You're in May.
Then there is no March, right?
No, there is.
Oh, there is. Sorry. Okay. So you go to the 40 put and you can get an extra 69 cents. That's not bad for a $40 product, or you can take it down. You're still taking in a credit. If you go with the 39, or you can pay a tiny little debit and go to the 38. That gives us a lot of room.
But I don't like to pay. I'd rather have it at the 39 and take in a little bit. Or we could totally change this position to a diagonal and take and have very minimal risk. If you want to keep a bullish trade and DraftKings going, but eliminate risk, you could change it to a diagonal.
So no, I don't want to eliminate risk. And I want to be able to make money if it stays here or goes down. Diagonals don't give you that. You have to be directionally correct. Puts are neutral too. Diagonals are directional. Did you listen to the caller that they had? And it's so funny because sometimes I'm screaming at my computer because they answered it completely wrong.
Sometimes.
So they had a caller this morning who had back tested a bunch of stuff, and he used, let me look at this right. He did a 30 delta call. I'm probably gonna be wrong, but he was buying a 30 delta call and selling a 20 delta call, and versus selling a 30 delta put and buying a 20 delta put. Okay, so we know, you and I both know that that's not an apples to apples comparison. So he did it over 5 years, and he kept saying that you didn't make nearly as much in the puts as you did in the calls, and that's the answer is because your risk reward scenario flips with the call spread versus the put spread.
Well, yeah, you've got if the call spread you're paying 50 cents and you can make 250 versus collecting 50 cents and that's all you can make. You would make more.
Lose 250.
And we've been in a bull market where things were really rallying. The call spreads would make more. Yeah,
correct. So that's what I was yelling at my thing. I was like, it's not an apples to apples comparison because you have to see we were in a bull market for that long. The one that can make the most made the most, and it should.
Now, we've been in a bull market for a long time. If we are not in a bull, if this year's not a bull market, then you're better off with the put spread. You're making you're just making small amounts every month, but they're out of the money, and hopefully we wouldn't fall fast enough to blow through those. So I don't know.
And that's kind of why I would like to stick with the puts in this. We can maybe switch it if it goes down a little bit more. But here, going with a put in March with 53 days, got a 37 rank. We are going through earnings. This brings our break even all the way down to about 37, which is good versus saying it's going to bounce back up to 42. It can stay right here and go all the way down.
Yeah, and if I had no position in DraftKings and just looking at this fresh set of eyes, a Jade Lizard is a pretty good setup in DraftKings. Now you've got that 35 put for 80 cents and then a call spread. It's not a bad Jade Lizard candidate.
Jade Lizard is always a good option, Jenny. Always. Hey, do you know what? Can I pop into Twitter real quick? And if we don't get filled in DraftKings, I'll cancel it. But I wanted to pop into Twitter. This was your weekend adventure with your beautiful daughter, Lily.
Oh, I posted this for Mikey because I know on last week Mikey said he's also went to U of I, and I thought if he could try to figure out where we ate. I ate there. My roommate and we ate there every Sunday.
Did you really?
Yeah, we would go there every Sunday, and I said our names still carved into everyone has their names carved into that place, in the bathroom, on the booths, everywhere. Yeah, that was our old hangout. Mikey.
Was Lily excited to see your name carved into a booth? And you're like, don't do this ever. It's vandalism. But this is what I did when I was in college.
It was so funny because we're walking there. I'm like, okay, Lily, this is where we're going. Colleen and I went there every Sunday. I don't even know if we're going to get a seat. This place is going to be packed. We might not even get a place to sit. We walk in and it was empty. There was no one in there except one other dance family. And I was looking around like, what the heck is going on? Where are the crowds? Where are the kids? Where are the people? There was nobody there.
Was it a Sunday?
It was 1 or 2 o'clock on a Sunday.
Huh.
Yeah. Well, and it used to be packed on Sundays.
I'm not going to lie to you, Jenny. It kind of looks dirty. Like, I think they're probably going for a burger place that doesn't have things carved in. But I would like to say our Polish warrior came in with a vengeance and answered it. Hold on. Wait, he's got lots for you. Hold on.
What did he
He's got lots to tell you. Call me Sherlock Holmes, LOL. Murphy's. Hope you had a great time.
Yes, it's Murphy's. And Mikey, you would be shocked. Nobody was there. I couldn't believe it. Honestly, it's not the same. It's very different now. Very different than when we were there, Mikey. Very different. Like, you wouldn't recognize it. Really? And there's a Target that right on the main street. They have Panda Express, Jersey Mike's, Chipotle, Target, Walgreens. Like, everything is right there. It's like downtown Chicago, practically.
Yeah, it is. It's kind of crazy.
Yeah.
Well, that's so nice. I'm glad you guys had a good weekend. She looks adorable.
Yeah, but she removed it from her list. She's not going.
He gone. Okay, now listen, Jenny, forever. Happy Deep Seek Monday. Bullish FXI? Can we discuss OKLO? We already looked at OKLO, and honestly, we're holding firm.
Well, our put spread is still out of the money. Our put spread is still out of the money, and I still have... I adjusted my OKLO positions. I don't know what you did. I had a lot of options positions in there, and I just got rid of all of them and bought the stock. That's what I did.
That one frustrates me. The options there because it's not that liquid.
That's what was getting me so mad. The option markets were really wide this morning at 8:30, so I was getting frustrated with the options. So I got rid of all my options, and I just bought the stock instead.
Yes.
I didn't want to deal with the wide markets.
No, I know what you mean. I wanted to look at FXI for Liz and Jenny Forever. What did you want to do?
Bullish FXI. On the
So
heels of
it's up 1% today. If I were going to be bullish FXI, there's not a lot of premium there. You could do something baby.
I would just buy an in the money call.
Yeah, I mean, I was just going to say you could do something that's very, very, very low in risk. This is the long-term diagonal. No, because
it's only $2 wide, and you're going to get 64 cents.
So
I'm just buying in the money call.
I'm going to give up. I'm going to give up 40 cents.
I don't care if you give up 38 cents. It's up 36 cents today. Sure.
Yeah.
For 25 days, I wouldn't give up 38 cents if it's a week, but I'll give up 38 cents for 25 days.
Yeah, agreed.
DeepSeek taking over.
DeepSeek. I mean, I had never even heard the word DeepSeek until this morning.
No, me neither. Until last night. I was reading it last night.
I mean, it's the first. This is the first I've heard of this word. So I'm going to go back to Twitter so we can get to all of our Polish Warriors tweets. And he says, Jenny, did you ever hang out at Deluxe back in the day? Laid back place, far down on Green Street, pool tables, an excellent fish sandwich. Yeah. And every night at last call, they played American Pie and everyone sang it. Oh,
you know what, Mikey? They played American Pie every night at O'Malley's. And maybe, so I know Deluxe with the pool tables, but maybe, but it was O'Malley's that played it. So maybe it was called Deluxe. Maybe they changed their name to O'Malley's.
I remember sitting in there singing American Pie with you over and over again.
Yes. Every night. So there were two at CO's every night at closing. They played Total Eclipse of the Heart, and at O'Malley's every night at like midnight they played American Pie.
Did they really?
Bye Bye Miss American Pie. Yeah.
I don't know that I ever went to CO's then because I never heard him play Total Eclipse of the Heart.
Maybe that was only on certain days of the week, but definitely 80s night.
And then he's going on. Just remembered, isn't it Murphy's that had the Chug Club? And if you could drink a mug in under 20 seconds, you got your name on the wall. Or am I just imagining the whole thing?
You might be right, Mikey, but I just put my name on the wall. I'm not a member of the Chug Club, but my name's on the wall.
Okay, I can't even believe I'm saying this because I'm sure the chat's going to go crazy. But so that you and your college roommate probably were there, but your college roommate and my college roommate, like the ones we actually lived like in the same like dorm room with, were best friends in junior high. Now my college roommate has an issue. And I don't know if it's an issue or not an issue, but she can chug something faster than any human I've ever met. Her and her brother have this like trait. So every time there was a chugging contest, I was like her handler. I'd be like, this girl could, because she's a tiny little pint-sized thing that could out chug anyone under the sun. And it was the greatest. She would walk around with like prizes on her belt. Yeah, that
is so funny.
Did you know that about Kathleen?
No, I didn't.
Oh, yeah. Do not challenge her to a chugging contest.
I wouldn't. I would. I did not know that.
And she can even do it with like a can. You know how some people can't chug out of a can? Her and her brother have some like trick and they can both chug. So funny.
Well, I believe it about her brother. Yeah. I know. I realized that after I posted it. I have a secret meeting location. I will not have you be if I have a secret place, I'm not the photographer. So and it was a little bit different of a setup, I think. Like we had to go over to that counter to get our burgers and then go to the bar to order the drinks. I don't remember that counter being there.
And go ahead. And what?
And I'm not gonna diss on the young generation, but when back in the day when we were there, if someone's making burgers, they're making burgers with all the toppings. And there was a list, like these are the toppings: lettuce, tomato, onion, pickle. I said, I'll take the Murphy burger with everything. And it came out and it just had lettuce and a tomato. And I said to the kid, I was like, where's the pickle? Where are the onions? He's like, that's going to be a while if you want me to cut the onions.
What?
Yes. Yes.
That's crazy.
And so I'm like, now I know why nobody's here. The staff isn't the greatest.
It's going to be a while if you want me to get those onions. Where you're like, I'll wait.
Yeah, I'll wait.
Okay, Frank the Great comes in with something from the YouTube chat, which is awesome.
Yeah,
I have a
first time.
strangle in POWL, which is not liquid. Feb 200 put 330 call, and the stock dropped 50 points today. Would you adjust this position or close it? I sold it for $13, now marked around the same. Without even looking at it, if you've got a scratch.
Yeah, if that thing isn't liquid and it's down $50 today and I can scratch the trade, I would get out.
Yeah, right. I mean, we'll take a look at it, but that was my initial POWL, right?
Right.
UL. And they, what were their strikes? Hold on.
A 220, 330, 200, 330.
200, 330 in Feb.
Was it Feb or was it March? I mean, 200, 330. Well, and the vol's not going to come out of this till earnings. So you're just going to be holding on to this through earnings.
Nothing we do is a trade recommendation, just a little FYI. But I will tell you, if this was a scratch and you're uncomfortable, then I would not be in it.
Right. And if they're not liquid, kind of like my frustration with OKLO today. I was like, the markets were so wide on the open. Just got me really mad.
Yeah. Okay, I'm going to go back to Twitter because I know.
And they see
hold
that,
on.
like 890 at 1070.
Yeah, those are pretty wide markets. I'm sorry if I'm making everybody dizzy, but I got to go back because we had some other things come in this morning that I wanted to make sure we got to. Look at that. Well, I'm going to go to Punish Pixels too, but I want to make sure. So
we've got a lot of tweets today.
Yeah, Frank the Great's coming in with all this economic information, which is fantastic. Then Mikey, the Polish warrior, put $100 in his pocket to hold the Jejune butterfly. Sure. You got the I Dream of Jeannie.
Put $100 in my pocket to hold the Jejune butterfly. Please do the Dream of Jeannie and close at 60-10.
100%. I'll do it again.
But at least you put $100. You've locked in $100.
That's fantastic.
Yeah. It's a beautiful picture, Mikey. Beautiful picture. All green.
Yep. I love it. We just need it down to 610.
And that looks like a little hat on Jejune.
It is. Okay, so then we got Punish Pixels coming in. Good morning, ladies. I didn't expect this trade to be ready to close in less than a week. It's going, yes.
Yeah.
Punish Pixels, this is
going to
awesome.
Be an exciting trade week with all the big earnings. So Punish Pixels, thanks for that trade idea. Hope you did it big by big.
Yeah,
and a bigger product than us. We were in SPY.
So he was SPX, ES, or MES. So these are all multipliers. ES would have been 5 times. SPX would have been 10 times.
Right.
Yeah.
Right.
And then I wanted to show you this because this is a big week, Jenny. And I want to say thank you to Bob on Fire because he always comes in with these, which are great. Today we have NUE, Boeing, GM, LMT, Royal Caribbean, and KMB.
Okay. And so we've got every day. And tomorrow, Starbucks, ASML, PGR, team. So I guess maybe tomorrow, not really so much. Tomorrow is kind of the slower day.
And Wednesday, when we have a Fed announcement, we've got Tesla, Meta, Microsoft, IBM, LRCX. Now, wow, like this is a lot.
There's a lot on Wednesday. So it's going to be a crazy day at the SIBO, for sure.
Yeah.
And then Thursday, will you click on show more?
Sure, want to.
What else do we have? Oh, so
Apple, Intel, Visa, XOM. Yeah, it's a big week. This is a big week. And next week's a big week. So these are the two.
Mm-hmm. And I'm going to be, so Thursday at the close when all those are coming out, I'm already going to be deep into the dance state. I'm going to have to leave. I'm going to have to leave the stadium and say, I'm out. I got to go work.
Excuse me, ladies.
Excuse me, dance moms. I'm out of here.
You should do that either way. By the way. Just make stuff up because you need to get out of there anyway.
I know. I'm going to.
Look at this. Frank the Great. He's got finally snow in Prescott. That's crazy.
But he does get snow there. Like he said, finally. He's been waiting for it.
Prescott is Wisconsin or Arizona?
No, in Arizona. But he does get snow in Prescott, Arizona.
Huh. Cool.
I don't know. He's posted pictures before of snow. And I'm guessing if he said finally, he was looking forward to it.
Well, congratulations on your snow then, Frank the Great.
Enjoy. Go put on your snow pants and build a snowman, Frank.
Yeah, go have fun. Okay, so we've gotten to all that stuff. Let's take a look at the earnings for today. I'm going back to Bob on Fire. Hold on. I'm sorry.
Did we get to that big yellow thing?
Yeah, we did.
Okay.
That was the one bullish FXI. It was from Liz and Jenny Forever. And can we talk about OKLO? Because that's nuclear. That's a sign for nuclear radiation. Okay. So here today, Monday. So any of these exciting for you?
Boeing, GM, Lockheed Martin is usually not super liquid. Royal Caribbean, I know you've got that right now.
I needed it, so I would just. I use the term need loosely because, hold on, RCL.
I know you got puts getting ready for your cruise.
Well, I wanted it in my January statement, so I got put the stock yesterday. I needed it in my January statement, so I think I started selling puts about here.
That's fine.
Yeah, so I got put the stock, and then it's up a little bit today, and they do have earnings. But I just wanted it in my January statement, so I got put the stock because I like to do that. I'm never going to go out and buy the stock. In my infinite wisdom, I would rather sell puts until I get the stock.
Sure.
Right.
And one year it worked out so well, it paid for your cruise.
Yeah, it did. I couldn't get the stock to save my life because it kept going up.
Right.
Yeah. So it was good.
So it's like you didn't get your $100 stateroom credit, but it paid for your puts paid for your cruise.
I wound up just buying the stock for the $100 stateroom credit because it was really cheap. It was really cheap in my eyed. But I couldn't get it. So that's the one. I don't know that if I was not doing this, that I would get into Royal Caribbean. Do you know what I mean? It's up so high, except there's a little 217 put right here. But I don't know.
Let's do that. Let's see how much it is. It's going to be cheap. It's going to be cheap. Although that market was super wide. That's crazy.
I'm not paying 143 for a 217 calendar in Royal Caribbean when I want it up because I'm long the stock. So we're just going to go with this. Now, what are your thoughts on Boeing? Because I know you're usually in Boeing.
No, it's crazy because so many times I would say, like, I'm never trading Boeing again. And I'm not in it now. If you go to the chart, like, I was in it earlier, but it did have a run up. So I'm out. I'm not in it now. I have nothing in Boeing now. And so I don't know. At 175, it was much easier to trade when it was lower. At 175, I don't know.
I don't know that. I mean, it's hard too because the way that you're going to get hurt is naked options. Now, I know we have a couple naked options in here, but our account is actually in really good shape this year, right? So far this year. And we've been doing a good job because we've been taking things off.
Well, we've been doing those bullish diagonals. Let's price it out.
Okay. So the bullish diagonal will be selling one in the 4-day because it's the nearer term. And then you're going to buy the at the monies in the 11-day. So it is, how wide is this? $7.50 wide for $4.
Okay. That's kind of a lot because you're paying more than half.
Yeah.
I don't like paying more than half. And you went in the money with that.
Well, it's the at the monies.
Right. But I mean, you didn't go out of the money. Sometimes we can make it cheaper by going out of the money, but it's not going to be that much cheaper and you're still going to be paying more than half. You got to buy it. You got to buy it. So you're paying $282 for a $5 wide. Still more than half.
Yeah, I don't know.
I think that kind of is like, I don't. We like to pay a third to a half, I think is the max. And we're talking about the width of the diagonal.
For earnings, I like to be under 50%. So yeah, maybe. But do you think that has to do with, Jenny, do you think it has to do with the day of the week? Like, are we paying more because there's more in the long that we're buying?
Well, but there's more juice in the short we're selling because we've got the whole week.
True.
So I don't know. Okay.
I want to take a look at NUE, and I don't want to look at Lockheed Martin. We can if you want to, but maybe GM and NUE.
GM. So
General
GM.
Motors. 69 rank.
What cars is what lines of cars, brands of cars is GM?
GM. General Motors.
Yeah, but what are their cars?
Like a GMC? You know what I mean? Aren't those?
I don't know.
Pickup trucks and isn't it it's like Will Arnett's the voice for GM?
I don't know. Let me look. I'm gonna look
the voiceovers.
Let me look this up.
But I'm gonna look at just a bullish diagonal in GMC. 54. So here, I mean, this is
Chevy.
Chevy?
Yeah.
Oh,
yeah,
cool.
Chevy.
Okay, so here is what we were kind of talking about, is if you're going to put a diagonal in. Here you've got $4 wide, so you've got 54.58, $4 wide, and you're paying less than half, 180. I don't mind this. It's a very low commitment trade.
Okay, and I'm not done. Chevy, Buick, Cadillac, GMC.
GMC, I knew that.
Yeah, and then they have OnStar, GM Financial, GM Insurance, GM Energy. So that's their list of their brand, all of their brands. So I thought that GM was more than just like one car. So Chevy, Buick, GMC, Cadillac. I don't know if that makes any difference, but I don't see anyone driving any of those cars around here. Do you?
Come on, everybody's got a caddy. I mean, I don't know.
And how much is the diagonal? 180?
Yeah, it was 180, so it's less than 50%. Take a look at the chart. I don't mind it.
I guess. I'm just like, usually I put in things on products that I actually like. Like I'm not interested in any other brands.
I don't know anything. I haven't bought a car in years.
Ship it.
I can't stand buying cars. It's my worst nightmare, but it doesn't matter to me. Do you know what I mean?
Go ahead and ship it.
What I was going to say is the risk reward is less. I was just showing how we in Boeing, and you know what Boeing does, but it was more than 50% the width of the strikes.
Yeah.
So
it was more than 50% the width of the strikes.
Yeah.
Go ahead. How is our U-Haul? We have our residual from our U-Haul earnings trade. How's that coming along?
Great.
Oh, that's right. We switched it to the put. I keep forgetting.
Oh, I was like, it looks great.
U-Haul.
It looks
that
fantastic.
was the one earnings so far. That was the one earnings diagonal that didn't work out.
Yeah, it's the only one that didn't so far.
And I usually follow ours and put them on myself. So I can't bring myself to put on the GM diagonal.
Okay. Well, hopefully.
I'm a big fan of being long Ford.
Yeah, you do love Ford.
I've got my Ford stock. I got this cool, like old-fashioned Ford, like cool kind of picture at an art gallery that I hung in honor of my Ford stock. I'm gonna hold it forever.
I don't know why you're such a huge fan of Ford.
I don't know.
Okay. I'm regretting to inform you that our little Jajun trade is down $50.
Yeah, I know, but it's only 10:39, so it has time to rally back.
Yeah, there's a little bit of time to rally back.
Right, it does.
Okay. And I want to look at NUE. Then we'll go back.
And what is this, Nucor Corp? Is that what it is?
Yeah, do you know is this a product that you care about?
Yeah, you can do a diagonal here.
What is Nucor?
We'll look at a diagonal here in Nucor Corp.
Jenny cares about this product because she knows what it is. No one knows do you know what Nucor Corp is?
I know. I'm just saying with the car, like if people are buying cars, then yeah, go ahead and put in the long bullish trade in GM. But I don't know. I don't know anyone that's bought any of those cars lately. The only person we know, two people driving around in a Cadillac, Mike North and Mandy.
Mandy's got a Cadillac? Oh, my neighbor, Bob, just bought a Cadillac, the SUV.
Oh, did he?
Yeah, and he loves it.
Can't you see Mandy in a Cadillac too?
I mean, I saw her this weekend. I didn't see her get into a Cadillac.
Yeah, it's a Cadillac.
Oh, then it's a cute car. I liked it. It's like a Cadillac SUV.
Yeah, right.
Yeah, it's a great car.
I sent my favorite car. I sent away. Logan took it to school. I cried a tear, had to wipe a tear away as he drove off in it.
Okay, you and I should just stop talking about cars because we know nothing about them. I mean, at all. We have to move on.
All right, go ahead.
Okay, so NUE, just kind of looking at this is going to be a little bit more expensive than the one we did, but there's more profit potential. So you can figure these diagonals, you should get a little bit more than 1-for-1 profit potential.
Now, do you think if we've got a down day in the market, that's bad news for earnings?
I do.
Even if the earnings are good.
So good news could be bad news and bad news could be good news. What do you think about this market? Do you think this is a buy the dip?
No, not yet.
I think I'm sticking by my guns that I said last year. I think each move deserves 3 days of respect.
I'm going to
respect the move. I'm going to respect the move for 3 days.
I put on Punish Pixels. Was it Punish Pixels downside diagonal?
Yeah.
Okay, put that on, and I didn't take it off yet. I'm holding. Hold.
Yeah, because you've got a lot more bullish positions than this account does. So yeah, you think it's day one, which is good.
I'm just not yet. I'm not yet saying like, oh, let's all go out and get long everything.
Yeah. What I found crazy this morning is Intel was not down. It was one of the stocks that was up a little bit this morning. Let me show you this.
Yeah.
It was as high as 2106.
Right. What else? And Apple was up today. Is Apple still up? Look at the NASDAQ. Now NASDAQ's down 717.
I know.
Ooh, Apple up $6.
What the heck is happening?
Uh-huh. What day are earnings in Apple?
They're next. Hold on, trade page. They are the 30th.
That's long.
What do you mean that's long?
Oh, no. I was looking at ours, the 25-day. What do we have in the 25-day? If the earnings are the 30th, the earnings are this week. So why do we have a 25-day? What do we have?
It was left over from. I mean, this thing's got to go real far in order to get to the 270. So you're saying there's a chance. There's a 4% chance of it touching in the next 25 days. But in 25 days, if you get a bull move, it's not.
Yeah, right. That calendar trade could come back.
But this isn't something that we are going to close.
No, that was left over from a calendar. We've seen calendar miracles happen before.
So take a look at this, though. Oh wait, no, this is in the 25-day. But you got to think Netflix. So Netflix had a 3 standard deviation move.
Oh, and
it's a 1, 2. It was up here. Netflix was a 3 standard deviation move.
And Apple hasn't been. If you go to the chart again, like Apple hasn't been running up like everything else. So I already put on a bullish earnings trade for Apple. I've got it ready to go. I wouldn't mind looking at the diagonal. I know earnings aren't till later in the week, but how much is the diagonal this week, next week for Apple?
Let's take a look, see. So the this week, next week diagonal. So I'm going to go with the 240 because it's at the expected move for the cycle of the 4-day. Then you go to the 11-day. And to make it cheaper, I could go with the 230.
So you've got $10 wide for $450. Not bad.
It's not bad.
It's not bad. I mean, because Apple's everyone's taking their money out of everything else and putting it in Apple today.
Which is weird. But I did put that in. So we've put that diagonal in.
Yeah.
Okay.
I mean, people are looking for places to, like, if you take, let's say people are like, oh, I'm going to get out of NVIDIA and get into something else. They're looking for other places to put it.
Well, the problem is you have, and I remember TP talking about this one time, so I don't want to butcher it, but you have all these ETFs and all these funds that have to redeploy their capital if they're getting out of something.
Right.
So they can't just have it on the sidelines. It's part of their bylaws that, so if you're going to take it out of something, you got to put it in something else. That's why it's almost like a self-fulfilling prophecy when things start going up like that.
And we see these different rotations into different products, right? It's why Tom keeps waiting for everyone to rotate out of the NASDAQ and into the Russell.
Yeah. I mean, you look at that right now, the Russell's only down 1%, and the NASDAQ's down 3%.
Yeah.
And that Dow just keeps not going down. Diamonds.
Yeah.
It's not going down at all.
Now, if you had to pick something, if you were like, oh, today I'm going to sell my NVIDIA and get into something else instead, what would you pick?
Does it have to be one of those Mag 7s? I'm not going to lie to you, though. I think this is a buy the rumor, sell the news. I think like Microsoft put out an announcement saying that this is actually good for the markets if prices come down. People just don't realize it yet. This is just the pricing of it in there. I don't necessarily know that it's going to be a big, massive sell-off. I think this could be, I think the market is hairpin trigger ready. Like, I think any news is going to move it in one direction or the other. And I think this was kind of proven by like today's thing. Maybe it's going to have some follow through, but I don't know. I'm not really, I was small enough in my NVIDIA that I'm keeping it.
And I'm not just saying NVIDIA, but I did like today, in my account, I got rid of DraftKings too on that Kashi news. So like in Logan's account, got rid of his NVIDIA and I put that money into CCJ.
You got rid of NVIDIA and put it into CCJ?
Uh-huh.
They seem to be moving in the same direction. Those are kind of correlated.
Well, that's where I moved his today. Because in his account, he does, in those small accounts, you have most of your you usually have most of your buying power at use in small accounts. So in small accounts, it's like, oh, okay, I have this money to spend. Where should I put it? It's different in bigger accounts where you've got a lot of money on the sidelines and you're not trying to like figure out where to allocate it all.
Yeah, that's true. It is true.
Yeah. But that was something he wasn't in. So I thought, well, move it to there.
But those are pretty correlated. You saw they were both down big. Watch this. CCJ and I think NVIDIA are down the same percentages. So NVIDIA is down 16%.
16%.
CCJ is down 12%. So a little bit less, but they're very copacetic.
I don't know. I don't know what the correlation is between uranium and NVIDIA.
Well, it's the AI. That's why they were building up all those nuclear plants for the AI stuff.
But I think they're still going to be building the well, we'll see. We'll see. And we could ask our research team to give us some correlations on like what's super correlated. We're going to be in the office tomorrow. We could ask like what's super correlated to NVIDIA so people know.
Yeah, right. Right. I mean, this is, you can just basically, Apple to me is the most bizarre one because it's everything else in the Mag 7 is really taking a hit.
But that's the one that hasn't run up. That's the one that has kind of been forgotten and hasn't run up.
Yeah, that's true. That's true.
So,
I want to see what the metals are doing too, because they've been having like a run for the roses the last couple weeks. Well, not really, but right here it seemed like a bigger move.
But they're all down today.
Yeah, but take a look at that. Like it's been going. That was almost all-time highs on Friday.
For gold, but not silver.
Not silver. Mm-mm.
That's why I still, think it's if you're going to be long one, I think I'd rather be long silver.
You're just saying based on the chart.
Right, because like silver is not even, to catch up to gold, we'd have to have quite a move.
Yeah.
And did you see our SMCI? What do we have in SMCI? Because we were taking a hit on that today.
Oh, that was from Eugene, remember?
Cornelius.
I'm sorry, Cornelius, yeah.
I'm just curious what we have here. And, okay, so the diagonals, honestly, are a good thing if you get a big downfall in the market because you don't have the naked puts blowing up. You don't have the undefined risk. They have been kind of like a savior when we've had quite a few big down days this year so far, and the diagonals prevent us from getting too hurt.
I want you to take a look at something, Jenny. I know that this is the only trade we've had on. We've rolled it up. We've reestablished every time it went up with the Cornelius trade. We've reestablished. So we're still up year to date, $138 in this, even with this big move down today. All we've had is the diagonal with the reestablishment. I'm going to go. I'll go 60 days. Yeah, so we put it on and closed it. Then we put it on and reestablished it.
And if you think about these diagonals, like I went through so I was looking at this account's P&L, and because this account's doing pretty well and we're not that far into the year, and I wanted to see, did we have one big win that's skewing our P&L? But no, there's not. It's all just small win, small win, small win, small win, mostly from these diagonals. So I do like them. The question is, when the market's falling and they're all out of the money, if you keep reestablishing and riding it down with the market, if we keep going down, then it could turn ugly.
Yeah, because you have to decide right now. I'm not gonna be like, you have to decide right now, but you have to decide right now when you look at SMCI. Let's open up the option chain.
It's all out of the money, and there's still value in there because
there's still value in there because you're going through earnings. It was
yeah, and so open up the 11-day. How far away is our long strike?
Far away.
Far away. And if you sell that and put on a new diagonal, how much is it going to be?
So if you're going to sell this, I'm going to go to the at the monies. Now it's going to be a little bit more expensive too because it is kind of like an earnings setup one.
Right.
So we're paying $1, almost $2 for that one. I'm going to sell the 32.5. You'd pay an additional $1.19. That's not bad.
And then you have the 29.5, 32.5, only $3 wide.
Mm-hmm. So I say we close this and put something on earnings.
Sure.
We're up in SMCI.
We're still up on it, and that's so far out of the money now.
Because otherwise, this is just going to decay, and we're going to lose an extra 130 if it doesn't move in that direction. What else needs to be managed, Jenny? Let's take a look.
You know what else is so Taiwan Semiconductor? Refresh my memory. Why are we up so $320 in Taiwan Semiconductor?
TSM, I believe we did a diagonal. Hold on, let's take a look. So TSM, we're up $286. We had, what did we do here?
Oh yeah, we did that. We did a diagonal on earnings, and
on
after
earnings.
that, we sold.
And then we sold a put spread.
And that put spread, it's blown through, and it's almost full loss. It's a $5 rate put spread. It's trading 420, so there's nothing to do with that. We just leave that, right?
I mean, you could take your $80, but yeah, I get it.
I mean, you could. I guess you could.
Because no matter what, we'll still be up on the year in it. It's got 25 days. If
It
this
has
was
25 days.
Yeah. Yeah.
It's funny
This-
because we look at
this
that put
account-
spread really.
This account is doing extraordinarily well. And I want to kind of be clear about this. It looks like there's a lot of losers in the board because these are all reestablishments. We have a tendency to, well, we're supposed to. We manage winners, we take them off, and once they're closed, nobody can take it away from us. So this is the best first month of January that we've ever had.
And our trading style has changed a lot, where we are a lot more defined risk, a lot more diagonals, a lot more trying to get a little more profit potential on some of these earnings trades with defined risk.
So I do want to be very clear though too, because I just saw somebody in the chat, and it's a new chatter saying, "Do they ever make money?" I'm sorry, I'm new, because it looks like they're losses. So that's what's happening here. You're on a day like this, you're watching us mitigate some risk, but that's because this account has done so well. When we have wins, we close them and move on, and then manage our losers. I know it's counterintuitive to what people say, but that's what we're doing when we put on when we're using complex options positions.
And I know we get newer viewers, and honestly, like I don't know exactly but I think there's like legal reasons why we can never say any of these accounts. Because number one, our trades are not trade recommendations. Number two, this is just what we're doing. I think we are not allowed to say like how much or what percent the accounts are up legally. So we can't. That's why.
Well, because nothing we do is a trade recommendation. You're just watching two traders. But it's interesting too, because I mean, my son had the same question for me. If you open up our account, it doesn't look good, but the P&L for the year that's locked in does. Do you know what I mean?
Right, because we're in and out of things so quick.
Just and for an example here, if you're going to take a look at OKLO, you can see here this in days open. So we left the long and rolled the short. So this short has already made money, and we've already closed and taken profits on a short and then rolled it up. So it's hard to see that. It's hard to see that in there, and that's why once you understand what you're looking at, it's a lot easier.
And it's interesting. In OKLO, we're like, well, pretty much a scratch on the year. You can see it's like nothing, which stinks because it's had such a run up, but we've only been just selling put spreads, selling put spreads, selling put spreads. So taking in small amounts like $1, 50 cents, 50 cents, 50 cents. And now here we have a $10 wide put spread. And if it blows through that put spread, that's $10 wide, that'll hurt. That'll hurt for sure.
It will. Yeah, but it hurts way less than owning the stock today.
No, but I think we would have been better off in OKLO instead of having put spreads if we would have had. It's a tricky one. It's a tricky one because the option markets are very wide, and they keep their premium until the very end. Seem to
keep the premium until the very end. Do we have Archer in here? I'll see what it's doing. Archer's down small, not a lot.
Well, percentage wise, it's almost down to 7%.
Yeah. 7%. I mean, it's not a small move, 7%, right?
And is Joby down too? Yeah.
I think a lot of things in the market are down. I don't know why that is. Archer moves though. We've seen that.
Right.
Yeah, Joby's down 3. Okay, I'm going to pop back into
Jajun, you've got to make your decision. We've got to close Jajun. We said we would.
Oh, let's go to Twitter first and then we'll decide. Maybe we can get saved. I thought we had like 20 minutes left.
No, we're out of time. 10:55. Wah, 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 wah.
What if I put an order in to scratch it?
No, we said at the end of the show, we're going to close it. And you can see now we're down on the year in SPX. A month of Jajuning.
I did it. Took a $50 loss.
Hey, it's the rule. It's the year's rule. It's the rule on the year.
It's so funny because when you're running it, you're like, I'm just going to leave it. When I'm running, you're like, the rules are.
Well, It's easier for the other person to try to be the rule enforcer.
It honestly, it really is. But that's what I do love about this account, Jenny. It's funny because there are two sets of heads that are looking at it, and we always kind of collectively decide, right? No one really goes rogue.
No, and what did you sell that for? $1.60 or something, or what did you just sell that for?
$2.10. We took $60 loss. We paid $2.70, and I bought it back for $2.10.
Yeah, so $2.10. So it was trading for $2.10. If we left that and we expired right here, that'd be a $210 loss.
Yeah,
in addition to the 60 we already lost. So it's like, if we stayed right here or lower, I don't want to lose 200 on the Jajun trade.
No, I don't either. All I'm saying is sometimes when you're running it, you're like, I'm just going to leave that.
The other person, I guess maybe we should say one person runs it, the other person calls the shots.
It's so true. All right, Jenny, we are done for the day, right? It's fast hour of the day, done and dusted. Yeah. We are coming right 109, 110. Where do you think we're going to close? And then we'll end this.
I think we're going to be lower.
You think we're going to go back to the 150?
I think we're going to be at 60-10, right in the middle of Mikey's butterfly.
Ooh, I hope so. For Mikey's sake, I hope so. Mm-hmm. I think it's going to be right here. I think we're going to stay down 110. I think we're going to maybe close down 100.
Yeah, I don't know. I think we're going to be a little lower, but I'm hoping for 60-10 for Mikey.
I know. All right, Jenny, you have a wonderful afternoon. Everybody out there, good luck with their earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
See you tomorrow, everybody.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grotta, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, and of course, Ryan Grace back with us in the house today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, anything crypto, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my guys, Mike and Ryan. Ryan, we missed you last week. How are you, sir?
I've missed you guys as well. I can't complain.
Yeah.
I'm a Bills fan, so a little sad, but I've moved on rather quickly at the same time.
That's all you can do, you know. Yeah. It's like a breakup. You got to just, sad.
Move forward. That's all we can do. How are you guys?
We are equally as sad as, I don't think as sad as you are, but I think both of us were ready for a new era, a new thing. I was having this conversation in the lunchroom. You can see the story that is unfolding. You have like Taylor Swift in her like new jacket, it's all chiefed out, and then like they win, and then Kelsey retires, and they have like this retreat to Italy, and it's like the whole story. The reality show starts. Like you could feel the change in the world that happened with that loss, and I don't know if I'm ready for it.
No, I threw a little tantrum. I turned the game off like right when they got that first down with like 2 minutes left. I was like, this is so stupid. I was so frustrated. But now my entire Twitter feed is literally just videos of all the terrible calls, and how it's just like blatant.
Yes.
Blatant.
Roger Goodell.
It's actually crazy. Someone actually brought up a good thing. Like in tennis, you have the ability to spot a ball that's going 130 miles an hour and bouncing off the ground, but we can't get a 4th and 1 right. Like with a vertical line, just put a vertical view over them, draw a line where the line is, and is he over the line, which he was.
Yeah.
Looked like that. Yeah. But look, guys, the NFL needs its narrative, the storyline. Chiefs three-peat. This is about the money.
Yes.
Maybe I'm a conspiracy theorist, but I think they told you what it was going to be at the beginning of the season.
Yes. The script has been fantastic this year.
And they're going to win the Super Bowl again. Don't bet against it. You're going to lose your money.
I know. I can't wait to see like the split of where the bets are going, because I'm sure it's going to lean. I think we're not. I imagine we have a very public view of this. I think we, like most people, are in this, hate, or in this realm of hate.
If it was legitimate wins and legitimate stuff where the calling of the plays was not involved, then it's totally different. But it's just it's so obvious. It's crazy.
Well, I take solace in the fact that we're still in this version of the simulation.
That's true.
I have seen this before. I saw that exact same game before. We're still on the same path. It's good to know.
So you're not buying the DeepSeek simulation. We're still in the NVIDIA simulation.
I think so.
Or is this the new version, the DeepSeek? We're getting taken for the next one, the next ride.
Yeah, there might be slight deviations, but I think we're generally on the same path here. Kansas City back in the Super Bowl after winning the AFC Championship, like 32-29 or whatever.
God,
I've seen this before. We've all seen it.
I know.
Disgusting.
I'm with you. Quick little market update, and let's get into it. E-mini S&P 500 futures down 109. A little bit of a sell-off over the weekend. I know we talked about, or at least mentioned, the whole DeepSeek, China, AI situation that has certainly weighed on markets. We got as low as 59.48, which is about 70 points lower. So it's been a big move in markets, as well as in volatility in some single names. Obviously we mentioned NVIDIA. It's down 21 today. On the flip side, you have like Apple that's up $6 or $7 today, and Meta hitting new highs. It's a very mixed tape. There's some stocks that are having some big moves to the upside. One of the stocks that somebody tweeted at me or something was ServiceNow up 29 and change. It's a very bifurcated market here with a little bit of two-sided action. NASDAQ down 670. We got significantly lower, about 500 points lower from here. So you're seeing a little bit of a cooling off from that downside move. The Dow up 20. So you're basically having the Dow unchanged here with NASDAQ and the E-minis, the weakest of the group. And then the Russell only down 14. You got a little bit of a bid there in some of the bank stocks that have been very, very strong over the last couple weeks here. Oil selling off a bit, /CL down $2 and change, 72.50. You got volatility futures at 1765. We did get as high as 2016. So we had a 20 handle in vol futures. The VIX itself, the high was 2250. So you've had some moves in volatility. Bonds up a full point. You got gold and silver both taking it on the chin. Gold's down $42, silver down $1, which is a huge move in silver, obviously. And then Bitcoin, we are just touching below the 100,000 mark. The 100K hats are getting thrown away here.
Back in the closet. We're not throwing them away.
Back in the closet.
Just putting them away for right now.
Yes.
You can't wear that hat to school every day.
Yes. It's a bloodbath in the crypto sphere. Everybody is getting ready for their jobs at McDonald's.
It's over.
Oh my God.
It's over. They're going back.
It's always interesting to me when you see a big sell-off like this, but something like MicroStrategy is kind of just flat.
Well,
what does that tell you? For me, it tells me the pump is not over.
It's come down from 400, down 20%.
Yeah, but I would expect, on a day like today, I would expect it to see down 50 points or more.
Oh, yeah.
But it's really not moving, which is interesting.
Yes.
Compared to other products like Mara and, Coinbase, whatever you look at.
And just to also, I forgot to mention on the right side of your screen is the Tasty Crypto Wallet, which we have one of our fun wallets here. I'm just scrolling through here. I see my I don't know if it's Doge.
It's not good.
Doge Elon Mars or Dog Elon Mars. Do we know for sure?
I don't know.
It could be, but I
think it's Dog Elon.
Yeah, but Doge
Elon, I don't know. Because the ticker is Elon, right?
Yes, it's just. Wait, is it just Elon? Let's see.
But it's not doing well. You're doing better than I am, though.
Well, I have the gold monkey ape as the least loser of the group because we're all just getting murdered.
Yeah, we're gonna have to wind this down pretty soon, guys. This hasn't been very good recently with some of these memes, some of these AI tokens.
Not good.
Some of our bets, I should say.
Yeah.
Is that? I mean, I hope we'll talk about the whole Trump situation, but do you think that's some of the reason right now? Is just the liquidity zapping of that?
I think you see some of that where this capital just sloshes around.
Yeah.
And given how tiny this stuff is, you can see something go from 5 million to 100 million back down to 10 million in market cap. I think the slam everything AI related is spilling over into some of what you're seeing with these AI agent tokens. But a lot of this stuff, if you were paying attention, had started to sell off a couple of weeks ago.
Yeah.
This exasperates the move to the downside, I suppose. But this stuff was looking, as I like to say, pretty trashy for a while. I'll look at AI 16Z or virtuals as a couple kind of, wouldn't so much say a benchmark, but kind of proxy for some of the space. And this stuff hasn't traded very well really over the last couple of weeks. seeing that continue here today, obviously.
Yeah, and you got to think into moves like this in the not only the equity market, which is the ultimate proxy for liquidity, but also in the Bitcoin itself. Nobody's holding on to some goofy meme coin, while markets are moving.
Yeah, absolutely.
It's just
live by the sword, die by the sword.
Yeah. Yes. Exactly. So
to your question, I do think that you saw at that time some liquidity get sucked out of other areas of the market by the Trump token trade there. And we're talking about the Trump meme coin that was launched on the Solana network. I think you saw some of that, but I don't think that, that's certainly not what you're seeing here today.
Yeah. tastycrypto.com, get the wallet. It's a great little tool. And you guys are constantly innovating and doing cool stuff on there. You got anything fun coming up on the wallet?
Yeah, we got a lot of good stuff coming soon. So I guess to speak to that for a second, post the Trump token launch on Solana, we saw a huge pickup in interest for access to other tokens on Solana, things that we've been talking about here on the show for some time, but other people are learning about, discovering, getting interested in, which is fantastic. So we've got a lot of things that we've been working to improve in terms of stability, speed, stupid things like how quickly the activity page updates, but all things that will contribute to a much better user experience. Have a ton of fixes coming out there ASAP. In terms of features that people actually care about, though, we've got some cool stuff coming. So we're on a bunch of different networks now. We're on Optimism, Arbitrum, Base, Solana, as everybody knows. We've got the ability to buy crypto when you're logged into your tastytrade brokerage account. That's coming soon. So today you can log into your account and you can transfer crypto from your zero hash tastytrade wallet, if you want to call it that, to the wallet address that you control on chain. So if you want to buy ETH at tastytrade or anywhere else, you can then send it to the wallet. With tastytrade and Tasty Crypto, it's easy because you can just log in and transfer it. What you'll be able to do soon is log in and then use that same interface to buy crypto. Now, it's not something where you purchase it and instantly transfer it. It'll be in your zero hash wallet, your tastytrade account, if you think of it that way, but you will be able to transfer it if you want after the fact. That said, if you like the interface and you want to quickly just log in, buy crypto on the mobile app, the Tasty Crypto app, you'll be able to do that. And then we also have a lot of improvements coming to the DeFi feature or experience that exists within the app with the browser. We've got a lot more token details and data that we're bringing into the app. And one of the bigger features that I'm excited about, which we'll start to show on the show a lot more, is this watch list concept. We'll have all of the different tokens that you want to see in there that will update in real time. It won't be something. Yeah, right now you kind of have to hold the balance in your wallet and have invested or traded that token. You'll be able to add, just like in in the tastytrade app, for example, or TradingView, you'll be able to add symbols that you want to follow, and you'll be able to interact with the news and get information about them in a pretty cool way. So I'm excited about that as well.
That's a lot. I thought you were going to say something like we're going to change the color.
No, there's a ton.
Something that seems like you guys are working hard.
There is a lot that we're working on, and really what we're trying to do here is create that all-in-one experience where if you want to trade any token on chain, you can get that USDC eventually from your brokerage account or via that mechanism. Or if you want to move Solana, you want to move ETH on chain, you want to trade it for something else, you'll be able to do that. I mean, you could do that today with ETH, but it's offering all of these services and this access across all of these different blockchain networks, given that you could see these use cases pop up and these opportunities just come out of nowhere. You need to really use a wallet for most of what's happening kind of on the front lines when you think about this on chain.
The trenches.
Ryan. Trenches.
The trenches, okay.
What was that tweet we were laughing about? Never underestimate the trenches.
It was like, you've been unemployed for over 2 months. Stop trying to buy and sell meme coins. And then the response was, never underestimate the trenches. That's
amazing.
I love it. So yeah, we've been grinding away, but got some cool stuff coming. Cool. Also got some great things, if I can mention it really quickly, coming to the Tasty Trade side that I'm aware of. Expanding the token offering.
Ooh.
So you've seen Doge come back in a sense. We'll be expanding to Solana. I think Ripple is in the cards, a lot more, all hopefully this week is what I've been told.
Wow, that is big news. That's awesome.
Yeah, so a lot of good stuff happening in crypto world, as we like to call it.
Yeah, that's great. And when you guys do have your updates and new features, I want you impromptu on the show.
Hell yeah,
to show
absolutely.
us everything. So
Absolutely.
I want to be the first. I want to be the first to use it on the network.
You will be.
So that's what I want.
You will be. You were the first to pop in this little widget here. Or maybe Ryan was. I don't know who did it first, but this is
the phone.
This is the first consistent.
Oh,
does it for sure.
Nick's leading the charge. Yeah, we need to use that on air more often.
Yeah.
No.
We've like hidden it.
Yeah.
But yeah, pop over to tastycrypto.com. I have the newsletter, free newsletter, comes out every Saturday morning, pinned to the top of the YouTube chat. So go sign up for that as well. But yeah, a lot of cool stuff coming.
I really enjoy looking through your different bags that you have here. You really, everybody knows we walk the walk and talk sort of thing out here. We're doing what we talk about. But you're here with 152 MFer coins at a fraction of a penny.
Boomer coin.
Yeah, boomer coin. You got Mike AI in there.
So with a lot of those, what happens is in the same way that you have NFT airdrops, you have token airdrops, sometimes you just interact with an application and there is this sense of or concept of spam. I think that's what you're seeing in some cases.
Where like
people
you can't even get rid of it because there's no liquidity or anything.
Yeah, it's like dust.
Yeah, it's like dust. You actually have one that's called like dust or unicorn fart dust.
So that's actually Shelly's trade for bag battles.
Okay. That's a good one. I like that one.
I don't remember the reasoning. We'll have to ask her, but yeah, that's a real position.
Yeah.
Or not.
Yeah. Okay. Nice. Well, some of these are like equivalent to OTC stocks. If you had like RSX or like Save or something, one of those stocks that just goes away and you can't really do anything with it because it's worth like a fraction of a penny, but you can't just like erase it.
You never know. It could come back.
It could come back. So, amazing.
Beautiful.
Yes.
But yeah, we're streaming live on YouTube. If you want to join us there, pop over to Tasty Live. You can throw in your trade ideas and questions along the right-hand side chat. And again, tastycrypto.com. We've got the newsletter pinned to the top of the YouTube chat. You can sign up for that newsletter on the homepage as well. Should we get to some slides? See what's what with this little crypto market here?
Yes.
Yeah, let's do it. Where do you guys want to go first? I know there's a lot that we can cover. It's been a couple weeks since I've been here.
Yeah. I would like to get your thoughts on the Trump meme coin, the lack of crypto announcements from the administration. I think a lot of the crypto space was expecting this to be like day one announcement talk. Does that spook you a little bit in any way? Has anything changed in that regard? Would be my biggest question to you.
I don't think anything has changed aside from the surprise token launch. There definitely wasn't an announcement, right? I believe this occurred while the crypto ball was ongoing. So you have all of the big heavy hitters in the crypto space at this event.
They must be so mad they missed out.
If you read into it, maybe this was done that way for legal purposes where it's not something that was promoted. I really don't know.
Yeah.
But it launched at the same time. Nobody knew about it. The internet figured it out. And I kind of wonder if in this case, it was a bit of a surprise to just about everybody, given that Trump has been pretty active. The Trump administration or his businesses or whatever have been pretty active in crypto for some time. Numerous NFT launches. Mm-hmm. It's like that weird $500 golden sneaker thing.
Sneakers, yeah.
All of that. So no surprise that we've got a Solana meme coin. Just the fact that it went to like $50 billion in terms of fully diluted value.
Like 8 hours.
Was a little bit of a shock.
I saw some.
Maybe not.
I saw one tweet that was saying that that he outperformed 40 years of SPY of like market gains and compounding in like 7 hours.
It's wild. I think short term as an onboarding tool, we saw it here. Definitely catalyzes more interest, and people have a reason if they didn't before. If you're a fan or whatever. You're kind of interested in what's happening with this Trump token, or just generally speaking, given how quickly it went up, people have FOMO they want to participate, whether they're pro or anti-Trump. I think just as many anti-Trump people want to make money.
Yeah.
So definitely saw an increase in, I think, new users. You just look at new wallet addresses. You saw some some impact in a lot of different areas. People wanting to get on. I think what was really interesting to me was just to see the knock-on effects of people wanting to get on chain, and probably the greater realization of decentralized exchanges and this other world that exists versus I just trade with a centralized exchange like a Coinbase or a brokerage like tastytrade. People are now learning that there's a lot happening with this technology, which is interesting.
Do you think that was part of his thinking, or do you think you don't think this was, there was any sort of what did the FTX guy, what was his phrase? Altruistic. There wasn't like an altruistic.
No, absolutely not. Other end of the spectrum. I think it's how much money can we make?
Yeah.
That's what I said. I was like, it has everything to do with just him feeling the power of his own self. Like that was it. We'll see.
It's a crazy.
Yeah.
It's insane. We live in a very wild
simulation.
Yeah, I think I would summarize it this way though. I think a really good thing for crypto, in the sense that I can objectively say the president of the United States has launched a token on the Solana blockchain network.
Yeah.
That's just insane to say.
Yeah.
Given where we were even a few months ago.
Yeah.
So I think it's a good thing for crypto. We'll see what the knock-on effects, implications are over time. But just generally speaking, if you think about, well, are we embracing crypto as a country, as a government? The industry should benefit from this in some ways. And there's always going to be trade-offs and negatives that people can point out as well. But I think it's generally a positive development compared to where we were previously. And then to expand on that a little bit more, when you look at everything that's been promised, I do think that up to this point, with some of the initial executive orders, there was a big digital assets executive order that came out last week. We are moving in the direction of doing the things that I think Trump said he was going to try to do. A lot of times, obviously, politicians are going to say one thing and not do it, or do the opposite in many cases. But you are seeing some follow through. There's a lot to be done still. I don't necessarily think that you're going to get this Bitcoin strategic reserve immediately, but you look at just some of the changes. A big one being, and this is not directly from the president, but the removal of Staff Accounting Bulletin 121 from the SEC. So that will now allow banks to more easily participate in the space, makes it a little bit easier for broker-dealers like tastytrade and others to participate in the space. Because previously they were constrained given the fact that you have to treat crypto as both an asset and a liability. And in many cases, you have to have the regulatory capital depending on who you are. Let's say you're JP Morgan, Bank of America. It's just not going to be conducive to participating given how much regulatory capital you have to hold against that Bitcoin liability one for one, or that crypto liability. So there's been a lot that's changed kind of under the surface there very quickly over the last week. And then a couple things that have come out with the most recent executive order. I mean, first and foremost, there's a clear embrace of this technology by this government, by the United States versus where we were before. There's the removal of the Treasury's kind of current framework for this in terms of how we treat this asset and how we kind of participate on the global stage. So I think that's going to be huge for the industry. You should see it bring more, I would say, crypto development. And not that there isn't a lot of crypto development that's occurring in the United States, but it should further incentivize it. At least we're not anti-crypto.
Yeah, take some of the chains off.
Exactly. And then the other thing that's really interesting that stands out to me is that we are now referring to, or at least this administration is, referring to a Bitcoin strategic reserve as a digital asset stockpile, which might indicate that it's going to be a bit more than Bitcoin if we were to even get there. But I think there's a much broader view. So I'm excited about some of what we've seen recently, just because it likely means that things are going to get much better. There will be regulatory developments. There's going to be the adoption of stable coins more so in the near term. And you're going to see a lot more that I think lends itself to institutions participating on chain, probably DeFi 2.0. It's just more of an embrace of the industry in a way that we've never had here in the US, which is a positive.
I love it.
Yeah, it will be a sight to see.
Yeah.
And I think it'll bring more two-sided action and implied and realized volatility, which means trading opportunities for everyone. Love it. All right, should we pop through the slides real quick, get through a little crypto market update?
Yeah, I need you to tell me if I should be buying the dip or not. What the hell, dude?
The answer is always yes.
Yeah, so we are a little bit lower than we were, maybe $2,000 lower on the Bitcoin price since I put this together about an hour and a half ago. But generally speaking, I mean, the trend is still bullish in here. I think the last time that we talked, it was a Monday, per usual, and Bitcoin was at 89,000. That was a couple of weeks ago. So that would have been mid-January, $10,000 lower per Bitcoin than we are here today. But when I look around, I mean, I'm not surprised, first of all, that off of all-time highs, the VIX at the low end of kind of the range it's been in, let's call it about 15. So that means that first and foremost, the market just isn't bidding up downside protection. So the way that that's hedged and the way that those flows materialize, you can get these very quick moves, right? You need the catalyst. So we got the catalyst being that all this investment into AI is worthless because look at what the Chinese did.
Yes.
I need to see more detail. I don't know anything about it. Are we sure the Chinese government doesn't have a lot of processing power and hasn't been, I get the sanctions, or we're not necessarily sanctions, but, we're going to make sure that we protect our industry. But the reality is they probably have the chips. So we'll see. But it's enough to spill into risk assets and cause people to take some profits at all-time highs. And if you're sitting at 100,000 in Bitcoin or 105,000 wherever we are over the weekend, and this sell-off started really last night in crypto at least. Well, obviously you saw that happen in the market when it opened. But I'm not surprised to see that you're seeing people take a little bit off the table here, but has anything changed? I don't think so. I don't believe that the crypto markets really were trading on what NVIDIA's position looks like or what kind of AI is happening. But
you got to be tied though.
It's correlated.
It's definitely correlated. You got that same sort of.
Yeah, absolutely. I mean, if you want to jump, if we just jump ahead to some slides, we kind of pop around here and we go to the correlation slide. It's going to be a couple more in the deck. Here you go.
There we go.
So these are your short-term correlations. A lot stronger than they have been, and certainly much stronger positive correlations than we've seen between, let's say, equities, the S&P, and something like Bitcoin over longer periods of time. But short term, if we were to see a bigger move in the equity market, I absolutely would expect that you would see a sell-off in crypto. It's not necessarily related, but at the end of the day, these are long duration assets, kind of like high beta tech stocks, right?
It's all about liquidity. Like it moves from the flight to quality, like nobody's buying gold today. I mean, gold's down 1.5%. It's just down the same as E-minis. I mean, it's all liquidity. When you have fear and panic and volatility, it's all getting thrown out. Like everybody wants just to close out.
Absolutely. I think that's what we're seeing here. Around the market, nothing has changed in my opinion. Bitcoin volatility, still about 60%. So no real change there. If we want to jump back to the first slide, kind of walk you guys through a couple of the things that I look at as we do. But, you look at the trend in here. So I'm just going to look at the 3-month trend. And we've seen when that's in deep red territory. But things have been structurally pretty bullish. You get short-term volatility, your mid-range between, call it 110 and 90 or so when you look at that Bitcoin range. Volatility, not much of a change. We've seen kind of the daily momentum ebb and flow here. ETH has been bearish. It's been bearish all month.
It's dead. I see people calling for its death.
It's dead. It's been buried. Solana continues to trade well, but absolutely getting a pullback on a weekly basis. Okay, let's pick the one that's down the most. Doge, down 9%. We've done a lot of work around just what's happened in the past with Bitcoin, and it's not out of the question for this to move 20% in a week. So to see a bit of a pullback here, no surprise. I think you continue to approach the market in the same way. Bullish trend, trade the range. And as soon as you see these pullbacks, you instantly get people calling for a larger correction to 75. Sure. Entirely possible. I don't think it changes anything. We're in a market environment where You look at the Fed is not going to cut here. At least that's not what's being priced into the market. That's because you've seen an increase in the rate of change of inflation. You've seen an increase in the acceleration of growth. So we have an environment where both growth and inflation are accelerating. At least they have been in the past. It's somewhat lagged. But look at the economic data. And that's an environment that historically commodities do well in, Bitcoin does well in. I look around in other areas of the market. I know that we've had some volatility in interest rates, but when I look at credit spreads, they're not blowing out. They might actually be tightening up here. You have economic growth. That's not a bad thing. And so I think this is an asset that generally, historically, has benefited from those sorts of market environments, but it's not going to go up 5% like everybody wants it to every single day and never go down, obviously.
Yes.
And we're back mid-range. I mean, earlier this month we were under 90. So I think that the trend remains in track here. You just have to take a little bit of profit at the top of the range and buy a little bit back on the downside. And that downside's probably closer to, if you're really going to play a move to the low end here, it's probably closer to like 95. Is where I would be a little bit more interested than the first crack of 100. Otherwise, we pop right back up and nothing's changed.
We've basically stayed in the 7 to 10K up or down range since that first real breakout to 100K. And you've had those expected moves. I think they're on the next slide here.
Yeah.
If we get to those, it's probably I imagine with volatility, it's probably the same thing there. But it's been a chop. I mean, it's back and forth. It's not like you've had any sort of distinctive directionality to it. It's kind of
Yeah, if you look at the chart of the price of Bitcoin, it's been range bound since
November.
Really, yeah. Post that election, you got that big rip higher, and we've struggled to break out of that range. Hasn't been a breakdown. There easily could be. I think that again presents a longer term opportunity. I don't want it to go to 75. I would like to sell some before if you can time it perfectly. But if it goes to 75, I look at that as a longer term opportunity. To your point, though, Nick, we've been just moving sideways. If you didn't have some news article to point to or some reason to assign to this, and you just followed the price action, nothing has changed.
Yeah. But it goes back to really when we were looking at when it first hit that mark, the range has played out. The realized volatility has been probably come in inside implied.
Yeah.
Implied
absolutely.
is always overstated, or not always.
Yeah. If you want to jump to the next slide, we got some of that data there.
Oh, beautiful. Let's do it. Yes.
Yeah.
Your 8 range.
Yeah, you can see there's still a little bit of premium in there. I mean, implied has been overstated, but it's been pretty sticky at 60%. Same thing with these ETH levels. Realized vol has been in the 40s on a 30-day basis for Bitcoin. Yeah, to your point, you look at this from where we were just a couple of weeks ago. So we missed weeks here and there. I know you guys had Shelly on last week, but we were off due to the holiday. But when I come back to this, and I'm updating these slides from when we chatted a couple of weeks ago.
You're not even touching any of those? It's all the same.
It's just wild to see that, there's some slight differences. It really kind of works pretty well.
Yeah.
Yeah. And we've had our IBIT trade on, the year-long IBIT trade, and it's been working marvelously because of this inside the range type movements we've had.
Yeah, it's funny to see those match up perfectly, because you don't use IBIT for the Bitcoin vol you use here, do you?
I don't. We can start using that. I
think it'd be better to use the actual markets that you're looking.
Yeah, I use volatility that's derived from an exchange called Deribit.
Okay.
And I use implied vols for the options, or from the options there for both ETH and Bitcoin.
Yeah.
And then we use realized vol just as a proxy to get some sense of it for the rest of them.
Yeah, because the IBIT has, when you look 50 days out, it's 64% implied volatility. So there's not much of a difference. But it's interesting to see that the spot markets, I would almost think that just because of the liquidity in something like IBIT is so much higher than whatever is traded in the option market for Bitcoin, especially the dynamics of it, because isn't it cash? Do you have to have some sort of secured asset to it?
Yes, yeah.
For those options when you're trading spot. You can't be naked
No, you would trade either in, using BTC or USDC, but yeah, in the same way that you'd have to have underlying collateral against a position, absolutely.
Okay. So I would think it would be, I didn't think they would be the same sort of implied volatility, but I guess it gets arbed out to the idea of you'd have to, if you were like, trying to hedge long or short calls in Bitcoin spot options to IBIT, that's got to be a whole mess of a calculation.
Yeah, I guess you'd have to figure out the notionals there and what you wanted to do, but
yeah. Interesting.
Yeah, but it is, the sentiment can be blinding because we're still at 100K in Bitcoin, but it feels like we're down 30%, But like Ryan pointed out, we're still up 10K from a couple weeks ago when we looked at this. But yeah, lots to digest. There are some nice visual charts we've got here too. You want to walk us through those real quick, and we can start taking some questions from the YouTubes?
Yeah, absolutely. So back to the correlations really quickly. A couple things to point out, and we've seen this before. Obviously, a very strong inverse correlation to volatility in the equity market. If you were to see a further breakdown here, let's say that the VIX explodes. I think I checked it was 18.
Yeah, right now, 18.
You break above and you trend into the 20s, you stay there. You're going to continue to see, obviously, a lot of realized volatility, but likely to the downside, more selling pressure. Be aware of that. Bitcoin definitely goes down in that same environment in the short term, I think, is what you see. Other than that, very short term inverse correlation, relatively strong inverse correlation with the dollar right now. So Bitcoin's been trading in the opposite direction of the dollar is what that indicates. Same direction as the price of treasury bonds, not the yield. And then, about close to 60% of the time here over the last few weeks, been trading in the same direction as, as the NASDAQ, and kind of 50-50 with equities. But a stronger positive correlation than we've seen. So no surprise. If you see a further pullback in the stock market, say the S&P 500, the NASDAQ, NVIDIA continues to go lower, whatever it might be, I think that you could see some more short-term weakness in Bitcoin. But I don't think that Bitcoin's future price performance, whatever people's predictions are, is contingent on what NVIDIA does or whether the NASDAQ goes up every day. I think they all benefit from probably the same things in terms of an improving liquidity situation, a stronger macroeconomic environment, and ultimately lower interest rates. But what really will juice crypto more than anything, and I think will benefit assets, is if you get into an environment where not only are we lowering rates, but we've stopped quantitative tightening, or to put it differently, we've stopped letting the balance sheet wind down on the Fed side. The Fed is no longer going through the QT process. And then ultimately, if they're purchasing assets, treasury bonds, mortgages, tends to be pretty beneficial to Bitcoin and to other crypto assets. So we'll see if we get there or not. Not calling for it, certainly not given where we are with the current macro backdrop. But those are the things that you would need to see to really throw fuel on the crypto fire in terms of what does it benefit from. Yeah. Otherwise, we probably ebb and flow. You're going to get some policy changes. These things are all generally bullish, but I don't think that week to week, it's always just going to go up, obviously.
Yes, and for us, and specifically me, layman, to explain that in the crypto sense, money printer go burr.
Yeah.
So that's what you're alluding to with the stopping of quantitative tightening and more easing. That is money printer go burr.
And I think that's what ultimately gets you your make up $200,000 Bitcoin price.
Yeah.
Bitcoin at 100,000, I think can go 50% either way if people want to know how to think about it. My time frame is over multiple years. This is a longer term time frame. You take profits. You've had a couple chances now to take profits well above 100,000. I don't think you ever go to zero. You want to hold some coins, but you also want to take some money out at times. Like, people have been in this asset since 20,000, just over the last year and a half.
It's a 5X. You got to, how do you hold that?
Right. What are you doing if you don't take some off the table where I want to if maybe you're looking at buying a home, you have a down payment that you want to make. If you have some of that there that you can take off, I think it makes sense to do that, just generally speaking, regardless of how high somebody told you it could go 5 years from now.
Yeah.
But when I look at Bitcoin and I look at something that trades at, what do we say, a 45% or kind of between 40 and 50% realized volatility on an annualized basis, that at 100,000, that tells me go to 150, go to 50. Now, does it stay at either of those prices? Not necessarily, but like that's the way that I would think about it. When I look outside of Bitcoin, there are more interesting opportunities that have the same downside, maybe a little bit more given their volatility. But to me at this stage and kind of where we go in the cycle, maybe have a lot more upside. Those could be things like Solana, like Ethereum. I wrote about Ethereum this weekend and some dots to connect, I suppose, around why there might be a bigger trade in there, or why, more so I wouldn't be surprised if you just saw a huge rip. Again, doesn't mean it stays there. But as this cycle matures, will you see higher Bitcoin prices? I think it's likely, but relatively speaking, you could outperform, in my opinion, in some of the other areas of the market as this cycle matures. We're still seeing Bitcoin market cap dominance at like 59, 60%. It's been sticky there, but very quickly you could see that rotation into ETH. There's a lot of reasons to believe that ETH could see a move.
You've been telling me that for months now. I don't believe you anymore, Ryan.
It did happen once.
I'm a soy boy now.
Oh my God.
Solana.
I think you could see a lot more upside in there as well.
Yeah.
But when you get that number that's in your mind, take some money off the table. I have no idea. Does ETH go to 300 to 5? I think, like, my view, I'm bullish. I think it's going to go up. There's reasons that I believe support that. But when it goes up, what do you do?
Yes.
Right? You can't just watch it and then think, now it's going to go up even more. You got to take some money off the table.
Yeah. The same thing happens in equities when we get those emails like, oh, I should have held. It's like, when you trade something, you're expecting, let's say, a 2x, and it turns into a 4x. Are you really going to hold it for a 10x or a 50x? Like this Trump meme coin thing. Like, how many people really held for the whole thing? Like, you watch that thing 2x in an hour. Can you really hold that? Like,
well, the people that held a lot of it when it first launched were selling within the first 8 to 12 hours of this at some of the highest prices. They were dumping, as we like to say.
Tells you everything.
Yeah.
It's currently at $26.75 right now, $26 billion market cap.
Okay.
Fully diluted. Are you a buyer?
No. Not yet. I'd want to see it just like absolutely bombed out. Like, I don't think it's going away, but I don't really know how to think about that value or that price at this point in time. Maybe from a trade perspective. But to me, this is similar to AMC or GME going to some unfathomable price to naturally correct. And are you a buyer? Maybe.
Yeah.
Maybe.
Nobody's talking about it. That's your opportunity, probably.
The way that I trade, though, guys, I just have, I wouldn't take a concentrated position in it to where it's like meaningful to me, if that makes any sense. So even if it did go up, I wouldn't care. It's just like a gamble.
Yeah.
Whereas I much rather would am consistently investing in larger market cap stuff, things like Bitcoin, things like ETH, Solana. They're volatile enough for me.
Yeah. 60 or 70%
Yeah.
implied volatility. You don't need the 500% implied volatility.
And I know how to think about them personally. And maybe some people have some edge or have gleaned some insight around like, oh my God, look at how this evolves with what's happening with Trump, et cetera, the token. I just know how to think of, at least I've convinced myself that I know how to think about Bitcoin or some of these other areas of the market. And so I'm a little bit more confident in understanding what's going on there.
Yeah. In the diamond hands that naturally comes with that.
I love it.
Yeah.
I love it.
Couple of interesting points. We've talked about volatility. We've talked about interest rate cuts. So there's a meeting on Wednesday.
Yes.
97% chance that we stay at 425, 450. In March 19th, 67% chance that we stay where we're at. 32% chance we cut 25 basis points. May is a coin flip. still leaning towards staying. June is the first time on the calendar where we see a much higher probability that we get a 25 basis point cut. So from now until June, the market is still pricing in that we're staying where we're at and not cutting. And volatility, I think it's interesting to see, like, volatility is still up now. It's up 3 points, almost 4 points, up 25%. But if you look at the intraday move, it is way down from where it opened.
Yeah.
So
22. We had a 21 handle ish.
yeah. So I just think this kind of thing speaks to, prove to us that there's a continuation and that the VIX is going to sit until proven otherwise. That's my new phrase. Buy every dip until proven otherwise. But when you see volatility crushing intraday, like, do I think that we're going to see a 200-point sell-off tomorrow? No, not really. We could, but if we do, we're going to see the VIX at 30 tomorrow. So I don't know. Take it for what it is. Still trade small, digestible ways, but like, this is the kind of stuff I think that is important to look at to help you create a assumption.
Yeah, absolutely. I mean, it's path dependent. Anything can happen.
Yeah.
But what really matters? So sure, this news that's come out short term has an impact on NVIDIA, and maybe this is the pin that pricks the AI bubble and it all just goes down to zero. I don't know, like, maybe that's what happens. But I think generally speaking, we're in an economic environment that's pretty supportive of equity prices, has been in the past. When you think about the business cycle, you think about what actually matters or should matter, cash flows, earnings. We are not in an environment where things can just go straight down because we're worried about just the collapse in the rate of change of inflation or growth.
Mm-hmm.
That can happen. It can materialize pretty quickly, but most forward indicators are not really hinting at that. And so I think, generally speaking, you're in a market environment that's fairly conducive to, it's supportive, I suppose, of some areas of the market. I wouldn't be overly concerned with this kind of initial correction or pullback, really, off of all-time highs is probably the best way to say it.
Yep.
We have one more slide on there. I think we do. Of the performance. Oh, yeah, and the bag battles.
Yeah.
Anything stick out to you? Obviously, Solana had the initial move on the Trump token. I think it went from like 180-ish when I was looking at it to like 240-ish.
Yeah. Solana went all the way up to about 280.
280? Okay.
Yeah, close to it. But yeah, I was pushing up to the almost to the top there.
Mm-hmm.
Absolutely driven by Trump, driven by demand, for Solana. And I think just people onboarding into this space.
Yeah.
What stands out to me here is that certainly ETH, this is just over the last month, but is still hated.
Yeah.
There's a lot of reason to believe that you could get a very sharp reversal. Sometimes these things happen pretty quickly in crypto. Let me just point a couple things out to you guys. So one, and I wrote about this weekend, right? One, no longer Bitcoin strategic reserve digital asset stockpile. That's important. So
gotta
just keep
include
that.
ETH.
Yeah, keep that in the back of your mind, like ETH, something else, whatever. But they're not saying Bitcoin strategic reserve anymore. It's digital asset stockpile.
Yes.
So on top of that, you've got Davos, you've got all of the...
let me get my tinfoil hat on.
Right? You have all of the important people in finance, I guess,
Yes.
or the world or whatever. And Larry Fink's there, and he's talking about the urge to tokenize stocks and bonds, right? What that means to me is you're just moving on chain.
Yes.
We know that that's the theme. They're already doing that. Many institutions are doing that with real world assets, Wall Street assets, bonds, equities eventually, but tokenize everything, right?
Yes.
What chain will that live on is probably the question that we should ask, right? And so kind of what I'm getting at is something more than Bitcoin. It's Ethereum. You look at the ETF picture, it hasn't been front and center, but pretty positive flows, 30-day highs. You're seeing investors start to learn a little bit more about ETH, put some money into that space. With this administration, you're likely to see a much more supportive environment for DeFi, for on-chain activity, for all of these things, moving to chains like Ethereum or to other layer 2s there. It seems pretty supportive. You're likely going to get the ETHs being able to, the ETFs being able to stake their ETH and pass that on in the form of dividend. These are the things that people are speculating on, and just given the executive order, given the embrace, it seems like there's certainly a higher probability of that now, in addition to more ETFs coming, Solana, other assets, right? I think it's just
liquidity positive for the space. All of that said, if you track the World Liberty Financial addresses, or you look at kind of like what's Trump doing, bought $200 million worth of ETH over the last couple of weeks.
So the next
other assets, right? You're seeing an environment that might be conducive to some of these DeFi projects being able to return value to token holders via token buybacks. You have real use cases, real businesses out there in the form of Aave, Uniswap. They have a token. People have invested or hold the governance token as a way to participate. There's a lot of value that can be unlocked by these companies in an environment in the United States that's much more supportive of these activities. And I think that's what you're going to get. And that, to me, is going to unlock, again, a ton of value in the ecosystem, I suppose. And I think at the base of that is Ethereum. And so just given how downtrodden everyone is, how beaten up the ETH BTC ratio is, you said ETH is dead. That's definitely been the sentiment or the narrative in the market. It just seems like, given all of that, we've seen this before. It's primed for some sort of like quick short covering, bullish reversal. I don't know if that's the start of a new trend, but to me, like, I just think there's just so much that people are bearish about, but there's all this bullish stuff that's happening.
Yeah, we had that same conversation about Apple because like last week they had all the talk about Apple, iPhone sales are low in China and they can't do anything with AI, and all the, people came out with price cuts and Apple sold off, and it was a big move. And then, it's at that point, it seems like, okay, it's been punished enough. Is 20% enough? Or maybe it goes down 30%. Who knows? But it seems like, at a point you get to be enough where you got to start looking to be on the other side of the trade. You can't ride Apple to zero. You can't ride ETH to zero. I mean, it gets to a point where it's cheap.
Yeah, I think there's definitely a point in this cycle where your upside in the biggest market cap asset, Bitcoin, is maybe limited versus the opportunities elsewhere, and you see a bit of a rotation, I suppose. And that maybe shows up in places like meme stocks and AI, but I just don't think so. I think it's these larger pools of capital start to go a little bit further out on the risk curve, and the next natural step is moving from something like Bitcoin to an understanding of ETH as a technology or Ethereum as a technology, Solana as a technology, and you see some further participation. If that's supported by the regulators and by the industry launching more products that remove the friction for these larger pools of capital to participate in, I think it's bullish for the price. But why are we in any of this to begin with? Because I see the comments and I still get people think crypto as a whole is a Ponzi scheme. I mean, you could say that about various parts of the internet and kind of commerce there. But this is a trade. We want these things to happen. We price this in dollars, but we want them to happen in order for it to go up so we can get out of it. Like, I know that sounds so silly when you say it, but it's a trade. No one's in here thinking like, I hope these things happen. I'm going to hold this for the next 15 years. I just think there's a lot of short-term catalysts that if I'm long crypto in this market environment, there's a lot of reason to believe that maybe there's a bigger move in ETH coming. Maybe not, but that's kind of what I'm watching or looking for.
The best, dude.
So I could sell it at, hopefully $5,000, whatever it is, right? I mean, you got to have a price target or make up these arbitrary values, but it's really as simple as that. Because it's going to be a time when it's a completely different market environment. We've been in that as well. It just goes down.
Yeah.
I don't know.
Up only goes to down only.
Right? But we just aren't in that environment right now. We've got to be able to recognize when that shifts, but it's not today. I don't think, at least. We'll let you know when the signals change, but I haven't seen anything.
One more slide to show that I am the golden ape holder here.
Do you have your ape with you?
Well, of course I do. I have it right here. And it will stay on my desk.
This is so terrible. Like, look at this. They're like, why are you guys showing this? We have to shut this down.
I will say, although I am the I don't even know how to say it.
You are the
best.
Worst.
I'm the least worst out of the.
You're the best.
Which is the best, I guess. But net, I am the second worst with Katie and Shelly leading the pack as our overall best meme coin traders.
Yeah, can't exactly say that this move today helps my SPX 6900 coin.
No, definitely not. Or the actual SPX
Yeah.
6900. Definitely not getting that either.
Definitely not.
Amazing.
We have to figure out how to redo all of this though, because there are points in time where we're up significantly. We're just taking a time stamp from literally like 1 week to
now,
the next.
yeah.
And sometimes we miss multiple weeks. This looks terrible.
You got to start managing this for us. We'll have you as like our proxy hedge fund manager for our $500 in liquidity.
we pool it all together and just put like one trade on and just trade it.
Yeah.
We'll switch it up. We can do some
figure
things
it out.
differently.
This has been fun and it's been interesting. And, as you can see in the wallets here, there's all sorts of stuff that you can really get your hands on.
Oh yeah. A lot of fun to be had.
A couple of specific questions to crypto.
Let's do it.
In the YouTube chat, wasn't the whole point of crypto to be divorced from the state? Now it seems completely aligned and reliant on government actors. I know, you've said many times before, like you need a certain level of participation if you're going to get the influx of big capital into something like Bitcoin or Ethereum. What is your take on how things have shifted?
Yeah, I think so. At inception, absolutely, in response to the great financial crisis, it's a decentralized value layer on the internet. It's permissionless, it's global. Absolutely the point to be disassociated from kind of the state actors, but at the same time, how is it possible for that to continue in this world moving forward, right? We're at a stage now where, how detached, or in the past, how detached have different social media platforms been from the state, or is the internet detached from the state relative to what it could be? So I don't know if it's a right or wrong, and I get where people are coming from, but if you're just looking at this from like a trading or investing perspective, I think the capital inflows, given the support of more so the financial system over time, have gotten us to where we are, because we still would face the same problem of, all right, well, the financial system that everybody participates in that is powered by the US dollar, the US government, and ultimately the US military, that exists, and Bitcoin can exist at the same time. But unless it's easy to move dollars from that system into this other space, like it doesn't really grow, in my opinion.
Yeah. Or vice versa. If you can't take your Bitcoin and get US dollars, you can't go buy your house. The Bitcoin, you have to have that dual party.
So I think like when you look at the technology, I get like there in the US, there's the ETFication of some of these assets with Bitcoin, but like that's benefited the price for sure. But it doesn't change the fact that the technology is still decentralized and detached from the state. There is state influence in the same way that there is over many aspects of our lives, but the technology hasn't changed since it was launched. It's still a decentralized, detached value layer on the internet. Saylor calls it a life raft, I think. It is a hedge. If the state actors debase the currency, this has been a pretty good hedge in the same way that, well, is gold detached from the state? Yes and no. It serves a purpose, but also plays a role in this other system.
Amazing.
So I don't think it's a good thing or a bad thing. Bitcoin is still pretty good.
Yeah.
Last one here. Are you adding other crypto tokens? We spoke about that earlier in the segment here. For example, I have Phantom FTM. It's only on Gemini. Will you be adding these specifically? Or can you speak to other tokens that you might be adding?
Yeah, to that specifically, no plans in the immediate future, but we're always going to be evaluating whether we should add more. It largely just comes down to, is there liquidity for that? And then is there demand at the same time? But more so, if you go in here and you want to trade something and there isn't liquidity, what's the point?
Yeah.
So we're starting with some of the larger market cap tokens. Definitely, again, plans to add more. What I would mention, though, is that while there's only a few that are available through centralized exchanges, you can get on chain, you can access just about anything that you want. So that's detached from the state, so to speak. you're free to go on a decentralized exchange. You could buy Fartcoin or whatever if that's what you want to do, regardless of what's offered at the centralized exchange. Now that we have that capability.
Lovely.
Beautiful.
Lovely,
Another
lovely.
amazing Monday.
Yeah.
We bring the heat right to start the week.
That's the way you got to do it.
Oh, it's fun to see you guys. Yeah.
We've missed you, Ryan. We've missed you.
It's just always the same, though. It's like we seem to get, at least over the last couple of months, these big pullbacks into the Monday. It's like, what's changed? Well, not a lot. Here's how I think about it. And then here we are. Maybe this time is different. Maybe this is we break down and push
Go to
lower.
zero
I don't
with
know.
your Ponzi's.
But I think, again, the way that I've traded this, at least personally, has been to just trade this range. I will behave differently in the market if we were to break out of it one way or the other to the upside or downside. But I'm long Bitcoin. I might take a little bit of profit if it gets to some levels where I was buying it at 90, I can sell it at 110. It's not any different than we trade a lot of other things, right? I want to hold a core position in the event that maybe it goes to much, much higher prices. But in the meantime, I'm going to trade around that kind of position and use the volatility.
Yeah.
Beautiful.
And trading outside of the range probably coincides with a shift in the momentum relative.
Yeah, I think on a breakout we would see, or breakdown, we would see a clear change in volume, volatility, the correlations across other assets. It'd likely be driven by something as well. I mean, the signs will be there whether you pay attention to them or not. I'm just not seeing many signals of anything changing other than we've pulled back from closer to the top of the range, mid-range right now, off of some recent risk-off headlines from the weekend.
Cool. That's it for us. We're out of time. Thanks for tuning in. Definitely go sign up for the Tasty Crypto newsletter pinned to the top of the YouTube chat. You can find it on tastycrypto.com as well on the homepage. Follow Tasty Crypto on Twitter as well as Ryan at Ryan Fred Grace. I'm at Trader Mikey B. Nick's at Trader Nicky Bat there as well. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
We are back. It is Monday, January 27th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, what a day for the stock market.
Oh, it's definitely shaping up to be a wild one. It has all started overnight. The situation in Europe was so intense that I was, like the degenerate that I am, watching it and getting only 3 hours of sleep because it's just been that interesting.
It has been that interesting. There was a bit of a divergence that started last week where NVIDIA peaked around 147 and then started to fall off. I wasn't thinking anything of it. SMH began to pull back, and Friday it closed near the lows. Didn't matter to me. We were still in breakout territory. I'm a technicals guy after all. But there was something that happened at the end of last week that certainly made its waves felt through financial markets over the weekend and into today. And it's the release of the new DeepSeek, R1 AI. Now, why does this AI matter so much? It may actually be the signal that we are done with the picks and shovels phase of the AI revolution. And that means that we're moving on to the applications phase, or if we want to stick with the picks and shovels analogy, it means the gold rush is coming. But that's a problem for the way this market's structured right now, because the market has a lot of chips on the table with a company like NVIDIA, which obviously is carrying the weight of the market on its shoulders. So let's talk about why this DeepSeek AI is actually a problem here. I spent a good deal of time this weekend reading the DeepSeek AI paper. It's available on Archive right now. I spent a good deal of time reading other things to learn how to read the DeepSeek AI paper, so I'm not going to pretend I know everything that's going on here. But I will pretend that I know enough that we can draw some conclusions. For example, we talk about benchmarking here with the various LLMs. Let's look to the left-hand side of that top panel. And this fly that I let in here is driving me crazy. O1, the ChatGPT model, still benchmarks as the top performing model, but DeepSeek R1 is now coming in as the second highest performing AI model out there. And so, wow, all of a sudden there's real competition just in the performance. But when you scale that performance, you see why DeepSeek is so impressive. It costs a lot less to do DeepSeek, for lack of a better phrase, than to do O1. This is important because it means that we may be looking into a future where the AI infrastructure that we've built up, while still needed, we've built up a lot more of it than we thought we would need in the short term. There has been the railroad overbuild then. It also means that we could potentially be looking at a world where AI reaches people and consumers much faster than we thought it would, because now we can move into applications at scale that much faster. It's very interesting today that companies like Meta and Amazon, companies that would be, say, cloud providers or some sort of application for AI, are not suffering the way that semiconductors are. And that's an important differentiation as we move forward in this market. And I've been having talks with Westwater and Nick Batista today about the different segments of this. I really should have thrown away fruit in the downstairs trash and not here in my office trash. The bigger issue is how did they get here, right? And they talk about these 4 points in their research paper themselves. This is why we're going to talk about a phrase that we've been hearing a lot of today on Twitter and in various business circles, Javon's paradox, in a moment. But there are a few things that DeepSeek did compared to what OpenAI did. And I think the first thing that needs to be addressed is how do they get here if they didn't have the hardware? You need these GPUs in order to build out these complex AI models. But despite these U.S. export restrictions on these advanced AI chips, DeepSeek showed that they can outshine their hardware limitations. While they said that they didn't really use the NVIDIA H100 GPUs and they optimized their existing H800s, they tweaked their low-level code to maximize memory efficiency. So efficient software beats the expensive hardware. There was an interview that went on at the end of last week from Davos, CNBC had it on, where Alexander Wong, I believe he's the gentleman whose company ran that big full-page ad in the Washington Post last Tuesday directly to President Trump himself about unleashing American AI innovation. Scale AI is, I think, the name of the company. He was saying how DeepSeek was able to circumvent a lot of the restriction bands and had amassed a large swath of these GPUs behind the scenes, 10,000, maybe up to 50,000. Either way, though, they've been able to do smart over fancy, as I'm calling that bullet point. They've also done more with less. They only trained what was needed. So what Meta was doing was they were having this big data set, for example, and they were training it on everything. DeepSeek was only updating the essential parts of the model. So when they were doing this training issue, they'd concentrate on the 5% that were accurate and only train the model on the 5% that was accurate. So 95% of the work that Meta's doing is useless. They're not even doing that work to find out that it's useless. So less is more. They also have this compression thing going on. I don't know anything about this, so I'm just throwing out buzzwords here. But they tackled this low rank key value joint compression issue. The only thing that I can think of as an allegory is that scene in Silicon Valley, the TV show that was on HBO all those years ago, where their software figures out compression, but apparently they figured out compression, which results in a smaller memory footprint, faster results, lower costs. And finally, a smarter learning sequence here, which perhaps is the biggest takeaway that our models here in the US could improve upon. Learning efficiency with reinforcement learning, focusing on tasks with clear, verifiable answers like math and coding problems. So it's smarter training through trial and error. Okay, so that's Deep Seek. I keep calling it Deep Six. That's the Star Trek nerd coming out, Deep 6 9. What we're thinking about here, though, is how this fundamentally changes the structure of equity markets, because NVIDIA and the semiconductors have been such a crucial part of it. I'm of the mindset that this is not the end of the AI story. It just means we're moving into phase 2, officially and formally. In 1865, English economist William Jevons observes that the technological improvements coming out of the efficiency of coal use is actually leading to a greater increase in the use of coal across a wider range of industries. And so while at the time, most and the common train of thought was, hey, we have better technological improvements in coal, we're going to be able to have the same economic output using less coal. In fact, you got way more economic output and you got way more coal use. So I think what the market's grappling with today here, Elliot, to get off my soapbox in a moment, is we may have seen what you call the railroads phase, the telecom phase that you see built up in the early 19th century. That's the analogy here with the hardware. And the hardware now has been set. We have so much of it. And we actually have so much of it that we have the compute and the GPUs that if we just rejigger our systems, we can move into the application phase much, much, much faster. CapEx may not be needed here. So NVIDIA down, 12% and change. Meta touching all-time highs in today's session. You're really setting off a path of winners and losers now into a brand new world. Quite frankly, I'm still trying to learn about this and wrap my head around it. I'm not thrilled with ChatCCP, although apparently if you download it and host it on your own platform outside of China's borders, because it is an open source model, you're not going to get those restrictions on conversation around Xi Jinping or Tiananmen Square, which to me, I think that's the alarming thing. Do we want a CCP sanitized view of becoming the source of world information? Probably not long term. But Ilya, that's where I stand. Today is a monumental day. This actually could be a really important turning point in this AI story for the stock market. It's not just one day's price action, but the severity of how the AI story may evolve here moving forward.
That's right. And that was an excellent distillation of exactly what's going on here. I think probably the biggest takeaway for me is the way the price action has evolved. Because if you thought this was China becoming competitive, then you would expect that there would be capital flowing to China. And if you look at today's markets in China, they are not up. This idea that this is sending swaths of capital to China because, oh my God, they've leapfrogged what's going on in the US, that's not what's going on here. We are well within recent ranges. I mean, sure, we're seeing that impact throughout the day. We were up at one point, we were down at one point, we were back and forth if we looked at Chinese markets overnight. But this is not U.S. equities take a leg down by a few percent, Chinese equities take a few percent leg up because there's been a restaging of the landscape. That's not what's going on here. Rather, what seems to be occurring, to your point, is concentration is diluting, and the market has realized, wait, okay, we probably don't have nearly the runway on some of these things that we assumed, like the world needs XYZ output from NVIDIA, the world needs this much from over here from this much over there. Name your sort of top names in the space. So this looks like, to your point, a reckoning with overly extended, overly extrapolated AI narrative. And of course, that's exactly what we've been talking about. That the end of the first phase isn't about the AI narrative being wrong or even anything remotely close to it. But the idea that the internet was transformative in myriad ways that couldn't even be fathomed at the time that the transformation was already getting talked up. But we had a dot-com crash anyway. And it was because you have a hype cycle that gets overextended, then a revaluing to reality, then the long tail story in fits and starts over time. And this may be the first bout of fit here after a very illustrious start over the past, let's call it year and a half, 2 years. So this is by no means narrative changing for AI as a transformative technology.
Actually, probably means we got that there faster, right?
Yeah, but it does mean that we could have an extended revaluing of what this means and a changing of a lot of assumptions baked into a lot of asset values, probably beyond the course of 1 day or 1 week.
I think the energy sector says that a lot, right? Part of the AI buildup, we're going to need all these data centers because to do AI at this scale, we need to have this much compute. We need to do this much spend.
Yeah.
So we're going to need this much energy demand moving forward. And if what the paper suggests, if they're, the DeepSeek research paper suggests is true, then they basically were able to get a model on par with ChatGPT for 1/30th of the cost. So it's not that we're going to have 1/30th of the energy demand for AI moving forward, but now to get up to scale where you go from picks and shovels into gold rush, right? From infrastructure into actual application. Does that mean we have an oversupply of GPUs for the short term? And that is a really, 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 really significant question.
Yes.
Because that's the question that plagued tech stocks at the end of 21 into 22. It wasn't just the Ukraine war and the Fed's hike cycle that were disrupting asset prices. It was the fact that we had this massive chip buildup during COVID and there was oversupply. And that was one of the precipitating factors for crypto winter in 2022 and 2023. I don't think it's a surprise then when you look to crypto today. Bitcoin had a 98 handle at one point. It was a few days ago we were trading, peaking north of 110,000. So that's a quick 11% correction in the span of the week. Although for seasoned crypto folks, that's just another day that ends in Y. But nevertheless, you're seeing the ramifications in energy right now in crypto where there may be a very legitimate overbuild. And quite frankly, because of where the money is in the market right now, because the semis have been such a big and growing part of this market, NVIDIA especially, if they are getting revalued from like a 55 or 60 PE down to say a 35 or 40, that could mean a lot of drag on the top line indexes, even if individual names that are still very much part of that tech story, like a Meta, which if it were to close at this level would be a new all-time closing high, despite having an LLM that doesn't perform nearly as well as ChatGPT's O1 or DeepSeek R1 and costs way more, right? They're still able to hold on to this because they're not the kind of company that would necessarily suffer in a world where you're shifting from picks and shovels, perhaps over to the ultimate application. There are going to be industry-specific AI adopters that do well in this. There are going to be AI-driven product innovators that do well, data aggregators and monetizers that can do well, and cloud providers, right? The cloud is the interface between consumers and these actual LLMs. I look to a company like Amazon with their significant Amazon Web Services today. They almost filled the gap from Friday. They're trading at levels we last saw on Thursday, Ilya. If that was the case, if we didn't have that big gap open and trade to the lows today and we were simply just meandering down to 230, we wouldn't be looking at this as anything other than a small correction back to the 1 week moving average. So there was a shock to the system today. There was a shock and awe here. And the winners and losers are being sorted out intraday. People are still selling the semis, but they're picking up some of these names like the cloud providers or the AI adopters. And I don't think that can be ignored. So this might all of a sudden be a stock picker's market for a while, whereas the indexes are going to go through a very uncomfortable period of indigestion and rebalancing.
It might be. I mean, I think we have to consider that this process isn't going to run its course over the course of a day or a week or a month. Because if you've come to a place where you have to say, right, okay, now all of this has to make ROI sense, because now the cost structure is no longer, well, you have to go here, you have to buy these things, or you're not in this game. If there are options on the table, and if what DeepSeek is showing us is real, because that's, by the way, another thing, as ever, we have to make sure that this is, in fact, what it says it is, and a lot of it's
it looks real.
And that's right. And you mentioned that a lot of how it's able to do this is it's much more narrow. And so on one hand, it becomes very easy to go, okay, I need to make this thing work on budget in this narrow application here and here and here and here and here and here and here. And so it's very dispersible, but maybe not very stretchable, as it were. Whereas GPT can have a gazillion and one applications. This thing maybe is more for something tailored, which means that it can spread wider, but also be used differently.
It's Linux.
Narrower.
It's Linux versus iOS, right? Like that's kind of it's open source versus a closed loop.
It is open source, which is an interesting part of it. And there's already people grumbling in the security chatter out there saying, well, what if instead of trying to build telephone networks around the world and causing the ire of countries like Australia, Huawei just gave it away? What would that look like? And if
they gave it away, do they have the ability to close the license in the future? Yes.
Or just to be present in the systems when it counts. So the interesting nuances of all of this are going to make themselves known over time. No one knows. The upshot for me is that whatever we're seeing here today in the headline indexes tells you where the market's head is at about this, and that you're not seeing Chinese stocks rally on this, or stocks in Hong Kong, or the Hang Seng Tech Index, which is essentially Hong Kong's version of the NASDAQ. You're not seeing it there. And if you're not seeing it there, then this is a different thing than just a competitor has emerged, the market will pivot, and we're going to keep going. No, this is going to be a significant reevaluation of where we are in this space and what ROI might look like on a much shorter time frame than people thought they had. And this could be very painful for a while, especially since this opens us up on a week that is absolutely stuffed with macro risk.
So is there all of Fed meeting this week?
What just one of, as a matter of fact. That's one of like 5 things.
Okay, so let's take a step back from the AI thing for a moment. Do you think the market sell-off, right, heading into a Fed meeting with a market up at all-time highs, right? You know, the SPX cash index is already at all-time highs, closing at them. The S&P 500 futures are getting up there. The NASDAQ is kind of trying to chase it. Now that we've more or less returned to the midpoint of the 3-month range here, does the balance of risk change heading into that Fed meeting where maybe the Fed's hawkishness or lack of dovishness, does that change the calculus for you from a risk to reward standpoint now?
It does a little bit, because I think this, in some sense, makes the market more vulnerable to what isn't ultimately that substantive of a Fed announcement. Because a market that's been shaken like this at the start of the week, on one hand, is going to be out there hoping and praying for some kind of a soothing salve. And so it's going to look for the dovish overtones that the Fed is, of course, going to give. They are still biased toward cutting. That much we know. The question is the market prepared to take that at face value? Because, again, that much we know. It's priced in. The larger question is what happens when the Fed isn't as dovish as the market wants, particularly after we got comments from President Trump in recent days, essentially talking about he knows more about interest rates than the Fed, and implying that what he wants is lower rates. We know from the Fed guidance that we've gotten thus far, this is not a meeting where we're going to get that, but it is, of course, a meeting where we're going to get a press conference, we're going to get a statement. Powell will no doubt be asked about this at the presser. We know how much he loves these questions. We know how terse some of his responses to these things have been. And so when we get into this Fed meeting, I think the likelihood that the market finds a thing to jump on, even though it might not be there in substance, has been heightened just because the market is tense. The nerves are raw. And it's likely to take a soundbite, whichever way, by the way, and run with it.
Yeah, there's a lot of damage right now going into this Fed meeting, and I feel like I'm going to speak the Sosnoff line here. Like, if I'm a bear going into that Fed meeting on Wednesday, I would have been much more comfortable with the market up near 6,200 than where it is now at 6K. Because if you get a Fed that says, like, okay, you know what? There was a big AI capex build out. Hold on a second. Maybe we're not going to have this. It could be a big deflationary impulse to the economy. If all these companies are expecting to spend tens of billions of dollars a year, hundreds of billions of dollars a year on building data centers, that's labor. Those are jobs that are no longer going to be in the economy.
That's also inflation that's not going to materialize.
Right. And so, like, there is a deflationary aspect to this as well. And it's the fact that— At
least relative to expectations.
Yes, exactly. And everything is relative to expectations, right? So today I'm looking across the board, the equal weighted S&P is down by 0.38%. The Dow Jones is positive. I mean, this is a concentration risk kind of day. Even the Mag 7, right? If you go to the Mag 7 ETF, it's off by 3.5%. But that's NVIDIA. NVIDIA itself is down by 17.26% right now. We could talk about those calls.
And Russell was only down 1%.
No, and the Russell's really interesting here because it gets rejected at a zone where you see the support back in November. You and I were talking about this the start of last week, beginning end of last week.
That's
we can't quite get to the downtrend. Yeah. So how are you? And by the way, I do need how I am with my little black book. Someone tweeted at us this morning when the S&P was 50 points lower, saying I owed you an apology for how I've been treating you as a bear recently. Now that person has since deleted said tweet for some reason, now that the market's higher. But I don't recall chiding you recently. I thought I was giving you props for how you've traded the Russell, especially. You took it off right at the 200-day moving average, and then it ripped for, 7% higher? I thought that was a very well-timed trade. So I'm not going to apologize for complimenting you. It's a weird thing. It's a sickness that you have. I'm not going to feed that kink, Ilya. Come on. But
my acolytes out there are taking things into their own hands.
What do you do here now with the Russell going into the Fed meeting now, right? Because this isn't really touched by the AI story unless you think about smaller regional energy companies, if you will, that maybe thought they were going to have a lot of demand for electricity, and maybe we don't need that electricity because we don't need to build out so many data centers.
Right. And it becomes also a bifurcated thing because, of course, we're going to be resistant to adopting something like this. Obviously, there is a China hawk consensus amongst both left and right in the U.S. and in the West. And so if you thought that you were going to threaten tariffs on things before, get ready for this now. So where the electricity demand is and how much it costs and how much all of a sudden it becomes subsidized, or all of the various sort of strands of all of this when it becomes grounds of national security. All of that becomes very interesting. I think from a practical perspective, when you look at the Russell here, you're kind of still in no man's land. You can't really call it here. I do think it makes perfect sense that the Russell is better situated than NASDAQ or than the S&P, especially when you see interest rates come in a little bit more today. Bonds are up. Russell likes that. Obviously, it's a generalized risk-off day, which you'll recall when you and I were talking about this last week. You were saying, well, this one is going to, and we agree on this, that this one is going to benefit from lower rates, in particular because of the relief that the regional banks might have from the risk embedded in their giant bond portfolios. And think avoiding SVB as your tagline there.
Banks, by the way, are positive today, showing how this is this is really like a...
This is stuck in a place,
This is like a semiconductor story today, and not really like, we got to sell all the stocks that we own.
At least not yet. It's not so that far. Story. It's not a big risk-off story, and who knows if it'll become one. Maybe
when the margin calls come in, then we'll talk.
When the margin calls come in, then we'll know. but at this point, it's a localized story. It's localized in a very big area, but it's a localized story, and so it makes sense that in generalized risk aversion, and again, this is what I feared, that the Russell, despite the fact that things should be looking better for it, might get caught in generalized risk aversion, having nothing to do with it and just being an equity space sort of thing. And so indeed it's down, but only 1%. Because it does make sense that it's a lot more insulated. And we'll see. At this point, I wouldn't do anything in the Russell. I think it's in that sort of congestion area where it could still find a choppy range in here and do nothing for a while. And that really wouldn't be a trade that's worth allocating capital into doing. I think there's a lot more exciting opportunity elsewhere. I'm looking at the dollar here, of course, which had a really interesting attempt to recover against the backdrop of this risk aversion and then couldn't. Speaking to sort of where the market is on dollars. Similar story going on in the bonds. There was an attempt here to think, okay, maybe the bonds weren't going to hold, but they seem to be building out that bottom that we talked about last week. So there's a lot here without going into the choppy waters inside the range of the Russell and hoping for the best.
So on an individual equity basis, or rather sector basis, obviously the SMH longs on the table are like worth nothing now, so not even worth looking here. But I think about like the sector rotation, right? So I want to take a step back. I've been preaching from the pulpit of sector rotation tells you which way the market's going to go. And when you have tech, and when you have banks, and when you have discretionary moving up, that's typical early cycle bull stuff. It's like we're not really worried about healthcare and defense being the leadership right now. So volatility is low, momentum's positive, stick with the winners. Obviously, the tech component falls out today, but not because that the prospects of AI are any worse, but because we just may be oriented in the wrong manner. So we're going to have all this extra compute from what we actually need to do. If Meta is actually going to reposition their models, as apparently the news broke over the weekend that Meta has a war room open right now to rework everything they're doing, learn and reverse engineer the advancements made by the DeepSeek team. So no problem. I'd point out that discretionary and banks, they're holding their head above water today. Discretionary is up by 0.12%. I think that says a lot for XLY, considering how big of a player Tesla is in there. And Tesla's obviously not having a good session, down by 2.67%. But once again, that's kind of just a normal day for Tesla these days. This isn't a pull your hair out, throw the baby out with the bathwater type of environment. It's if you've been in semis and you've had exposure there, like I've had in certain pockets, it's a wake-up call. And from my understanding, which is very limited, but my understanding is that this is a legitimate turning point in how the AI revolution proceeds moving forward. And it may be occurring a lot sooner, which I think is why, as we go over to bonds, the bonds are saying AI is a little deflationary because we just had all this build up, and maybe we don't need to do more spend down the road. And so all this money that was allocated to go into the economy, built into corporate earnings, right? Because a lot of this is just businesses selling goods to other businesses and helping other businesses grow. Maybe that's not going to make its way through. And if we can do more with less, that's deflationary. So you turn your attention to the long end of the curve here this Fed week, you start to see a little inverse head and shoulders down there.
Indeed. And we saw the makings of it in ZN a little bit more clearly last week. ZB has kind of come around. And what's interesting about this, and this is to your point, that this has more to do with what's going on around sentiment today, rather than anything having to do with the Fed odds. You really don't have a very significant shift in the overall makeup of what happens with policy, but you do have a sort of handing off on the timeline. So yesterday, in market time, we opened from last week's close looking for 20 basis points next year. That's down to 10. And for this year, we were sitting at about 40. We're all the way up to 50. So we've essentially centered on the cuts are coming this year. But that's really it. And the overall totals are basically the same. So this rise in the bonds is not about the markets saying, oh, this is going to be different. No, it's not the market positioning for the Fed in earnest. That really hasn't moved around. In fact, the markets now are basically priced, at least for this year, in line with Fed expectations. It's next year that's off.
There's actually been a meaningful shift. The ZQZ, or we can call the SR3 Z5 contract here. We can look to what this 30 Z5 has been doing over the course of the day. We can go to that daily chart. It is up substantially. Last time you saw a move, at least of this scale, you get a CPI day. So, to just point this out right now, the market's pricing
that's those 10 basis points.
Yeah, so at the low here on January 13th, the market was pricing in the Fed to go to 4.1% by the end of the year. Today, we're now at 3.830%. So since Monday, January 13th, a rate cut has come onto the board effectively, 25 basis points have come onto the board here for the year of 2025. I'm likewise intrigued by the bond market's upside action today in the context of the fact that the AI story was not the reason why many financial news agencies were reporting the market was in turmoil at the open yesterday. I don't know if you caught this, but both Bloomberg and CNBC, right after the futures market opened, were saying that it was the Trump tariffs and the threat against Colombia that was driving the market news, right? And he says that we're going to do a 25%. It gets stepped up to 50. We're going to start sanctioning various officials and their family members.
Which, by the way, we ended up not doing.
And that was known that it wasn't going to be happening by the time the futures market opened yesterday at 6 p.m. Eastern. So it initially, like the zeitgeist was forming around, at least the traditional media zeitgeist was forming around this notion that, hey, the tariff talk is real. Maybe it didn't happen this time, but look how quickly he put them on the table. Yet that's not what bonds are doing today. Bonds are saying whatever happened with the tariffs, that is a smaller story compared to the overwhelming weight of what could be the stock market sell-off thanks to this AI breakthrough.
Well, and by the way, that's not the only piece of news out of China this weekend. The DeepSeek, let's call it headline, appears later once the sell-off really starts to build, and
that's when Bloomberg flips it.
That's when the talking heads start to talk about it. The previous headline out of China, the one that everybody was talking about over the weekend, were efforts by Chinese security regulators to bolster the stock market and to go out there and say, well, we're going to make it easier for ETFs to get built out. We want more fund infrastructure. All of this essentially to make Chinese markets more liquid and friendlier, in particular to retail capital. And the market basically had two stories. It had a positive story in the China build-out of more robust equity markets, or at least that was the pitch. And then you had the Colombia tariffs story, and the markets essentially could pick. And they picked. And they picked risk off. And that already was a more telling guide than anything that later emerged with DeepSeek, because, of course, the Colombia story, you could extrapolate in a myriad ways, but on its face, Colombia is not a big part of the global economy to the point where a rupture of trade relations between the U.S. and Colombia would necessarily have knock-on consequences besides, as you were saying, a window into how the new administration works. The actual volume of trade between the U.S. and Colombia, except for maybe coffee, is not that huge.
It's like
and
16.
Certainly not.
Yeah, their economy is like, in terms of import-export, it's like 80 billion total, and we represent about 16 billion of that, a good chunk of which is like corn and soybeans. And like when I saw those headlines yesterday, I'm like, oh my God, we're going to have, how expensive is coffee about to get? Coffee prices are already so high. This is going to impact like 20% of the coffee supply. Please don't do that. I need my, like, I'm going to go back to drinking Folgers. I'm already enjoying my Maxwell House. I have to downgrade to Folgers.
It'll be what it has to be to get the caffeination in there. That much we know. But this is not the natural story to choose of those two to focus on if the market opens and goes, okay, I have a Chinese equity markets are getting more money spent on them, and there's tariffs on Colombia. Which of these is the more macro impactful story? But the markets choose risk off, and that's very telling. They wanted this sell-off. The DeepSeek thing is another thing, but these dominoes were moving before that became a headline. And the way that the headlines were laid out before then told you, if I just gave you these headlines and told you, well, is the market risk on or risk off, you'd probably say risk on. So there was a bias here with where the markets wanted to go. And that's in the bonds, that's in stocks. For whatever reason, they wanted this today.
If we are looking at what sometimes technical patterns seem like too good to be true, I don't think I've seen a more technically clear inverse head and shoulders pattern down at the lows.
A more head and shoulders-ish head and shoulders?
Yeah, right. You know, I have to go get the shampoo bottle out of the shower to find something more head and shoulders-y. Left shoulder, head, right shoulder. If that's the case here in ZN,
I get worried, by the way, when technical patterns are this clean. It starts to make me think that there's a rug pull on the other end.
Yeah, right. It's like, oh, hold on. Why did my position just get filled so quickly? Who is so eager to give that to me?
Yeah.
But that points up to a move into the mid 111s. I've been looking for a bullish outcome here. I think that kicking this out 20-something days, 25 days to expiration, we're getting to the peak of the decay curve. There's a Fed meeting on Wednesday. So if we're wrong in the short term, we ultimately could be right. It's kind of how I felt like a few weeks ago when the non-farm payroll report came out. I'm like, why the heck are we selling off? I'm going to buy those 59.50 calls. Good idea, just wrong time horizon. We got back there in a few days, just not that day. So 25 days is probably not enough time. Buying yourself some time here, the best bet. There's not a ton of volatility. It's an upside play. If you're going to do this, probably structured in a manner where you're looking at the money or out of the money call spreads. In this case, if you start to see it punch through the current zone where you're looking at a move above 109 and 10 ticks or so, I start to think about what does a call spread wrapped around 110.5, short 112 begin to look like. So we're beginning to build into it, Ilya. It looks like the bottom's together. I know that I already have my short put spread exposure here in ZB thanks to that vol spike. I don't know if I would turn this into a double bull, which is when you're short the put spread, long the call spread. But it likewise gives you that very interesting, appealing technical setup where if we were to just do a simple, head and shoulders, look at the neckline here from the recent swing highs and do a measured move, it gives you a target up towards 119. And so then structuring a trade where if you wanted to play it like 53 days out in a similar manner along the 117, short the 120, about a 30% probability of profit, risking, 1 to make 4.5 or so. That looks like the high convexity way to express this view. You could do the short put spread, of course, which is what I've had on here. But either way, confidence level, depending upon what you're working with, this is a technical pattern that I love to see. And, quite frankly, it says a lot that bonds and notes are trading up on a day, not because of the risk off nature, but because we had that big tariff talk and everything else is subsuming that conversation.
Yeah, I mean, it's very clear that when we were heading into those CPI numbers, because that's really where we start to get the board moving around. When we were heading into those CPI numbers, it was clear that the market was either going to have to decide that the Fed is going to have to change the full nature of its game, or that things were overcooked on the hawkish rethink. Because you got to a point where the markets were toying with the idea of, okay, we're just at one cut and maybe not even. And if you go from a cut to 0 cuts, that's a really big mental leap for the Fed. That's not the same 25 basis points, as I've argued, as going from 50 to 25. Same magnitude shift, totally different headspace.
Absolutely.
And so you get to 25 and that's it. Either you believe you have a very different Fed or you've got to back off. And the market's backed off, thankfully, as expected. So I'm still long duration here and just waiting. Waiting for these things to evolve, waiting for what we're seeing in the 10 and in the long bond to evolve. I think we could be looking at 111 on ZN or something along the lines of 119, 120 on ZB if this move resolves itself, as you've pointed out.
We talk about some resiliency here in the metals, not quite today. Silver, however, this band, the double bottom we traded into, resistance near 30.5 was holding up as former resistance turned support. Maybe. There's a little bit of a whip down there. Gold down by 1.4%. Obviously not great, but we're back to where we were on Thursday, and I was comfortable being long Thursday at these levels. So I'm assuming you are too, Ilya. But if you think about gold and silver, and if you're one of those people who buy into the gold and silver are inflation hedges type of worldview, Ilya and I don't necessarily, but this is deflationary. So do you want more gold and silver if you think deflation is going to make its way through the economy? Probably not. Is that enough to shake me off my ground just yet? No, not yet. Obviously not content with the action here. Same thing in copper prices. We saw a lot of dancing right around 4.27.5 or so. Today looks like it could be a drive back down below that critical support region. While I still hold on to my short put spreads, I think this would be enough to say, you know what, let's just take some profit and put some chips elsewhere and see maybe if we can reestablish long deltas if we get closer to 410 again. Other than that, not doing much.
Yeah, I mean, I think probably the more interesting one, considering what the narrative is crude oil, because it's having a nasty day.
Let's just go over there then.
And you kind of get why that would be. If what you're looking at today is, as you've characterized it, the idea that you're sort of into the so suddenly and unexpectedly, you're out of the we're getting ready for AI phase into the we're using AI, and if it can't make economic sense, then we don't like it phase of this build out. And so now, if that's what this is, then it would make sense that energy prices would come in.
Here's my problem with crude. Hindsight, obviously, when it was up near 78, 80, great short. Our issue from the typical Tasty methodology.
And I did take that short.
Well, you did, but like selling a call spread up there, really difficult.
Yeah.
Doing it through MCL was another story. But from the options perspective, when we were up near those highs, we were seeing IVRs. Yeah, it says the high IVR was 36, but really we were just bounding around in the 20s. Not the most appealing situation in the world. My ideal world for crude, as ever, is because, quite frankly, crude is basically stable all the time. If you look at data studies outside of geopolitical risks, get back to the midpoint of the 52-week range with enough volatility. Look to put on an iron condor. Don't overthink it. But you know what? There's really nothing to do here. We got close to the midpoint. That's closer to 71.5. There is still no volatility that really makes it worthwhile. There's no IV in here, right? So what do? Maybe it's something through the energy ETF complex, which is a little bit weaker, but even so, it's a 35.3 IVR and not as deep of an options market. Plus, this is a future show, Ilya. Otherwise, we talk about natural gas demand being closely tied to whatever's happening in the world of AI.
Same thing.
A potential break, and this is the most fascinating aspect. 11.2 for the newer listeners to Tasty Live or new users of the platform. IV rank is basically a Z-score of where volatility has been over the past year. So when the IV rank is 100, you're at the 100th percentile. When you're at 5, it's the 5th percentile. When you go into negative territory or above 100, you're saying that you're this many percent above or below the lowest point, highest point of the past year. So at a negative 11.2, volatility right now is 11.2% today, below where it was at any point over the past 52 weeks, which sets you up with a really interesting type of situation where I know we typically approach things from the vol selling perspective as opposed to buying options that take on the risk.
Yeah.
The reverse iron fly here, right?
Yeah, because equities, this is not, right? The selling of vol is a strategy for equities first and foremost.
Right. This is not the typical way. There are former Tasty Live hosts who were more adamant about this than we are. And this is a trade that we try to do in crude or we put out there into the world in December. I never took it. It would have worked out brilliantly. When vol's low, you don't know which way the spring is going to uncoil. So basically just say vol will explode at some point.
Yeah.
In this case, natural gas, that may be the play here. I really, quite frankly, don't know which way this is going to go. Is this support around these levels? I think you could make a case that this is fairly formidable support. This is a particularly important dynamic region in recent months. Will we bounce here or break down? Who knows? But playing that we're going to get a significant move away from here and not just be pinned at 320, that may be the best way to crack this egg moving forward. I still have my short put spread on. It's still technically working. Maybe this is the opportunity to reload a long delta side with cheap out of the money calls now. But there needs to be a different approach because the driver that was pushing up natural gas may have been undercut, narratively speaking, in a significant manner. Ilya, we've talked so much about AI and brushed on the Fed this week, but there's also an ECB meeting. President Lagarde is speaking tomorrow. We have a doji candle here in the euro today after it punches above key resistance and breaks a downtrend from recent months. Talk to me a little bit about FX here this week, because it feels like this should be the week where we're really talking about FX, given how the volatility is still so embedded in the space.
Oh, yeah. I'm long everything that's not the US dollar at this point. I think part and parcel of the move in bonds is a move in the dollar. And if you thought that repricing to more hawkish setting for Fed policy has run its course because you've essentially hit that wall at one cut, unless the Fed thoroughly changes its mind, of which there is no evidence, certainly not yet, then the dollar is overvalued. And that doesn't mean that I'm suddenly on board with de-dollarization or any other of this nonsense. And I do still think that the structural dynamics favor a stronger dollar in a year, 2 years, 3 years, just because of the dominance of the U.S. economy and of how much capital flow that's going to attract. But from a tactical perspective, the dollar had a massive run from mid-September. I enjoyed it. I was long. Now it's time to go the other way. So I think the structure here is the ECB is not going to be any more dovish than we already expect them to be. They already have 100 basis points on the board. The PMI numbers last week were runaway successful. The GDP numbers this week might not be as bad against that backstory if the economy actually turned out to be that much stronger than anticipated in the latest PMIs. So we're looking, I think, at a situation where the euro has room to run, the yen has room to run. The more interesting bit here is, against the backdrop of this AI story, the commodity currencies aren't doing great because there's so much risk aversion that they're getting hit on risk-off grounds. So the Aussie is underperforming, the Canadian dollar is underperforming. But that's more sympathetic price action than it is substance. And so I'm actually sniffing around opportunities to buy more Aussie, to buy more Canadian dollar on this pullback. I don't have the conviction to pull the trigger immediately here. I want to see whether we hold or not on some of these levels for these currencies. Obviously, we're going into huge event risk this week, but I've already doubled my Aussie long position last week. I might have to go again.
I find it so fascinating that the Aussie is the one struggling the most today on all this news. The yen is the best performer, up 0.93%. A world of AI-led deflation and a Fed that can cut now because the U.S. economy built on the back of AI capex is going to collapse. Probably is good for rate differentials. That's facetious, but you know, we never got filled on those 007 calls last week, Ilya. We've been trying to. We should take a look at that again here real quick at the end. I really like...
Could be back to 66, upper 66s into the 67s at this rate.
Yeah, looking at the long 69, short 72, right around that 007. It's a 23% probability of profit. It is adding more chips into the long bond, long notes trade. There's already some in there. That's one of the important considerations. If I didn't have those on, would I like this long yen exposure set up in this manner? Yes, potentially, and quite frankly, I still might put it on anyway, because bonds do look like they're bottoming, and the dollar has been so stretched for so long. We know that the positioning and the sentiment has been so one-sided coming into this year. This could be the perfect 1-2 punch. A yen carry trade fear like last August plus AI capex overbuild. That's a nice reach for the Japanese yen. Maybe it plays out. Worth considering right now.
It has taught me I like to put all my eggs in one basket and then watch the basket very closely.
What's happening tomorrow? We mentioned the ECB Lagarde speech. We also get durable goods orders. Those are items with lifespans of 3 years or longer. Good barometer of the U.S. financial health for consumers and businesses alike. You don't buy a car for your business unless you think the business is doing well, right? Other than that, Case-Shiller home price index, there's some consumer confidence data due out, and the API crude oil stock change. So lots of things in the run-up to the Fed meeting Wednesday. And of course, on Wednesday, we get that Fed meeting, and then we get to hear from all these Fed speakers again. So communications blackout window done soon. In terms of Treasury auctions this week, we haven't talked about that in a little bit. It is, of course, the 27th. So we had 2-year and 5-year notes today, which we glazed over. Quite frankly, the AI and tariff talk, way more important. Tomorrow, we're going to get 2-year floating rate notes at 11 a.m. Eastern, and then the 7-year note auction in the afternoon. Then it's clear. It's really free and clear on the Treasury auction side. Bunch of small bills until then. But February 11th becomes the next big Treasury auction. So tomorrow, really the end of the road, as it were, as we do at the end of every one of these episodes. A brief bit of education. Not going to have time to go too deep into it today, But I'll tell you, go to tastylive.com, top banner, learn beginner futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. We'd be talking introduction to margin here today, Ilya. I think the important takeaways for people are that in a traditional equities account, the margin is basically a loan from your financial institution. But with futures, it's more of a performance bond or a good faith deposit. And they are not standardized. They can change according to volatility and whatever's happening in that product or the market. So just be sure to keep an eye on how much capital you keep in your account if you're trading on margin. And you don't want to get margin called at the end of the day. It's happened to me before a lifetime ago, but I will never let it happen again. So learn more at tastylive.com. Top banner, learn beginner futures, or click the link here. Bottom of the slide, it takes you there directly, and we're out before the top of the hour. I know Josh isn't here today, but you can tell him, John, we did it, and we did it right. So for Ilya Spivak, I've been Chris Vecchio. We'll see you later today at Last Call, and then for overtime, of course. Until then, good luck trading. After a brief break, Dr. Jim Schultz with From Theory to Practice, up next on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, what a market we have out there. Welcome to the Monday edition of what it is that we are trying to do. Man, I don't know what we're trying to do. Are we trying to deep seek it? Are we trying to deep seek some stuff? Are we trying to sort some stuff? Like, what is the verb that we use when we use the deep seek platform? Because obviously, this is the thing that all of us are going to be using and need to be using today, so we need to figure this out. But welcome to the show. I'm so glad that you're here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation, you can join the discussion, and I'm going to get to you guys quickly today, because today is a crazy day in the markets, and I want to be able to address as many many of your individual concerns as I possibly can. So rather than kind of living inside of my own expected move of answering about 1.2 to 1.6 questions per show, I'm going to try to bump that up to 1.7 to 1.9 questions for this very show. So the earlier that you get it in the chat box, the greater the likelihood and the higher the delta that I will get to that question. So, all right, let's dive in. Josh, bring us in here to the market. I mean, do we still have a market? Guys, this is not good, man. I mean, guys, this is, the S&P is down 111. You got the risk-free instrument, not really risk-free in today. Got the NASDAQ futures down 725. That's an extremely high-risk product. Mega pint risk on the old NASDAQ futures. Got the boomers holding strong because that's what boomers do. When the rest of the world is just getting chaotic and getting crazy, the boomers just go to work, man. The boomers just show up at the job site and they just get it done, right? Got Dow futures up 175. Got the Russell 2000 futures index down 30 on the day. Got bonds up a point. You got your flight to quality right there. Got bonds and the Dow. There's your flight to quality, right? Oil down $1.70. You got gold down 40. Man, where are my silver bros at? Ooh, silver down 71 cents. Silver getting hammered, gold getting hammered, Bitcoin getting hammered. Like everything just getting absolutely steamrolled today. Man, what a day. What a day indeed. Now, again, guys, you guys know the drill. You guys know the rule, right? I mean, we check volatility here. You go down, you got volatility futures up $1.40. You got the old VIX up 360, 358, $4. I don't know if we can count this print. Got to wait and check for at least a tweet coming out of VIX HQ to see if this one counts. They will let us know in 3 to 5 business days. So you got volatility up on the day and just everything else just getting taken out to the woodshed. All right. I don't want to mess around too much, though, because it is some crazy stuff. If you have a question for me, drop it in the chat box. If you're brand new to the show, man, welcome aboard. What a crazy day to be brand new to the show, be brand new to potentially the Tasty Network. If you are wanting to become an active trader, if you're wanting to take more control over your portfolio and maybe have some more strategic elements that are available to you, you're in a good spot. You're in a good spot. You're in good hands, whether it be my show or all the other amazing shows we have in the network. So if you're brand new, I hope you stick around, poke around, check out some content, and of course reach out to me if I can ever help in any way that I can, because I'm more than happy to do this. All right, couple of things in the portfolio, not too many things, and then, man, I already see you guys. Man, look at you guys. I see you guys. Ordenu, Paul's in the house, Samuel's in the house, Robert, Emmett, Anka's in the house, Finn West Jr., Mac, Nicool's in the house, Rob Banks in the house, Dav's in the house. And I'm going to get to all you guys and more here in the next couple of minutes. All right. So number one, man, look at this little MES guy. Let's talk about this quickly. This was I don't know what you would call it, a holdover, a remnant of the ratio spread that we had on in MES that we, go back. If you go back and check when I put this trade on originally, which would be, if I bring up the chains here really quick, that's going to be, I did this trade on December 19th. So it was quite a while ago. And then on January 21st, which was just last week, we bought back that extra short put to remove all the risk from the strategy. Now I'm pretty happy and glad that we did that, of course, because now all of a sudden this long put spread, it's starting to fill up with some value. Like now all of a sudden this little 50-pointer, man, we're only, 50 handles away? Wait, no, hold on. 100 handles away, actually. So we still got a little ways to go. I was like, are we 50 handles away? No, we're 100 handles away. You've got EMA S&P's up 60.20. The long put strike is 59.20 on this put spread. And so it's filling up with some value now, marking at 760, but we still got a little ways to go. We would need this volatility to continue. We would need the market drop to, accelerate even more to the downside for this thing to really start to print, 20, 30, 40 points or something like that. Now, I'm not really, let's leave it on. Because we're free rolling at this point. Like, we're playing with Tom's money at this point, which is something that we're pretty accustomed to with all these different football things and all the different things that we're doing in terms of getting some Sosnoff dollars. But let's keep it going. Let's let it ride, and we'll kind of see what happens. Because the worst thing that happens is it expires worthless, and we're just left with this trade price of 75, 76 points in the MES futures, which again the multiplier is $5 per point. So we're looking at a profit on the overall position of a little under $400, worst case scenario. But now just in case, DeepSeek becomes a little more sought after, then we might have a little something if the market continues to accelerate to the downside. So for MES, we're going to sit tight and we're going to do nothing. But then quickly, I promise, guys, quickly, just 3 things real quick. The first thing, guys, look at our share positions. Bank of America up 16 cents. Flight to quality, obviously. Starbucks up 58 cents. Flight to quality, obviously. This is it, guys. Right now, this is it. Now, the Starbucks position, we've transformed this into a covered call. I feel very good about that. And, now you have the short call is, increasing in value because the stock is rising. That's what you would expect if the stock is rising. One quick note on this. This is not a bad thing for us. This is something that comes across my desk all the time where people will have a covered call on and they see the short call actually increasing in value and they see, the short call actually showing losses. Right? Like if you look at the short call, you can see we're down $22 on the short call today, $36, $37 since we opened the short call. That's a good thing. That's not a bad thing. If you're going to lose money, you want to lose money on the short call because that means you're making money on the long shares. And the delta on the long shares overwhelms the delta on the short call, which is why when you have an update in Starbucks or when you have an update on a covered call like we have here in Starbucks, you can see overall we're up money on the day. Even though we're down on the short call, we're actually up. If I grab my Diet Strawberry here, we're up on the long shares. So we're up 60 cents on the long shares, which you can see because Starbucks is up 60 cents. But then we're down 23 cents on the short call because, again, short call is a bearish position. And so when you look at this position, a covered call, it's critical that you always look at the 2 legs together. You cannot look at them independently because it's a package deal. They are one flesh. Right? They are wed in holy matrimony, never to be separated. And so don't look at these things individually because it just doesn't make any sense. And so, all right, so that's Starbucks really quick, and that's Bank of America really quick. The other 2 things I want to talk about, these might be even quicker, guys, even quicker. Look at IonQ and look at IWM. I mean, both of these stocks are down today, and we're actually up a little bit on both of them because they're now more centered, let's say, between our 2 short strikes. You've got IonQ at 37.80, and our short strikes are 25 on the put side, 60 on the call side. And it looks like maybe it would have been more centered with the stock weren't down, actually. But we're actually making a little bit of money today, which is interesting. Maybe volatility is down in IonQ, even with the stock being down. That's really interesting. Huh. In any event, it's a good, sometimes you don't know. And sometimes you look at these things like, man, what's driving this price action? It's a bit of a head scratcher. It's always going to be either direction, time, or volatility. So if you can't see something, if something is kind of, leaving you with kind of like, man, what's going on? That's a real head scratcher. It's probably a volatility change in the stock that's causing some unexpected results, with your P&L. Sometimes it could be wide markets too and things like that. And so maybe that's the case here with IonQ. But we're going to look to get filled on this in just a second because you can see we put the strangle on for 277. It's marking at $1.16. It's over. I mean, we're past 50% of max profit at this point. There's really no reason to keep this on any longer. And so 277, $1.15, and that is going to be that. All right, so let's go ahead and close out of IonQ real quick. Man, if only they were all this easy. If only they were all this easy. But unfortunately, they are not. Let's go in for $1.18. Let's see if we can get filled. IonQ. All right, can't even get filled at $1.18. So maybe the markets are a little wide today. Maybe that P&L was a little bit illusory. But all right, so we got filled at $1.21. So we didn't give up too much. We gave up about a nickel or so. But a nice trade on IonQ. And now let's turn to IWM because a very similar situation. Where here the price action makes sense because you've got IWM down $3 to 225. So that means it was around 228 to start the day. Our short strikes on the strangle are 205 on the put side and 240 on the call side. So it was much closer to the call side. So the downside movement in the Russell, the downside movement in IWM is welcomed because that does kind of center the stock between the short strikes a bit more effectively. So that P&L day being positive makes a lot more sense. Again, the IonQ, I'm not really too sure about it, but there's no reason to really think too greatly and too deeply about that because it's over and done with. And nice little trade, and then we move on. So IWM, We're past 50% of max profit on this guy too. And that's just the way it's supposed to be. Like, this is the way that we wish all of our short strangles worked out, where you put it on. I mean, we put this trade on for IWM. It was January 7th. You can see it right here. And here we are just about 3 weeks later. And boom, we're taking it off for just a little bit more. In fact, about 60% of max profit. So that's a really, really nice trade. There was no reason to hold it any longer. Because remember, if you wanted to hold this trade any longer, just one final quick thought, and I do want to get to you guys quickly. If you continue to hold this trade, you have to keep in mind that the only additional profit that you can make is whatever the mark price is. So there's still another $1.11 in there. Like, there's still a decent amount of juice, but you have to understand that now you're not just risking, the potential losses at trade entry. Now you're risking those losses plus the significant amount of, profit that you've generated to this point. Like, this is one of the reasons why we like to manage winners early. This is one of the reasons why we like to turn over that capital, because it's like, hey, man, when you have a winner in a game that's already pretty difficult, right, in a space that's not necessarily super easy from start to finish, the active trading space, the derivative space, it's like, man, you've got a winner on your hands. It's economically significant. It checks all the boxes, whether it be a should I stay or should I go, whether it be a 50% of max profit, whatever your personal kind of strategy is for managing winners. You don't really want to overthink it too much, because now all of a sudden that winner could turn into a loser. And if you've traded long enough, like, I don't know, more than like 3 weeks, you know exactly what I'm talking about. Like, what can happen with these trades. So let's go ahead and let's just be done with IWM. And then we can move on to greener pastures. I don't really want to do any new trades today because, guys, this is, you thought DeepSeek was bad. You thought DeepSeek was, sought after? Man, this week is not good, guys. It is not good, right? We've got Apple earnings. We've got Meta earnings. We've got Microsoft earnings. We've got Tesla earnings. And we've got USA earnings on Wednesday. And I don't like to sensationalize things, but I've never experienced a more important FOMC meeting than what is coming up on Wednesday. Like, it's all about Uncle Jay. Like, all roads point to Uncle Jay at this point. Like, you think Apple's going to save the market? Apple's not going to save the market. What's Apple doing today? Look at Apple, only up $8. That's nothing. It's a 4% move. Like, it's nothing. That's not going to save anything, right? You think Baba's going to save the market? Up $1.73. And this thing came from China. Like, DeepSeek is from China, right? Baba should be crushing it. Baba's up $1.73. Baba's not going to save anything. You think Bank of America is going to save the market? Bank of America up 17 cents. Bank of America going to do anything. It's all about Uncle Jay. It's going to be up to him to save the day. Can he do it? I have serious doubts. So, all right, let me go to you guys, though, man. Let's do it. We're doing it early today because I know you guys have a lot of questions for me. So let me see where you guys are at. Let's do it. Orgdenu's in the house. What's going on there, Orgdenu? Greetings from Italy, Dr. Jim. Man, what's going on? Is the market crashing in Italy, too? Or is this only kind of a USA type of deal? But, Orgdenu, what's going on? Keeping the portfolio delta low here. That's good. You could even keep it negative and kind of play it from that side. What do you think the Fed will do Wednesday? Thank you and have a wonderful week. Man, I don't know. I guess I haven't checked the Fed funds futures in a while. I think it's still like 90+% that they're just going to hold. So it's not going to be, it's not a rate cut type of situation. It's going to be a language situation. And it's going to be a framing situation. It's going to be a Powell's tie color situation. Like, those are the types of things that are going to matter come time Wednesday. So it's not necessarily going to be, are they going to cut or are they not going to cut? I think it's going to be, what is the dialogue around, how Powell et al. Kind of see the market and kind of see the situation that we're in. And this is not good, guys. You've got 48 hours. You got less than 48 hours to get your affairs in order. So like, if there are people you need to add to your will, I would add them. If there are people you need to delete from your will, I would delete them from your will. Like, you need to do those things quickly because you may not get another chance. And so Paul's in the house. What's going on there, Paul? Good afternoon to all. I appreciate you there, Paul. Thank you for being here. I appreciate you, my friend. You're part of the core position, and you know that you are, and I appreciate you so much. It's only because of you that we can do what we do. So thank you, my friend. Sam L's in the house. What's going on there, Sam L? Dr. Jim in the house. Doc, it looks like the market saw you hitting chest on Saturday. Yes, I did get a little chest work on Saturday. And then I ended up doing back this morning, which it felt so wrong. It felt so wrong. right? Like going in on Monday doing back. I mean, that's almost as bad as arms. Like, I got to be honest, I take full responsibility for my actions and my decisions, but it just felt really, really odd. Back traps and buys on a Monday? Like, it was weird. But Sam L says, saw you hitting chest on Saturday and decided to crash today. I guess it skipped leg day and balance. Yes, it probably did. Tomorrow's leg day for me. Leg day on Tuesday? Man, I don't know. This week is totally jank. It's all jank because of next week, and I am going to Chicago for the live bash. Hope I get to see you guys there. We've got the beginner trader. Josh, can you pull up the archive really quick? I think you should have it handy. We've got the beginner trader coming up next week. So I'm doing the digital event on Tuesday, and we've got the pop-up event happening on Monday night. And so Tom has already told me that there is tremendous demand for this pop-up event. That it's already like oversubscribed. They gotta change the venue around to like accommodate more people and all those kinds of things. So that is absolutely unbelievably amazing. Like, you guys are incredible. If you're planning on coming out, man, I just appreciate you. I appreciate you so much, man. Bring a friend, like bring a family member, bring an enemy. Just bring another heartbeat with you. That's amazing. It's absolutely incredible. Let's pack the house and let's have a good time. I'm so pumped because, as I'm getting ready for this and I'm going over my notes and I'm going through whatever, this really brings me back to my professor days, man. This really brings me back because, like, we're going to have the chalkboard. We're going to have, the slides. We're going to have, possibly, kind of some back and forth interaction, like during the thing, which of course I won't have that on Tuesday because I'll just be by myself for the digital collectible. But on Monday night, it's going to be very much just kind of a dry run. And, I can't wait, man. I absolutely can't wait. So for those of you guys that are going to make it out next Monday, I'm super pumped. Oh, thank you, Josh. I see it coming up now. And so, yes, so next Monday night, if you can come out for the pop-up event, I think you can find a link to register for that on the Tasty Live site. I don't know what it is off the top of my head. And so, but you could ask DeepSeek, and DeepSeek will set you up right away. And so just get into DeepSeek and find the link to register for this thing, and then you'll be there Monday night. It'll be amazing. I'll see you guys on Monday night. I just got to find some pants. I mean, it's 74 and sunny. It's beautiful outside. There isn't a cloud in the sky. Like, it's warm outside. It's a little chilly in my studio here because I got the AC pumping, which is why I'm rocking the hoodie. But as long as I can commandeer some pants, we'll be in good shape for next week. So, all right. But anyway, yes, thank you there, Samuel. So Sunflower, hey, Dr. Jim, good afternoon. What's going on there, Sunflower? I appreciate you, my friend. Thank you for being here. I just appreciate you very much. So Robert says, can we get back in an IBIT put? I don't know. Let's take a look at it. So Josh, go ahead and bring us back in here. Let's see if I've got an IBIT. Oh, yeah, that's right. This is the Bitcoin Bros. Man, I don't know. I kind of feel like I already cheated death a little bit by I think we scooped up a few pennies on the IBIT strangle, right? We did a strangle in IBIT before. Man, I don't know. Do I really want to be associated with the bullish Bitcoin Bros? I don't mind being associated with the bearish Bitcoin Bros. But am I going to really step in here and sell a put? I don't know there, Robert. Maybe we'll do another strangle. Maybe I go in here and sell maybe we do like a 20 Delta strangle. I mean, look at that. That's a thing of beauty. Look at this. I love it. 48 put, 71 call. Bought a $3 credit, $2.98, so just a titch under $3. My pop is 68. That's pretty good. My P50 is 81, so I can round that up to 100 for my mental records. Theta is 7. It's good. Max profit, obviously, is the credit that is collected. Max loss is going to be negative infinity, which only happens if Bitcoin prints positive infinity, which that happened, I think, last week once, but I don't know that it's going to happen again in the next 53 days. And so buying power, $1,400 is pretty good. Everything looks pretty good. Let's do it. So I'm going to change the trade a little bit, Robert, because I don't really want to be so one-sided on Bitcoin, and I actually see more downside potentially in the future for Bitcoin. And I have no reason for feeling that way other than just using common sense, of course. But 298 is my credit collected, and boom, let's do it. Let's see if we can get filled here really quick. Let's delete all that. Got a little IBIT action. And so I didn't really want to do any new trades today because I'm really getting locked and loaded for all the earnings that are coming up. And don't forget, so for the earnings, when are the earnings? Let me look at this really quick, guys. There's nothing really today, right? Nothing's today. Yeah, nothing's today. We just have AD&T tomorrow morning, and then Boeing still in business? No. Wow, that's amazing, man. They'll give solvency to anybody. So Boeing is tomorrow morning. So that might be the end for Boeing. And then you've got General Mills or General Motors. General Motors, that's a big difference, actually. General Motors. What is General Mills? General Mills. What is the ticker symbol for General Mills? It's, if I can say it, which General Mills. Oh, that didn't work. What is the ticker symbol? Guys, help me out in the chat. What is the ticker symbol for General Mills? It's a publicly traded company, I'm pretty sure, right? But I can't. But GM is General Motors, obviously. And so, okay, and then so 129, which is Wednesday, that's the main day, right? Meta, Microsoft, Tesla, boom, boom, boom. Apple, and then USA, of course. Apple, 130. So Wednesday and Thursday are going to be absolutely bananas. Absolutely bananas. And I'm not talking about like the pesticide-laden, like mass-produced bananas. I'm talking about those organic guys. I'm talking about those guys that are like an extra 15 to 18 cents a pound. That's what I'm talking about. It can be absolutely crazy bonkers Wednesday, Thursday. So my earnings trades for Wednesday, I will do them tomorrow. So I will do them on tomorrow's show here on From Theory to Practice. So don't miss the program tomorrow because we'll have lots of trading to do. And I'm going to give you guys Meta 1, Microsoft 2, Tesla 3, Apple 4, USA 5. I'm going to give you 5 locked and loaded losers on tomorrow's show that if you fade them, you'll be able to retire at least 6 to 9 months early. And so don't miss the program tomorrow. So, all right. But thank you, Robert, for the IBIT trade. Anka's in the house. What's going on there, Anka? She says, hold on a second. Did you guys hook me up with the General Mills? Oh, GIS. Man, look at you guys. There you go. You guys are the best. Plus, I just tricked you guys into pumping the algorithm for us. Some good stuff. So GIS. Okay, yeah, General Mills. There you go. Boom. So General Mills doing pretty good. When do they have earnings coming up? Should we trade a little General Mills? March 19th. Wow, that's crazy. March 19th. Wow. Amelia May will be 5. Her birthday is on March 9th. That's pretty crazy when I think about it. The fact that my youngest daughter is going to be 5. It's crazy to me that my oldest is 10 now. I really, really can't believe that. That's some really, really wild stuff. But anyway, I digress. Anka says, hey, Dr. Jim, I'm just checking in to see how everything is going. It's going well. Can't make it every day anymore, but still watching most shows later. I appreciate you, Anka. And hey, it's amazing. It's absolutely amazing. Anka, you will always be part of the core position. You will always be part of the core position because not only do you watch the show on a regular basis, live archives, whatever you can do, whatever is good for you is good for me. But more importantly, Anka, you send me a losing trade like once every 2 to 3 weeks. So you are part of the family, man. Like you and me, we see things the same way. It's like we like a trade. We both know it's going down, but it's good. We're on the same page. So I really appreciate that about you very, very much. And so Anka, it's amazing. It's good to see you. I hope things are going well in your neck of the woods too. And I hope you've got I hope you had a few negative delta coming into today. And so, but thank you so much. You say thank you so much for your show. Thank you so much for being a part of the show because it really, truly, I mean, got 750 people watching. That's crazy, man. That's absolutely nuts. And it's only because of you guys that we can do what we do. So thank you guys so much. I really, truly mean that more than you guys might even know. So Emmett's in the house. What's going on there, Emmett? Hey there, Dr. Jim. What's up, Emmett? I appreciate you, my friend. I hope you had a couple negative delta coming into today too. And I hope everything is going well with you. Market's catching a little bit of a rally. Can we call it a rally? EME S&P is down 96. It's better than 111, I guess. You got the NASDAQ down 675. That's better than 750. But can we call it a rally, though? I don't think we can call it a rally. But I don't know, man. It does feel overdone to me. So if you guys want my market opinion, which is worth pretty much less than nothing, I think it's overdone. I feel like this is going to be – because, again, I mean, Dr. Data, he's been using DeepSeek for like months. My man's like, yeah, we've been doing this for months, quarters in the Tasty research team. So this is not anything new, right? And so that's kind of amazing and kind of incredible that, this is apparently the catalyst that sent the market lower. And also, not only that, but if you look a little bit more closely at some of the mag stocks, right? I mean, look at Apple up $9. That's pretty crazy, right? You look at Amazon unched, right? So where are all the losses coming from? You've got Apple up big, Amazon unched. You've got Google down, 3%? Okay, so there you go. But Meta up 1%. Microsoft down 2%, but still not a big move. Netflix down less than 1%, right? Tesla down, 3%. But still, it doesn't really seem to line up with, the market being so weak, especially, the NASDAQ index down, a little over 3%. And so, that's crazy stuff, man. It's wild stuff. And so Finwest, but thank you, Emmett. Thank you for being here, my friend. And it's going to be great to connect next Monday. I can't wait. So Finwest in the house. Good morning, Dr. Jim. Greetings from Asia. What's going on there, Finwest? Yeah, this whole DeepSeek stuff, it's all your fault because this is your neck of the woods, man. So you got to fix this. You better fix this market, or the FinTwit Bulls are coming after you, man. They are coming after you, and they're going to take you down. Like, they're kind of like Buffalo Bills fans, which I feel bad for the Buffalo Bills fans, man. I mean, I've never been a Bills fan. Like, y'all can check the tapes. I've been Chiefs, Eagles from the very beginning. But, man, that was tough. That's tough. It's hard enough to beat the Chiefs, but, man, you got to beat the refs. I mean, it's plain as day now. It's plain as day now. Like, you can't possibly tell me that it's not some level of fixed, rigged, whatever you want to call it, for Kansas City. It's impossible. It is a statistical impossibility that it always goes in favor of the Chiefs. And these things are blatant. You got balls hitting the turf. It's a catch. You got Josh Allen getting the first down by half a yard. He's like, no, he's short. It's like, really? Man, that's crazy stuff, man. That's crazy stuff. So it's a good thing I'm Dolphins, man. Been Dolphins from the very beginning. So Junior Mac, good morning from Australia. A strangle in Marvel, 81-25. Get it, DR, the lost. Get it, Doctor, the lost season 3 of Strangles. I'll tell you what, lost season 3. So again, we've talked about this many, many times before. Be very careful about your negative commentary related to Lost, because you will be permanently blocked from the channel. But all 6 seasons of Lost are better than any seasons of any shows ever. Period. Those are your top 6 seasons of any show ever. The only exception to that might be, the original Adventures of Superman with Lois and Clark with Dean Cain and Terry Hatcher. They may also be in the running. But Lost season 3, that is like magnificent. That is like the top. That is creme de la creme. So nice pull there on the Lost season 3 reference. Lost season 1 and 2 were phenomenal, but Lost season 3 is where it really got extra phenomenal. Season 4 got a little bit weird, but and then 5 and 6 the wheels still rattled, but still better than any other program ever created. So Marvel, I'm probably going to pass, man, just because of the earnings coming up, and Marvel's an individual stock, and so I want to keep as much powder dry as I can, just because the stock's getting blasted. What do they do again? I think this is not. It's not Marvel. I guess it's Marvel. Right, so that might be kind of the elitist way to say this. Probably how Tom says it, Marvel. And so this is not, when I think of Marvel, I'm thinking of Avengers and things like that. That's not what we're talking about here, of course. I'm going to pass, though, just because we have earnings coming up. I want to keep my powder dry. We're going to have a flurry of trades tomorrow, because tomorrow is Tuesday for earnings Wednesday. And again, I want to do, we're going to do all the things, man. And, your Teslas and your Metas and your Microsofts, your USAs, it's going to be great. So I don't really want to burn up too much capital now. We did the IBIT strangle, which is a little bit different because it's an index. It's kind of, a totally different product from, the equity space. And so, but I appreciate you, Junior Mac. You know that I do. And so Nicole says, what do you think? NVIDIA and Avgo will bounce off soon. I don't know what they'll bounce off soon. I'm not looking at levels and things like that. But, you've got NVIDIA. Wow, NVIDIA down 23. That's crazy. That is really crazy. That is really crazy. Wow. Man, that's nuts. And this is all about some stuff we knew about we've known this for 6 to 8 months. That's crazy. What's Avgo doing? Wow, Avgo down 45. I didn't realize. So now the NVIDIA move and the Avgo move, they are kind of probably the reason why the NASDAQ is so low. And I'm going to tell you what, man, NVIDIA gets too much lower and everybody's going to have to start calling it NVIDIA. That's just, I don't make the rules, man. That's just the way it is. This thing prints 109. Jensen's going to come out and say, all right, from now on, it's NVIDIA. And that makes sense to me because that is the right way to say it from the beginning. But, I think, Nicole, again, I think it's overdone. Just personally, I'm not looking at levels. I'm not looking at volume profiles. I'm not looking at liquidity pools and things like that. And so I just think it's overdone. I think it's overdone. And so some type of relief rally, not necessarily today. And, maybe there's a little bit more downside before, you find that bounce. I'd be very surprised, though, just to give you some round numbers. I'd be surprised if we see 100 before we see 140. Let's put it that way. Well, actually, no. I'd be surprised if we see 110 before we see 130. Let's tighten up the range a little bit. I think we'll see 130 before we see 110, which essentially that cements 110 basically as a given now at this point. But those are my thoughts since you asked me for my thoughts. And so Rob Banks says, good day, Dr. J. I always love your show, man. I appreciate you. I appreciate you so much, Rob Banks. Thank you for being here. It's only because of you that we can do what we do, man. It really is. You're part of the core position. You're part of the staple package. And so it's I just appreciate you, Rob Banks. Thank you so much. Dav's in the house. What's going on there, Dav? I appreciate you. Esar's in the house. What's going on there, Esar? Says, what's up, Dr. Jim? What's up, Esar? I appreciate you. I don't recall your being in the chat before. That's a very unique name. And so I thank you, man. Thank you so much for being here. I hope you stick around. I hope you find value from my show and all the other shows on the network. And you can always reach out to me. You can always reach out to me. You can email me. I'm jschultz@tastylive.com. Any of you guys can email me, not just Esar. Like if you have a question that's trading related, I'm happy to do my very best to help you with that. And so shoot me an email. I'm very happy to do it. I try to get back to all my emails as quickly as I can. Sometimes I fall behind. It does happen. And my email inbox is kind of like a Google search, or I'm sorry, a DeepSeek search, right? Like if it falls off the first page, I start to lose interest in it. And so if I get blasted and things fall off, then it takes me a few days to kind of go back in and like figure out what I missed and things like that. And so, but most of the time, I think I'm pretty quick. And so shoot me an email. I'm happy to help. Jason Tatum, what's going on there, Jason Tatum? Appreciate you, my friend. Thank you for being here. You're obviously brothers with Channing Tatum, which is pretty cool. That's obviously a cool thing to tell people. So, Nicole goes on to say how to handle deep in the money option in this scenario. Okay, so I'm assuming you have a short put, right? Because it wouldn't make any sense if you have a short call that's deep in the money. Okay, so a couple of things. So number one, so my whole talk about on the Where's Bat tour and the digital collectible that we just did. I don't know if you guys can watch that now. I'm not sure what the rules are with that, but if you can get your hands on that, it was I did a whole talk about short puts and how I feel like they're the best strategy. How I feel like they are amongst all the amazing strategies we have. The short puts reign supreme, and one of the main reasons why this is the crescendo reason. For those of you guys that saw the talk, or you saw the digital collectible, or you even saw the live event, like this was my third reason. This was the crescendo. This was kind of the coup de grace, as they say. If it comes down to it, with a short put, which is the situation that you're in right now, Nicole. If you have a long-term focus, long-term view on the stock, and you don't mind holding the stock because you feel very good about the company, like in your case, you feel very good about NVIDIA, you're like, all right, even if everybody has to start calling it NVIDIA, I think we're going to be okay. Like, I think we're going to see it through to the other side of all of this. If that's the case, then you can just take the shares and hold them. I know Tom's going to hate it. I know Tom wants you to do something else, but you got to resist all of that. If it comes down to it, now you may not want to do this. There's a bunch of active things you can do, but if it comes down to it, you don't necessarily have to move off of that in the money short put if you don't want to, and just say, hey, I've got the capital. I've got the buying power. Let me take the shares. And then from there, you still have a lot of flexibility. You can hold the shares and just play, clean delta to the upside. You can sell calls against the shares to bring some premium into the mix. Like there's a lot of things you could do. You could even do a covered strangle. You could sell a strangle around the shares if you wanted to, kind of doubling up on the downside, kind of double dipping George Costanza style in some ways. So be aware of that, of course. But there's a lot of things that you can do. And so the first thing that I would say to you, it's hard for me to give you a full answer because it's a very, very there's a lot of pathways forward through the forest. And again, I did my whole talk basically on short puts, but I'm kind of giving you what I think is the most overlooked aspect of the short put. You can just take the shares. Right? So as long as you have the capital, as long as the position is not too big, which it shouldn't be, and if it is, that's an order entry problem. That's a trade entry problem. That's a whole different scenario. So if you're feeling like, man, this position is way too big and I got in way over my head, then you might want to just close the whole thing down now, because that's a trade entry problem and you want to fix that now so you don't run into this problem again. And now again, you're losing money. That always stings, even if it's super small. So I'm not saying that it's not going to be, somewhat of an annoyance at least. But just remember, Nicole, you can take the shares and hold them. Like there's no rule that says you can't do that. Forget about what Tom says. Forget about the fact that he hates long shares. Forget about the fact that he hates long-term investments, right? If you do the opposite of everything Tom says, you're going to make a whole bunch of money, right? And so just remember that that is an option that's available to you. So I hope that helps a little bit and gives you something to think about that is kind of outside the active space, but is very important when it comes to a strategy like a short put because it is so flexible. And so let's see. Oh, Esar is back. He says, how do you think about the straddle strangles that you previously sold that are getting totally smoked today? Do you roll them, cut your losses and close, or something else? Great question. Great question. So I'm kind of lucky in that I don't really have any strangles or straddles that are getting smoked today. So I don't have any current examples, which is just dumb luck on my part because, the IWM and the IonQ guys, I mean, they actually helped out today. The down move actually helped out in both of them. But this is where it has having kind of the mechanics, having kind of that adjustment protocol roadmap already laid out beforehand is so helpful. Right. And so like the strategy management crash course that I did that's already on the YouTube channel, short strangles and short straddles are both in that crash course. So if you haven't seen this yet, Isar, I would hang on the YouTube channel. You'll be able to find it fairly easily. I think if you just kind of pop into the Google machine, I mean the DeepSeek machine, and go in there and punch in, strangle or strategy management, tastylive YouTube, it'll probably take you right to it. Follow the roadmap. Use that as clearly defined reference points. So what do you do with a strangle? If your strikes have not been hit, then you don't do anything. Even if you're feeling some pain, in my opinion, right? Again, this is my view. There's different ways to slice this up. There's different ways to do it on the network. There's different traders and personalities on the network that do things differently. This is not something where I think there's a universally, agreed upon way to do this stuff. Tom likes to say it's optimal. It's not really optimal. It's gimmies and gotchas, right? And it depends on so many different factors. And so the way I look at things is that if the strikes have not been hit, I'm sitting tight. If the strikes have not been hit, I'm doing nothing. Once a strike gets hit, now it's game on. Once a strike gets hit, this is for a strangle. I'll talk about a straddle here in a second. Once a strangle strike gets hit, now all of a sudden you might be looking to roll out. You might be looking to roll the untested side, right, to trim your directional risk by 20 to 50%, depending on your personal directional bias. Personally, especially on a move like this, I would probably roll the untested side and not trim directional risk too much because I don't want to get totally whipsawed if the market comes back. And now it's like, you've got the market falling, right? So you're rolling your calls down. And so if I roll my call down like a lot and the market rebounds, later today, tomorrow, whatever, Uncle Jay saves the day, purple tie, it's time to buy. Like we've done all this before. Man, I'm going to really be in the alerts because I should have either A, done nothing, or B, done something, but a bit more conservatively. And so that's how I view things from a strangle standpoint. And then remember, you can always add time, of course, too. You can roll it out, and that kind of slows everything down. But from a straddle standpoint, now all of a sudden one of your strikes is already in the money. So this is where the key reference point, in my view, is the break-even point. So you kind of treat the break-even point like you would treat a strike on a strangle. So once the break-even point gets hit, now you're looking to roll out. Now you're looking to possibly go inverted. And so these are the things that I'd be looking to do there, Isar. And again, I kind of gave you a shortened version, like the highlight reel from that strategy management crash course. If you want more of a deep dive, if you want more of a deep seek into strategy management, then I would give that crash course a look. And so hopefully that helps, though. Let's see. SK's in the house. Says something about CCP, which is something from China. It's CCP-ED. Yeah, I don't know. I'm not following that. But John Stein says, you promised us a risk-free asset. What happened? Man, I didn't promise you anything. I'm just telling you, man, I'm just a messenger. I make absolutely no promises. All I'm saying is the risk-free asset, it ain't risk-free in today. It ain't risk-free in today. But tomorrow, when the NASDAQ rips 900, everybody's going to be happy. Right? And bullish FinTwit, like everybody's always going to be right in the world again. Right? And so John Stein, nah, man, the NASDAQ getting steamrolled today. And so Mike Wenner says, what is the symbol ticker to see SPX settlement values? Ooh, I don't know, actually. That's a very good question. I don't know. I would email support@tastytrade.com. They can actually help you with that, like settlements and like Wednesday morning deals with SPX expirations and things like that, like that 830 print that determines like the settlement prices and stuff. That's not something I focus too heavily on because I don't trade around that time too much and I don't trade that product that often. I will do some expected move butterflies in SPX, but I'm not doing too much where the settlement prices and the settlement times come into play. So it's very much off of my radar screen. But I would just shoot support@tastytrade.com an email with that very question, and somebody on the trade desk can definitely help you out. So Harsha says, wow, the show is almost over? This is crazy, man. That's crazy. I feel like we literally just started. And we're 90 seconds away from being done. Man, let me try to get to at least one more. So Harsha says, Dr. Jim, I sold a strangle in a sucker stock, POWL, Powell. Oh, is that Uncle Jay's personal stock? That would be ball. I mean, if Trump can have a coin, oh yeah, look at this, Powell Industries. Look at this. Hey guys, if Trump gets his own coin, and then Powell gets his own stock, those are the rules, man. Like those are 100% the rules. Wow, we have Powell stock now. Hold on a second, Harsha. I did not even know that this exists. This is crazy. So let's recap. We've got Natty Light Ice, which we haven't traded in a while, but that's UNG. We've got Florida, right? Which is FL, of course. And now we've got Uncle Jay. We've got Jerome Powell's personal stock, right? So we can actually buy stock in Jerome Powell as a person, in Jerome Powell as an idea, as an entity, a thought experiment. It's crazy, man. It's crazy. So this is not a sucker play, Harsha. I feel like the sucker because I didn't know this was out there. But anyway, Harsha says, the strangle for $13 credit. The stock is dumped today with the AI bubble pop. It's not dumping for the AI bubble pop. It's dumping because of Wednesday. Because all the Powell investors are very unsure that he's going to go purple tie. When he walks out with like a lilac, well, lilac is kind of purple. But when he walks out with like a pink or something, yeah, that's worth an 18% drop for sure. But Harsha says, I want to do nothing since the drop is within my strikes. There you go. You answered your own question. I would do nothing. I personally would do nothing. Now, if you want to be a bit more aggressive with neutralizing directional risk, then you're rolling calls down to neutralize that directional risk. But again, I would do nothing because, if this thing rips tomorrow, the next day, whatever, because Powell walks out with that purple tie, you're going to be kicking yourself a little bit. But I mean, it's gimmies and gotchas, right? If the thing continues to dump, then you're going to be kicking yourself because you followed what I said and you should have rolled down. And so again, it kind of depends on how aggressively you want to neutralize directional risk. I like to be less aggressive and let the marketplace cyclicality just kind of live and breathe a little bit. Other traders and other traders on the network like to be more aggressive with neutralizing directional risk. Again, I don't think it's better or worse. I don't think it's better or worse. I don't think it's optimal and suboptimal. I think it's gimmies and gotchas, personally. And so, but man, I gotta go. You guys are unbelievable, man. If I missed your question today, guys, come back tomorrow. Please come back tomorrow. We're gonna do all those earnings trades, and then I'm gonna try to get to as many of you guys as I can. You guys are amazing. I just appreciate you guys so much. If I can ever help you guys, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
You what? You already know it. There's a new AI competitor in town. Yeah, things are going down. We'll talk about what we think about that. I'll tell you, on the other hand, yields are at the lows of the year. That's right. There's some green shoots in this market. Yields are down today. Of course, it's probably due to a safe haven bid, but nevertheless, you got to find ways to look at this market. And then finally, there's a bull market somewhere. There is. And right now, it's in healthcare and consumer staples. So we'll talk about those three things and more. Ton of earnings to talk about this week, ton of macro events to talk about this week as well, and we'll get into it just right now. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler, and it's Monday. I got a special guest. That's right, he's a special guest. It's Josh Fabian. Josh, what's going on, man?
You're funny. That's the second time you pulled that. You know what I've noticed? I haven't gotten a notification that I have money waiting for me from you, because I'm pretty certain on Friday you gave me 4 points, 4.5, whatever it was.
Yeah, you tricked me.
And the bills.
You tricked me into a bet. That's right.
I did not trick you. I did not trick you.
I'm gonna give you money. I'm gonna give you in person.
Mm-hmm.
I give you. We settle bets in cash. Okay.
Oh yeah.
That's right.
That's fine by me.
I bet it is. Did you know? Yes, I just saw this today. Of the 4 teams, those 4 teams that were playing yesterday, where I got to find the stat. 4th down conversion percentages. The 2 with the highest lost the games. So Washington has the highest 4th down conversion percentage in the league.
Okay.
Buffalo is number 2. And number 3 is Philadelphia. Number 4 is Kansas City. So you wonder, did they go for it too much? What do you think?
I think Kansas City and the Eagles just didn't face a lot of 4th downs. That's what I think.
I mean, but that was a big 4th down for Buffalo, wasn't it?
Oh, yeah. Yeah.
You know what I'm saying? Yeah. It's kind of interesting.
Yeah.
I mean, those were the teams that were willing
out.
to risk it the most, Washington and Buffalo, and it just so happened they're the ones that went down yesterday.
You know, before we did first call last night when we were in the green room talking, I said there's going to be a point where we're going to be saying, remember when they used to punt in football?
Yeah. I like it, though. I mean, when I always played video games, I never punted.
No, why would you?
So what do you think about what's going on today here, man? I mean, you heard the top of the show. Obviously, there's a deep seek thing going on here. Yields are lows. You see healthcare and consumer staples perking up. What's interesting you most out of those 3, or is there something else you're seeing?
You know, this kind of came as a shock. Although when we opened week last night, I was watching them because we were doing the show, and I thought about buying them last night, but then it was just like, no, these things just.
I did not.
They're not bouncing. They're not bouncing back. No, I didn't either. I held off, and I was thankful because when I woke up this morning, we were down like 140. You know, I don't think this is that deep seek. Is that it?
Yeah.
Right. Okay. Which there's so many jokes. There's so many jokes about that name. It's killing me. It's really killing me to not let any of them out.
I know.
I don't think it's that. I mean, this product is not. It didn't launch last night. People knew it was there. I just think that you have a heavy week of economic data, a heavy week of earnings. This market is fundamentally at a level I don't recall seeing any time in recent memory. So I think you just, if DeepSeek is the excuse, so be it.
Yeah, I think that's a good way of putting it. Excuse. Like, I'm not saying it's nothing legitimate. Obviously, it's an AI competitor. Maybe it's cheaper. There's a lot to unpack. Of course, I mean, there's the fact that it's largely a Chinese company, and there's always been this is another Chinese trade war type of situation, I would say, in some way, shape, or form. And I think there. You know what? I gotta read something because I don't think I could put it in terms better. There's somebody that. He's a well-known tech person. I'm just going to say that. And I found it interesting what he said. Bears have historically missed rally in tech stocks last 2 years and will miss the next 2 next years. this is the interesting part. From the Fed days to rumors of NVIDIA Blackwell delays to the Tokyo Black Market Monday, which essentially was last year when the market tanked, right? Everything tanked. Today is no different with DeepSeek. It's a buying opportunity. I guess the point he's making is we have been looking for a lot of reasons to sell off tech for some time. I mean, for sure. Yeah. And that's understandable. I mean, all everybody talks about is the overconcentration of tech names and these indices, the size of them, and just how the valuations and where they've been. And so obviously there's always going to be a situation of fear. I can understand. I honestly could say that people probably should reduce exposure at times, and I think that's kind of what you're seeing. And this is the sort of the rush to the exit right now. But I also think it is somewhat of a buying opportunity, and I think you got to do it strategically. I don't think you jump in with both feet. I think you find strategic ways to sort of, take a shot because, again, nobody knows anything just yet. That's what we always talk about. So that's kind of what I've been doing. I've been finding small ways to take long delta shots into this move down. That being said, I'm moving my duration a little bit out because you could see it could be another leg down tomorrow. I mean, it totally could be. Sure. And this is I don't know if I mentioned this in detail, but this is why I put on the trades that I put on the other day when I put on the consumer staples names. And I got to give Chris a shout out, Chris Vecchio, because I put up a chart on This Week in Stocks. And I mentioned this on Friday. I put up a chart on This Week in Stocks showing Tom and Tony about the times where the markets kind of roll over when consumer staples are really getting beat up and consumer discretionaries are doing well. And those have been the times where market turns. And it's weird. Like there's weird. You never know what the catalyst or something like that may be. Right. But I'll give Chris credit. I wasn't even thinking about buying the consumer staple stocks. And he was like, these are kind of interesting. I was like, huh. Yeah, I guess they are. And so that's why I put on some trades. I put on Coke. I put on Mondelez, Target, and sure enough, those are the. And I told him, one of the reasons he's such a fundamental dude, of course. And so there was one of the names where he goes, I don't know if I could do it for this reason. And he found all these fundamental reasons that probably make sense. And I said, honestly, I don't think that matters. If and when this trade works, it's because everybody wants the hell out of tech and they want to get into consumer staples or whatever else is down right now. And that's exactly what's happening.
I think to your point about getting in here, on a pullback, it's kind of funny. I'm going to tie in the whole show. Watch this. Ready? It's kind of like the Kansas City Chiefs, right? Every time you think that they may be done, they come back. The equity markets have been the same way. Every time we get a sell-off like this, people are like, oh, that's it. The tech rally's over. It's time to get out. And then inevitably, thus far to date, we've rebounded. So in terms of how do I look at this market today, how can you not look at it as a potential opportunity? Why would you look at it any different? What changed from last week to today that would make you say, oh, no, that's it, it's over? I don't have an answer to that question. Yeah, I agree. It was funny because you're calling the consumer spending thing was great too. It was spot on. I'll give you credit. Still only $20, but it was a great call.
Yeah, it's I don't know. And then we got a very heavy week overall. You got obviously the Fed meeting. Speaking of, we got just mentioning bonds at the top of the show. This is clearly a sort of flight to safety on a day like today where things are getting completely smacked. It's definitely what it is. You're seeing bonds getting bought. You're seeing, like I said, healthcare and consumer staple names get bought. That's clearly a flight to safety, and so they're flocking somewhere. I don't know what it means for the meeting on Wednesday. I don't know.
It's interesting because if you look at the 10-year, the yield has actually come down 25 basis points.
It's the lows of the year.
So there's your cut. It is kind of interesting in that respect. I don't think it's going to change what they do at this meeting. But I think that the market is more concerned about earnings. And to me, I think this has a lot more to do with getting into the thick of earnings than it does the FOMC. And then you got PC at the end of the week, which I do think will actually be a big deal. I think this FOMC meeting on Wednesday is discounted. I think nothing's going to happen. But they're going to start immediately turning their attention to When's the next one? It's March, right? We don't have one in February.
Yeah,
I don't think. So I think the PC number will get a lot of focus because we'll speculate what's going to happen in March.
Yeah, I mean, I find a day like this really interesting. It's not even a super scary day. I think that's one of the reasons why I know that sounds weird to some people, but again, you look at the VIX. The VIX is up, but it's not like over 20 and change because you got the Dow up, right? You got a lot of these other names that I mentioned. I mean, look at Apple, right? Like Apple, you haven't been able to pick it up with a shovel, and now all of a sudden it's just taking off today, and it's strong. You know what I mean? And look at Walmart. Like, look at the names that are actually up today, and then you look at bonds. This is a clear flight to safety and out of tech, and it's just so happened for a day. I'll be honest with you. I wouldn't necessarily be surprised to see it tomorrow. I would actually welcome to see it tomorrow. I hope that doesn't harm any other people, but I would actually welcome. I'm saving some chips. I have not jumped in like I wanted to today. I'm saving chips. I wouldn't be surprised to see it happen tomorrow, and then they start to try to pick it up, whether late tomorrow or by Wednesday. Who knows? Become Fed meeting, right? As a matter of fact, that's why I'm sitting here right now, and I'm trying to get on an SPX Butterfly 6100 type at the end of the week. That's what I'm trying to do, and I'm actually trying to do it kind of wide, $50 wide. That's where my head is. So,
yeah, I think, and we've talked about this. It's pretty common when you get a move like this that the next day you kind of want to see the market. If the market opens higher, you usually can sell into those. You're going to get a pullback after that. So you kind of want to see tomorrow be a little bit scary in the morning. Not horribly scary, but if you're down again in a decent amount in the morning, and then you start rallying back on that. That would be pretty bullish. And so your SPX Butterfly, that makes a ton of sense to me. I like that trade a lot. I would put it on myself if I hadn't already done it last week. And I'm now underwater. And now I have no chance of it being profitable.
Yeah, this is if it works, that's how I'm going to afford to give you $20 for the bet that we have. I'll take it out of that. I'll take it out of that. Yeah, I don't know, man. I mean, I think this is just clearly, some fears of I don't want to say overblown fears. I don't know enough about this DeepSeek thing. I do know it's been around for a year, and I don't see how you caught up to everybody within a year, but maybe I just don't know enough. I keep hearing about I saw something that said I just feel like there's a lot of saying going on, but I don't know every single thing about it. And there's a million things you can read, but I don't know what's what. And again, this is why, at Tasty, we follow the price action, right? I mean, the price action to me says that the market is worried about this for tech names, but it's not, I guess, really, really scared, at least not yet. If this were 3 days in a row of a move like this, then I would say that's really scary.
Totally agree with you. I think this is much more to do. I think that's getting the attention. It's funny because last night, the headlines were all about the tariffs on Columbia. Apparently Columbia University, because it was spelled COLUMBIA in the press release. But as soon as that resolved itself, the fear went over to this Chinese AI app. I can't even say the name. I'm sorry. I can't. I just
you're struggling.
I've kept the jokes at bay. Yeah, I am. But I think that I think it's earnings. I think it's this market is valued at levels that, like I said, I'm not a value person, but it's part of my market awareness. I know that we're at a very high level. So seeing some profit taking makes sense. I don't think the AI thing, this isn't going to knock NVIDIA and Amazon and Microsoft and, off their perch. It's just, hey, listen, there's competition in the marketplace. What else is new?
Yeah, exactly. What else is new? All right. I mean, that's pretty much it. Apple today, man, huge move. It feels to me like this was, I don't know any major news outside of this. Obviously, the stuff last week was soft iPhone sales, et cetera. And it's been 4 weeks. And this is one of those situations, like Tom would say, this is one it was just down for a bit and it was sold for sold and people decided to buy it. And I actually believe that that's the case here. Honestly,
I think it's short covering. I think it's probably short covering, or it got oversold. One of the two. I don't think there's any major catalyst to this. I don't think their earnings leaked early or anything like that. I think it's just, hey, they took a 15% haircut, and that's an attractive level.
It's an attractive level. $9.70 for the rest of the week. Again, I don't, that's for the whole week. I don't know how much of that is actual earnings, but I guess we'll see, man. I've had some long delta in here. I know Tony was talking about having long delta here. He was kind of doing the same thing as me, just sort of finding ways to get long some delta heading into earnings. That's been my play, and I'm sticking to it. I actually did some Microsoft today too. This is nowhere near down to some of the other names. I mean, matter of fact, I kind of started making, like, I actually feel like I have a somewhat comprehensive list now, and to some degree, not everything. I don't think I have everything that's involved with AI, and I separated it by something. I just want to be able to so these are most of the chip names: NVIDIA, AVGO, ANET. Like, I just obviously looking at the size of the move today is where I put some of these names in here for. Marvell, Micron, obviously Oracle. How about that? I mean, after the big move to the upside the other day, Oracle's getting smacked. So these are some real major names that are getting beat up today. And then, of course, like the energy providers, right? We've been hearing so much about the VSTs of the world, which, by the way, I decided to do an Iron Condor in here today. I mean, 107 IVR. I just felt like it was time to do something like that. I wanted to do the same thing in CEG. I don't know what it was. These markets, I don't know if this thing is a little bit wide. I just couldn't get anything off. But look, I mean, this is why I've tried to get better about saving capital, because you just never know when days like this come. You want to be able to sort of be able to make some trades. So that's kind of what I've been on today, man.
See Oklo today?
Huh?
Oklo?
Oklo, yes, that's another one. Yeah. That's another one. You know what's funny? I just literally sometime last week put on a put spread in here, a short put spread. Some a little underwater on that one, but I'm okay with it. I think you mentioned at the top of the show, I think this is just sort of that time of fear, and I don't mind. I mean, would I have loved to put this on today as opposed to 2 days ago? Sure. But whatever.
Sure, yeah.
I got it out in March, 53 days. I wouldn't be surprised if this thing is trading 47, in like a month from now, and it's only like, hey, remember when this was dipped and this was a scare?
Yeah. And that stock in particular, it's down 30% today. I mean, that's a lot. After we get done here, I actually may look to do something in there. I'm not sure what, but 30% in one day, unless there's some news that I'm missing, like one of their reactors exploded or something. That seems like a bit overdone.
Seems like a bit overdone. Same thing with CEG. I mean, these are NRG. God, these are massive, like, utility names that have been around quite some time. And again, they have had some serious run up. If there was any one thing that I thought was kind of wild, not necessarily crazy, just wild, is watching these same names. Dude, these are utility names. I remember watching these names day in and day out, trading day in and day out when they're like $50, $60, $70 moving, 20 cents a day. That's it. And then all of a sudden, you've been watching the move that's happened more recently. So, yeah, of course, when this news comes out, people are like, get me the hell out of this utility. What do I want to be in this shit for?
Yeah, 100%.
I mean, I don't know, man.
Don't blame them. I mean, you get a huge move like this on an energy stock, something that, like, to your point, those things are not supposed to move much. People buy them for the dividend. So, yeah, this will scare some people.
Buy them for the dividend. Sounds like chicks dig the long ball. People buy them for the dividend. Chicks dig the long ball. See, they have the same kind of ring to it.
Yeah. Deep, whatever it's called. Deep stack. Deep, whatever. What is it called?
What?
The AI thing, deep what? DeepSeek.
DeepSeek. I'm glad you said that. Something else popped in my head for whatever reason. I'm
telling you, I'm fighting with this one. I think they named it that just to mess with us.
I think so.
Kind of like Square changing their ticker symbol to XYZ. Did you see that?
Which one?
Square.
It's SQ, right?
XYZ. They changed it.
Wait, what? I didn't know that.
XYZ.
Are you serious? Why? I didn't even see this.
I don't know, but that messes everybody up now, because if you buy XYZ stock, or if you want to put in a trade in like XYZ, now you're actually going to get a stock. It messes everybody up.
Why did they? This is so weird to me. What's up with these things? That's so weird. First, they changed their name to Block, even though it's SQ. Now it's XYZ. Does that mean, is that some kind of nerdy thing for a block, XYZ somehow?
Why are you asking me that?
You're right. I know. I need to ask Julia. that type
Is
of question.
ABC a stock?
Or
Do we have
data.
ABC? Yes.
I need to ask them those questions. That's probably what it is. Like chat. Is that mean does XYZ kind of mean block somehow in some way, shape, or form, in some nerdy way, shape, or form? You know, I'm not up on these things. I don't know.
I think they just did it to mess with everybody.
They definitely did it to mess with everybody.
I hope that's why. I applaud that.
Yeah, guys. I mean, I've done a bunch of different trades throughout the day. I put a lot of it in the trader page. You guys see what's up. I made plays on AVGO. I made plays on NVIDIA, Microsoft. Closed out some of the apples that I had because it was the 230 strike and the 235 strike. And if you have calendars, at that point, you basically need to close if they're right at the strike. I put them on further upside, right, when the stock is down. That way it can like rip through. If it's grinding up through, at that point, there's really not much you can do with it. So just go, all right. And I got other further upside ones. We'll just see how that goes from there. But I just find this an interesting day, man, when you see, obviously, not all equities, mostly tech. Obviously, S&P 500 has some ties to it with AVGO and NVIDIA being like in the top 10 and Microsoft as well. Of course, that's going to get tagged too. You could argue that this is a little bit of a surprising move for the Russell 2000, but this thing is schizophrenic as it is. No disrespect to that community. This is, and then the Dow, is all. I mean, has been up. It looks like it's pulling back some now, but this totally makes sense. Again, like we said, what's going on with a lot of the bigger like consumer staple names and sort of safe havens, if you will. But let's add to that. You can see that crude oil is down 2% today. Kind of interesting. You can see that gold, so metals, and it's almost like a sell everything except for the safe things and bonds is what I'm seeing, because you can see gold's down. Bitcoin, what's so funny? I was going to...
I know.
I don't do this often, but I did hold back on something. On Friday, I was going to have this chart of how correlated more recently Bitcoin has been to equities. And I didn't because I know Tom was going to be like, yeah, well, who cares? Nobody's going to put together a pair trade. It wasn't about that. It was more of like the people who are long gold and are long, like equities. If you have a day like today, it's not going to be fun.
No. You know what? One tech stock, chip stock that isn't down a lot. There is one in the group, which is kind of interesting. Intel.
I mean, yeah, because Intel sucks.
And it's like, they didn't participate on the way up.
No.
But they also didn't get hammered on the way down. I just wanted to point that out because I was scrolling through my list to see what was moving, and I saw that. And I just wanted to share that with the class.
Yeah, this is one of the reasons why I'm not interested in Intel. I know a lot of people have been, probably because of the price point, probably because how you see all of this from back here, and you're like, maybe you can retrace. This is one of the reasons why I'm not interested in Intel. And honestly, I don't, unless you're holding it for a potential buyout, I don't necessarily know if this is going to bounce back. I think it's been left behind. Intel is old, man. I mean, Intel is, compared to the other ones, it's
unk.
Yeah, it's like the Walgreens of the group. You know what I mean? I'm just being real. It's like the Walgreens of the group.
That's a great way to put it. I love that.
See, Peter. I don't want to completely tear up your name, but Peter, is it Polishuk? XYZ like toy building blocks. Maybe that's what it is. XYZ toy building blocks. Maybe, I don't know, man.
Okay.
Let's see.
Like the idea that they're just messing with us, but.
So rest of the week, we actually do have a bunch of not only just Fed rate decisions. You got Canada rate decision, who theoretically is in the tariff crosshairs, and then you got ECB rate decision as well. Oh, he's right. XYZ axis of a cube. I guess you're right. That's another one. Maybe that's why block, square, cube. Maybe that's it.
I think they just wanted to mess with us, people. I think that's it.
These are actually pretty good answers. I only read off good answers on the chat, okay? I don't read.
Yes, there's a lot of Fed meetings taking place around the world this week. When are those other ones? Are they after our meeting?
They are at, well, Canada is like, we don't give a shit. We're doing yours the same day, whatever. ECB always has theirs the day after ours. They know better.
See what we do. Yeah.
They know
See what we do.
They know
Canada
better.
doesn't matter because they're going to be a state in sometime in the next few years anyhow. So
yeah,
they're going to be.
Ours is Wednesday, so is Canada's, and then ECB is on Thursday. So it is what it is. Before we go, I got one thing. I know somebody asked me about a 228. Okay, well, I'm in here, but they're asking about a strangle, 250. 250 and 190 strangle. Ooh, you want to put a little delta on it, huh? Well, I mean, obviously, I can't show you everything. It's not going to show you the real risk profile, but I don't blame you for doing that. Yeah, $2,000. I don't blame you.
I got no issue if you got money, if you've got the buying power, taking advantage of this spike in IV.
Yeah. Again, just keep in mind how much buying power you are using. If that's the case, I don't think you want to use 20% of your buying power on that trade. But if that's like a 5 to less than 10% buying power for you, go right ahead, man. Yeah. Fire away.
Absolutely.
Yeah. Any closing words for the people? Anything you want to say? Anything you're feeling? The floor is yours.
No, I'm just looking forward to seeing you tomorrow. Excited to see you in person.
Yeah, man. Same.
Yeah. A lot of love here.
Are we just going to sit here and not say anything for the last 30 seconds? Folks, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Hello, everybody. Well, what a day, huh? This is going to be one of those days where if they said we have 3 hours to fill, I could do it. But I don't have 3 hours. I have 14 minutes, so I better keep things crisp. Okay, it'd be so tempting to do some long lecture right now or some long intro. I will refrain. But what we're seeing makes a lot of sense. And it also makes sense that last week, even though there should have been a blowtorch applied to every one of my short positions, they just sort of kept their hands on their hips and didn't budge. And finally, thanks to DeepSeek, things are getting fricasseed. So it's really amazing how one little press release can, wipe $1 trillion off a market instantly and cause complete mayhem. I do this show and I live in Palo Alto, California, the heart of the Silicon Valley. And there's unchecked pandemonium around here in the office buildings around, because the general notion is the entire premise that there will be ungodly amounts of money spent on servers and chips and electricity. Maybe not. So the whole foundation just disappears. And, we're traders. We all see those ones that got away. And moments before the camera went on, I happened to glance at VST. which is a boring old electric company, yawn. And I was really toying with the idea of shorting them last week, buying puts on it actually, just because it seemed really high. It wasn't much of a pattern, just seemed really overpriced. And I looked and they're like down $50, just because AI doesn't need electricity like it used to. It's like, oh my God. So I don't want to compute the missed profits on that. But yeah, definitely a huge fish that got away on me there. So like I said, I'm prone to yammering, but let's not. Let's just jump into the charts and catch up with each other on this very cool red day. Spiders are down. And, it's nothing calamitous. It basically undid about a week's worth of gains. I'll take it. Cool stuff, but nothing really to trade on. In sharp contrast, China, which seems to have grabbed the AI baton for the moment, their stock market's doing pretty good. FXI is up over 1%. And it's kind of horrible, but I guess kind of understandable, because the general reaction over in the States is, oh, well, it's China. They're probably lying. It seems kind of bigoted to me just to assume, oh, China always lies. Well, maybe not. Maybe they actually got some kind of breakthrough here. But the U.S., they just can't accept the fact that, what we don't need NVIDIA anymore. Jensen Huang's $4 trillion market cap is $4 trillion too high, maybe. They won't accept it. We'll see. I don't know. I've got no special knowledge. Nobody does. But yeah, there's this general assumption that, they're lying. This can't be, because everyone's a permeable. They can't accept the fact that, maybe not. Maybe the market's like 3 times too expensive right now, at least. But yeah, they're refusing. They're just scared, to tell you the truth, that maybe the house of cards is about to tumble. Speaking of NVIDIA, it is fallen hard. We are down almost 18% on the day. We are trading at prices that we were trading at last spring. All this, it's just been grinding around for months and months and months. I don't know what the big deal is with this guy. I think he's like God Almighty, but it's done nothing for 10 months here. SMH is even worse. This is the semiconductor ETF. We're trading at levels now that we were trading at in early March. So, over 10 months of product releases and profits and hype, and a new administration, which is pandering endlessly to the crypto bros and the tech bros. And for all that, focus. They got zilch. Absolutely zero over 10 months. And so within that, I've got puts on AMD, which, as I mentioned, I'm just hanging on to. And those are doing just dandy. My target's way down there. So AMD down over 7%. ASML, real zippy name, fellas. Nice job. Down over $50 on ASML, whatever that means. And ARM, which I stopped trading because it's so, schizophrenic and hyperkinetic. Forget it. I've had enough. But this went blasting higher. Can you imagine the poor soul who paid $182.88 for this thing? So that was just a few days ago, 3 trading days ago. It's lost $40 already off of that. Hello, wrong key, Tim. Watch where your fingers are, kiddo. Let's see. ASML, ARM. Ah, yes, Broadcom with the bizarre AVGO ticker. What if you wrote me as to why? I gripe about things I really don't care about. You don't have to tell me what's going on. Just like complaining. So yeah, semiconductors in pretty sorry shape. And Stargate. This is all. It's like a bad movie. How well this was all put together. Because last week was inauguration week. It was hype. Mark Zuckerberg and Lauren Sanchez and her outfit, and Mark staring down, and Larry Ellison with his embarrassing dyed hair and his teenage girlfriend. All the rest of it. It's just on and on and on. And then Stargate. So you got Trump there with the SoftBank dude, SoftBank. I can't get his name right. And then Ellison with the hair. and Sam Altman, little Sam Altman. And so they were there, and they did this thing about $500 billion in spending for AI supremacy. And I wrote a long piece about this weekend, basically about this is all about fear. No one really knows what they're doing, and they don't know what AI supremacy means, but they don't want to wake up one morning and find out China has it. And there's all this hype. And Oracle blasted higher, lifetime highs. How's it doing now? Not so good. There it is, crashing. So Oracle has returned to levels it was at last September, 2 months before the election, and all that time before. So there's Stargate right there, which is a beautiful gap close, by the way. There was the price gap. This is almost to the penny. It's actually amazing. There was the gap, and then the Stargate announcement. And so here we have the high at 189.10. We're down at 153.67 now. So not just the Stargate rally is gone. Everything's gone. It's basically gone all the way back to where it was. We're at the lows of the year. These are lows for the year on Oracle. And even parties that weren't at the podium, Supermicro down about 14%. Dell down almost 11%. Keyword here is down. Even Corning, which I made mention of on Friday, I think, these guys are down almost 10%. I suppose because of fiber optics. I don't really know what their product line is anymore, but they must have a lot to do with networking. So yeah, anything touching this stuff. And as I said, even electricity. VST. Wish I'd taken the jump. But yeah, VST is just getting destroyed. Absolutely destroyed. And I would also point out, referencing Friday's show, SOXL. Remember this? We talked about how even a leveraged instrument like here had been behaving itself beautifully. What happened on Thursday? Was it Thursday or Wednesday? No, Wednesday. Bang, right there. Just about a perfect touch of that. And then this, and then this, and then apocalypse. Wow. There we go. So that was interesting too. So even the leveraged instruments are saying some cool things. And this item, which I had bought puts on for the first time ever on Friday, is doing nicely because not only did it fall on Friday, it's gapped down today, the Soundhound. So like I said, anything touching AI, doing good things for the 3 bears left on the planet. So that's all really exciting stuff. I also did a piece about a young man who took his entire inheritance and put it on March 21 $40 calls on DJT. And I did this back in December, I think, in anticipation of the inauguration and what it would do. And in this weird performance piece, almost this sadomasochistic financial porn, he filmed himself as the opening bell happened last Tuesday and watched his $1.7 million inheritance instantly go to $1.2 million. And the crowd begged him to sell. It's like, for the love of God, sell. It stinks to lose $500,000. Terribly sorry. Please get out now. Get out, get out, get out. And he has come up with countless reasons why he's not going to. And I'm only saying this because it's kind of fascinating in the world of trading to see how a person will twist themselves into a pretzel to say why they're not going to budge. And so $500,000 loss, which seemed terrible, grew into a $700,000 loss, which was even more terrible. And I took a peek, and now it's way over $1 million loss, way over. So it's gone from a $1.7 million portfolio to, I think it's $500,000 now. He's still got $500,000 left, which is $500,000 more than he'll have if he keeps waiting. Because I don't think those $40 calls are suddenly going to, pay out. Because this thing is just breaking down. I'm not showing it today, but the Trump coin, last I looked, had lost 2/3 of its value in the span of 6 days. And so I guess the notion that anything to do with this guy is golden. Okay, that would be a change over the past 40 years, but all right. No, it's collapsing. Trump coin, disaster. DJT, down. And this guy's lost almost all his inheritance. But it's just you get stuck in these things like, I'm not budging. It'll come back. You'll see. No, we're not going to see. What we're going to see is this thing wither away to zero. So fascinating stuff, absolutely amazing. Geo got puts on this too, and this is another one of those, in the orbit of the new president plays. This continues to go down. It's been a very nice performer. It's patternless. I have no good reason for you as to why I got into this thing, except it seemed really high. But I'll take it. It's still falling. And Axon, this is another one too. This is the taser weapon thing. So this is down some as well. And even Bitcoin is doing poorly. And this is also astonishing to me. See, we're getting to this 3-hour show. I got to hurry up. We're going to end really. Most of the symbols I'm not going to be able to show you. Bitcoin has received every benefit you can imagine. It has gotten endless pandering from the administration, positivity galore from every branch of the government, and this weekend, a pledge that crypto projects made in the U.S., tax-free, no federal tax. That seems really compelling. And what has Bitcoin done in response? Is it $250,000 now? Well, no, it's actually it actually was back down in the quadruple digits for a little bit, but we're hanging on to not quadruple, quintuple, but we're at about 100,000 now, down about $4,500, still grinding away between 90 and 108 for months now. So what else can they say? Going to require people to buy it, I suppose. So with all of this help, it isn't helping. So that should say something. And so in turn, Michael Saylor's organization is also down some because, every weekend he just borrows more money and buys more Bitcoin with it. But it ain't working so hot, although it's still profitable. I think his average cost is something like 65,000. So, make no mistake, it's a profit. But the premium of the market cap of this company is all his reputation, and it's a very large figure. So it's going to be really interesting to see how this plays out in the end. Speaking of the end, it's the bottom of the hour, and this chart segment I'm not going to be able to tell about, but it's okay. Tomorrow's another day. So hope you're doing all right. And I knew 2025 would be fun, and this week is going to be super fun with the Fed and earnings galore. So I look forward to spending the rest of it with you, and I'll see you tomorrow. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
I have one question. Chicken wing, flat or drum?
Drum.
Sadno, we had it right. We knew it. We knew it.
You go for the flat part?
Everybody does. Everybody in the know goes for the flat. Nobody goes for the drum.
Well, first of all, I don't eat chicken wings, but if I do, I go there. Second of all, I go boneless.
Oh my God, you bougie SOB. Unbelievable. Unbelievable. Yeah.
Well, you didn't ask me boneless or bone.
That explains a lot on how you view the world too, by the way.
I told you 100% he's a drumstick guy.
Yep, 100%. Yep, I agree.
I go
said
for
the same
boneless.
thing.
I would never order chicken wings.
Boneless. Oh my God, you're like a child.
I have never.
If they were in front of you and Tom, you would scarf the whole plate down. What are you kidding me?
I have never ordered a boneless wing in my life.
I guarantee you've had boneless chicken wings.
Yeah, I've had them, but I don't order them.
I would never order them. I like
when
bones.
When you go to like a brown, oh, you like bones? Oh my God! Well, because it gives you something to hold on to, like an animal. Go to boneless. This is a great conversation. Anything else you guys got?
Oh, Sosnoff, I ran into two guys from the floor that I haven't seen in forever. Magoo.
Okay.
There's a trader named Magoo.
Mike, MGU, Magoo, the nice guy from the floor. I mean, sweetheart of a guy. Hadn't seen him forever. I walk in to pick up some Italian food. There's a guy sitting at the bar with his wife and another guy and his wife. And he had a country club shirt on. I wanted to see what it said, and I couldn't read it, so I must have looked a little bit longer. And he goes, hi. And I go, hi, but we didn't know each other. And then our eyes locked, Sosnoff. It was like it was like love at first sight. And I go, and he goes, Batman, I watch you every day. I can't believe I see you. He goes, you're a celebrity. I go, Magoo. And we sat there and talked for about 45 minutes. We had a great time.
Well, your family was back at your house waiting for their food?
Yes. I found some tapes from 40 years ago, Sosnoff. I have something that I would like to show you. And there's Mr. Tom Sosnoff. This is the last Papa shot he ever made. 31 years ago, you made your last Papa shot. You still got that Sissy Mary little thing that you do before you shoot.
What in the deep purple are you wearing?
A t-shirt and a swoosh.
Hey, Scott, what if I said I could take you back to Sosnoff's prime 32 years ago? Would you like that experience?
From what angle? Like
a good angle. A good angle.
What prime? Like his trading prime, his basketball prime.
His basketball prime.
Love to see that.
All right, Beth, roll tape. Here is Sosnoff in his basketball prime. Can you see this?
You know what? This actually makes a lot of sense. Everybody's playing with their kid, and Tom's shooting hoops into a 3-year-old basket. Way to be engaged, Tom.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call here. And, well, let's just go through some numbers before we talk about the market. EMEA S&P is down 107, Sosnoff. Kind of sat here for most of the day. By most of the day, I mean from the time that we opened the markets at 8:30 Central Time. NASDAQ down 700 and change, kind of sitting there too, maybe a little bit weaker. Russell, maybe a little bit stronger, down 30. And the Dow definitely stronger, up almost 200, 192 in the Dow. So, Sosnoff, will the newspapers tomorrow say, Dow rebounds nicely, up 192, and just disregard everything else?
Well, the funny thing was, pre-market this morning, before we opened, this is like maybe an hour before we opened, the Dow was down 400. Mm-hmm. And it's funny because I got an email from somebody that had just was watching, from somebody from overseas. They said, Dow's down 400 today, but I said, well, the real mover is, still the NASDAQ, which was down at the time like 800. Sure. And, and they said, well, what do you think? And I'm like, well, I don't know, about the Dow. And I'm like, I honestly, it's been a long time since I traded the Dow, so I don't really think about the Dow that much. Mm-hmm. But the Russell was very strong too this morning. Russell was actually up when the last time the S&Ps were down here, down 110. The Russell was up 2 or 3. Yeah. So the Russell sold off a lot during the day today. Russell sold off about over 30 handles. The Dow rallied 600, which is crazy, mostly on the back. I mean, obviously Apple is the big one. But when you start to look at like a lot of Dow stocks, like Disney was up, and you can kind of go through. Which one?
Disney was up. UNH was up.
UNH was up. UNH was up big today. I don't think, is Costco in the Dow?
I don't believe so. I can do this for you here. I can go right to here. I have the NASDAQ 100.
Costco, because Costco's up $21 today, which I don't understand either, but Costco's up huge too.
Here's your Dow stock. CRM up 13, Home Depot up 10, UNH up 10, the Apple, as you mentioned, up 8.5, Amgen up 7 and change, McDonald's up 6. Big consumer staples, which I mentioned earlier this morning, are the ones that are higher. There's only a few lower. Nvidia is in the Dow. It's down 24. Caterpillar's down 12, and Microsoft down about 10. And your beloved American Express down 7, and Goldman Sachs down around 6. IBM down 2. So
yeah, they definitely did a little sector rotation today and flew into some of those crazy names, weird Target up $4, Costco up 21, that kind of stuff. Anyway, neither here nor there. Just a strange little bit of a strange day in that sense because there's a lot.
Yeah, but a strange day in the overall market with not too much movement after the opening. But I mean, Nvidia is down $25, $24 and change. I mean, I looked it up. It's like $560 billion in market cap. I mean, this is not a meme stock, and there are other stocks in this space like VST. Which has decent markets looking at it, down almost 30%, $56 move. These stocks, I mean, without much.
AVGO, my biggest loser today is AVGO, so that's the one I watched the most because I had to play a lot of defense in there. And I didn't even have that big a position. I just had obviously a bad position for what happened. It was down like over $40 today.
42 right now, 17%.
Yeah. And my other horrible stock for me today was Micron. And it's so funny. Stocks that give you a hard time all the time continue. I will say, I think what saved me and others tasty traders today, for the most part, was the fact that a lot of these stocks are in IVR under 10, like I mentioned to you on Friday, and I took off of like a lot of things like SMH and NVIDIA and those kind of things.
Yep.
The IB rank was really low. And so that kind of sticking to tasty mechanics was definitely helpful. But there were some stocks today that moved all around, and there were also stocks that actually had a lot of intraday movement, like MSTR. One point was up, 1 point was down 30. Now it's down 11 or 12.
Yeah. They were talking about redemptions in there. I would hear come across the news. What if they have to start raising capital and blah blah blah. I mean, rumors abound.
I've been saying, well, first of all, Bitcoin's only down 4,000. It's still at 100,000. But
yeah, point I would make, yes,
100,000. Doesn't if you forget about MSTR as being their only asset being Bitcoin, but like if your business was essentially a one-trick pony, and if you were that pony, you basically are the market. I mean, they could say whatever they want. There's one big buyer out there on every dip, and it's been their consistent ability to raise capital at ridiculously low rates to support their habit, which is buying Bitcoin. So far, it's worked. It's worked for half a decade.
Yeah.
The question is, at some point, and this has always been the question there. And people go, well, what are they borrow? I don't think they're actually borrowing money. Like, what if they get a margin call? I don't think you can actually borrow money to buy Bitcoin. So, I mean, you can float convertible debt like they do, but I don't think they're buying it on margin.
No, I mean, essentially they're buying it on margin, right? I mean, but
why?
Well, what? So when you lend them money, can you never get it out?
Yeah, you can't. I mean, unless you convert. But yeah, you can't. But it's not. But they're not buying.
So it has to go. So it has to go to fruition. It has to go. If it's a 1-year note, it has to go for 1 year or 5 years, whatever it is.
Yeah, a lot of those convertible notes are a lot longer than that. I don't know how long they are, but they're pretty long. But anyway, the whole point is, when you loan them money to do a convertible debt, you're basically betting on Bitcoin going higher. It's just it's like an option on Bitcoin where you get a little bit of money back. I mean, that's it.
Yeah.
Anyway, neither here nor there. Eventually, at some point, that game is gonna, one way or another, that game is going to blow up. Maybe it doesn't blow up in particularly in MSTR, but it blows up in other places, and not necessarily because their model is so horrible. It's just that eventually, every one of those models falls apart. It has to. It's just gravity takes over. But anyway, neither here nor there. Biggest thing about today is S&Ps just traded in a narrow range all day long.
Narrow range volatility up, yes, up 8%. Seems like a lot. It is a lot. Back to 1775, but well off its highs in the 20s, and really didn't move too much all day.
Nope.
With even the S&P down 100 and the Nasdaq down 700. So I don't know what to make of it, Sadnov. Like you said, kind of a weird-ish, strange kind of day. I think the lack of bounce, to me, makes it feel a little bit heavier than it is.
Yeah, I mean, personally, I didn't have a good day. I thought I was going to have a better day. At one point today, I was actually up money, and then some of the stocks that I have some positions in, they kind of took over. Mostly the Russell just getting soft relative, but I did sell some bond premium today. I thought that was one place you could go to sell a little premium. I stayed away from selling. Equity premium today because I thought you'd have a better chance.
Did you sell both sides on bonds or just
yeah, both sides. I think that I thought you would. I was hoping you'd get a vol pop late in the day today, and maybe you'd have a good chance, like maybe tomorrow, to sell something. So I was kind of waiting. I thought, NASDAQ down 700 on the opening. You're kind of thinking maybe you got a chance of getting some good prices later in the day. It did not come to fruition.
No, it did not.
It really didn't. And in the commodity markets, I mean, there was some big movers, but nothing actually moved intraday. Not literally nothing. Gold was down all day. Natural gas was down all day. They killed these things. Crude oil was down all day. Everything. One of the things I gave a talk last night on First Call, and I said, one of the questions that Victor posed was, what makes Bitcoin go down? And I said, well, the only thing I can think of is it's so closely correlated to the S&Ps right now that if the S&Ps go down,
market meltdown, people need to raise capital kind of thing, and they start to rotate.
Well, yeah, because if Nvidia is trading at 150, nobody's going to sell Bitcoin to buy Nvidia. But what if Nvidia goes to 95, right? And the volatility in Nvidia is 65, and the volatility in Bitcoin is 65, and Bitcoin's still trading near its highs. You have to sell Bitcoin and buy Nvidia. That's just the way people think. So that's where the natural sellers come in, but we're not there yet.
You got Nvidia at 100, under 120. I mean, you're pretty much there, because when you're saying, Nvidia at 90, you're talking about $60 lower than where it is. Now you got it down almost $30 lower than the number.
Well, the question is how much premium is built into these. The whole shakeup from this DeepSeek thing was, these companies like Meta is a perfect example. Now, Meta, on the other hand, was up today.
Yeah,
it was down like, I don't know, $20, $30. At one point, I thought it was down like $10 or $20. I don't remember, but then I saw it up $10. I don't know where it is right now.
It's up 8 and change. It traded down at 625, which would be $20 lower than it is right now, up $8.
Okay, so it was down 12. It's up 8.
Yeah.
But here's the crazy thing. So Meta sets aside $60 billion for AI to build, their own engine. And this other company does it for a couple of million, whatever the number is. Maybe it's 10 times what they said, but whatever. They got to look around going, all right, what are we missing here? Like, literally, what are we missing? Why does it cost us $60 billion and it costs them $60 million?
Sure.
Like, what are we missing? Now, the good news for everybody else in the world is that means AI is on the table for everybody. That's the good news.
Okay, so I got an email here that somebody wrote that's pretty good, and they talk basically, I'm just going to paraphrase, was AI a whole big rug pull?
No, I don't think so. But
why?
Because I don't think it was a rug pull at all, because it's a real technology. The question is, was the amount of dollars pumped into these
That's where
stocks?
I was going. Yeah.
Okay. Well, yeah, that's different.
I'm not saying is AI a rug pull, like it doesn't work, it was fake. What I'm trying to say is, they made it sound like it was so spectacular and so amazing, which it is. And really, we're just regurgitating what nobody wants to do, which is read a book. But that's another story. That's not really. That's not fair. Well, we really are, Tom. I mean, all the information is out there if you want to search for it. For it.
It's not about searching for it. It's about the time it takes to do it, so that you can't do physically. There's not enough.
Whoa. Just last week we talked about, or Vanetta had some sort of article about how I could become an engineer just going through looking at AI. I could be a level 10, 6, 5, 2 engineer in a week if I just go through my AI courses. Is that not correct?
No, that's not correct. What she said was that AI could be a level 6 engineer, not you, a level 6 engineer. Okay, there's a big difference. You are not a level 6 engineer with your background, okay? But you could buy an AI agent who could be a level 6 engineer. That was what the point was. Don't confuse those two. Nothing is even remotely close.
Well,
That's
all
like
right.
saying I could be a physicist tomorrow if I want. Oh no, that's not me. That's my AI
basically
agent.
what they were selling me, Sadnov. That was my expectation. That was my
you could not be. You're not going to be a physicist, a rocket scientist, or a level 6 engineer next week. No matter what you do, okay, it's not going to happen. But you could have your own Batista agent that might be able to accomplish some of those things for you. That's possible.
So the market lost trillions of dollars today. These stocks, which are not meme stocks, lost trillions of dollars.
Trillions? I don't know.
Well, Nvidia lost. I'll just round up to make my case, 600 billion. So, I mean, I'm sure there are other, like I mentioned, VST is down $53.
Okay.
I'm sure.
All right, take $1 trillion off the top. Now, does it make it more reasonable? Probably.
Okay, well, that was going to be.
Is it fair?
That was going to be my question to you. So why aren't we doing a couple of diagonal trades in these stocks?
Is it fair value yet? Probably still overpriced. Does it have a lot more to go? I don't know. The market will see. This is a market that tends to not like to rest in the middle. It likes to go to some form of extreme. And by extreme, I mean, like it either likes things to be grossly overpriced or way too cheap. And right now, you'd probably argue that everything's kind of in the middle. So, I mean, does NVIDIA have another $25 to go? I don't know.
I don't know. Many people yesterday would have said no.
Yes, many people yesterday would have said that if I'm short the 125 puts in NVIDIA in February and it gets under 125 and I sold those for $1, I'm going to love my 124 purchase. You know what they're saying today? I hate my 124 purchase.
Yeah.
Now I want to sell the 110 puts in there.
Right.
I mean, so yeah, you want to go out. Like, I don't have an NVIDIA position on at all. Let's just take a look. Let's have.
You got a great IV rank of 68. You got earnings come February 26th. If you wanted to, I mean, I really think you should be doing something like April, March. I really don't think you should be doing Feb, because Feb volatility is only 70. I say only 70 because March volatility is also 70, but April volatility is 63. So you can go. But
do you know the 100 puts in there? What do you think they are?
In February?
Yeah.
The 100 puts with $15 expected move, probably $3.
No, not 190.
All right. Well, I was going a little high because of the way you said it. I mean, I don't know.
190. I thought that's a lot for the 100 puts in February, 25 days to go.
191, actually.
Yeah, 191. I just sold some. And I had no NVIDIA position on. So now I'm sitting here going the same thing that the person who sold the 125 puts yesterday said, which was, yeah, I'll buy the stock at 124. Now I'm sitting here going, yeah, I'll buy the stock at 98. 98 seems like a reasonable number. Now, if the stock's trading at 109 tomorrow, I'm going to hate those 198. I'm going to hate that 198. But the reality is, I sold.
You're going to hate those 100 puts at $98 cost basis, sure, of NVIDIA.
I just sold some at 93, at 193, and 191.
Mm-hmm.
Yeah, so there you go. So I got my NVIDIA position. Okay, you said you got to. If you talk the talk, you got to put it on. Fine, I put it on.
Fair enough.
So,
God bless your heart.
God bless you. Yes. So I did not sell any real premium today. So this is the first kind of trade that I made in that vein.
Hey, I'm getting emails now. Isn't the market fairly priced?
Well, the market's emotional. Sure, the market's always fairly priced. That's sufficient market theory.
Okay, so then how can NVIDIA not be fairly priced here if it is a penny wide?
It is fairly
priced. You said it's
here.
not at fair value. Like what would make NVIDIA not at fair value?
There's a big difference between fairly priced and what I think is cheap. Okay, don't confuse the two.
The world according to Sosnoff.
No, it's not the world according to me. It's the world according to trillions of dollars of money out there who decides that NVIDIA right now, today, is worth 118. But if you want to ask me what I think is cheap in NVIDIA, 98.
I got you. I got
So I'm 98.
actually 98 9.
Yeah,
or
who's
9
picking
or
pennies?
whatever it is.
Who's picking pennies? 98.
Who's
I'm
picking
very
pennies?
happy to take.
10
I'm very happy
million
to buy.
Nvidia, 10 million Nvidia options are going to trade today, Sadnoff. That's a lot. On a
well,
day
not
when we said we didn't have a lot of movement in the overall market.
Well, I did not trade a lot of those. I just made my first Nvidia trade, so we'll see what happens. And I'm looking kind of here into the close to see what we've got. Ooh, I don't know. Anyway, all right. What do you think for tomorrow? Then we'll go to the boys.
Ooh, what do I think for tomorrow? Well, I pegged today straight on. I said we were just going to chop around, not go anywhere. I could see us down, 80, and I could see us down 120, and here we are down 105. So I pegged today, Sadnoff. I don't know how many days I can get in a row correct, but I will do my best here. More of the same. Inside chop, but you only got another day of it. Then you're going to get a little bit of a bounce.
Inside chop, a little bounce. Okay, Fred. All right, let's go to the boys. They're on waiting.
Let's go to the boys. Let's see those overtime boys. Who do we got? We got my three amigos. What's up, gentlemen? So good to see you.
It's a good day to be short.
Unless you're short the Dow.
Yeah, thankfully I am not.
He can ruin. I almost said a bad thing. He can ruin a good dream. Okay, I'm just telling you right now. You really can, Saznoff. You really can.
I'll tell you the thing that makes me the happiest about today is I was getting concerned that my exposure was starting to be a little conflicting with itself, because if stocks were going to come down and bonds were going to come up, maybe the dollar wouldn't be so weak on risk aversion, and that is not what we're seeing here today. The dollar tried to rally on this and couldn't, and that's encouraging.
Honestly, nobody cared. The dollar was, my dollar position, not one of my underlyings moved today. Today was all NASDAQ and nothing else mattered.
Yeah.
Unless you had a bunch of Dow stocks, which actually did quite well. But
here's my question, Sosnoff.
Sure.
Here's the question.
Sure. Go for it, Radigan.
So the best algorithm in social media, where does it come from?
China.
The best TikTok.
I'll play.
Thank you, Tony.
I'll play. I'm listening.
Thank you.
I know where you're
appreciate
going.
that.
I can read between the lines.
You see where this is headed.
TikTok.
Apparently, again, I only know what I've read on the internet, so who knows? But apparently, the best AI by multiple orders of magnitude, apparently, China.
No, the best free. Just don't confuse it's not it's a free verse. It's not better than. In fact, if you talk to AI people, it's not as good. It's just free.
Okay.
And different and more energy sucking.
Yeah.
Are we in a situation where the confidence of the American tech monopoly is being called into question by the Chinese? I guess is where I got a head shaker down here.
Then why
in
wouldn't
Hollywood
you? Squares,
the bottom left corner here, shaking his head. I'm sure.
Sure. Then why wouldn't you buy Chinese tech stocks right now? Because then that they seem to have access to the best talent.
It should be very telling that those markets did not rally overnight. Mainland didn't rally. Hong Kong didn't rally. Even Hang Seng Tech, their version of the NASDAQ, didn't rally. This was not about that.
I mean, I could argue that that's a function of market structure and the government and all that. That's not necessarily a reflection of the prospects for technology.
I mean, even Hong Kong didn't rally. The long arm
Hong Kong is China
Beijing
as
doesn't
of
meddle that
2019.
far.
Yeah, I think that the question we need to be asking is the market selling off because the AI bubble is bursting, or is the market selling off because the AI narrative has changed and the bottlenecks now, the companies with the moats, those are dramatically different than we previously assumed.
And is American technology bloated, arrogant, and incompetent by virtue of being a monopoly for decades?
Dylan, I would point out here that Amazon is trading at its lows from Friday. Amazon is at its lows from Friday. It's covered the gap. And Meta is going to close at an all-time high. So the companies that would benefit from the adaptation and the implementation, the application of AI, not picks and shovels, but the actual gold rush, those companies are doing fine today. So this is like a semi-story right now where it looks like maybe we overbuilt and we have way more computational power than we thought we needed.
So then is NVIDIA Cisco, a la, as of Cisco from 30 years ago, where the internet was going to be based on Cisco routers, and then, or Sun Microsystems routers, as my friend Tom might be able to recall. Call you Tom
the answer
for that.
To that is it's a little too early to tell, but did they just rip the covers off and expose AI for being overpriced? Possibly.
Yeah.
And is NVIDIA the sort of
Can I remind you all the Nasdaq's unchanged for the year?
Yeah.
For the month of January. I mean, we haven't gone anywhere. I mean, I mean, you're talking about a lot of doom and gloom here. Maybe the market's a lot stronger.
Listen.
Maybe the market's a lot stronger than we thought. We always talked about those strong 7 stocks, and now some of them have gone by the wayside here by trillions of dollars.
The equal weighted S&P just turned positive on the day. Right? This is not people getting rid of all their stocks. This is them having the wrong allocation within the stock market. The AI revolution is
stock market teaching them. This is the stock market teaching them a lesson. When stocks get too frothy, they come down. I don't know when. Sure. We don't know when. Nobody knows when. But when they do, they come down with a vengeance. Almost like Pulp Fiction, like.
That's not good.
Excuse me. Sorry, I didn't mean to chuckle. I'd never heard a Pulp Fiction-esque reference to market behavior. I'm trying to imagine. Is that like a Bruce Willis in the basement kind of situation?
Yeah.
Like that?
Yes, exactly.
Okay.
Exactly.
I had to do my mental Rolodex of Pulp Fiction.
Trying to figure out which piece of Pulp Fiction.
I got a funny anecdote about Pulp Fiction.
It's actually Samuel L. Jackson in his part in the movie with a vengeance, but we can talk about it another time.
All the same. Yes. There's a different.
Yeah.
You're going to say something, Chris. Sorry.
Well, I had a funny Pulp Fiction anecdote. When I'm a kid, I'm staying at my grandfather's house and he has HBO, and I see like the rated R for nudity. I'm like, I'm a 12-year-old boy. This is going to be good. And like, sure enough, it's Bruce Willis in the shower. So that was just not what I was expecting.
Blowing people's heads off. I mean, so how about this? How about buy NVIDIA? How about that? Nope.
I mean, if anything sticks out thematically in this, it's probably, and Chris, you and I talked about this earlier today, it's this idea that it's not that the AI future is going anywhere bad. It's that you maybe have too much capacity for what you thought you needed, and there was too much extrapolated into the price of things that now makes sense. And now we have to go through some sort of a reweighing of what that is. That's not earth changing. The internet didn't die after the .com bust. It was just a reorientation of where capacity really needed to be relative to where people overextended themselves. This could be the start of a thing, but it's not the end of a thing.
Tom, I got a request here. Can you say day one, please?
I like to call it day one on my own terms. I don't like when other people ask me to call day one. I'm not calling this as day one because in order for this to be day one, we would have had to close on our lows, and we closed on our highs for the day.
That's fair.
Yep, agreed.
Yeah.
All right, my friend, I'm going to take a quick 90-second break and come back. I got more Tasty Live after this with the Overtime Boys next.
Ciao, boys.
Ciao.
See ya.
Ciao.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last.
I didn't hear no bell. It's Monday, January 27th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan somewhere on the planet, here to take you through the next hour as we get ready for the rest of this futures trading day. I don't know if you're in New York or back in Milan, Dylan. But anyway, it was quite the day in these markets. A NASDAQ that was down over 5% at one point today because apparently we have a new Chinese AI model that's destroying U.S. financial markets. That's a headline from the future. We end up seeing the market pull back in here a little bit by the end of the session. NASDAQ off by 2.77% right now, cutting almost in half the day's losses. Same for the S&P 500, off by 1.37% as we flip on those charts. That was off over 3% at its lows earlier this morning, right before 6 a.m. Eastern. You can imagine my shock when I turned on my computer and looked at the charts and said, okay, well, where are we going with this today? China's trade war is apparently called off. We are not doing the tariffs against Colombia, but the S&P was down near 59.78 when I checked this morning. So it's been a 70-point recovery over the course of the session as far as I've watched it. Ilya, I suppose I want to start with you because you and I already had a chance to speak today, midway through the day, outlining perhaps reasons why maybe people are misinterpreting the scope and scale of this development here and why this development is so important. As we settle into the final hour right now, assuming there's not going to be too much of a significant price swing here, now up at 60.50 in the S&P, what do you make of this candlestick? What do you make of the day's news now that you've had a chance to digest it for a few more hours?
I think if we look at how bad of a move this was at one point intraday versus where we're settling, it's very difficult not to say, okay, well, the market kind of evened out, the panic eased. At the same time, I think you also have to look at this and say, ignore that wick. Would that still be a massively disappointing move if you're bullish? Of course. There's no question. So you have to take both of those, I think, ideas together and sort of arrive at, we've got a Fed meeting this week. We got a Bank of Canada meeting, an ECB meeting, a ton of data, be it Australian CPI, be it US and Eurozone GDP, be it US inflation. There is a ton of risk on the economic calendar, and asking the markets to close on their lows, even if that was their level of conviction ahead of that kind of event risk, was probably always a tall order. You're not going to get the markets front running that much event risk, especially the Fed, with conviction on any headline. Martians would need to land in Paris for the markets to forget that there's an FOMC meeting. So I think when we look at sort of what's going on here, I think we have to take the move seriously. We have to take this as something that probably has legs, or at least as a bias for how markets are going to interpret news flow going forward. But at the same time, I think we also have to look at this and say it's not all going to happen in one day. We're not just going to revalue the AI narrative in a single session. This is going to be choppy, and it's going to have up days and down days, and there's all kinds of event risk in front of us now that could obstruct follow through for who knows how long, maybe until the end of the week.
Dylan, you just shared with me the biggest single day market cap losses for any firms across U.S. trading history. At number 10, clocks in NVIDIA at $197 billion. At number 9, NVIDIA at $205 billion. Also at number 8 for $205 billion with NVIDIA. Amazon, number 7, $206. NVIDIA, number 4, 5, and 6. Today's sell-off, though, $465 billion. NVIDIA is 8 of the top 10 sell-offs in U.S. market history. The last one that we saw that was, the largest up until now, comes on September 3rd, 2024, when it was a $279 billion market cap loss. Dylan, what do you take of today's action here? This obviously is a potential game changer. I think it's a game changer for the space. The market says so as well. That's a quick 17% haircut for the most important single stock on the planet. What happens next?
Yeah, I mean, how do I summarize this? I think that the arrogance of the tech monopoly has been properly humiliated. I think that Jeff Bezos' point that AI will become a universal layer like electricity in all aspects of life took a giant leap forward as a result of this. So we're moving from the sort of if you have $100 billion, then you can be part of this. Or if you have a tech monopoly, you can be part of this. To AI is a universally available function where and obviously there's a lot of improvement. There's a lot of, there's a lot of criticisms that can be made of my sort of blanket statement there. But that where you're going is to a world where it's not about the AI or the chips for the AI, but rather it's about the data sets that support the AI and the application of the AI to things that have economic value in a universal surface layer across all of global society in the same sense of electricity. So I think it's a well-deserved humiliation for the tech bros who have been trying to basically gatekeep the technology. And I think it's a massive advance for everybody else to see it. Because again, you show the Meta chart, for instance, or you mentioned another one. I would say that a Meta is a classic example of somebody who's trying to apply AI. They're not the chip maker to power AI. They believe that they have the data sets, because Meta is the data king of the internet, that they have the data sets to train the AI. And so to the degree to which AI is more accessible and efficient and functional, then today's an incredibly profound positive day. To the extent to which you are a greedy tech bro monopolist, you've been appropriately had your pants pulled down in public. So I think it's probably good for the world, good for most companies that will benefit from cheaper, easier to use AI, and an indication that maybe some of our friends in San Francisco may not be as genius as they would have us all believe, but rather that they are hiding behind what has been an ongoing bloated monopoly.
So I find it really interesting that over the course of the day that Meta and Amazon are now up. Meta closes up 1.91% at a new all-time high. Amazon, with its AWS Amazon Web Services, closes up by 0.30%. That is a hell of a candle here, having hit a low of 225 earlier in the day. And this is a closing high, technically speaking, for Amazon. Amazon has something what's known as Web Service EC2, which is their elastic compute cloud. It's one of their more well-known services. They have the ability to have computer-intensive AI workloads now that can be done in the cloud. If you can run these large models, right, you don't need $100 billion as the ante at the table, Dylan. You only need $10 million. That's a difference in scale.
And I just feel like it opens up basically, I feel like it's a mash of it. It makes sense to me, for instance, Meta. I don't know if I'm Amazon, but anybody who has a lot of data and is really good at using data to create environments wins to moving the order of magnitude massively lower in AI. To your point.
If phase one is picks and shovels, right? These are the companies laying the groundwork, offering the tools, the infrastructure needed to actually do AI, the computational power, the storage, et cetera. Then phase two is the actual gold rush, the application boom. And those are the companies that are going to be able to profit from the proliferation of AI-driven goods and services. But what's so important about this whole story is that it's clear AI, the charts are telling us the companies that would do okay in phase two, they're not suffering today. They got hit with everything else, but then they recovered their losses by the end of the session. It's the phase one and phase one only names, your semiconductors, which, see you later calls. Nice knowing you. 280 calls. Now, all of a sudden, the people laying the railroads not necessarily making the money anymore in this environment. And that's a really important distinguishing factor of how today breaks down and shakes up. For lack of a better phrase. So what would do well in phase two? I mean, if we're thinking about how they're going to monetize AI applications, I'm thinking about cloud providers across the board. Microsoft takes a little bit more of a hit today because of its association with OpenAI, but basically all US session, it is running higher, and we are closing higher than we did back a week and a half ago on January 17th. It's higher than we closed the day after Martin Luther King's Day last Tuesday. So Microsoft's up week over week still. Like, we have to put today in context. Google, likewise, they obviously have a ton of AI infrastructure already built out, although there's been complaints that they haven't been doing things in the correct manner. This probably adds to it. But they have plenty of AI infrastructure. They have their TPUs for their large trading models. They have SaaS and PaaS offerings that offer AI-powered productivity tools. There's Oracle, which got crushed today, I think. Is that worth pointing out here? And there's some rumors that they are in the TikTok game right now, according to Polymarket. Oracle and then Larry Ellison himself as an individual are listed as the top two front runners to buy TikTok and house the ByteDance algorithm within Oracle itself. And then there's IBM, right? Thinking about these big cloud providers, IBM down only by 0.28% today. So Dylan, I think it's really worth, if you were in SMH or NVIDIA or triple Qs or NQ, you got railroaded today. But if you were in a low volatility product, low volatility S&P, like the S&P 400, was up over 1% today. Equal weighted S&P 500 was up by 0.05% today. Not bad, all things considered. I think bears would do well and bulls would do well to be a little bit more selective here moving forward. We talk about a stock picker's market. This could be one where we see a lot of chop in the indexes, Ilya, as we try to work through and digest whether or not this is just NVIDIA on discount or this is now the sea change. That means NVIDIA is on the path to becoming a Cisco or a Sun Microsystems or an Intel. But that means market cap risk or the concentration risk needs to be distributed for a little while. And that could be painful at the top line, which, Dylan, you point out that the stocks are flat year to date so far. I guess we should tap on the seasonality board. Over the past 10 and 20 years, stocks are flat until the middle of March before they choose a direction. So maybe this isn't all that unusual. Ilya, I'll kick it to you. Have you thought more about our conversation on Futures Power Hour today and our review of DeepSeek?
Indeed. I mean, I think there's obviously a tendency here to react strongly, and we can see it in the price action. And before we go and we start to extrapolate a gazillion and one things from what the market might be reading in that price action, I think it behooves us to be careful because there's already an absolute sea of generalizing out there. And the generalizing isn't only about the quality of the models, it's also about the reality that these models are going to compete on anything like a similar playing field. An argument that was very eloquently made by one Dmitry Zabelin of Pantheon Insights that we used to work with in our prior life, Chris. He's made the point that there's basically a three-legged regulatory universe in AI where the US and China are going to try to set different rules, and Europe will sort of play the referee. They don't have the competitive technology necessarily, but they oftentimes tend to be sort of the California to global regulation. When California, for example, sets emissions standards, a lot of the country sort of stuck following. There's something called the Brussels effect, which sometimes means that when the EU goes and sets a big rule on something, they guide the way that governance goes. But first of all, nobody has to listen necessarily. And secondly, the key here is that the thrust of intent in regulating these things is very different from Europe to China to the US. What we are regulating for and what the end outcomes are is going to be very different. And that's before you get to talking about the differences in the models. The DeepSeek model is fast, but more energy hungry, especially as queries build. It is not as wide in its application, but could be very useful to creating a lot of little models for targeted implementation. So to your point, could be much more about getting AI operational and getting an ROI on it. So these are all conversations that are going to take months and years to unpick. You can't extrapolate anything like, oh, well, the U.S. is behind now, or the U.S. is not behind, it's still ahead, or China is this, or China is that. None of that matters here in my mind, because none of these answers are anything like close. The really important thing, I think, is more so the markets had extrapolated a worldview, and that worldview no longer makes sense. This is not about AI suffering a setback, or the US suffering a setback, or China leapfrogging anything or not leapfrogging anything. It's about, if you thought that there was a glide path to XYZ GPUs built by NVIDIA in 10 years' time, you have to adjust that path.
Yeah, we effectively just learned that we can achieve the same output with a lot less. Right? That's really the leap
really
forward
it.
here.
Although it's interesting that a hedge fund created the most recent sort of headline version of AI.
And by hedge fund, we of course mean front for various activities of various stripe in a country where the means of production are not privately owned.
Okay.
But regardless of the structure, they could easily be short NVIDIA.
Let's take a step back. I think what you're bringing up, Dylan, is important. So for some background here, Dylan, right? In 2019, this guy, Liang Wenfeng, and if I'm mispronouncing that, excuse me, he starts a hedge fund called High Flyer. High Flyer specializes in algorithmic and AI trading. In fact, it only does AI-based trading. And so they start building out a lab internally to help with their trading models. And they can't get any funding for it, so they have to fund it all internally themselves. They ultimately spin it out into DeepSeek in May 2023. And now they have this significant achievement moving forward. Dylan, you were saying like this just came out from a hedge fund, and so it sets up an interesting dynamic where was this hedge fund that owns this AI model, short NVIDIA, which
and maybe it's easier to make a $500 billion short NVIDIA than it is long DeepSeek.
it certainly sets up an interesting dynamic. If you guys don't mind me getting on the soapbox here for
meanwhile, a nonprofit is selling an expensive AI in America, and a hedge fund is giving away AI in China. So, I mean, what do we like? What does a label mean? What is capitalism? What is communism? What is China? What is America? What are we talking about?
Which version of the multiverse are we in here, Chris?
Dylan, I wanted to bring this up on overtime today, so you have to forgive me as I finish wrapping this up because I forgot to do it earlier. But it was just basically, Ilya, I pulled over the slides that we were talking about earlier today, how DeepSeek did it. I figured it would be a good primer just to share with people here on overtime as well, figuring not everyone watches Futures Power Hour. And now that I have this ported over to the overtime slide deck, we can actually share it here. Okay. From picks and shovels to the gold rush. That's what we're supposed to be sharing here on overtime. Okay, so what do we mean by picks and shovels to the gold rush? So Dylan mentions that we have this new model that comes out last week. And if you notice, if you actually go to the DeepSeek white paper, it's released on January 22nd. It's not like this came out over the weekend and the market was panicking today. This came out last week, Wednesday. You were able to read it. It's been floating around. People have been talking about it for days. The host of Odd Lots of Bloomberg, Joe Weisenthal, he's been tweeting about DeepSeek since last Wednesday night or Thursday morning. Okay, so why are financial markets catching up right now? That's a good question, right? Let's look at what happens here, though, with the models, as Dylan points out. The output for DeepSeek, the performance benchmarks, are basically on par with ChatGPT 01. The higher the number, the better here, according to this group that does these sort of benchmarking tests, artificial analysis. Why is this such a difference? Because to use 01, it costs a lot. It costs $15 of input per 1 million tokens. It's costed about $60 an output for 1 million tokens for ChatGPT 01. But for DeepSeek, it's 55 cents for 1 million tokens input, and it's $2.19 for the output. Totally different scale of economy. So if you can get the same type of performance for a fraction of the cost, what are we doing? We've then built out the GPUs for a world that we don't need them for. We have way more roads than we needed, right? We don't need to drive tanks down the highway when we all have those little smart cars. So the highways are far too big. Do we really need to build more highway now? We probably don't need to add any more lanes. We can cool off for a while.
And can we skip to the Bezos AI is electricity? Can we skip to the use of data to extract value from AI as opposed to the road building?
That becomes the significant question. I think it's really meaningful that you see a ripple into the bond market today. Ilya, you mentioned this earlier, but you have all these narratives coming out of the weekend, tariffs and actually economic data and news out of China with respect to stimulus, and this DeepSeek news that's finally being digested by financial markets. It pierces the zeitgeist. But bond yields are still lower. So before we even talk about how this DeepSeek team did it, why do we care that bond yields are lower at the end of the day after all of this?
I think if you are talking about this being something that says, you know what, you don't need $1 gazillion if what you're looking for is an AI model specifically tailored to your little industry, doing your little business, you don't need to go and buy all of Chat GPT or all of Claude or all of whatever. You can have this narrow thing that is cheaper to implement. You might be using it in a more targeted way because the cost per query is much, much higher than what you're getting elsewhere. But at the very least, you could get off the ground faster. So you could start to think, well, if implementing some variety of AI on a budget is enabled by this, it has deflationary or certainly disinflationary implications.
Those implications being, we thought we were going to spend $100 billion on this when we only need to spend $1 billion on it. And so that's $99 billion of economic activity that's not going to take place now or could be diverted elsewhere, quite frankly. What will most likely happen is these companies will say, oh, we can do more with less. Okay, let's go give it back to the shareholders, which not a problem for people who want to be long the market long term. But we don't need to have all those jobs then building out these data centers, right, to a certain extent. And you don't have that demand for energy moving forward to a certain extent because we don't need all that electricity. Does anyone know off the top of their head the nuclear energy ETF? Because I'm trying to rack my head on it right now. I'm forgetting. It's NLR. NLR. Nuclear energy today takes a bath, down 11.37%, right? Natural gas takes a bath, down another 3.2%. It's in crude oil. Crude oil, down 2.06%. We don't need as many data centers. We don't need as much energy to get to the future we want. So today's market is, the bottlenecks are not where we thought we were. The companies that we thought had moats because there'd be infinite demand for these goods into the future, there actually may not be infinite demand, and the moats aren't as big as we thought they were. Actually, the bottleneck isn't here in the story. It's now moved to here.
Well, and this is the sort of notion that what this is not a change in leadership or a change in prospects or a change in anything necessarily. What it is a change in assumptions. That the one thing you can say about the consequences here is that people came out and said, if my going assumption was that everybody was going to need an NVIDIA chip of a certain stripe and a certain caliber and that they were going to get to name their price, and people are going to have to buy it, that assumption needs moderating. Because there is a universe of applications that don't need that level of chip strength or chip power, as it were. Because you can do this cheaper. Not better, not broader, but cheaper, at least from an implementation and a build-out perspective, more expensive in the energy sense, but that comes down to use.
It's so fascinating about today's moves when a lot of biotech companies jumped on this. Small ones that we would never talk about here, but like Acro, Acaro Therapeutics.
Perfect example of a targeted implementation on a narrow scale.
Or like GG, Chinese mobile phones up 150% on the back of this news. There's names like this across the board. We could go to DWTX, for example.
But doesn't all this go to the sort of application of like, this is the application premise?
Exactly.
Now the cost of application has collapsed, so therefore the accessibility is expanded. And so we've moved to what can biotech do with it? What can, we need, you're kind of laying it out. You need less electricity, on and on and on.
The future arrived a lot. I mean, I think what it's telling us is like the future has just arrived a lot faster than we thought. And that doesn't mean
it's here. Now make use of it. Who has the data to use it to create value, as opposed to who has the money to create it at all.
Bingo.
And also what implementation looks like. Like how fast can you get to putting things in place, and who is it accessible for? If your accessibility price tag used to be set by NVIDIA, that gives you one universe of applications. If your accessibility price tag is now set by the possibility that you could do something targeted with a DeepSeek style of system, which because it's open source is going to get ripped a gazillion times over and made and remade. Now it's a different set. It does sort of raise the question of, does this really change the implementation costs of the real transformative parts of AI? That is to say, you can make the chips that do remote surgery, but they're very, very high end and very difficult to make and very high precision and very powerful. But that's where the big impact is. Whereas you could make a chip that syncs your iPhone with your toaster, but that's a different level of technical expertise. Like, yes, you can make that chip. And you can say that China makes more chips than anyone, but it's mainly of the toaster iPhone variety. The great breakthrough here could be democratization of some kind of AI access, not transformational AI access. But of course, that's a transformation on to itself. If your toaster, for example, is smart enough to know that it's overcooking your toast and is dynamically adaptive, the world runs on consumption. That's the thing.
So I was looking into some of the funnier, developments today. For example, this is a company with the ticker YYAI, Conexa Sports Technologies. They make such hallowed items as the pickleball launcher, portable paddle tennis ball launchers, slinger launchers, a ball launcher built into a transport wheel trolley bag. They also purchased a Chinese matchmaking company in November. Right. So they have all those data sets now. Dylan, the stock is up 34% today.
Data becomes the dominant value proposition, not compute, basically, as of today. Or whatever, as of the past week.
But we also have the most compute, which is this is the other side of this, right? The one phrase that's been passed around all day today in discussions about this has been Jevons paradox, which Satya Nadella, the Microsoft CEO, tweeted out today, a link to the Wikipedia page for Jevons paradox. So in 1865, the economist William Jevons notes that the technological increases that we're seeing from coal production are actually leading into an increase in the use of coal rather than a decrease in the use of coal. Basically how if you buy a car and it's more fuel efficient than your last one, you're actually more likely to drive than less likely to drive. And therefore, despite the fuel efficiency going up, you're going to be polluting more, not less. And so the idea here, I think what the Microsoft CEO is trying to say is, hold on a second. So the supply of AI just went up through the roof. The supply went up so much that demand is actually going to outpace that moving forward because it's going to be so much more accessible here. In any event, Dylan, I haven't placed any trades today at all because I'm trying to figure this out. Like, I'm a thematic macro guy who likes to trade in momentum trends. And when we get the White House announcement last week, it's wonderful. It feeds the narrative that AI build out is here and it's ongoing. And the development of this model tells me that, yes, the infrastructure build out may take place, but we don't need it. We already have all the compute and tools we need, and we've been looking at this problem perhaps the wrong way. And why do I say the wrong way? Because clearly they were able to achieve a breakthrough in the modeling that OpenAI couldn't do, to quote the first Iron Man, Tony Stark did it in a cave with a box of scraps. And that's kind of what DeepSeek did here because they faced those significant export restrictions on the significant GPUs, the H100 GPUs. But apparently they optimized their existing NVIDIA H800 chips, which the CEO of NVIDIA, Jensen Huang, went so far as to confirm today. He said midday today that the chips that were used in this breakthrough, none of them were used that circumvented the export restrictions. So that almost reinforces, if you notice, NVIDIA's share prices fell thereafter those comments. It reinforces the notion that maybe we don't need to be the $100 billion market cap company, Dylan, in order to get access to this modeling. We can bring it in-house at a much cheaper cost, train it on our data sets. We can actually get AI working for us sooner than later, and we don't have that barrier to entry that we just did this time last week. That's incredible. So what did they do? They didn't need the fanciest hardware. They didn't need the best GPUs. They just made the software smarter that ran the GPUs. They also trained the data more efficiently. They compared this to Meta in their white paper, and they mentioned that Meta is looking at everything, right and wrong. DeepSeek is only focusing on the 5% that's correct, and they're only training their data on that. They're not making it do the work on the other 95% of junk. So by training it more precisely, they're actually getting to the goal that they want to get to sooner than later. They also have this compression engine, which I said earlier today. I'm not even going to pretend like I know what I'm talking about here, which sometimes I do that. But in this case, I don't know what low-rank key-value joint compression is. Apparently, it just makes compressing data faster, smaller memory footprint, faster results, lower costs. That's a good thing.
Sounds MP3 versus WAV file or so thematically.
Sure. I couldn't tell you.
Sounds
smarter
like
learning.
it. Sounds
The
like it. Far
the
be it from me to claim any expertise.
The reinforcement learning is the most interesting process of this, and they mention this right up in their abstract. They note how when they're talking about the DeepSeek R10, the reinforcement learning is really what kicked this into high gear. And if you play around with DeepSeek and you look at its reasoning tokens, you'll see that like it tells itself like, oh, is 9.9 bigger than 9.11? Well, let's like break it down. 0.9, is that bigger than 0.11? Well, that's really 0.90. So is 90 bigger than 11? Yes. Okay, but can we also do this in, fractions? Is 9/10 bigger than 11/100? Yes. Okay, so now we have two layers of confirmation that 9.9 is bigger than 9.11. I can say confidently that this is bigger than. So you're seeing it like work through its reasoning chains, and because now it is reinforcing its learning through other methodologies, is actually becoming more confident quicker, which is really cool. But the point here is now, right? It's done these things. It's done more with less. It's built Iron Man Mark I in a cave with a box of scraps. And so now everyone's wondering, what do we do with all this stuff that we just have here? Meta has an emergency team, war room put together. I think that was a really smart thing to put out over the weekend, that they were taking it seriously and literally, because now you have a stock that's at all-time highs. I think if you woke up this morning and saw Meta at 628, 633, you said, oh God, this is it. This is the end, folks. And now we're $30 higher. So there's a lot to chew on here, but today feels like it's we finally maybe crossed the threshold.
Yeah.
I've been talking for a while though, Ilya, and I'm curious about, after having repeated a lot of things now that I said at Futures Power Hour. What am I missing? What are we missing? What are we overexcited about? Curb my enthusiasm a bit.
Well, I think it's not about curbing your enthusiasm. It's about, what do you do once you've identified kind of what you're looking at? If what you think, or at least what you think you're looking at, if what you think you're looking at in the standstill in Chinese markets, which did not rally on this news, in the response, violent though it was, on U.S. markets, sort of the way that it played out, and you think, okay, this is not about anything other than we ran too far on the build out. This was always inevitable. We've had exactly this happen with railroads and with telecoms and with, frankly, the U.S. itself, if we talk about assets linked to the initial 13 colonies. So this has happened over and over and over and over and over and over and over again. This is how these things tend to go. What is the investable thesis there then? What do you do with that information? And I think, as ever, you have to get back to the bottom line. You look at the price action and you go, okay, obviously the tech-oriented indexes, both the S&P and especially the NASDAQ, did not like this. I think you have to believe that that is an earnest response and not attempt to bottom fish it. I think you also have to look at the immediate implications for risk reward. And I think trying to pick individual names out of this bunch is very, very difficult, because nobody knows. And it's knowing, more importantly, that those individual differentiations matter in the near term. Because if you have a big risk-off wave now, as all of this is reconsidered, those individual differentiations won't matter. And so when you, at least near term, from a tactical perspective, they'll matter eventually. But that may not make you money on a 45 DTE cycle. So when you're looking at this in practical terms, I think you have to be looking at the NASDAQ and saying, okay, this was a big reversal. There's a lot more room on the downside than there is on the upside. Now, where can I get the risk reward on this to make sense? And it's not here unless you've been short already. You're kind of in the middle of things. But from a practical perspective, I think you look for opportunities to be a seller in this environment while the dust settles over days and weeks and months. The question, as ever, is when and what the price is. And to me, if you've been short, you hold. If you're not short, you don't initiate necessarily here. But if you're long and you're not looking at bounces or any bounces this week as opportunities to divest, maybe think again.
Yeah, I find it fascinating that when you look across the board about companies that would be able to apply AI tools at scale to data, those are the ones that are doing well today. It's not that just AI became cheaper or more accessible. Intuitive Surgical, they do AI integrated robotic surgery. They were down 1.81% today. But IQVA or IQV, Kivia, I guess is how you pronounce it. They use AI to help with clinical trials, to process data sets coming out of clinical trials. They, on the other hand, were up by 1.33% today. Companies in the payment space that have already announced that they're using AI to detect real-world fraud, guess what? Looks like we're going to be able to detect fraud better, cheaper, faster, at more scale. MasterCard, up. Visa, up. PayPal, up. On a day where we're PayPal, up for effect, where we're getting so many names taken out to the woodshed. I think bears need to be really careful here, just like bulls need to be.
Yes.
But bears need to be really careful here not to misread what's happening in the headline index and getting too ginned up like we're getting a 1929 style crash, the bubbles burst. This feels very much like a, oh, moment. I realize I don't need to own NVIDIA anymore. That's part of the story's done. I have to turn and put my money into things that will benefit in the next chapter. And I can get those dirt cheap today because people are automatically selling everything down at the open. You know what? I can be a stock picker here today. I can go through and I can find the things that have applications of AI in data sets. Those are the companies that are going to do really, really well. It's not necessarily hardware, right? Honeywell, they make AI hardware. That's doing pretty well today. Siemens is not in here. Let's go to Rockwell Automation, right? This is hardware. It's down 1.53. So the ones that are really, really, really outperforming, they have some pre-announced AI infrastructure in their company. They're using it for logistics. They're using it for data management. FedEx up 3.06% today. There is no world in which FedEx is up by 3%, and I'm going to be sitting here saying the world's coming to an end because FedEx is at the intersection of global commerce. Today is one of the more unique days that we've ever seen in the market. Dylan, you pointed out with the chart. Biggest market cap loss for a single stock in history. But it's more than that. Phase 2 begins now officially.
And it's like more fun now in the sense that now you have all these biotech names, or you probably have physics company, materials research, advanced manufacturing, all the medical applications are massive that everybody loves to fantasize about, which is why you have the biotech. You have the materials universe, spaceship materials, all these sorts of things. And then you have all of the sort of calculations that exist in the financial and risk world. And instead of sitting here saying, oh, well, one day we'll have enough compute that we'll be able to do all these new things with biotech research or all, down the list of all these data applications. Meta, I think, is a great example as well because they're the data king. I think it's thrilling to move to that point. And now it really comes down to who has the data, which is actually why I think Meta did so well here, because anybody who's familiar with the internet and data knows that no one is more competent in acquiring and exploiting data than Meta.
I suppose, Ilya, I have a list here of all the data companies that we should be looking at. But before I pull it up, give me some more thoughts on today's general market action in the context of the Fed meeting on Wednesday. Tom always likes to talk about how he feels better being bearish going into a Fed meeting when the market's kind of trading up into highs. We've now reset the table where we were a week ago, right? Where does that leave the balance of risk for Wednesday?
I think the most sort of the most acute impact from what we see here today on what was going to be a forgetful Fed meeting is that it's no longer forgetful. Because as we said on Futures Power Hour earlier, the nerves are raw now. And the markets are going to look for things to extrapolate and look for headlines. Now, on one hand, that means that because the Fed is likely to be broadly dovish, that maybe the markets find some soothsaying. We know the Fed, though, is going to be broadly dovish. That's not going to be a shock to anyone. That's been priced in for ages now, so there's no big market-moving implication there. Maybe the market finds a little bit of hopefulness there in that it's not worse than expected. But this is just the thing. Maybe it is worse than expected and the Fed does nothing. Because 97% chance being priced in here that the Fed doesn't move on rates. There is no update of the SEP this time, the Summary of Economic Projections. It comes down to the tone of the statement and what Powell says at the press conference. And I think the press conference really is your potential for fireworks, because he's going to get asked most probably what he thinks about the president's pronouncements, about knowing more about monetary policy than the Fed, and of course favoring lower rates, because everything we know about the Fed since essentially the end of the third quarter, the beginning of the fourth quarter, has been they think it's not as dovish of a path forward as they thought maybe in August. So as we look now, we see a Fed that's backpedaling on rate cut intent and a market that's questioning whether we'll even get to this year. So with that, you get the possibility that Powell is asked, you know, if the president wants you to cut rates, would you even consider that input? And we know Powell gets very, very bristly around things like this. He tends to answer quickly and sharply and in the negative. So we have the possibility for the markets to kind of start to freak out that maybe monetary policy starts to get spicy around a power struggle, maybe, and what that would mean at this very delicate time. And that's a reason to be panicky as it is. Now, maybe that wouldn't ruffle any feathers on a regular week, but with a lead-in like this, where the markets are obviously shaken, there might be a search for the kind of thing, and the sensitivity might be elevated for the kind of thing that gets things more spooked. So it wasn't going to be a big deal this week, but maybe it is now.
I can't tell if the Fed meeting just took a big step lower in importance or was ratcheted up in importance. Either way, we go to the Z5 contract here. We can see that the odds of a rate cut in 2025 have jumped in recent days. Today was a pretty significant move, about 9 basis points. So over the past week and a half, we've seen a full rate cut added back to the board. That is certainly something that we just can't dismiss here. Dylan, going back to the data side of this, as we think about the potential evolution of the AI narrative here, there's companies that are doing well on the data front. We have to think about data aggregators and monetizers. And these are the companies that control, collect, generate the vast amounts of data that are high quality. They're essential for training the AI models. You want to think about firms that are positioned to that have the data sets that AI could develop that would give them the edge, right? Why does this matter? Why does data matter? Just take a step back here. You know, you need to train these AI models. You need to monetize them. You need to find ways to monetize them. Firms can license their data, for example, sell insights or build AI-powered solutions. But by having a proprietary data set with a lot of information in it, that has a lot of value. So Meta, with the data set that it has, affords a lot for training. But what kind of companies would fit this criteria? For data analytics and cloud companies, company like Snow, for example, cloud-based data warehousing, it was up by 0.86% today on a day when the NASDAQ was down by 2.79. You could go to a company like Splunk, SPLK, which, despite being a little bit softer during the course of trading today, ultimately closes up at a new all-time high of 156.90 here on the chart. We've already talked about Meta and Amazon. You could look to S&P Global, quite frankly. This is a financial data provider. S&P Global today had a pretty good session, up 1.34%. How about friend of the show, FactSet? We talk about their earnings insight report every now and again. FactSet was up by 1.8% today. They aggregate financial and market data, going through various, like Verisk, focused on insurance and energy data, VRSK. This was up 2.34% today. I obviously don't know if this is the right answer. Maybe we're correct that this is phase two. But I think we need to really carefully look at the tape and look at what companies did well and did not do well on this clearly very seismic day. NVIDIA doesn't lose a fifth of its market cap or close to it, and we don't call that a seismic day. But what companies stayed above water today? What sectors stayed above water today? The banks stayed above water today. Banks are up 1.13%. Banks have been leading the way this year because the economy's strong. Consumer discretionary was also up today. Another foundational part of the bull market longer term. When discretionary and banks are doing well, things typically go well. And granted, tech is not part of that basket right now. You usually want to see tech as part of that leadership group with the moves in NVIDIA today. Obviously not the case. XLK down 4.87%. SMH, my sweet prince, you were down 9.83%. But outside of this very idiosyncratic thing that's happening in tech itself, where leadership and those in charge may be changing, we're passing the baton to the next leg of this revolution. The stools, the legs that the stool of the bull market stood on, this early sector rotation stuff is fine. I'm personally not changing any allocation today. This is a really crappy thing if you have short-dated options or you're getting on the other side of the decay curve. I still have 40-odd days to go until I need to even look at something like rolling. So I'm perfectly content to sit on my hands here. But where we put our money moving forward, if you're going to be long deltas, may not simply be, do I want to be long the NASDAQ over the Russell? We may need to look below the surface a little bit more and find specific ETFs and sector balances and long-short opportunities to play the rotation, because it could be a lot of nasty chop in the indexes while we work through this period of digestion. Ilya, it's not just the Fed. It's not just the Fed this week. We also have the ECB coming up. We'll talk more about that tomorrow, though. But what are your thoughts on FX here after this Monday of price action?
I think taking your eyes off the carnage in equities, the one thing you find is, as we've been talking, you had an overcooking of the dollar and of yields on the upside. That adjustment continued today. So bonds were higher, and although the dollar tried to make hay of the risk aversion, it ultimately didn't. It managed a little bit better against obvious kind of risk on high beta FX like the Aussie, but on the whole, the dollar is little changed and a little bit lower depending on where you look. For example, against the yen. Not surprising with the bonds doing what they're doing. So I'm looking for the dollar to continue to backpedal. I think, as ever, all the risk was on the side of the hawkish rethink got too far. The moment you started to question whether you wouldn't get any more rate cuts, because a Fed that goes from a very few rate cuts to no rate cuts is a very big leap, and there is no evidence of a full head change from the Fed. So once you got there ahead of CPI data last week, it seemed like you ran out of juice on the bonds going lower and on the dollar going higher. So, and of course, since then, we've seen those things moving around and coming back in, even sort of whether you have up days or down days in equities the past, let's call it 3-4 days. So with that in mind, I think the path of least resistance remains. I'm looking for the euro not to get too stung by the ECB this week because the cut is widely expected, as is what there is to follow. The situation from the Bank of Canada, in fact, might be more interesting. They're expected to cut, but they're still struggling with the U.S. economy's booming dynamics not spilling over. And so we'll see what they say. That's an interesting barometer for the world at large because, as ever, we have one big growth engine that's working. The Eurozone, despite some improvements, is still very sluggish, and China isn't anywhere. So with that in mind, it would be nice to see when U.S. growth is going to start to spill over to the rest of the world. It's not obvious that it is, but Canada is a good test case. That'll be interesting to watch. I think the Canadian dollar still looks like something I'm going to be holding long into that announcement. Other than that, GDP data out of Europe after a very jumpy upside surprise on the PMIs last week. That could help the euro with a relief rally if that errs on the upside and suggests there's basically all the cuts from the ECB that one could really expect already in the market.
Dylan, what are you looking forward to most this week in markets? Do you think the AI story matters more or the Federal Reserve?
I'm a broken record, but I think inflation matters, and I still think inflation matters the most, and so I think the Federal Reserve matters the most in terms of the degree to which they offer any insight on inflation in the era of a Trump presidency, whose primary characteristic is just a higher degree of volatility, and so there's the possibility day to day of any number of outcomes that we all are familiar with at this point. And I think that the greatest barrier to those outcomes is the rearing of some sort of inflationary pressure, which at this point seems to be pretty benign. But I do still think that that's the biggest issue. And because it's a Fed meeting this week, I think that's the most significant thing. Obviously, the most significant thing for NVIDIA and maybe for chips in general is the AI DeepSeek situation. But again, that's a two-sided coin where I could argue, it's an easy argument to make that it's a massive benefit to the entire medical research industry, for instance. And so that's sort of, there's winners and losers with the AI situation, but everybody loses to to higher rates of inflation. And to the degree to which the Fed says anything about that, or the tea leaves of their rate cut prognostications, all this jazz, is, I think, the most significant thing, particularly in the era of a Trump presidency, although honestly, it wouldn't matter who the president was. Inflation is still a massive risk to anybody's policy agenda.
If only to talk about the perils of single stock picking here at the very end of the show. Last week we were talking about various power names, and we noticed that Vistra Energy was one of the top performing stocks in the Nasdaq, or in the entire stock market last year, outpacing the S&P. And so, okay, what companies fit the profile like Vistra so that we can look for some long opportunities in? I'd like to thank the good folks at Morgan Stanley for saving my calls in Exelon Core, one of those companies that we chose last week, because this is a power company that, for all intents and purposes, should have been treated like one of the other names we looked at, Chegg, Constellation Energy Group, which is down 20% today. But this is why I prefer to play things for the ETF and the indexes longer term. You pick the wrong name, you get screwed. I think stock picking is going to be very important here moving forward. So whatever Morgan Stanley did today to prevent EXC from being taken out with the rest of the bathwater, thanks. Could have made today a lot worse. Today was just bad, but it wasn't as bad as it would have been. Not everything was underwater, Elliot. It's nice when this continues to go up, but we'll see what tomorrow has in store, because overtime is now out of time for today. Hopefully tomorrow brings more excitement. For myself, Chris Vecchio, Ilya Spivak, and Dylan Radigan, we'll see you in 23 hours time. Good luck trading. Stick around though. Macro Money's up next here on Tasty Live.
See you there, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
And it is a bloodbath on Wall Street today. Equity markets taking a huge hit, and that's before we get into the big story on the macro front for the week. But of course, that's exactly what we're concerned with here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to take a look at how the markets did last week. We're going to take a look a little bit at how they started this week, which of course was not the most auspicious of beginnings for risk appetite, to say the least. And then really focus on what comes next, because the violence with which Wall Street opened this week might yet pale in comparison with what awaits ahead once the big splash macro news flow really enters into the picture, especially since this week the focus really is on the market's favorite thing to worry about. That is, of course, monetary policy, especially in the United States. So let's quickly unpack what kind of a lead we come into this with from the prior week and get into the meat of things. S&P 500 managing a small gain last week, 1.7%. NASDAQ up fractionally as well, 1.5%. Interestingly, last week, we can see those gains, while they are the second consecutive week of gains and they give us a return back to December's swing highs in the major indexes, which of course we have since retreated from over the past 24 hours in very vigorous fashion. We did not see last week that those moves were motivated by anything on the macro front, at least not seemingly so, because last week's macro calendar was very quiet, and we did not have the kind of strong impetus from that narrative. To wit, we can see 10-year barely moved, 0.1%, 2-year only a touch lower on the yield there, 0.5%. The real big standout last week as far as macro relevant assets was the US dollar. It had a significant sell-off, in particular against the euro. Note the more yield sensitive yen barely changed, 0.1%. Gold had a telling pop last week, second consecutive week of gains, 1.1%. And crude oil continues to march to the beat of its own drum, down 3.5%. But there really wasn't macro consistency. Gold was up, but then again, the dollar was weaker and yields were a little cooler, so that makes sense. But none of that seems to comport with stock markets, which leading into last week really preferred to have a more concerted move lower in yields if they were going to be motivated higher. In fact, we can see the week before last, a much stronger rise in equities, almost 3% apiece for the major indexes. And what that took was a move in excess of 2% on the 2-year and almost 3% on the 10-year, but a concerted move lower in yields. That was not what happened last week. And so we seem to have a bit of continuation, but equities seemed much more robust than the macro story's ongoing follow-through appeared to justify. And indeed, there wasn't much event risk to speak of. Things are very different when we start this week. And of course, the first thing to keep in mind is that equities very much fell out of bed. Now, they were much lower than they closed, but we have the S&P here down about 1.3, 1.4% on the day. NASDAQ down 2.76%, looking at the futures. Dow up a touch, having been down. Russell down almost a full percentage point. And the gain for the Dow here coming to about 0.7%. So, needless to say, a much more violent start to the start of the week, and that's before the macro enters the picture. The story there seemingly linked to the appearance of a true competitor to U.S. dominance for AI infrastructure, this coming from DeepSeek, a Chinese firm. And the main story here seemingly that if the markets were extrapolating a large-scale AI build-out that would disproportionately favor one kind of set of suppliers, that maybe those assumptions are incorrect, because now we have a competing model that is maybe as good as the US-based ones at targeted tasks, is cheaper to deploy, but perhaps more expensive, at least in terms of energy cost, to run. That's a conversation that's going to be unpacked over the weeks and months ahead. But one thing we can say is, if the implication of the pricing in the S&P and in the NASDAQ until this adjustment was, there will be a very steep on-ramp of, let's say, more NVIDIA hardware for the world to buy, maybe that on-ramp isn't quite so steep. Now on to the macro risk. We begin relatively benign in Australia. The expectation here that the consumer price index, the headline quarterly number, is going to come into 2.5%. That would be for the fourth quarter, and it would also be the lowest reading that we've seen since the first quarter of 2021, so almost 4 years. Now, that might set the stage for a more dovish RBA, but how much more dovish is, of course, the critical question. And if we look at the way that policy expectations are implied here for the world's major central banks over the course of this year, you can see here is the RBA kind of in the middle of the pack. This is 100 basis points. This is 50. We're sitting somewhere around 63 or 65 basis points here for the RBA, implying that we are going to get at least 2 cuts this year, and that the likelihood of a third one is somewhere around 40%. A very similar story to what we have from the Bank of England, a very similar story to what we have from the Bank of Canada, which is also announcing rates this week. More on that in a second. The real question for Australia, though, is do we get a set of numbers here that meaningfully alters the calculus? And the path of least resistance seems to be no. Citigroup data suggests that Australian data outcomes have hewed relatively close to expectations over the past several weeks and months. Moreover, the PMI data that we got last week seemed to speak of returning inflationary pressure both for inputs and outputs in January. So the RBA, which already had a somewhat hawkish bias relative to other major central banks, seems unlikely to jump out the dovish window on this. So whatever numbers we get here, as long as they are broadly close to expectations, it seems unlikely that we're going to change a whole lot when it comes to the RBA on their basis. If there is a level of relief here, then the Aussie dollar, which was a little bit underperforming relative to the greenback against the backdrop of the risk aversion today, relative to, let's say, the euro or the yen, it might get a little bit more of a leg up once this event risk is out of its sights. As we just alluded to, the Bank of Canada is announcing rates this week, and we can see that the expectation is that by February here, this is a month in which we don't have a policy meeting, we are already going to be 18 basis points toward a rate cut, implying that we are probably going to get one this week. In fact, the probability of one is currently priced at not quite 80, but close to 80%, something on the order of 76, 75% chance of the cut. That means that the cut itself is probably not the biggest deal as far as market moving potential, because it's already in the market for the most part. The main question will be on forward guidance. And that's, of course, because Canada's economy remains in the doldrums. These are the latest set of PMI numbers. And really the main takeaway here is to consider that in the logic of PMIs, as ever, 50 is neutral. So here we see is where the sort of break-even line on economic activity is. Above 50, it's growth. Below 50, it's contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Note that going all the way back to the second half of 2022, there has been but 3 months where we had meaningful readings above 50. Perhaps 4, give or take, with this slightly more extended period here. But we have certainly spent a lot more time below 50 over the past now almost 3 years than we did above it. And that, of course, is a very significant indictment of Canada's economy at a time when its biggest trading partner, the U.S., is booming. We, of course, know that 80% of Canada's exports are bound for U.S. markets, but the nature of U.S. growth in this booming period seems to suggest that we are not seeing that demand spill over. And we spoke at length last week about the danger of this kind of a configuration for the global economy, where there's essentially a single point of failure, and that is the U.S. economy, and its burgeoning demand isn't traversing borders. Take a look momentarily why, but in that sort of a scenario, Canada becomes ground zero for maybe a change. Maybe finally U.S. demand starts to reach overseas and start to lift boats outside of the U.S. borders. And if you were going to get some sort of reasonable, cogent commentary on what that looks like, the BOC would be the place to go. And so what might be more interesting in this BOC announcement than the policy decision itself is the path forward, and whether the central bank lays out the case for more easing, less easing, about the same amount of easing over the course that follows. And of course, at this point, we are priced in for, again, looking at this this move here, about 2 cuts with some possibility of a third by year end. So if we note here, we're looking at expectations for give or take 60 basis points by the end of this year. Here's the Bank of Canada clustering with the RBA and the BOE right there. Now, why is it that U.S. growth is staying domestically? Well, that'll be shown in spades in economic data that we have coming out of the U.S. this week. Of course, that isn't likely to be the focus, but we'll start here and work our way backwards. This is Friday's U.S. PCE inflation data. And the takeaway here is, of course, that most inflation lives in the core services part of the mix. And services tend to be serviced by domestic firms. So while the U.S. is booming, it is domestic demand that's booming. And this is why the U.S. is able to grow as robustly as it is. Meanwhile, the other major engines of global growth, the Eurozone and China, are on significantly softer footing, and why the world economy is operating, as we've discussed for a few weeks now, if not longer, without a safety net if the U.S. economy were to misstep. But a misstep is not what's seemingly on the menu here. U.S. GDP data is also coming out this week. There's a bit of a cool down expected from the first look at fourth quarter data, 2.7% annualized growth, down from 3.1 in the third quarter. But that is still very quick relative to what is normal for the U.S. economy. And of course, we know that U.S. economic data has tended to register somewhat upbeat relative to forecasts. Last week's strangely disappointing PMIs notwithstanding. So we're in a space here where we probably don't have a tremendously negative lead on the business cycle itself, which of course brings us to the Fed policy announcement, probably the tentpole for event risk this week. Expectations are overwhelming that the Fed will not change rates this time. We're sitting at 97.3% priced in probability that the policy rate remains unchanged in the 425 to 450 basis point target that is currently there. In fact, the soonest that the rate cut that is already baked in for the start of this year's easing cycle seems to be May, perhaps, but the likelihoods really get significant when you get to June. So looking at the situation currently, we can see the U.S. already expected to be the least dovish of the dovish bunch. The BOJ, of course, you can see is above zero here. They're expected to narrowly raise rates this year. The least dovish after that is the Fed, where we're not even pricing in the Fed's own forecast of 50 basis points at the moment. The market's a bit shy of that at 40 basis points here at today's close. So really the question for the Fed is, with the economy relatively upbeat, with no immediate data to suggest that things are falling apart in quick succession, what's the Fed going to say? In looking at what might matter here, the interplay between fiscal and monetary policy might actually be the most interesting. We've heard from President Trump last week that he believes himself to be a great barometer of what is appropriate for monetary policy and favors seemingly a dovish perspective. That might clash with a Fed that has been walking back dovish intent since mid-September and that looks at the markets here and says, well, we said we were going to slow walk this. Nothing has materially changed. We're still looking at about 50 basis points in cuts this year. We're not going to get any more dovish. And we are certainly open to becoming even less dovish if we have to, if inflation is stickier. So where that sets up a clash between the monetary and the fiscal functions for economic policymaking is likely to be very interesting for markets. And of course, after a painful day like today, they might be on edge for signs of acrimony that ultimately make what could be the need for quick response, were there to be any kind of crisis, a more complicated sort of situation. And finally, there is the ECB, which also has a policy meeting this week, as though we didn't have enough monetary policy risk on the board. We can see that by March, we are already at 2.5% on the implied futures curve, relative to 3% here. This is a little bit misleading because the policy announcement is very late in the month of January. So this reading of 2.92 on January, only 8 basis points removed from 3%, obfuscates somewhat that we are pricing in a cut and that this cut is overwhelmingly on the menu. So the implication here is that by February, which is not a month when we have a policy meeting for the ECB, we'll already be down another 25 basis points. There will already be a cut. And when we look then at what's there by March, we're already at 2.5, implying another cut already on the menu by then. There's a third cut in June, and it looks like we land at a fourth cut spaced out toward the end of the year, perhaps as soon as September or October. But we can see that between the start of the year at 3 down to December, there's 100 basis points in cuts here. And indeed, we can see again from this matrix of overall major central banks, the ECB is the most dovish of the bunch. Now, this, of course, sets up asymmetric risk in the other direction because, indeed, to get any more dovish, you would need some sort of evidence to suggest it. And what we saw last week was, in fact, a push in the opposite direction. The PMI numbers that we saw last week for January gave us a much stronger view of the situation than anticipated. We were looking to still be in contraction territory for a third consecutive month. Instead, we saw growth in January. Moreover, it was the fastest expansion. This is the composite PMI, so this is manufacturing and services together. We saw the two collectively have the fastest expansion since August. So we're looking at perhaps a picture for the ECB that does not yell out for even more stimulus. There is a set of GDP numbers that are coming out, and although the expectation here is that on a quarterly basis, we're going to see a bit of a slowdown from 0.4% to 0.1% for the fourth quarter, the trajectory we can see since basically the middle of 2023 going into the beginning of 2024 has been toward very cautious improvement. In fact, if we take a look at year-on-year numbers, the expectation is that we're going to get 1% year-on-year growth in the fourth quarter, which would be the fastest for the one-year measure since the first quarter of 2023. So slowly but surely, a little bit of a green shoot, and perhaps, again, enticing of the view that the ECB doesn't need to get priced for any more easing beyond what's already there. So we, of course, had a sizable rally in the euro last week. We might be looking at more of that here, and a generally less constructive dollar story around it, both with a Fed that perhaps doesn't do a whole lot to alter policy expectations and is more impactful in terms of its sentiment lead, depending on Mr. Powell's post-meeting conversation, and an ECB that maybe isn't as dovish or doesn't need to get any more dovish than what is already there, all of which is the ingredient for the dollar to get a little bit weaker against the euro still. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, as well as on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when, like, you're in a pit back in the day that had like one or two market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm going to buy your book, what did you mean?
If you're going to buy the book, that means you're going to buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, we're back. Tasty Crypto Show. My name is Ryan Grace. With me today, of course, on Monday, Katie McGarrigle. Katie, welcome back.
Thank you. It's been a minute.
It has been.
How you been?
Yeah, can't complain. Been all right. It's warming up out there a little bit. Had some sunshine today.
Yeah.
So
You didn't have to wear like 3 pairs of pants to work this morning?
not today, but last week, man. It's tough out here
I
in
know.
Chicago in the winter.
I don't know how many times, I should probably take like a tally how many times every winter I say, why do I live here?
Right.
What am I doing?
Makes you stronger, though.
It does. It does.
You have an appreciation for the summer.
Yeah.
You earn it.
Yeah. Well, and that's why on like the first like 50-degree day, people are going to go,
Oh, yeah. They're out hoping that they can find some patio or something to booze outside as soon as it's 50 degrees.
and you know somebody will support them. So
It is
it's
Chicago.
a matter of time.
Yeah.
Yeah, I'm good though. How are you doing? How was the show with Mikey and Nikki today?
It was great, per usual. Thanks for asking. Shout out to those guys, Options Trading Concepts Live. It's your show too, I hear.
It is only on Thursdays though.
Oh.
People always say like, why aren't you on every day with them? And
what
I'm
the
like,
hell?
well, small doses with those two. No, I'm kidding. There's just a lot of stuff going behind the scenes at Tasty, and so
Yeah.
it's kind of hard to pull away and jump into the show in the middle of the day, but. It's only January. We'll see how programming changes in the months to come this calendar year.
Okay, are you hinting at more appearances on air or are you hinting at less?
We'll see.
Okay.
I mean, it's up to Tom, right? He's the one that signs the checks,
Yeah.
tells us what to do.
You're going to be on air a lot more then, I think, if that's
so
the
flood
case.
Tom's inbox, #job security. Tell him more, Katie.
Well, Katie, to your earlier question about the show, it was good. A lot going on in crypto right now. So if you missed that episode, check it out on the Tasty Live YouTube or tastylive.com. We're not going to talk markets on the Tasty Crypto Show as much. Covered a ton of the recent price action, gave my thoughts as to what's behind it for what that's worth. But today, I want to talk about Solana because we have some exciting news. Solana's been in the Tasty Crypto app for some time.
Yes.
But it's coming back, I hear, as early as this evening, I think. It's coming back to the Tasty Trade brokerage via Zero Hash. You'll be able to trade it on the platform.
Hell
Again,
yeah. Let's go.
it was there previously. We removed it. We're adding it back.
Yeah, let's go. I mean, it kind of just adds to this whole narrative that the space is a really popular topic right now. This allows us to diversify even further. And I'm hoping in the next, 28 odd minutes or whatever we have left that you can kind of walk me through this one. I do have a little bit of Solana. Got in at like $223.
Okay, so you have some familiarity with this.
Just a teeny bit of skin in the game, but like as far as like the nuances and how it's different from Ethereum or from anything else we've kind of talked about, I'm not as current on it. So I'm hoping you can give me a nice little drive-by.
Yeah, let's do that. Let's throw up the slides here. But before we do, I'm curious because the way that we put this together, the idea being that I think most people start with Bitcoin. The digital gold concept, it makes sense to a lot of people. I think it helps to clear up some misconceptions as to what is this exactly. Naturally, you start to learn a little bit more about Ethereum. Not that you invest in it or anything right away, but you certainly start to learn a little bit more about it. I think that's the path for most people. And then somehow, some way, you end up deeper in the weeds. And I would guess you stumble across Solana at some point in time. We'll talk about it in more detail. But before we do, how did you get into this? What got you into it? Why Solana? You can trade like Fartcoin, Katie. Why are you in Solana?
Well, I mean, as you know, I'm holding bags in Harry Potter Obama Sonic 10 Inu, whatever the heck it's called. I think I told you this morning on chat. I don't know if you even saw it. I'm thinking about rotating into Slurf.
Oh, I missed that. We can do that trade though right after the close.
Sure.
Or after
I
the
mean,
show.
I don't even know. I love and hate the name of it simultaneously, which is why I chose it. But I mean, I think it just went back to the whole, I'm coming from the options trading world. You and I had started to talk on the show together about why this is a compelling investment to make. And where in the options trading world, my bread and butter is like $1,000 in risk. I was like, okay, well, how about I just do a couple $100 in Bitcoin, a couple $100 in Ethereum. And then I think during one of our shows, we were kind of talking about Solana. And to me, it almost felt like the sexy new trending of the blockchain networks. And so I was like, sure, why not throw a couple $100 in there too?
I love it.
So
I think
that
you're
was
right
like
there.
The short of it. Like, I don't know any of the other nuances other than like that you can stake in Solana as well. But I'm pretty green other than that.
Okay, awesome. Let's jump into it then. Solana explained. I want to, again, cover this from kind of high level. Sure, the tech is interesting, but let's look at this more so objectively from kind of the data standpoint. Also want to look at this as an investment.
Totally.
At the end of the day, if you have the choice between Bitcoin, Ethereum, Solana, and others, you want to pick the one that I think has the best chance for relative outperformance. There have to be real reasons behind that, but I want to cover some of that here today as well.
Okay.
But as you've kind of hinted at or hit on already, Solana is a blockchain network, might be the sexy new blockchain network. It's a more recent network versus Ethereum. I believe that Solana launched around 2017. Ethereum was closer to 2014, 2015 or so, and Bitcoin was 2009. So Bitcoin's been around the longest. And there's an interesting pattern that kind of plays out too. We can cover this on another show, but you see that a lot of these just tend to follow a very similar path over time.
Interesting.
Where in some cases, and certainly it is a function of adoption, but in some cases, Ethereum has followed Bitcoin's path and Solana is on a similar path as Ethereum is. And it might just speak to that the idea that a lot of these are driven by just network effects as the network grows.
Okay.
So all that said, it's a blockchain network, as I think everyone's aware of by now. Supports decentralized applications. The way that I think about Solana here is that it's a lot like Ethereum.
Right.
Ethereum is different than Bitcoin. They're both blockchain networks, but Solana and Ethereum are much more alike versus Ethereum and Bitcoin.
Okay.
So it's a lot like Ethereum.
Cousins.
Yeah, they do similar things in terms of what these blockchain networks support.
Okay.
So you have NFTs on Ethereum, you have NFTs on Solana. You have decentralized apps on Ethereum, you have those on Solana. We'll talk about that in just a second. But what makes Solana special, the sexy new chain, is that it's fast and it's cheap. It emphasizes scalability. There are trade-offs there. So you might give up decentralization, you might give up to some degree security. But generally speaking, just looking at this, okay, what's the big difference here? It's a lot faster, can handle a lot more, over 50,000 transactions per second, and it's cheaper. So where you might pay, in terms of gas fees, just say $1 or $2 to send ETH across the network, you're going to pay maybe a penny to do the same thing on Solana.
Is that like...
Or to send Solana, not to send ETH on Solana.
Is that like a legacy tech, as in 3 years difference in time? Like why?
Yeah, to some extent, without getting too deep into the details, different technical architecture for sure.
Okay.
Solana uses a different consensus mechanism. It's called proof of history. There is also a proof of stake or a staking component to it.
Mm-hmm.
You do have validators on both Ethereum and Solana.
And those are like
different architecture.
Okay. And the validators are like the accountants or the transaction verifiers?
Going to verify those transactions, going to process the transactions, however you want to think about it, support the operations of the blockchain network, run the underlying code in that sense. There's a lot more of them on Ethereum, which we'll talk about in just a second. But just generally speaking, these things are very similar, Solana and Ethereum. Solana is faster, more scalable at this stage. A lot of updates or upgrades coming to the Ethereum network as well. But just in terms of their technical architecture, today, Solana is a lot faster and cheaper.
Cool.
It's not to say that the layer 2s on top of Ethereum, I suppose, aren't also cheaper and faster.
Sure.
But if I'm just comparing Ethereum layer 1 and Solana, that's true.
Got it. Okay. Good to know.
We've talked about this a little bit already. What can you do on Solana? The same thing that you can do on Ethereum. DeFi, NFTs, there's gaming. There's popular gaming applications on Ethereum too. Stable coins. So you're seeing a huge uptake in stablecoin adoption on Solana. I think that's one growth measurement that we can point to. Stablecoins are huge on Ethereum and layer 2s, really growing. And we're talking about over the last few months, really, in terms of stablecoin adoption on Solana. So a lot of the same things that you can do on Ethereum, as we talked about.
Mm-hmm.
The big difference is that compared to Ethereum, again, Solana's faster, it's cheaper, but there's a trade-off. When you look at Ethereum, arguably most people will say that it's more decentralized, and maybe as a result, it's more secure. There are a lot more validators. It's a bigger network. It's maybe a little bit robust or more robust in that sense. Generally speaking, when you look at Ethereum, and it could just be a function of time, it's more mature. There's a bigger ecosystem. There's more developers. It's the largest developer community, I think, in crypto. When you think about all of the big DeFi protocols that we talk about, things like Uniswap, Aave, they're all on Ethereum. Most of the biggest DeFi protocols have started on Ethereum. When you look at TVL, there's more capital on Ethereum. It's not necessarily one or the other. I have both in my portfolio, as you mentioned. You do as well now, but they're different. Ethereum is bigger, but it doesn't necessarily mean it's better at everything.
And by bigger, you mean across the board or by price?
I think of it in terms of bigger, first of all, in terms of market cap. I wouldn't so much say activity, at least not over the last couple of months, but when we think about just total value locked in smart contracts, the applications, and a lot of this is maybe not going to be true in the future, but up until recently, the amount of fees or revenue generated by applications on the Ethereum blockchain much larger than Solana. But again, over the last couple of months, it's changed pretty rapidly. But I think it also speaks to why Ethereum has been kind of stagnant, while Solana has been that shiny new toy and trades at or near a new all-time high.
Okay. And so would you consider these kind of like the big three?
Absolutely.
Okay.
Yeah. We'd put Ripple in there. If you're just looking at market cap, stablecoins fall into that as well. But when I think about blockchains, and I think about blockchains that support applications or where you see a lot of users today, I would think of Ethereum and Solana. Ripple, you could maybe put up there. Cardano possibly as another like similar platform. Bitcoin's going to be number one in terms of market cap. But yeah, big three. That's how I would approach it.
Sure.
So this is how it compares to Ethereum high level. I want to look a little bit more closely at some of the on-chain metrics that we can use to compare one another. These are not always going to be perfect apples to apples comparisons. But just to give you a sense of kind of where we are here today. So we're looking at the last 3 months of fees on both the Solana network and the Ethereum network on the red and like turquoise there. So you can see that we're running at about or just under 4 million in fees per day on Solana. And right now about 1.5 million in terms of fees per day. That's the 7-day moving average. So generally speaking, these are going to be closer together, which is what we've seen. They're kind of... At times, you're seeing more fees. Certainly, you can see that pop in November there on Solana. But the point here is that you have a blockchain network in Solana that previously didn't really have a lot of activity and wasn't generating a lot of fees. Ethereum has done that pretty consistently over time. It's now, in many cases, rivaling Ethereum's fees, or it's surpassing it on a daily basis or on a weekly basis.
Okay.
So there's definitely something real there.
Yeah, for sure.
It's not just on one hand, it's faster, it's better, you can do all the same things, right?
Yeah.
Is that objectively true? Well, recently we're seeing clear evidence of that.
Right.
That there are users, there's a growing kind of fundamental case to be made here.
And do you see that extending beyond like the retail participant? Like, do you also see institutions starting to play more in Solana as well?
It's a great question. I don't have evidence one way or the other, but I think you're starting to see clear signs of institutional participation and anecdotal evidence around this as well on Ethereum.
Okay.
Does that mean that you'll see it on Solana? Possibly. Are you to some extent? In some cases, absolutely, but not necessarily in the way that you're seeing institutions participate or begin to talk about participating on Ethereum.
Got it. Okay.
Haven't seen that yet.
Got it.
In terms of new users, here's the growth that we're talking about recently. Yeah. So really starting in September, October, we have Solana on the left here, 150 million new addresses. And this, again, is not always going to be perfect. It's kind of like how many internet users are there? Well, you can look at IP addresses. You're going to have more than one. There are different ways you can break this down and measure it. But generally speaking, you can just see that the growth in new users has exploded on Solana.
Yeah.
It's been very consistent on Ethereum. And again, it's not a perfect comparison. I'm not saying that, oh, well, look, there's more users on Solana. It's got to be better than Ethereum. Not at all. But if we want to look at this and try to understand, is Solana growing? Are the use cases, is the value, the utility increasing on the chain? I think so. There's evidence of that.
Right. It's multiplying. It's not even just like growing, it's multiplying.
And that's what you're likely to see with these decentralized networks that are globally available, are permissionless. So you can go from 0 to 1 very, very quickly here. And we're seeing that. We've definitely seen that in 2024 in Solana. So looking at network fees, it's real. New users are growing. I want to look at a use case now. I think this is a better way to compare it. Let's look at Solana versus Ethereum and weekly decentralized exchange volume, so the ratio. So you can see Solana here has seen a significant increase in DEX volumes versus Ethereum.
Right. So
both could be growing, but this is growing at a much faster pace.
Got it.
A lot of that is due to this just recent, I'll call it a craze in meme coins, in AI agents, in all of these things that just pop up overnight. There are launch pads on Solana for this. It's very cheap. It's very easy to do this. Pump.fun is one of them. So just millions of tokens, I think, is the number, have launched. It's not a right or wrong, or it isn't a real thing, or there are a lot of people like, oh, what about limited supply?
Right.
This is just a use case of this technology, and you're seeing it being used for these purposes. And the reason why, I believe, is because it's, one, really cheap to do so, and it's really fast.
Right.
Versus the associated cost with Ethereum. So that's contributed to just a huge explosion in trading volumes. When we look at the biggest decentralized exchange on Ethereum and layer 2s, Uniswap, and we compare that to the biggest on Solana, Radium, you can see again how that's grown here over the last few months, and certainly as we've become aware of just all the crazy stuff that is happening on chain. President Trump launched a meme coin on the Solana network.
Right.
That is contributing to more users and more growth and adoption of Solana versus launching on any other chain. Could have launched on, let's say, Coinbase's Base network.
Right.
But you're seeing a lot of this all happen on Solana.
Okay, so Radium is Solana's decentralized exchange, or one of them.
One of them, yeah.
One of the bigger players.
I would think of it as the Radium is Solana's Uniswap.
Got it. Okay. Yeah, that helps.
And so this just, again, it's not one or the other, or this is better than that. It's just, if you're thinking about what else is there that's quote unquote real beyond Bitcoin, beyond Ethereum, I think you put Solana on that list. And then we look under the hood and try to understand, is this actually growing? Is there a fundamental use case here? A real reason to think that this might be an interesting technology to invest in? You're starting to be able to really check some of those boxes.
Yeah.
And we'll see whether this growth continues at this pace, but it's been a pretty astonishing rise over the last few months.
Yeah, definitely.
The last thing I want to look at, Katie, is just how these things compare.
Okay, so this is the market cap thing we were talking about. Got it.
Exactly. So now how do we think about this? Things are happening on Solana. People are trading meme coins. Okay, if that's all it's good for, is that sustainable? Possibly. It's an interesting adaptation of the technology and a use case. I don't think it's going to be the only use case, but it's definitely something that's helped to propel it kind of more to the forefront recently. When we look at it against Bitcoin, we look at it against ETH. Bitcoin's the biggest. Current price gives you about a $2 trillion market cap. ETH's at $381 billion. Solana's at $114 billion. They've all done pretty well. If you just picked ETH, you didn't do as hot as Bitcoin, and certainly not as well as Solana, but you did all right. 44%.
It's sad that when you look at that, you're like, oh man, I'm like making nothing when you compare it. But of course, it's still incredible.
You do have a lot higher volatility. This is a 30-day realized vol. So we're taking the volatility over the last 30 days or the last month, and we're just annualizing it. So it gives you 77% for Solana, 61% for ETH, and Bitcoin's a lot lower at 43%. You look at the correlation to Bitcoin, it's a strong positive correlation, but it's not perfect by any means. Solana for sure could be arguably a somewhat of a diversifying agent in a 3-token portfolio of crypto assets. Maybe. It might be a stretch. But this is just a quick snapshot of where we are and maybe helps everybody to think about this or how to think about this. Because to me, the trade is, or like the idea here, the thesis, is that you just simply see relative outperformance in Solana, and that's indicative of the volatility as well. But given that you're seeing real fundamental growth here, there are real world use cases in that sense. It's very similar to Ethereum, but Ethereum is so much bigger, even though Solana users and fees and activity is starting to rival that of Ethereum. Maybe there's a catch-up trade.
Yeah.
Can Sol go to 200 billion in market cap or 500 billion in market cap? Maybe ETH is $1 trillion asset. I don't know, but I just think when you look at these two, and Solana has outperformed recently quite a bit, but I still think there's some room to run here over this cycle, and certainly as more people adopt this. Not that this is what everything is contingent on, but Bitcoin and Ethereum have ETFs.
Right.
There's no Solana ETF, but there's quite a bit of discussion around a Solana ETF.
Of course, yeah.
So that's the trade idea that's kind of embedded in this. But given that we're launching Solana, or Tasty Trade, I should say, is launching Solana, it'll be accessible again as long as you have a cash or margin account, individual account, you have crypto trading approved, and all you have to do is enable that with Zero Hash, the third-party provider.
On your Manage tab.
Yes, you'll be able to trade Solana now, and I'm excited about it because I've been having to buy my Solana elsewhere.
Right.
This is in my portfolio when I look at the top three.
Yeah. Well, and I think something that you just said that also rings true, and shout out to the chat, which is popping off right now.
Is it? My chat's been frozen, so I apologize. I thought the chat wasn't turned on. The last thing I see is from like Saturday night, like way back.
Oh, man.
I gotta refresh or something.
Yeah, Kimberly is sharing some thoughts with respect to price levels and stuff. But speaking of
Hell yeah.
I think the other thing that stuck out to me when I was starting to dabble in all of this is that as somebody who's new, a $230 price feels like more approachable to me almost in a way, even though I know I can just buy $100 worth of ETH or $100 worth of Bitcoin. I think there is like a barrier thing that's like, oh, this is actually more affordable to me too. And so I'm not saying that's the reasoning behind why this has seen such tremendous growth, but it did have an impact on me being like, oh, I feel like I can stomach this more than something that is $100,000. Like, even though I'm only buying dollar amounts of it.
Oh, absolutely. I think that's how a lot of people think about it. I mean, I think you've seen evidence of that throughout some of the prior cycles. You go way back to 2017, 2018. There just wasn't much you could trade. Bitcoin, what the hell is this? This Ethereum thing comes out, mind-blowing. And then you have Ripple that launches around the same time. And there were others, Litecoin, and I guess Litecoin's another example, where as that price of these other assets went up so quickly, people look to bid that thing that has a lower dollar value, whether that's Ripple or it's Litecoin, or in this case, it's Solana versus Ethereum. One's $3,100, the other's $20 or $230, whatever. And so I think there's something to that.
Yeah.
But yeah, I also think that you want to look at this just in terms of the percentage return on your money, knowing that, as you mentioned, you can buy a fraction of a coin. You can buy this on a dollar basis, and that's typically how I do it. I'll come in and just dollar cost average in $25, $50 here or there when I'm doing it.
Yeah, for sure.
So yeah, wanted to, again, cover off Solana here today. If anyone has any questions, feel free to send us an email or hit us up on Twitter. You can email us. Probably the best place is support@tastycrypto.com. I have another card up here, and this is from DeFi Llama, Katie. DeFi Llama is a fantastic tool or source for a lot of, I suppose, fundamental data. It helps me to get at least a snapshot of some of these different blockchain networks, and it helps to inform how you might think about them, or at least one versus the other. So Solana, 10 billion in TVL. And what you're looking at here is a chart of the TVL, so you can see just the life of Solana here. 2022, FTX collapses. This thing is absolutely left for dead. Solana went sub $10. Yeah, and for a year, people really were in a bad place in some cases. and it's just roared back to life. So TVL at a new all-time high, stablecoin market cap, 11 billion. You can see the fees over the last 24 hours, revenue over the last 24 hours. So pretty significant growth, certainly versus where we were just a year and a half ago or so. Maybe for context or perspective, TVL on ETH is about 66 billion.
Oh, okay.
Somewhere around 60 to 70 billion right now. So that just gives you a sense of, in terms of capital locked into smart contracts, into various protocols or applications, just bigger. And it speaks to probably first mover advantage. And like I mentioned, a lot of the larger DeFi protocols on there. But the other trade idea that might exist here for everybody is when you look at these blockchain networks, and I think going through this, it's hard to argue, at least at this stage, that Solana isn't growing. So you look at this network that's experiencing some pretty substantial growth, and then you look at what applications are similar on this blockchain to those on, say, Ethereum. The Uniswap of Solana is Radium. There's other exchanges. There's Jupiter. You can invest in those tokens. These exchanges generate fee revenue, and in some cases, they might look to buy back their tokens just like a company would buy back its stock. Under a different regulatory regime, you might see a lot more of that, and I think you could see value unlocked as a result. So there's a handful of applications that might be interesting to people. Without going through all of them, I'll just use Radium as an example of how you might think about that. But if you think that Uniswap is an interesting use case of the Ethereum blockchain and it's an application you want to invest in, that same idea exists on Solana.
Okay.
They're just a lot smaller, but there's real fundamental growth that we're seeing occur.
So I have a question that kind of, and maybe we've probably talked about this, but like I'm thinking of currency crosses right now, right? Where you're looking at euro sterling or like euro yen, and you're almost removing the dollar component of that trade by trading those two currencies against one another as a pair. Like, does that, I know it exists in the world of crypto, but like,
let's look at it. If we can throw our browser up really quickly, we've got TradingView on the screen. A couple minutes left. Let's take a look at this because I think I know where you're going.
yeah, I just think like you're saying, you know, if Solana's had this insane growth, but maybe that growth isn't sustainable over time, is it like a pair where you're like shorting Solana and like long ETH when you look at like the volatility of the returns? Or, you know, maybe you think the opposite, and you think that relationship's going to continue to widen. I'm just kind of curious how you approach this, or is this like a strategy that you employ?
Yes.
Investing?
Yes to all of this. Let me walk you through it really quickly before we run out of time. I would look at these first and foremost in Bitcoin terms. If that's your benchmark, use that. So we want to measure
That's the dollar.
relative performance because they're all positively correlated. It's just pick your flavor of volatility. In bull markets, the more volatile ones do better, and they do worse in bear markets. That said, if you're managing a portfolio of 3 tokens, Bitcoin, ETH, and Solana, you can use this approach that we'll talk through in a second to just get some sense, I think, of when you want to be overweight one versus the other. You don't necessarily have to trade that ratio where I'm short Bitcoin versus a long Solana position. But if I had 10 grand in all 3 of them, I might want to move some things around when I see one indicator signal versus the other. So just really quickly looking at this, here's Solana versus Bitcoin, and it's done pretty well recently. If we look at the year-to-date performance here, I look at the exponential moving averages. I try to generate momentum signals as a result there. Right now, it's been pretty bullish. This is Solana versus Bitcoin, but Bitcoin and Solana are quite different. When I look at Solana versus ETH, I mean, pretty clearly the trade for some time now has been to just be long Solana or overweight Solana versus ETH. Not that you would necessarily short ETH. ETH also was up about 40% over the last year.
Right.
But this gives you an indication of, well, do I want to be, if I've got to just pick one, well, then I want to pick the one that's outperforming the other two in those terms. And that's been true of Solana for the better part of the last year.
Okay.
And you can see, you can see the performance down here as well. So Solana versus ETH year to date, which is just really the last month, is up 30%. And then if I look at Solana versus Bitcoin, it's not doing as well against Bitcoin, but it's up 14%. So Solana has outperformed both Bitcoin and Ethereum to start the year. And there will be a point where you want to rotate and get out of that and back into Bitcoin, for example. But that's how I would look at this. That's how I would think about it. I know this is a messy chart here, but it gives you some sense of when these things really start to move, and they do trend at times.
No, that's super helpful. I think I just, again, I go back to like cross currencies or the gold silver ratio and trying to understand relative performance. And, if I have a strong idea on one, like how do I use that correlation in the rest of my trades and stuff like that. So I'm excited to kind of keep walking through and looking at this week to week and seeing how that changes and ultimately what we do with some dollars.
Yeah, here's just to end on this, not Solana based, but here's ETH Bitcoin. And this is looking at the last, 5 years or so. Everyone's waiting for this to pop, but it's been a terrible, trashy trade, as I like to say. But if you've just been looking at this and following this momentum, you've been overweight Bitcoin versus ETH, and that's been the trade. As much as people want to call for the rotation into alts, Bitcoin market cap dominance is currently 59. It's almost 60%.
Yeah.
And, these are basically the same chart when we look at the two largest by market cap.
Yeah.
But just, I think using this information just keeps you in some of the right trades on the right side of those trades, and then hopefully gives you a signal for when to rotate as well.
Cool. Love it. Solana.
Yes.
30 minutes or less.
Absolutely. We will post this in the archives. It'll be on the Tasty Crypto YouTube channel. It'll be on Tasty Live. And we'll link to this in our email as well. Solana coming out on the Tasty Trade platform soon. So stay tuned for that. It should be available for trading whenever we push the new code update, I would assume this evening.
Yeah, hopefully. Fingers crossed. If not, in the next 48 hours or so.
Absolutely. Well, Katie, as always, thanks for coming on the show. I appreciate having you here. So thank you.
As always, I'm happy to be here.
We will be back next Monday. I'll be back on Wednesday with Shelly. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
Yeah, it is Monday, January 27th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth. And we're finding it today, a little bit of price discovery on your screens and in your hearts. More on that on page 2. But for now, I should say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't have it, go get it. Got it. But if you're watching on any of those platforms, there's only one place that bing, you can be a part of this little group. On screen. Why do I do this? On screen, all your clever little your screen names. And your comments, both appropriate and otherwise. Only one place you can do that, and that's on the evil Google YouTubes. So head on over there, type in Tasty Live, find the channel somewhere, jump on in, and keep the phalanges moving. The more active you are in this chat, the more we spoof the Google algorithm into putting us in front of as many people as possible, saving the world. Yes, I do like to be hyperbolic, saving the world one view at a time. Anything interesting happened today or over the weekend, perhaps? Anything? Just a day of normal price action, if I do say so myself. Just kidding, obviously. Pretty big day in the markets. S&P 500. Turns out concentration risk is a thing. I'm sorry. I know it's not a great day for some or all, but I mean, at some point, markets do go down. Concentration risk is a thing. Correlations can go up. And today we find ourselves dealing with a little bit of volatility. But if I was going to deal with volatility, there's only one place I would want to do it, and that's in the Tasty community, because there's no group of gangsters. I'm going to call you volatility gangsters. There's no group of volatility gangsters I'd rather be storming the beach with than all of you crazy hooligans in the chat. Shout out to all of you as well. I should say what's up to all of you. Brian Watson, what's up? Happy Monday to you too as well. Lone, Victoria, Lincoln, Rezo, Catan. I should probably scroll up. Grumpy Mike, Kimberly, all of you. It's great to see all of you. I appreciate it. All right, let's get cracking. S&P 500 down 1.5%. The NASDAQ down nearly 3%. The Dow Jones in a bit of a flight to safety, I suppose, or perhaps one of the only places where you don't have massive AI concentration risk yet. I don't know, up 0.2%, and the Russell down 1%. So that short Russell, long Russell, short NASDAQ spread, that actually that worked today. And even the long Russell short S&P, that spread worked today only by 43 basis points, but it did work. The NASDAQ, long Russell short NASDAQ was a big winner. And that's why I like those pairs, because you don't need to necessarily guess the direction. You just need to guess the outperformer. And that was a big winner today at nearly 200 basis points. That's why we play the game, folks. Vol with a big old nasty spike to the upside, sold, I would say, fairly quickly. And I think that makes sense. So I guess I'll give you off the top. This is what they call, I'm not going to do what they call burying the lead. I'm going to give you my opinion on what just transpired today, both on the price action side, and then I suppose I have to pretend to be some sort of, not expert, I guess. I got to give some sort of qualified opinion on DeepSeek. But I'm not qualified. I will give you my opinion, but just know you could probably find something better out of a Cracker Jacks box. Shout out to everybody old enough to understand that reference. Here's my point. I said this on Twitter. You can follow me at Victor Jones, the Owen Jones is 0, because I like to be difficult. I think pot odds was getting dangerously close to favoring a downside move. A more academic way of saying this, I suppose, or a more vol-centric way of saying this was the fat tail was growing. You were getting a fatter and fatter left tail. We had a week last week where we went straight up. We were visiting or revisiting all-time highs in the S&P. Last time, though, we were here, if you remember, last time we were playing around with the 6178, the 6200 area. Vol was elevated. Vol's at like 17, 18 the last time we were here. This time we get here, and I mentioned this last night on First Call, volatility's at 14 and change. So we're much more complacent this time, getting to 6,200 with very similar risks in the market. Not only that, but you had a big week. This is a big earnings week. This is a big economic calendar week, and all of that ended up not necessarily meaning anything. It meant squadoosh at this point to price action. It was something that came out of left field last Friday, which the market didn't adjust to until today. And I think you can call this sort of a DeepSeek sell-off. You can say at some level this is related to a bit of geopolitical tension over the week, or just sort of just offsides. Right, the market's a bit offsides, but you had a fat left tail and not a lot of new reasons to want to be long at these price levels. Here's the good thing about today. The good thing about today is with Nvidia off 17%, something like this, with Broadcom down double digits, Micron down double digits, with all of these individual tech stocks getting absolutely buried. And the interesting thing about this is everybody that owns this stuff owns all of it. It's like, you go to Amazon.com or something like that, and you say add to cart. They just add it all. They say, give me all of it. And they've been riding the beta Momo wave to the upside. And look, I can't knock it because it's been working. So I'm not going to shit or dance on the graves of tech bulls here, because I'm sure they made enough money. They just gave a little bit back. At some level, it becomes too rich for my blood, and I'm waiting for what I feel is a more interesting, more opportunistic, more strategic entry to some of these underlying names. And I think no matter what you think about the next week, no matter what you think about the next month or the next year, the good thing about today is that it gives the opportunity for new entrants to start looking at instruments, to start finding reasons. If it's not narrative, it's price, and you're getting a price discount on some of these underlying issues. And I think that's ultimately it's gonna bear out to be a good thing. So just from a price action standpoint, sometimes the market just needs a reason, and we found a good enough reason, right? Some AI model that could be, if you believe what they're saying about it, and put a big asterisk on that. If you believe what they're saying about it, cost fractions, like a 50th of what it costs here in the U.S. was $6 million or something like this. Some people are saying that this is a big Chinese psyop. Some people are saying that some of these numbers are being exaggerated, that they have more chips than has been being reported. I don't necessarily think that matters. Honestly, I think a lot of people can get caught up in a bunch of stuff that doesn't matter. You can go online and go tit for tat with somebody arguing over whether or not they have 50,000 more chips than reported and whether or not they're getting around export controls. Probably some of that's true. You can go back and forth with people on the internet if you want to about whether or not it was actually $6 million or what's the unaccounted cost there. You can do that if you want to. I think at its core, the issue today is that investors believed that the U.S. was the runaway winner of the AI intelligence race. And today, or over the last couple of days, that there's evidence that this is a more competitive race than was previously thought. And I think if you leave it there, just leave it there, that this is a more competitive race than the market previously thought, and you need to price the potential for that competition. And not only that there was two opposing strategies that have just been laid on the table. The U.S. strategy was scaling. Scaling is resource intensive. The CapEx that was being put into just scaling, give me more GPUs, give me larger data centers. That was the presumed path of this race. And the idea that you can pursue a more scientific, a more approach about optimizing that doesn't mean you need hundreds of billions of dollars to scale up and build city-sized data centers. That is an alternative path that I think opens the playing field to more competition. It's not just who has the most money, who has the most land to build these data centers in the space. It opens up the competition. And that changes the narrative a bit. It changes the distribution of outcomes, and that had to be priced today. And so why is the NASDAQ down 3%? The NASDAQ is down 3% because 40 cents of every dollar you put in there is concentrated in 7 names. And so when those 7 names are all quasi-related and they have a not so great day, you have this massive pain that you're going to feel in the NASDAQ. And that's why your contrarians have been betting against the NASDAQ. And it's been a long road, and it takes some time to pay off, but the fatter and fatter the left tail grows. So in other words, the more this thing becomes a one-way train to the upside, the more concentration risk this market took on, the more it became a one-trick pony. The odds, or excuse me, the payout of the downside move grows. The pain, the potential of the correlation on the downside move grows. And so that was the lure of betting against it. That you don't know where it comes from. Does a contrarian know anything about DeepSeek, and that's going to be the surprise announcement that's going to take this thing out 3% in a single day? No. Do I think some of this is overdone based on what we know? Probably. Based on if you believe solely that today's move is all based on sort of this one idea, I think, haircutting these things by 1/5, to me, that seems aggressive. I think there's probably an opportunity today to do some decent, put selling if you want these actual names at lower levels, or, if you're a little bit more conservative, you don't necessarily want to own these instruments, or at least 100 shares of these instruments, then perhaps some put spread selling, given the fear. And I think a decent amount of people took advantage of that. I mean, the wick on this bad boy was absolutely sick in the NASDAQ, and we just happened to come back in line with this sort of imaginary line I drew on my chart, which is the trend of lower highs, successive lower highs that we had seen
before last week's breakout. And now we've retested it. We didn't close under this line. So interestingly enough, at least for one additional day, it's going to be, it is going to be in play. These funny lines we just draw on the chart. But sort of today's a really interesting day where the equity vol, meaning the put payout on the index, was not as much clearly as you could have gotten just buying puts on these underlying instruments, these highly concentrated instruments. You could have done this sort of strategy where you buy puts on the stocks themselves and sort of sell it on the index as sort of a hedge or to reduce basis. I don't say hedge, but to reduce basis a bit. But either way, shout out to all the bears that got paid today. Or to those that were semi or quasi hedged, or just weren't chasing Momo. Today's a painful day if you were. So where do we go from here? I think honestly, the vol selling that happened today and the buying that happened sort of late session means that I don't know that they're ready to give this thing up yet. You know? Don't mind the times here. This is my local time, but you could see towards the end of the day, 20,800 ended up being too cheap for some participants who came in and scooped up some of the NASDAQ. And it wasn't the NASDAQ necessarily. It was, let me show you. There were things like this. Microsoft got too cheap. Apple got too cheap. Tesla got too cheap. So people found some things to buy in weakness today. And I would just point that out. I think it's hard not to want to step into some of this stuff on 17% down days. So I think it's done. I don't know. Probably not. I would like some additional pain here. Would it be great if we got back down to 100? Yes. Do I think enough has changed today to change the potential of CapEx? I don't necessarily think so. I think I heard Josh Brown say one of the smartest comments I heard today in a sea of just stuff, which was, I think it was him, who's going to get in line? Which one of these U.S. corporations is going to get in line to replace their CapEx spending, and they're not going to go, let's say, with NVIDIA GPUs or sort of U.S. companies? Who's going to get in line to buy this stuff from China? I don't know that materially changed in the last 4 days. But here's what I do know. What likely happens from here is U.S. leaders will put the screws to their workforce. They'll read the DeepSeek paper, which is open source, and they'll figure out how to improve upon it in some proprietary manner and optimize here domestically. And I just think this increases the speed of innovation. And so some part of me asks the question, if these large language models they are 1/50th less resource intensive, does that mean demand will drop? Or does that mean planned CapEx will stay the same and the output will increase by 50? I kind of think it's the latter, because if you're putting all this money into CapEx spending right now, you're doing it sort of as an aggressive measure. You want to beat competition. And if so, models are getting more efficient, you're not going to cut your spending because it depends on what your competitors are doing. You probably keep your CapEx and your budget expectations the same. And so I don't necessarily know that this changes much about GPU CapEx in the future. I have no expertise in this field. I'm just talking through incentives and logic here. And I'm talking through what a CIO or a CTO or COO, CEO, how their conversations likely have evolved in 3 or 4 days. And it's probably not, hey, if these models are 1/50th more efficient, let's cut our spending proportionally to the increase in efficiency in the model. I guarantee you that's not how they're thinking. But I do think this stuff was all too expensive. That's it. It was too expensive, and you have a concentrated trade. It's easy to, once you get a little bit of selling, it's easy to jump on that thing. And, you end up, all of the levered players probably got burned out today. Who knows? Maybe there's a shop somewhere that blew up. That's kind of what this wick looks like. Somebody had a fire sale today, and you never know who that is, and you don't figure it out until days later. Just like August 5th. But I would not I wouldn't poo-poo this, but I would be buying quality assets with decent valuations that actually look attractive. And that's what we've been doing. And you wait for the market to come to you. You don't chase the stuff that looks stupid expensive. Why don't you do it? Well, because they could cut 17, 18% in a single day. All right, let's read some of your comments. Tell me, by the way, I'm gonna read through some of your comments here. Tell me what you think about DeepSeek. Tell me what you think about today's price action. Whether you think this is what we like to call in the biz day one of something more substantive on the horizon. I'm curious. I'll stop for a minute of my, whatever this is, and we'll make this a two-way conversation. Let's see here. Demi says Furu. Yeah, something like that. Does China even have gap accounting? Pardon my ignorance, but was this just the carry trade? I think it was a little bit of everything. I think it's a little bit of everything, but I don't think the yen is doing the same type of monster move that we had back on August 5th. Chinese do not have a word for accounting. Come on, that's not true. Fridays we buy VIX futures, then sell Mondays now with Donnie in office. That's the biggest thing. So Catan, I want to say the most interesting. One of the interesting things about this, I always thought it was, Bitcoin, whenever it had a sick rally into Thanksgiving, I always thought it had happened a few times, but it was always interesting to me because for anybody that works in product management, that the day with the most app downloads, at least that was always the case for me in previous roles. The day with the most mobile app downloads is Thanksgiving and the day after. So when everyone's home eating turkey, getting together as a family, they talk and they have some time. You're like, oh, what is that? And then you end up with the most app downloads on those holidays. And what would also be true is when you got a bunch of people talking about Bitcoin rallies going into these holidays, it would sort of accelerate the rally because you would get people congregating, talking about it, saying, how much money did you make? And then you would sort of get this extra bump post-holiday. What's interesting, if you don't know, we're headed into something called Lunar New Year, Chinese New Year. So it's Tuesday here. The technical holiday is tomorrow on Wednesday, but really there's a week long of festivities. And this is going to be a headline that reverberates through most of Asia. So I find that in some ways interesting. It'll be a topic of discussion for sure, at least on this part of the world. Catan says maybe this DeepSeek is another Chinese education stock. The Momos have been long for 2 years. A 3% down day is nothing. Still up huge. Yep, I agree, Rezo. About damn time for a bit of a discount, says Lone. Gapper says CCP smoke and mirrors. Here's what I think, Gapper. I think usually the truth is somewhere in between. I would probably say if I had to guess, and this is totally finger in the air guess, it's probably much more efficient. It probably costs more than reported. I would not, I think at some point today they closed it down to only Chinese phone number registrations. It was open, I think, earlier in the day and across the weekend. They said it was because they were suffering malicious attacks, which I could see happening. And so they had to close it down. Who knows if it'll get opened back up. But if it was purposeful and they just shut it down as a strategic move, that's pretty gangster. Rezo says, it's not USA against China. It's about companies clawing market share. Sort of. I think that's true, but there is a geopolitical backdrop, Rezo. I think there's a geopolitical backdrop that informs the corporate competition. Brian says AI tech is maturing. I agree with that. Vince, technical question on futures from your experience. Yesterday's open, ES, NQ dunked at 8:30 market open. SPY, Q tank, but futures spike back up. Why? What are the mechanics at play? Can you explain? It depends. I think this time around it's a little bit harder to explain, but here's the way I would say. At any one point in time, you have multiple types of players, Vince. You have shorts, you have longs, you have strategic opportunists, and then you have levered players. The ones with the least amount of choice are the levered players. A lot of times on big moves, they get forced into taking an action or a position. So this morning, futures are down ever since yesterday's open on Sunday. Futures were down, NASDAQ was down about 1% on the open, a little bit less, between 0.4% and 90 basis points, something like this. So we're down, we're weak almost instantly on Sunday open, and they get weaker and weaker as the evening progresses and into the morning. By the time you get to the open, now you've got a bunch of not futures players, but like long equity players or long equity options players that are experiencing this pain that have to puke their positions. They're in a margin call. You also have sort of longs that want to trim their position. They want to minimize the risk. So you've got this selling that occurs, selling begets selling in the morning. You also have shorts, though, or people who are long puts. And at some point, the profits on a 2 or 3% down day on the index or a 10, 15% down day in a stock, at some point, you're like, okay, this is a multi-sigma move. I probably have enough here to start taking my profits. So what does a short do? A short, to close their position, has to buy. So at some point for them, the risk to reward starts to favor closing down some or all of their positions. So the short starts buying in to close their position. The long put holder, in order to close their position, they have to sell their put to the market. When they start selling their puts, it looks like a bullish position to the marketplace. The reverse side is a more bullish position. And so you get some shorts that end up buying in a little bit. You get some long puts that end up selling or monetizing their hedges into the marketplace by selling puts. And that looks like nibbling. And then you get the strategic opportunist that says perhaps 15, 17% in NVIDIA is too much, or 3% in the index is too much. I'm going to start nibbling here. And again, buying begets buying. And so the pain of that initial puke, of forcing out all the leveraged players, of de-risking those long portfolios, creates a price opportunity that the shorts then take advantage of to close their position, and then it creates a new entry opportunity for the strategic opportunist who says a 3% down is probably enough pain for the day. Let me take a risk and reward bet that this is a good entry point. So I don't know if that's the answer you're looking for, but the way I always think about the world, and that's oversimplifying this for sure. I think there are probably some catalysts today that helped, but I think on pure price action and mechanics, there's 4 players every day, and it helps me to think about the world through those 4 players: the leveraged player, the strategic opportunist, the forever long, and the short. All right, let's keep going. Hopefully that helps you, Vince, if you're still around. I always imagine after I get done with these, like answering these questions and these long-winded sort of pontifications, I imagine somebody who asked the question on the other end go just like just not helpful answers, just staring at the screen. Let's keep going. Do you think it's too late to go long the Russell, short the NASDAQ? Ooh, that's a really good question. How would I go about answering that? Do I think it's too long? Do I think it's too late? No, I don't think it's too late, but I would probably not use a highly leveraged method of executing that trade, because like you probably took a big fat piece of that off of the table. I think when I was watching this before, I haven't redone the math in a long time, but I think like a big day in the Russell NASDAQ was 50 basis points. So if you have a 50 basis point spread, so in other words, if the Russell was up 1.5% and the NASDAQ was up 1%, that's 50 basis point difference in performance. I think generally that was like a big day in that spread, or the opposite, right? If NASDAQ's down 1.5% and the Russell was only down 1%, that's a 50 basis point spread in your favor. So I think when I ran some numbers a while ago, 50 basis points was kind of like what you should expect on a big day, I think. And today you got 200 basis points. So in a way you got 4 days in one. And so I probably wouldn't be levered up. Maybe I would do this like through equity options, like using IWM or QQQs, or maybe just something like that. I don't know that I would use futures here, because maybe we get in the next couple of days a bit of retracement. It wouldn't surprise me if you get a pretty strong day that is the opposite of what we just saw in a lot of these names tomorrow. You know, a 2.5% rally in NVIDIA tomorrow, that's a big day. Not compared to 17% sell-off, but 2% is not going to get you anywhere close to the highs. But that's a pretty big day statistically. And it wouldn't surprise me to see something like that. Now, the question is, once you get it, will the shorts pound? Do they lean into any rally here? Because I think, do you want to short the whole? Probably not. But if sort of like the short side of this trade thinks $100 is a fair value, well, then they probably will pound any 2 or 3% rally. So I think that's going to be the question for tomorrow. I would bet on a positive day on a lot of these underlying equities to begin the day. And the question is whether they can hold that strength. And if they do, I think you probably see it, you could be looking at a 2% day for a lot of these underlyings. So I probably wouldn't put a leverage position on today. If you can get a rally in some of these things for the rest of the week, then maybe you put it back on, leveraged. If not, I'd probably look at IWM versus QQQ, something like that with a little bit less risk. That's me. But again, what the hell do I know? I'm just giving you my thoughts. Where was I? Added 119 to 117 NVIDIA to IRA today, but I'm thinking 113 inbound. Gapper X, I think, I'm not mad at that. I'm not mad at that at all. Long time machines for sure. Margin calls galore. I think so too. It's just these days are healthy in a weird way because you burn out all the levered players and you get closer to what should be a reasonable price in asset prices. Did you get a healthy spike in the VIX? Yes. But let's put it in perspective here for a second. Vol term structure says this is a totally normal day. We were down 1.5% in the S&P. We've almost had no downticks. So in perspective here, everybody, this was, the market is not flipping out in any way, shape, or form. This didn't even register on the VIX term structure, creating some sort of backwardation or anything. So, it's just sometimes markets go down. You know what I'm saying? Like, that's what today was. Sometimes markets go down, and the place where you'll experience the most pain is your highly concentrated areas. And it was all narrative driven. And so you have a counter or competing narrative with the narrative driven optimism of a highly concentrated marketplace, and you get pain. That's what today was. Matrix Decoded says, I think the panic is over. I do think the panic is over too. I don't think it's panic so much as forced selling. I think there's a big difference. Today was not a panic day. On a panic, you'll see VIX spike more than it did. You'll see a change in volatility term structure. You'll see credit spreads blow out. You'll see bonds move more than 1 point. You know what I'm saying? Today wasn't a panic, everybody. Blown says, I'm not convinced with this down move. What do you mean, convinced? I've been saying long QQEW over QQQ. I like that matrix for sure. So QQEW is the equal weight NASDAQ. So being long QQEW effectively means I'm long everything in the NASDAQ, but at an equal weight, versus the QQQ of the NASDAQ, which is highly concentrated to 7 to 10 names. So I like QQEW for the simple fact that you get the same types of exposures in different weights, which means you're going to have less of that correlation or concentration and correlation risk to the downside. So I do think, congrats to you. I think it's a good idea. And if you're like a crazy man like me, you can even turn that into a spread. So QQEW long versus a QQQ short. And now you're actually short the differences in weighting. So you're short the areas of QQQ that are overweighted, and you're sort of by proxy long the areas that are underweighted. Is a weird way of saying that. All right, I'll do a couple more. Year of the Snake is historically worse for equities. Is that true, Alexander? I heard this year is good for the tiger. I'm a tiger. So apparently this is going to be a good year for this. Who has 2 thumbs up? And who has 2 thumbs? And it's going to be a good year for you in the year of the snake. This guy. I think memory like Micron and WDC will actually benefit from this, and just got thrown out with the baby. Yeah, the baby with the bathwater. I hear you. Vince K says, LOL, Vic, I was looking straight at your face as you were answering like a good student. Haha, I shorted it open, got burned on otherwise a good day. I needed an answer to make sense of it. So the tough part about today, man, is like, you want to believe that this is day one, and you start seeing those dollar signs. And the hardest part of today is not taking profits. Shorting the open means you were already short when we were down a couple of percent. So you're kind of, they call that shorting the whole. You know, shorting on like Friday or Thursday when the markets are strong and holding that position through the weekend would have been tough, but like you're short at a more advantageous point. And then in those scenarios, you have the opportunity to probably let the market play a little bit. You're only going to get hurt if the market comes back to even. But when you short with the market already down 1 or 2%, you're short the whole. And the market doesn't have to get back to even. It only has to do less damage on the day. And so when you're short the whole, you're playing a different hand than if you're short a previous high. And so this is probably just a lesson, Vince, that shorting the whole means you got to be more aggressive, likely, in taking profits on these big days. You're not going to get a ton of 3% down moves. This is the way everybody thinks, okay? The way everybody thinks is we don't know what tomorrow brings. No, nobody does. No matter, you get all these people that are on TV, they talk like they do. I promise you. Like I'm not going to call out the person, but I heard somebody asked today, okay, what is today an interesting day to buy NVIDIA? And their answer was, well, we'll have to see. What kind of answer is that? We'll have to see. Like, why? That's not exactly national television answer. But the point is, nobody knows. And but everybody's job is to like talk as if they do, and to make you believe that they have some special power. The reality is nobody knows. So then we're all playing this game of poker. And so what everybody does is they go, shit, this seems down 3%. You don't get many of these days. Am I going to bet that it's down another 3% tomorrow, or is it a better bet that we recover at least 0.5% from here or tomorrow, or from now until tomorrow? This stock's down 18%. Do I think there's going to be another 18% down day tomorrow, or is it more likely I'm getting to a place I might see a small recovery? So at every point in time, this is the short-term thinker, by the way, not the longer-term thinker. But markets are dictated by the short-term thinkers in the short term. So once you get to a point where you're going, Jesus, how many 3% down days are there? You can even do the math during the day. You can run a script and figure it out. There are not many. And what happens after a 3% down day? And what's vol doing? Vol's getting sold here. If we were going to have more days of pain, wouldn't front end or short end volatility spike a little bit higher? Wouldn't we be getting a VIX term structure that was showing a little bit more fear? Why are they selling vol, slamming down vol so much? And so I think in my personal opinion, Vince, you look for those signals. You can either be a technical trader and you're looking at the charts. I don't necessarily trade that way. I'm looking at vol. I'm looking at credit spreads. I'm looking at bonds. And bonds weren't showing fear. Vol was showing a spike, but they were willing to sell it off. The selling was largely concentrated. One of the indices was positive. So you start to play the pot odds. Another 3% down day? Or do you start to bet a little bit of a rally? And I think at some point the market is going to bet the rally. You just got to figure out in your mind, in the card game, what's the number? And I think if you're constantly thinking that there's a bunch of short-term opportunists and they're going to take a swing, the question is what price are they going to start taking a swing? Then that starts to help frame your thinking as the short for the day. But yeah, it's tough to hold a short for multiple days. You know what I mean? On 3% down days. But that's all in hindsight, man. That's all in hindsight. I try to think about this through the long put lens. I always think I'm long stock and I'm long puts. I always think that's the best way to think about it. If I'm long stock and I'm long puts against my stock, at what point will I sell my put? Because if you're long puts and you're long stock and the markets go down, you've made money on your put, you lost money on your stock. But everybody's greedy. So they're not just going to keep the put and then just hope the market recovers. What they're going to do is they're going to try to find the spot where they can ditch the put so that when the market goes up, They're not going to lose money on their put. They're going to keep all the money they made on the put, and they're going to make money on the stock as it rises. It's called monetizing a hedge. And so I think through the lens of the long stock, long put holder. And when the stock goes down, I'm saying, where is the greedy long stock holder going to ditch their put today? So if I'm holding puts and the market's down 2% or 3%, I'm probably going, yeah, they're probably going to sell or monetize the hedge and hope that they get a bit of a rally and that they get appreciation back in the equity. There's more to it than that, but like that's the simplest way to think, to express sort of the way I think about the lens that I think through on big sell-offs. Victor is always the voice of reason, says Noah. Man, I'm going to screenshot that and show it to my wife. And say, see, this is what other people think. How do you know this isn't the truth? Reversal trade worked today. Yes, it did. All right, let's keep going. All right, so the other thing, let's talk. I gave you a lot up front that was not bond related. That's my Chinese New Year gift to you. What do they say on Chinese New Year? Gong Si Fai Chai, something like that. I probably butchered it. Or Gong Hei Fat Zoi is like the Cantonese version, I think. That's probably the only thing I know. All right, let's keep going. So the other interesting aspect of today is even in the midst of a 1.5% sell-off in the S&P, even in the midst of a 3% sell-off in the NASDAQ, the bonds did basically yawn today. I listened to something and or I think I read some notification on my phone in the middle of the night here, my time, and it was yield crater 10 bips. And I was like, wait, what? Like, it was the middle of the night, so I checked. I went on my phone. I checked Tasty Trade Mobile. I looked at the 10 years up 1 point. I'm like, oh my God, I'm going to sleep. I suppose a 1 point move in a world where, we've basically been selling off in the 10 years since 116, and we've been selling off in the 30 years since 127. I suppose a 1 point move is a big deal to some people. But I think anyone who's long bonds, looking for a trader's rally, this adds to, if you happen to bottom tick this move at 110, it adds to your upside, but it's not exactly what we're looking for, right? Like, we're looking for that credit market spook, that run for collateral, and this didn't do it. And I don't know how to think about that. On one hand, I think the bond market's typically much more calm, cool, and collected than the equity market. I think the equity market is just one big basket of feelings. I'm going to figure out how to say this. In a way, the bond market is from Mars, and the equity market is from Venus, if you know what I'm saying. So I think either the bond market just shook this off, or perhaps I should rethink my premise on the potential for the spark with running for long bonds. I think I might. I don't know how to think about it today. I'm pretty surprised the muted reaction in bonds. What's up, buddy? I'm working. Okay. I'm working. Okay. I'll be out there in a little bit. Daddy's working. Huh? A podcast. I'll come get you in a minute. All right. Close the door, buddy. All right. Thank you. Sorry about that, everybody. Where was I? So anyways, the point was, I'm surprised a bit at the lackadaisical move here in yields. Not that anything that happened today was material for yields. It just sort of showed that the market is willing, that the market's not easily spooked here into buying U.S. bond collateral. But we did steepen up a bit. Good Lord, look at that. If you haven't been watching, bring him on. I think I've done it a couple of times, but he was stark naked. So no. My kids, and I love them for this. They're like Tarzan kids. Clothes are optional, 100%. And I love them for that, even when we're out in public spaces. Anyways, if this is your first time looking at this, this is the yield curve. It might look like a jumbled mess, but I promise you, it's a pretty clean way of looking at yields. Helpful way, in my personal opinion. I think most people tend to be visual people. The red line is where we were when we first started this cutting cycle, 50 basis point cut. Green line is the 25 basis point cut after that November. The blue line is where we were in December, and the yellow line is where we are today. And I think what's interesting about what's happening right now is we were steepening before. The short end of the curve was just coming down following the Federal Reserve, and the long end was going up. What's happening now is that short end is dropping. That 1 year yield dropped pretty significantly down to 4.13, which could indicate, let's take a look. I'm guessing our odds here of cuts increased today, because the market is just full of hope. Oh, wouldn't you know it? The market's so disgusting. Here's one cut. Here's two cuts. Here's your third little cut that just squeaked into here. Yeah. So there's sort of like, so here's what happened today. On a little bit of equity volatility, the market, where we just were a few weeks ago, we were talking about the fact that we were likely at peak hawkishness. Your peak hawkishness point was only pricing one cut for the year. The likelihood you go from one cut to nothing, as Ilya liked to say, that's a big change for the Federal Reserve. And the idea that you would even be talking about hikes then at that point, that's like the Federal Reserve has asked you to think through the lens of the cut, not the lens of just holding and not doing anything. Once they started the cutting cycle, they were asking the markets to view the world through a different lens. So to get to no cuts, that was like possible, but it's probably not the betting favorite. And the interesting thing about where we've gone since that one cut is we've gone the exact opposite direction. We went from 1 to 2 and a possible, and now today we're at 3. And what should you expect with that happening? Well, as more cuts get priced, that means the short end is dropping. But if that short end is dropping, you're probably going to get a lift in the long end. And that's kind of exactly, so this yellow line is what we're seeing now. And the more cuts that are getting priced, the more they're pulling down that front end. And because they're pulling down that front end, you're seeing that long end stay stubbornly high, if not move up just a little bit. I would say it's staying elevated versus moving up. And so anyways, the point is we're seeing a different movement in the curve. Before we were seeing a lift of the long end. Now we're seeing a drop of the short end. But all of those things still lead to the same thing, which is a steepening or normalization of the yield curve. Where do you see this yield curve, says Demi? It's a really good question. I probably see us at 50. I think we're getting close. Like I've said this before on the show, Demi, the long-term average of the difference between the 2 and the 10 is 100 basis points. So you could draw a line at 100, and this is your statistical average. The 2s got introduced in the late 70s. So since for the lifetime of this data, since the late 70s until now, your average between the 2 and the 10 is 100 basis points, and we're at 36. It's just, what type of economy do you believe we're in? Do you believe we're in a 100 basis point economy, which is average? Think we're above average? I don't know. I think I had said I would bet the over on the number of cuts this year. So I think 3 cuts. And we're at 3.75 in the short end. At 3.75 in the short end. If you were at 4.75 in the long end, you're at 100 basis points. So I think we're probably a 75 basis point. I think I would probably bet the 2 and the 10 to open up to 75 basis points, but I would do it strategically. I don't think we go straight there. Oh, I meant what you're asking. I thought you were asking me one of the hardest questions, and you're asking me what site was that. I meant what website we were using to see the yield curve, but also your answer is great. I'll type it in for you. I use that to show the yield curve. Breaking news, Besant confirmed he's a genius compared to his you-know-what predecessor. Yeah, I was not a big fan of our last Treasury Secretary. Maybe more for what that person didn't do than what they did do. You know, we could have locked in rates by issuing some sort of longer dated maturities when rates were on the floor. And that was so clearly a smart strategic move. I'm a very dumb person, I think. And I'm not saying that in a like tearing myself down. I'm saying in comparison, I'm not on the right tail of intelligence. And if somebody like me goes, hey, we should probably issue longer dated debt here and load up on it to the extent that the market will take it. And we just didn't do that. And now we are all going to pay the consequences of needing to refinance debt at higher and higher interest rates. Because we have an average maturity of, I can't remember. What's our average maturity on our debt? Like 7 years or something? We could have extended our maturities. This is the thing that every CFO is doing with corporate debt, but for some reason, our government chose not to drastically extend our maturity on our government debt. And again, not being the sharpest tool in the shed, to me, that would have made a lot of sense. And it's what we didn't do in the last term that I think I'm most disappointed in than the things that we did do. Demi says, my 6% mortgage wants a 75 bip cut. That's not going to do anything. Mortgage rates are at 7% right now. You drop rates 75 bips. Not only, I don't think your mortgage rate comes. I don't think mortgages come down. Maybe they do, but I don't think they come in under 6%. So I don't think you can refi at a cheaper rate. You got to remember, this is what people have forgotten. Cuts are the short end. You are financed off the long end of the curve, my friend. You're either financed at 15 or 30 years. That is not the Fed funds rate. And the way mortgages rate, it's not like LIBOR. It's not like, or SOFR plus something. Fed funds rate plus something. That's a market rate, bro. And they can cut 75 basis points and mortgage rates can go up as they just did since September. They've been cutting the long end and your mortgage rates have gone up to 7%, not the opposite way. So I think we got to be really careful about what you hope for, because it's not going to mean what everybody thinks it's meant in the past. Grumpy Mike says clothes are optional here too. Neighbors don't appreciate it much. I should really get curtains, blinds, or something. I don't think so. You know what I think? I think we need to get back to the time, we didn't eat that apple. Nobody has shame. Just be proud of what you got, man. Take those clothes off. At some, I just imagine a board member tuning in to Tasty, going I wonder, let me just tune in and see what asset I purchased. And they tune into me, saying, just telling an audience to take the clothes off and have no shame about being naked. All right, everybody. That's probably going to do it for us. Why? Because I have a sick baby girl we've had this gastro bug, which people are telling me norovirus is going around, so it might be what it is. I introduced it. I think I brought it home from Bali, and I just was 3 days of pain, and then my son got it, but we didn't know it was like a bug. I just thought I had too much ginger. I'm Looney Tunes. I thought I had too much ginger. And then my son came home one day and he was like, Daddy, my stomach hurts because I had too many sweets today. So we just thought he had a stomach ache. Then he, gets sick in the morning. And we go, you feel better? That's probably all you needed. He goes, yeah. So we drop him off at school. We dropped him off at school like a terrorist family. The next day, 3 of his best friends are out sick from school. I'm not laughing that they're sick. I'm laughing that I felt so bad. I was like, what? And that's the moment I realized I had just committed an act of terrorism on the school. I said, son, grab your bag. We need to get out of here. And now our baby girl's got it. So I got to go help my wife. But I would say I'll leave you. I'm a grower, not a shower. I'm going to leave you with this, man. On days like today, mute your television, mute your phones, look at everything else but Tasty. The whole game out there is people are selling attention. What's the best way to get your attention? Elicit an emotion. The emotion I can elicit is anger, it's fear, it's excitement, it's greed. And so on a day like today, everyone's fighting to get you to feel something. And so I tend to find that the best ways to navigate a day like today is mute everything except people who you trust to not get emotional on today. I feel like Tasty is full of those types of people. Obviously, that's a biased opinion. But if I can't offer a word of wisdom to anybody out there, I'm telling you, I used to be part of that crowd. They're selling you emotions today. And that's probably the worst thing you can let seep into your decision-making process. So put it on mute. And I'll see you back here tomorrow with a conversation with Ilya Spivak, and on Wednesday with Chris Vecchio. I'm looking forward to both. I'm hoping, since we had a ton more people listening, don't just tune in when things get volatile. People always do that. They come in when things are crazy, and they go, what do we do? Well, the first thing you do is you create consistency. And if you'd been listening and tuning in every day, nobody here was chasing the last 1% in NVIDIA. I can tell you that much. So even if it's just a counter voice or a contrarian voice against the narrative, all of those things, that's what's called devil's advocate. And if you've read this book called Thinking Fast and Slow, it talks about the cognitive biases we have. And one of them is sort of confirmation bias. And one of the ways to get out of an echo chamber or confirmation bias is to invite many different people with differing opinions into your world just to hear points that you might not have thought of and to stress test your own points of view. So the first thing I'd say to everybody who's tuning in today is hopefully make it a habit, and we can see you back here tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.